So let's begin GST marathon for May 2024 exams, new scheme at CA Inter. And this marathon is going to be handled by our faculty, Sreshta faculty, Mahamood sir. And as I already told you when we have uploaded in the last time for November, that Mahamood sir is going to be India's top faculty for GST. And you can just search in YouTube right now, GST marathon. You will find sir's previous version video. Now this video that you are going to watch is the latest version for May 2024 exams. Fine. Listen to this introduction without failure. Then you can watch Mahamood sir introduction and then go as usual, like go further with the entire marathon. And believe me, the kind of clarity you will get in GST for sure will be like never before. You will be not having that much clarity. You will understand that only after watching this particular marathon. So this marathon of GST, we are going to upload in two parts. Part 1, just a minute. One is part 1, which is for 11 hours right now that you are watching approximately. Then part 2 we will be uploading, which is of approximately 6 hours. In part 2, we are going to cover place of supply, accounting and accounts and records, and TDS TCS, which will have a weightage of 10 to 15 marks in the total 60 marks of the GST paper. You know well, paper 3 will have two parts. One is income tax, another one GST. GST will have 50% weightage. Out of 120, 60 marks weightage is for GST. Within the 10 to 15 marks will be for part 2. What I noticed in many students in GST, they are straight away trying to watch this POS, accounts and records, and TDS topics. Straight away they are searching for this. No. Learn in this proper, learn in a particular order. Follow this structure which we have provided. In this part 1, we have covered all this topic: introduction to GST, supply, registration, composite levy charge, value of supply, tax invoice, input tax credit. So whatever these topics that we covered, right, we have given timestamps below. In the same order you proceed. Don't directly jump to value of supply. Don't directly jump to ITC. Listen in a particular order that whatever we have given. Believe me, the kind of clarity that you get after finishing this marathon is something remarkable. And mark my word, Mahamood sir is going to be the best faculty forever in India right now for GST. Getting it? He is going to be the best faculty. You will only comment it. You will only tell me after watching this marathon. Getting it? Luckily, I'm fortunate. We are very fortunate that entire in our Sreshta team, all the faculty members are right now are super competent, super experts in the subjects, whatever they are dealing with. And by the way, the part 1 that you're watching now, it is of 35 to 40 marks. And you know, two topics we are not covering. One is time of supply, returns. We are not covering. Essentially, we are covering 35 to 40, 10 to 15, 50 marks of the total 60. So we are covering technically 90% of the syllabus. 85 to 90% of the entire GST we are covering in the form of a revision. Now, by the way, Mahamood sir has used material in this particular marathon. That material can be downloaded. That material can be downloaded in Sreshta. You just open Sreshta for CACMA website, open CA Inter, just PDF sources, open group 1. Inside that, open paper 3, just paper 3, and you will see here, okay, GST our main material, GST supplementary material. This is nothing but the amendments material, and GST marathon handwritten notes. Some points or some concepts, sir has given handwritten material, so that material. And by the way, this marathon is completely amended as per May 2024, whatever is applicable, amended marathon. Getting it? So we have used certain our previous version videos and we have added some new videos to this and merged it into 11 hours this part. Further, if you want to watch complete amendments video, just in our same YouTube channel, you can find, just open my CA Ram Harsha YouTube channel. Inside that you will find, just a minute. So you will find here GST amendments also, which we have uploaded very recently. Yeah, this one, 5 days ago we have uploaded on this date. So GST amendments May 2024. This will have approximately 3 hours video. Please watch it for getting a comprehensive coverage of amendments. So comprehensive, if you want to discuss, if you want to understand what are the amendments that are applicable for GST, please watch that. So I think, long story short, I've clearly explained you what you're going to get in this part, what you're going to get in the part number 2, and what we are not covering, and the faculty who is dealing with it. Believe me, mark my word once again, you are going to witness the best GST class ever. Getting it? You can just search it on YouTube itself right now. GST marathon, you will get recommendation, and the first recommendation, within first 3 recommendations, you will find Mahamood sir. And one important news is what, Mohammed sir is teaching for the first time GST, that too in the last year only. Like in the last August only he started. So technically speaking, we are not, I'm saying we are not so experienced faculties, but we are proud to say that we are experts. Getting it? What is ultimately important is expertise is important over experience. Okay, and it's not first time or second time or how long we are in the industry. It's all about what kind of commitment, what kind of content, what kind of clarity that we are providing to the students, and that's what made Sreshta today where we are. Getting it? Fine. So without any delay, start watching Mohammed sir introduction, where he'll be explaining you the paper weightage, paper pattern, everything, and then you start watching the topics. Further, MTP videos also we are going to release very soon. In the month of April month, you will find MTP videos. I don't know how many of you have noticed MTP papers May 24. They were completely different from the history. Like in past, how the MTP question papers were like, and now how the MTP papers are like. They are completely contrast. Only those who learn the subject truly, conceptually, not from shortcut materials, not from short notes. No, only those who learn the subject truly, understood it, like what nook and corner, only they can answer those MTP papers. Anyhow, we are going to give MTP video very soon on the same. Okay, why late? All the very best. Continue watching.
Hello my dear students, hope you guys are all doing good, hope you guys are all perfectly fine. So finally we are bringing before you the marathon for GST for CA Inter, that too for May 2024 examination under new scheme. So this is something which you have been asking for a very long period of time in the social media platform. So finally we have done all the things required for bringing before you the marathon, and this marathon is before you. I do hope that this marathon is definitely going to add value in your preparation. So as you all know, the coming May 2024 exam, that is going to be the first exam under new scheme. I know you're all tensed. What is going to be the examination pattern? What kind of questions are going to get tested? So what will be the difficulty level of the question paper? So all these things are going on in your mind. And I have been receiving the messages from the students as well asking about these things. I will say, see, these are the things which you cannot control. So what will be the examination pattern we will come to know once the MTP gets released. So examination pattern, what is the level of difficulty of the questions? Will it be more difficult? Will it be less difficult? That is not something which is in your control. So what I would suggest you is put your 100% efforts. Whatever time you have, that you utilize it properly. Whatever resources that you have, make use of it properly. So put all your efforts, give your 100% when it comes to the efforts. Rest will wait for the results. Okay, so don't unnecessarily overload yourself with all these unnecessary thoughts about question paper pattern, level of difficulty. Will it be more difficult? Will it be less difficult? Don't worry about all these things. Don't unnecessarily overload yourself with all these questions. So just try to use whatever is in your control. Try to use properly the things which are in your control, and the things which are in our control is our time, our dedication, our hard work. These are the only things we can control, right? This is completely something which is in the control of a student. So make full utilization of it, use your time properly, be dedicated in your studies, put your efforts, do the hard work. You give your 100% from your side, the rest assured you will definitely get through the examination. So first have trust in yourself, and don't unnecessarily overload yourself with all this pressures. That will unnecessarily add up to the stress, and overall it will have a negative impact on your preparation. So don't do it. And and one more thing which I would like to bring before your attention, as I always say, for a subject like GST, the key in getting through the examination, or the secret behind getting through the examination, is having good conceptual clarity. This I always stress. As a student, you should never try to mug up the content. In GST, definitely you can't do it. So in order to get to the subject like GST, you have to understand the concept behind the provision. You have to understand what is the concept associated with the provision, and at the same time you have to memorize the sections also. You have to memorize the content. I'm not telling completely you ignore the content given in the GST law. No, you have to memorize the content. Along with that, more than memorizing the content, the most important thing which you need to have is understanding the GST provisions in a correct perspective. When you understand the GST concepts in a correct perspective, you will be able to answer in a correct manner. So I always stress this point. Conceptual clarity is going to be damn important, and GST, the importance of that is very, very high. And we have structured this marathon in order to give you that complete conceptual clarity which is required for getting you through the examination. And I'm telling you once again, So please put your 100% efforts, follow the resources whatever we have provided, and make use of proper time. And this marathon, you follow it, and marathon you have to use it for your revision. And you need not go through the entire marathon also. Some chapters you might be more comfortable with. What we will do is timestamps we are going to add to this marathon, and whatever chapters you feel more troublesome, whatever chapters you are feeling more troubling, so what you do is those chapters you watch this marathon series for numerous times, so that you will remember the content of that particular chapters. And trust me guys, if you understand the concepts, if you understand the concepts of the provisions of the GST is very easy subject. GST is actually very easy. If you ask me, in the tax paper, we have two components, right? We have income tax part, we have GST part. Comparatively, GST is very, very easy. It is very scoring. But only thing is, you need to be well equipped for that. So try to, if you understand the concepts in a correct perspective, if you put your efforts in understanding these concepts of the GST is going to be comparatively damn easy. That will give you good marks. That will fetch you very good marks. And if you could properly plan your taxation paper, you can try to cover the aggregate marks from the tax paper itself. It's up to you. Depending upon your comfort zone, you can decide in which paper you want to get through, in which paper you want to score the aggregate. That is up to your choice. But I'm telling, there is even a probability of scoring the aggregate marks through the GST paper as well. But you require proper preparation. So this is what I wanted to bring it to your attention. So that's all regarding the intro. I don't want to waste much of your time. Hope this marathon will help you out, and share it with others as well. So whatever marathon lectures you are watching, try to make a full advantage of it. So first we will be revising the chapter GST and introduction. So why the GST has come into picture, what exactly is this GST? So all these things we will try to revise now. First of all, as we all know, what is GST? First of all, what is the full form of the GST? We say GST means goods and services tax. Nothing but GST is a tax which the government will collect. From whom the government will collect the taxes? From the citizens it will collect the taxes. From the citizens of the country it is going to collect the taxes. First of all, what is a tax? For example, your parents might be working people, right? So they might be filing their income tax returns. They might have GST registrations. They pay the tax to the government. So the citizens of the country pay the taxes to the government. Is it a voluntary payment? Is a tax voluntary payment? So if you have, if your parents are paying the taxes, are they paying the taxes voluntarily on their own? Are they paying the taxes, or someone is compelling them to pay the taxes? The government is compelling them to pay the taxes. So tax is always a non-voluntary payment. Tax is not a voluntary payment. No one, to the extent I know, no one will voluntarily go out of love and affection for the country. People will not pay the taxes. I have not seen any. If you have seen, well and good, but I have not seen any who will pay the taxes with a smiling face. Always they will have some sort of anguish whenever they are depositing the taxes. So tax is not a voluntary payment. No one will come voluntarily and make the payment. People are making the payment of taxes because it has been made a compulsion by the respective laws and regulations. So what is basically a tax? First we will try to understand the tax, then we will come to GST. So first of all, what is the meaning of the tax? So as you could see here, tax is something which is a non-voluntary payment. It is not voluntary payment. No one will come and voluntarily out of his own will pay the taxes. It has been made compulsion. It is a non-voluntary payment. Sir, why this tax is a non-voluntary payment? That means it is a burden. This burden will be laid on whom, sir? Who is bearing the heat of this taxes? And the pecuniary burden is laid upon individuals or property owners. See, property owners in the sense, if you are having, earlier we used to have wealth tax. So if you have any properties, if you have any landed buildings, if you have any immobile property, on that you have to pay the taxes. Or if you are an individual making money on your income, you have to pay the taxes. If you are a person, if you are a business person, you are doing the business, on your business you have to pay the taxes. So tax is a non-voluntary payment, and its burden has been laid upon individuals or property owners. Sir, why the government need taxes? First of all, why the government need taxes? See, government has to run the country, no? They have to look after the infrastructure in the country. They have to provide the basic living amenities for the people of the country. They have to support the livelihood of the people in the country. See, look at India. Our country is so big, and the government is having the responsibility to take care of this country, to provide some facilities to the country. How the government will be able to provide those facilities, sir? For running the country, they need money, no? How the government will get that money? Major source of revenue for any government is taxes. Major source of revenue for any government is what? Taxes. So this is what basically the meaning of the tax. Sir, what is the meaning of the tax, sir? If someone asks you what is the meaning of the tax, tax is a non-voluntary payment whose burden is ultimately passed on to individuals or property owners. And this amount of tax is something which the government needs to run the country, or to support the government. These taxes will be collected. Now, sir, how many different types of taxes will be collected by the government? If I talk about individual taxes, individual names of the taxes, there are plenty. But all the taxes which are collected by the government can be broadly divided into two categories. We can divide into how many categories? We can broadly divide them into two categories. Sir, what are the two categories of the taxes, sir? As you could see here, number one, we have direct taxes, and number two, indirect taxes. All the taxes which the government is collecting, that can be broadly divided into two categories. Number one, direct taxes. Number two, indirect taxes. Sir, what is the difference between the two? Most of you might be already aware. Direct taxes, it is imposed directly on the taxpayer. And if I put it in other way around, direct taxes are those taxes in which the burden cannot be shifted onto another person. Incidence of tax cannot be shifted onto another person. Take for example, income tax. See, if you are paying income tax, for example, you are earning a salary. Per annum, you have earned 10 lakh rupees of salary. By the end of the year, we have to, once the year gets completed, when the March 31st gets over, in the month of July, assume you are filing your income tax return. You are declaring your salary income, my salary, 10 lakh rupees. In that, some deductions are there. You have claimed that deductions. You have some ATC deductions that also you have claimed. You have health insurance that also you have claimed. Finally, your gross total income has become 7,50,000 rupees after claiming all the deductions. Now, you will calculate your tax liability. When you calculated your tax liability, you came to know that 35,000 rupees is your tax liability. Just I'm telling you gross figures. Don't do the calculation on the, don't open the calculator, do the calculation and point out, sir, 7,50,000 tax is not 35,000. It is some different figure. I'm just telling the estimate figures. Okay, I'm not talking about the facts. I'm just telling you a scenario. So you are a salaried employee. You make 10 lakh rupees of salary per year. You claimed all the deductions. Then your gross total income came as 7,50,000. On that, you calculated your tax liability. You came to know your tax liability is a 35,000. Now this 35,000, will you pay it from your pocket, or will you collect it from somebody else and pay it to the government? Whatever income tax that we have to pay, no, that we have to pay it from our own pocket. You can't shift the burden onto others. You can't say, I will collect it from my employer. I will collect the 35,000 rupees of tax from my employer and pay it to the government. Can you do that? No. So income tax is something where the burden cannot be shifted. The person, whoever is paying the income tax, he himself has to pay, face the burden. He has to have the heat of the taxes. He will bear the heat of the taxes. Nothing but he will have the complete impact of the taxes will be on him. So those taxes in which the burden can't be shifted onto another person, that we call it as direct taxes. The direct tax, the most important direct tax which we have in our country is income tax. Income tax is a direct tax where the burden can't be shifted onto another person. Next, indirect taxes. Sir, what are indirect taxes? Indirect taxes refers to those taxes where incidence is passed on to ultimate customer. Here, in case of indirect taxes, one person will pay the tax, but that person will not bear the taxes. Burden will be shifted on to ultimate consumer. Burden will be shifted on to ultimate consumer. One simple example, if I have to give you, assume that you are a consumer. You are a consumer. Okay. So now there is one shopkeeper. Assume some lot mobiles is there, mobile store is there, or Sangeeta mobile, some mobile store is there. You are a ultimate consumer. You went there, bought an iPhone. You went there and bought an iPhone. Now he will say, sir, 1 lakh rupees is the cost of this iPhone. On this 18,000 rupees is the GST. Total you give me 1,18,000. So you are a ultimate consumer. You pay 1,18,000 to the shopkeeper. Now what the shopkeeper will do? 1 lakh rupees he will keep. Whatever 18,000 rupees of GST which he has collected, whatever 18,000 rupees of tax which he has collected, he will pay it to the government. Now you tell me, who is paying the tax to the government? Shopkeeper is paying that 18,000 rupees of tax to the government. But is he paying that 18,000 rupees from his own pocket? No. I agreed, this shopkeeper is paying 18,000 rupees of GST to the government. But is he paying the tax from his own pocket? No. What he is doing? He is collecting the tax from you. You are a consumer. You bought the mobile phone. You are the ultimate consumer, no? You paid 18,000 to the shopkeeper and the shopkeeper paid it to the government. So here what is happening? The burden is getting shifted on to the ultimate consumer. So that is the main point of difference between direct taxes and indirect taxes. Direct taxes, the burden can't be shifted. Whoever pays the tax, that person has to face the heat of the taxes. Whereas indirect taxes, payer will be a different person, whereas ultimate burden will be passed on to the ultimate consumer. Understood? And now you tell me, will GST fall under direct taxes or indirect taxes? Will GST fall under direct taxes or indirect taxes? GST is going to fall under indirect taxes. Why, sir? If you are ultimate consumer, you will ultimately face the heat of the taxes, but you are never going to pay the taxes to the government. But what you do is you pay the taxes to the person who has supplied you the goods and services. That person will pay the tax to the government, but ultimate burden is on to the consumer. So GST will form part of indirect taxes. So what we have understood till now? So what is the meaning of tax? We have understood two kinds of taxes. One is direct taxes, other one is indirect taxes. Okay, so GST will form part of which taxes? Indirect taxes or direct taxes? GST is going to form part of indirect taxes. Now, direct taxes is something which you will learn as a part of Income Tax Act. So we are not going to concentrate on direct taxes here. We are going to talk about indirect taxes. See, these indirect taxes are having some important features. Indirect taxes have some important features. Sir, what are the important features of indirect taxes? It is one of the important source of revenue to the government. See, you might have heard about some facts. In India, on an average, only 5% of the people file their income tax returns. Out of 120 plus crores or 140 crores of population, only 5% of the people file their income tax returns and pay the taxes. That means only 5% of the citizens of the country are paying income tax, direct taxes. But you know, entire 140 crores of population, we all are paying GST. Entire population of this country, each and everyone without any exception, we, you, me, your father, your parents, your brother, your sister, even a newly born infant, everybody is paying the tax to the government. Which tax, guys? Not income tax, only indirect taxes. When you go and buy a pen at a stationery shop, you are paying GST. You go and buy a mobile phone, you are paying GST. You go and buy some food items, paying GST. You go to the restaurant, eat a food, pay the GST. We are all paying. We don't even realize it. We don't even realize. So which tax base is much wider? When you look from the government's perspective, the tax base for the direct taxes is very limited. Only 5% of the population pay the taxes to the government. Which tax is? Income tax. But each and every citizen, we all, without even feeling the pinch of paying the taxes, every time we buy a product, every time we receive a service, every time we buy something, we are indirectly paying the taxes to the government. So one of the important feature of indirect taxes is it is an important source of revenue to the government. And when it comes to indirect taxes, income tax will be levied on your income. Direct taxes will be levied on your income, whereas indirect taxes will be levied on commodities and services. If you go and buy some commodity, if you go and receive some services, then indirect taxes will be levied. Shifting of burden, this I have already told you, burden will be ultimately shifted till the time the product reaches ultimate consumer. Whoever is the ultimate consumer, that person is going to face the heat of the entire taxes. Burden will be shifted. Don't be of a wrong notion. Whoever is paying the taxes, he is paying the taxes from his own pocket. No, he will pay the tax from another person's pocket. Who is that another person? Ultimate consumer like you and me. No perception of direct pinch. Since you don't even realize that you are actually paying the taxes. Have you ever felt, hey, I am buying the pen from this shop, I am paying GST to the government? Will that thought come to you? You went and bought a mobile phone. Will the thought come to you, I am paying GST to the government? No. There is no sensation of direct pinch only. You don't even realize that you are making payment of the taxes. Inflationary. Why it is inflationary? For example, I say product of the price of the product is 100. Now the government is selling 18% GST. That means automatically, if there is no GST, you would have paid 100 rupees. But because of this indirect taxes, now you have to pay 118 rupees. That means because of indirect taxes, the prices of the products are going to go up. The ultimate consumer has to pay a little bit extra. That is what we are going to call it as inflationary, increasing in the prices of the goods and services. A wider tax base, this is a repeated point when compared with the direct taxes. Here it is a very bigger tax base. Next, promotes social welfare. Sir, how come indirect taxes promote the social welfare? See, how come indirect taxes promote the social welfare is, if I give you one simple logic here. See, what the government has told us, there are different rates of tax. This we will even understand in the further concepts also. How much amount of indirect taxes will be there? The rate of tax depends on the product. What the government has told, in case of hazardous products, or you can call it as sin products, Like government told, if there is tobacco, on tobacco we will collect highest rate of tax. On tobacco we will collect highest rate of tax. So tobacco is a hazardous product. Or if there are some narcotics or any other kind of so these kind of luxurious items, or if you take harmful products, government is telling on harmful products we will collect highest amount of tax. On useful products we will collect lowest amount of tax. That means by imposing higher taxes on the harmful products like tobacco, etc., government is making them more costly. That means it is going to reduce the purchasing power of the person. No, for example, if the government is selling on cigarettes, the GST rate is 28%. That means cigarettes are becoming more costly. When cigarettes become more costly, that means their consumption will get reduced. Yes or no? And also, what the government will do is on harmful products, they will collect higher rate of tax. That also they are going to use it for overall benefit of the country. So in that way, indirect taxes even promotes social welfare also. And this tax is regressive in nature. This is one disadvantage. Regressive. Sir, what do you mean by regressive? See, when it comes to income tax, when you make more income, you pay more tax. When you make less income, you make less tax. But when you take indirect taxes, no, whether you belong to top 1% wealthy people of the country, whether you live in a slum, whether you are a middle class person, whether you are above middle class, doesn't matter. Every person has to pay the same tax. So if I buy an iPhone, if I buy this iPhone, if I am buying it, I pay 18% of tax. If Ambani buys iPhone, 18% of tax only. I'm not as big as Ambani. I am also required to pay the same 18% of GST. Ambani also will pay 18% of GST only. So it is regressive in nature. That means irrespective of your income, irrespective of your social standards, everybody is required to pay the same amount of tax. That is what the regressive in nature. Very important, guys. These questions will be tested as a theoretical questions. Guys, from this chapter, GST and introduction, the questions which will be asked will be theoretical only in nature. They will ask you theory questions only. So what are features of indirect taxes? Tell me, what are the features of indirect taxes? Number one, important source of revenue to the government. Number two, it is a tax on commodities and services. Burden will be shifted onto ultimate consumer. No perception of direct pinch. It is inflationary in nature. The tax base is much wider. It promotes social welfare, and it is also regressive in nature. Understood, everybody? Now, see, earlier we used to have so many indirect taxes. Earlier, this GST was a recently introduced tax. In 2017, it was introduced. Now, before GST was introduced, there is no concept of indirect taxes only. No. If you think like that, we are wrong. Before GST also, there were indirect taxes. There were indirect taxes even before GST. GST was newly introduced. See, earlier, before this GST, we used to have so many indirect taxes. If I show you here, there are so many indirect taxes. There used to be central excise duty, there used to be service tax, there used to be excise duty, there used to be central sales tax, and state level indirect taxes like entertainment tax, tax on lottery, entry tax, luxury tax, like that. Before GST came into existence, there used to be so many indirect taxes. But all these indirect taxes which were there earlier, before GST era, we call it as pre-GST, post-GST. See, GST was one of the important milestone in the taxation system of the country. So before this GST came into existence, there used to be numerous indirect taxes. But even we have existing laws, even we have so many existing indirect taxes, but still GST was introduced. Why do you think that has taken place? Even though when we had a good system of indirect taxes, still why there is a need for introduction of GST in the year 2017? The answer is quite obvious. See, when something existing is having problem, then we think of upgrading, no? Even if you take in your personal life also, when you try to upgrade your personal life, when you are having some problems with your existing mechanisms. Similarly, the existing indirect tax mechanism which was there prior to GST, it used to suffer from so many problems. There used to be so many issues in the existing indirect tax structure. The existing indirect taxes used to suffer from so many deficiencies, so many obstacles. So all that deficiencies in the existing indirect tax system, that led to the introduction of this GST. So what are that problems? Why there is a need for GST in India? Why there is a need for GST in India? So there is a need for GST in India because the existing indirect tax regime, it is suffering from some deficiencies. It is suffering from some weaknesses. So since the existing indirect tax system is suffering from some weaknesses, that led to the introduction of GST. So what are the problems which existing indirect tax regime was suffering from? Number one, double taxation. Number one, double taxation. See, for this, I will give you just a brief of existing tax regime. See, earlier, what used to be there is, whenever manufacturing used to happen, there used to be excise duty. Whenever manufacturing is happening, the moment a manufacturer manufactures any product, he has to pay excise duty to the government. When he goes and sells it, if he is making intra-state sale, there used to be VAT. That means he is making the after manufacturing. If he is selling within the same state VAT used to be there. If he is making the sale to another state, there used to be CST. This is when it comes to goods. And earlier, if I am providing services, I'm a chartered accountant. Prior to GST, also chartered accountants were there. Will the chartered accountants do any manufacturing? No. Will they sell any goods? No. So that means no tax for them? No. There used to be something called service tax. So earlier, these used to be the major indirect taxes. Excise duty whenever something is manufactured, VAT whenever sale is happening within the same state, CST whenever sale is happening outside of the state, and also service tax. These kind of various indirect taxes used to be there. See, one main problem which used to happen in this existing tax regime is there used to be double taxation. There used to be what? Double taxation. Sir, why double taxation? Why? Because sometimes there used to be confusion whether a certain product will it fall under service or will it fall under goods. Why? Because if it falls under goods, VAT will be applicable. If it fall under services, service tax used to be applicable. Sometimes what used to happen, a single product used to be treated as goods also, it used to be treated as services also. Take software. Packaged software if you take. Ready-made software like Tally if you take. Tally is a software which will be loaded into your, there will be CDs or pen drives will be there. On that they will load the software and they will sell it to you. Now some departments, some officers argued that it is a software service. They told we will levy service tax on that. Some officers told you are selling it as a product. No, in the pen drive you are loading the software and giving it. That means that is a goods. We will levy VAT. Product is same. Software, pre-packaged software. But some people are interpreting it as goods. Some people are interpreting it as services. Because of that, in some cases, what used to happen is when the packaged software is sold, it will be treated as sale of goods also. VAT will be levied. It will be treated as sale of services also. Service tax used to be levied. Double taxation is happening. So there used to be a lot of confusion between which tax has to be levied on certain item. So there used to be double taxation in the existing tax regime. That is one major problem. Double taxation, deficiencies in the existing regime. Cascading effect of the taxes. Sir, what do you mean by cascading effect of taxes? Cascading means tax on tax. Cascading means what? Tax on tax. If I put it in simple terms, assume that I'm a manufacturer. I manufactured a product worth 1,000 rupees. On that, government will come and say, you have to pay excise duty, 10% excise duty, 100 rupees they have collected, total 1100. Now this I am selling. I am selling it at 1200 rupees. I'm selling it at 1200 rupees. Now, whatever taxes which I have paid, whatever excise duty which I have paid, there used to be no concept of credit. I will not get any benefit. So let me put it this way. So totally, my manufacturing cost is 1000 rupees. On that, the government collected excise duty of 100 rupees. 1100 rupees I have paid till the manufacturing. Now what used to happen is my cost used to be total 1100. Cost is 1100. So why? Because 1000 rupees is my cost of manufacturing. 100 rupees even I have paid taxes to the government. Now I will sell it. When I sell it, I will add my margin. So assume that I have added margin of some 400 rupees of margin I have added. How much margin I have added? 400. Now I will sell it at 1500 rupees. Now the government will come and say, you are selling the goods, no? You pay VAT. Assume VAT is also 10%. Now I will pay 150. Total 1650 I have to pay for the product. If you remember, if you observe here carefully, you are paying the tax on 1500. Okay, 150 rupees of VAT you are paying. But out of this 1500 rupees, 14,000 rupees is your cost, 400 rupees is your margin, 100 rupees is excise duty. This is what the breakup of this 1500. In this 1500, 1000 rupees is cost of manufacture. 400 rupees is your profit margin which you are adding. 100 rupees is your excise duty. And on the entire 1500 rupees, you are collecting 10% of VAT. That means you are collecting VAT on your cost of manufacturing also. You are collecting the VAT on your profit margin also. You are even charging VAT on your excise duty. Tax on tax. Excise duty is a tax. This one. Excise duty is a tax. On excise duty also, VAT is getting levied. That means there is a tax on once again tax. This is what used to happen. Cascading effect used to be there. There used to be tax on tax used to happen. So that is one more weakness in the existing tax regime. So two weaknesses we have seen, double taxation, cascading of taxes. No set off. What do you mean by no set off is in the existing tax regime in the GST. See this revision I am doing with an intention that you might have heard the classes, you already have a good understanding of basic concepts of GST. See in the GST, now in the GST mechanism there is a credit. That means if you are a registered person, if you are a business person, whatever GST that you have paid at the earlier stage, that you will get it as a credit. But earlier what used to happen is there used to be no set off. What do you mean by no set off is, for example, I have already paid excise duty. Now I have to pay a VAT of 150. Take the same example. I have paid excise duty of 100. I have a VAT of 150. Sir, I have a VAT payable of 150. Against it, can I adjust my 100 rupees of excise duty which I have already paid? No. No. So excise duty can't be used as credit for making payment of VAT. CST can't be used for making payment of VAT. Service tax can't be used for making payment of VAT. So there used to be no proper credit mechanism. No proper credit mechanism. So you pay excise duty, that you will not get it as credit for VAT. You pay service tax, you will not get it as credit for VAT. You pay VAT, that you will not get it as a credit for CST. So there used to be no proper credit mechanism. So that is one more disadvantage. No set off. Set off used to not happen properly. There used to be multiple taxes. In the existing tax regime, as I have told, so many taxes are there. See, when you have so many taxes, so many laws. When there are so many laws, so many compliances. When there are so many compliances, it will be burden for the business person. So many laws he has to comply. No, for example, under every taxation law, you have to file the returns. Earlier, there used to be 4 different laws. You have to file returns for excise duty, you have to file returns for VAT, you have to file returns for CST, you have to file returns for service tax, separate registration. Hell, a lot of headache used to be there. But all that has been gone. Now, all that has been replaced by one single law, which is GST. So, one drawback of existing tax regime was there used to be multiple taxes. Then, reduction of tax base to state government. See, earlier on services, we used to have service tax. But service tax is exclusively collected by central government. Service tax is exclusively collected by central government. VAT used to go for state governments. VAT and CST used to go for state governments. Excise duty also will go for central government. See, at that point of time, India was very much expanding on its services. So many service sector industries are coming up. But the central government told on all the services, we only will collect service tax. Then the state government started crying. There used to be a lot of problem for state governments. Why? Because in every state, service sector is increasing, but the government is coming and telling, but the central government is coming and telling, on the services, we only will collect the service tax. So state governments, it was loss of revenue for the state governments. Why? Because state governments were deprived of the power to collect tax on services. I am talking about existing tax regime before GST. So there used to be reduction of tax base for state governments. State governments used to affect a law, and also cascading effect of CST. Nothing but this is anyhow covered. Cascading of taxes. That means even whatever CST that you have paid, central sales tax, whatever you have paid, that also you can't use it as a credit for VAT. So these are the various problems which existing tax regime, which existing indirect tax regime was suffering from, and all these weaknesses has created so many problems who are doing the business in the industry, and the government thought we need to bring some change in the indirect tax regime. So what they have done is to overcome all these deficiencies, they brought one single GST, they brought one single indirect tax to overcome all these deficiencies. And what they have brought? GST they have brought. GST they have brought. So to overcome these weaknesses, inefficiencies of the existing indirect tax regime, to overcome these problems, GST has been brought into picture. So now let us try to understand what is the definition of goods and services tax. So whatever definition I have given you here, this is the definition given in the constitution itself. Whatever definition of the GST that I am about to explain, that has been given in the constitution. In the constitution itself, they have defined what is GST. They say GST is a tax on goods, on services, or both, except supply of alcoholic liquor for human consumption. Which means, in the constitution itself, governments have reserved the power that, see, when it comes to alcoholic liquor for human consumption, state government will collect the tax on that. State governments will levy excise duty on alcoholic liquor for human consumption. When the GST was getting introduced, everybody, state government, central government mutually participated. They told, boss, we will all come to one conclusion. We'll all come to one conclusion and we will bring the GST into picture. So now when the governments were deciding, for example, when the GST they have to bring in, central government told, okay, till now we used to collect excise duty, we will give it up our excise duty. We also give up our service tax. State governments told, okay, we are ready to sacrifice VAT, we are ready to sacrifice CST. But what the state governments told is, if you want to bring the GST, no, one power we will not give up. See, state governments have the right to collect tax on alcoholic liquor for human consumption. Liquor. So state government, in the earlier tax regime also, now in the GST regime also, the tax on alcoholic liquor for human consumption, whatever alcoholic liquor for human consumption is there, on that exclusive right to collect the tax lies with the state government. So when GST was getting introduced, central government told, boss, we will give up our excise duty, we will give up our service tax. They asked the state governments, you also give up your VAT, you also give up your CST, you also give up tax on alcoholic liquor for human consumption. State government told, we don't want GST only. If you are asking our right to collect the tax on alcoholic liquor for human consumption, we will not give approval for GST only. If you want GST to be implemented, we will give up our VAT, we will give up our CST, but don't ask us to give up the tax on alcoholic liquor for human consumption. If you insist that we have to give up our right on alcoholic liquor for human consumption, state governments told, we will not give you approval for bringing GST. So that's why state governments are not at all ready to give their right to tax alcoholic liquor for human consumption. Why? Because bigger source of revenue, no. You all know it, right? Alcoholic liquor for human consumption. When you are happy, people drink. When they are sad, people drink. Recession-proof industry. Yes or no? Alcoholic liquor for human consumption. Recession-proof industry. When there is recession, when everything is going bad, alcohol sales will go up. So state governments thought, we don't want to give up our right of taxation on alcoholic liquor for human consumption. We will not give it. If you want to take this right from us, we will not allow to bring the GST. Then the central government has to compromise. Okay, we'll do one thing. We will not bring the GST. We will not bring alcoholic liquor for human consumption under GST purview. We will not bring alcoholic liquor for human consumption under GST purview. Here, state governments, you only enjoy the power to collect the tax on alcoholic liquor for human consumption. Let us not bring into GST purview. State governments told, hey, you central government, you will do the cheating later. Let us add this point in the constitution itself. What the state governments insisted, we will not trust the central government if you just say it by words. Let us add this in the constitution itself. So that's why it was written in the constitution itself. GST is a tax on goods, services, or both, except taxes on supply of alcoholic liquor for human consumption. That means alcoholic liquor for human consumption, when it is getting sold or supplied, that will never be coming under GST purview. On that, exclusively state government only will collect the excise duty. Understood? Now, what are the characteristics of GST? Number one, it is a value added tax. What is it? It is a value added tax. That means at each and every stage, only on value addition GST will be collected. At each and every subsequent stage, on value addition only GST will be collected. Sir, what do you mean by this? Let me try to elaborate it with the help of one example. Let me bring an example for you. Okay. So let me try to explain that concept of, they are telling the first characteristics of the GST is, it is a value added tax. So let me try to explain the concept of value added tax with the help of this example. Assume that there is a manufacturer. Now he manufactured a goods worth 10,000. Assume GST rate is 1,000 rupees. So he will collect it from the customer. The total cost is 10,000 rupees. On that, GST charged is 1,000 rupees. Total 11,000 rupees he will collect it from the customer. Okay. So now the manufacturer will pay how much amount of GST to the government? The manufacturer, he has collected 11,000 rupees from the wholesaler, from his customer who is a wholesaler. 10,000 rupees he will keep, 1,000 rupees he will pay to the government. 1,000 rupees he will pay to government. Now, wholesaler. Now, wholesaler, he is not an ultimate consumer. He will make a further supply. What is the cost to the wholesaler? The cost to the wholesaler is only 10,000 rupees. Sir, what about 1,000 rupees of tax which he has paid? He paid 11,000, no? Will the cost will not be 11,000? No. The wholesaler's cost will be 10,000 rupees only. Why? Because 1,000 rupees he will get credit. 1,000 rupees what he will get? 1,000 rupees of tax, whatever he has paid on purchases, that he will get it as a input tax credit. So that's why wholesaler's cost is 10,000 rupees. He will add a margin, no? At cost only he will not sell. Wholesaler will add margin. Assume he has added 20% margin. 2,000 rupees is his profit margin. Total 12,000 rupees. And the GST amount on that is 10%, 1,200 rupees of GST. 13,200. At 13,200 rupees, he has sold this product to retailer. Now, if we understand it, this wholesaler has collected GST of total how much amount? 1200 rupees. His output tax liability is 1200 rupees. Will he pay this entire 1200 rupees to the government? No. Why? Because at earlier stage, he has already paid a GST of 1000 rupees. That credit he will get. Input tax credit of 1000 rupees he will get. Net, how much he will pay to the government? 200 rupees only he will pay to the government. How much he will pay to the government? 200 rupees only he will pay to the government. Able to understand? See, now if you observe this wholesaler carefully, how much amount of GST he is paying? 200 rupees. What is the value addition done by him? Value addition means whatever profit margin, whatever extra cost he has incurred. See, value addition is 2000 rupees. If you multiply on that value addition 2000 rupees at the rate of 10% of GST, how much will be the amount? 200. So wholesaler is paying the tax only on value addition. 1200 rupees is his output tax liability, but will he pay entire amount of cash to the government? No. Against this output tax liability, he will adjust input tax credit, balance 200 only he will pay. And this 200 rupees of GST is nothing but tax only on value addition. Wholesaler is doing a value addition of only 2000 rupees. On that 2000 rupees, 10% if you multiply, that much amount of GST only he is paying it to the government. So wholesaler is paying the GST amount only on value addition, whatever he has done. Now, this product has come to retailer. Now, what is the retailer's cost? Don't say 13,200. Why? Because out of this 13,200, 1200 rupees is only the cost, 12,000 rupees is only the cost, 1200 rupees is GST, which he will get it as input tax credit. Now, he will also add profit margin. No, when retailer sells it to final consumer, he will also add profit margin. Assume his profit margin is 2,400. Total sale price is 14,400. On that GST is 10%, 1440. Total 15,840 he will collect it from the final consumer. What is his output tax liability? 1440. Will he pay the entire amount to the government? No. He will take an input tax credit of 1200. Previously he paid 1200. No, that he will take it as credit. Net, how much he will pay? 240. 240 of GST only he will pay to the government. What value addition retailer has done? Retailer has done a value addition of 2,400. On that, if you multiply applicable rate of GST, how much it is? 240. So if you see here, retailer also paid only the GST on value addition. Whatever value addition he has done, on that only they are paying the GST. Able to understand? See, when it comes to manufacturer, he has done complete value addition of 10,000. From scratch, he created a product. Value addition he has done is 10,000. On 10,000 rupees, he paid GST of 10% to the government. Wholesaler, he done a value addition of, by adding profit margin, 20,000 rupees. On that 2,000 rupees. On that 2,000 only, net he has paid the GST to the government. That means value addition the wholesaler has done is 2,000. Retailer has done a value addition of 2,400. On that value addition only, he has paid the GST to the government. So this is what the meaning of GST being a value addition tax or value added tax. At each and every stage, whatever value addition is happening, on that only GST will be imposed. So that is what the first characteristic. It is a value added tax. And number two, it will promote continuous chain of credit. That means whatever tax which a person has paid, that he can use it as a credit for making further payment of the taxes. So that's what even I have explained here. So whatever GST this wholesaler has paid, 1,000 rupees of GST has paid, no, that 1,000 rupees he can use it as a credit for making of output tax liability. Now, this retailer has paid 1,200 rupees of GST. This 1,200 rupees he can use it as a credit for making the payment of his output tax liability. So like this continuous chain of credit will be there. Whatever tax that you have paid at an earlier stage, that you can use it as a credit for making payment of your output tax liability. So this is one more characteristics of GST. Burden will be borne by final consumer. Here if you observe the entire cycle, manufacturer is paying 1,000 rupees of GST to the government. From his own pocket? No. He collected from the wholesaler, paid it to the government. Wholesaler is paying total 1,200. 1,000 by way of input tax credit, 200 by way of cash. So whatever he is paying, is he paying from his own pocket? No. He collected from the retailer, paid it to the government. Retailer is paying the GST to the government. Is he paying it from his own pocket? No. He is collecting from final consumer and paying it to the government. Who is the ultimate sufferer of this GST? Final consumer is going to be the ultimate person who will have the impact of the entire GST on his shoulders. So that is one more characteristics of GST. Next one, no cascading effects. That means there will not be any tax on tax. Earlier there used to be VAT on excise duty, and there used to be CST on excise duty, service tax on excise duty. Like that, there used to be tax on tax. But with introduction of GST, there is no cascading effect. There is no concept of tax on tax. The cascading effect has been removed. So the existing taxation regime was suffering from these many problems that led to the introduction of the GST, and GST is having these characteristics. Able to understand, everybody? Now, sir, what and all taxes were subsumed into GST? Nothing but GST replaced various existing indirect taxes. So what and all taxes are replaced by the GST? When they say subsumed, it is having a meaning as replaced. So what taxes are replaced by the GST? When you look at central level taxes, the taxes which are levied by central government, these all taxes are subsumed. That means these taxes are gone once the GST has come into picture. What are they? Central excise duty, additional excise duties. Service tax has gone. Excise duty under Medicinal and Toilet Preparation Act, CVD and Special CVD, Central Sales Tax, that is CST, Central Surcharges and cesses in so far as they relate to supply of goods and services. So these many kind of central taxes which used to be levied earlier, they are all gone with the introduction of GST. When it comes to state level taxes, state related surcharges and cesses in so far as they relate to supply of goods and services. Entertainment tax, very important, except those levied by local bodies, which means entertainment taxes which are collected by central government, state governments, they are gone with the introduction of GST. But even after introduction of GST also, still there are entertainment taxes which are levied by local bodies. Very important point for MCQs and true or false statements. Entertainment taxes levied by local bodies is not subsumed into GST. Entertainment taxes levied by local bodies. That means even after introduction of GST also, still local bodies will have the power to collect the entertainment tax. Entertainment taxes levied by other than local bodies, like entertainment taxes levied by state government, central government, they are only gone because of GST. But entertainment taxes levied by local bodies like panchayat, municipal corporations, those entertainment taxes are still there. Even after introduction of GST also, still the local bodies like municipalities, panchayats, they can still impose entertainment tax. But after introduction of GST, central government, state government, they can't collect any entertainment tax. Very important for MCQs and true or false statements. Taxes on lottery, betting, gambling, these taxes are also gone. Entry tax is also gone. Purchase tax is also gone. VAT, sales tax, luxury tax, sales taxes on advertisement, everything. These all taxes are replaced. These all taxes are subsumed into GST. Most important takeaway from here is entertainment tax levied by local bodies, not yet replaced by GST. It is still there even after introduction of GST. Understood? So we are done with need for GST, characteristics of the GST, all this we are done. So what else we are left with here? Okay. Dual GST model. In India, we have dual GST model. See, earlier tax regime, if you look into, there are certain taxes which are collected by central government. There are certain taxes which are collected exclusively by state government. Like in the existing tax regime, excise duty will be collected only by central government. Service tax used to be collected only by central government. Whereas VAT revenue used to go to state government, and also this CST also used to go to state government. And even one more thing, what else we have? Yeah, these are the existing taxation regimes. Under existing pre-GST, like this, some taxes will be exclusively levied by central government. Some taxes used to be exclusively levied by state government. But since all the taxes are gone, GST came up with the innovative concept. They came up with a dual GST model. When I say dual GST model, both central government, state government can collectively levy the GST amount. Earlier, excise duty only central government. Service tax only central government, VAT only state government, CST only state government. So like this, what used to happen is they used to divide the taxes, which tax central government can impose, which tax state government can impose. But when they brought the GST, they brought dual model of GST. Dual model of GST means GST can be collectively levied by central as well as states simultaneously. Both can collectively levy the tax. And GST is a destination based tax. GST is a what? Destination based tax, not the source, destination. That means wherever the goods are finally getting consumed, to that state the government, the revenue will go. Take for example, assume that a product is manufactured in Gujarat. A product is manufactured in Gujarat. Ultimately, it is sold to the final consumer in Madhya Pradesh. The revenue will go to Madhya Pradesh state government, not the manufacturing or procuring state. The ultimately GST revenue will go to the destination state. So that's why we call GST is a destination based taxation. Sir, how come dual GST model is getting implemented? For this, the supplies are divided into two categories. Number one is intrastate, other one is interstate. So we need to understand what is intrastate, what is interstate. Intrastate, very simple. If the location of the supplier and place of supply fall in same state or they fall in same union territory. If the location of the supplier and place of supply they fall in same state or union territory, then we call it as intrastate supply. There is a supplier located in Tamil Nadu. He is selling the goods to another person who is also located in Tamil Nadu. Location of the supplier, place of supply, both fall in same state. That we call it as intrastate. A person is located in Daman and Diu, Dadra Nagar Haveli, and he is also supplying the goods in Daman and Diu and Dadra Nagar Haveli union territories. Location of the supplier, place of supply, same union territory. That also we call it as intrastate supply. So when the location of the supplier, very important definition guys, when the location of the supplier and place of supply, they are in the same state or union territory, then we call it as intrastate supply. When it is a intrastate supply, the central government will levy CGST, state government will levy SGST. If it is a union territory, UTGST will be there. So intrastate supply, two taxes will be levied, CGST, SGST or UTGST. Both will not be there, SGST or UTGST. If you are making supply from state, SGST. If you are making supply from union territory, UTGST. So intrastate supply, two taxes, CGST, SGST or UTGST. However, if it is a interstate supply, sir, what do you mean by interstate supply? If the location of supplier and place of supply are in two different states, are in two different union territories, or one state and a union territory. Assume I am a person located in Tamil Nadu. I am supplying the goods to a person located in Karnataka. Place of supply, Tamil Nadu. Whereas, location of supplier, Tamil Nadu. Place of supply, Karnataka, interstate. It is what? Interstate. Or I am located in Daman and Diu and Dadra Nagar Haveli. Whereas I am supplying the goods to another union territory. Take for example, Assam. Not Assam. Okay. So let me put it this way. So I am located in Daman and Diu, Dadra Nagar Haveli, and I am making supply to some another union territory. I am making supply to another union territory. So in that case also what will happen? My location of the supplier is in one union territory, whereas place of supply is in another union territory. This also will fall under interstate supply. Or assume that I am a person located in Tamil Nadu. I am supplying the goods to Daman and Dadra Nagar Haveli. So that is location of the supplier is in one state, place of supply is in union territory. That also will fall under interstate supply. So we need to remember one thing. What is the meaning of interstate supply? When the location of the supplier and place of supply are in two different states, when the location of the supplier and place of supply are in two different union territories, or the location of the supplier and place of supply is in one state and in another union territory, that we call it as interstate supply. And in case of interstate supply, only one tax will be levied by the central government, IGST. They will levy it, and IGST is nothing but a collective figure of CGST, UTGST plus SGST, UTGST plus CGST. So collection of CGST, SGST will be levied by will be levied in the case of interstate supply by the central government, IGST. So in case of interstate supply, central government will collect IGST, but what will happen is when the central government collects IGST, entire value they can't keep, 50% they will keep and 50% they will give it to the destination state. Take for example, a person in Tamil Nadu sold the goods to another person located in Karnataka. It is a interstate supply. Now the central government will collect IGST. Assume 18% of IGST they have collected. Now the central government can't keep entire IGST. They will keep 50% of that IGST, balance 50% they will give it to destination state. What is the destination state here? Karnataka. Balance 50% they will give it to Karnataka. Understood? So this is what the dual model of GST. Very simple guys. In case of GST, both central government, state government collectively levy the taxes. Intrastate supply, CGST, SGST or UTGST. Interstate supply, IGST. Who will collect IGST? Central government. Can they keep the entire portion? No. 50% they will keep, 50% they will give it to destination based state. Clear everybody till here? Next. What are they? So next provisions, if I explain, just hold on for a minute. Let me erase all this. Okay. Right. So now we will talk about special treatment of certain products. Certain products are there for which even after introduction of GST also there is some special treatment. What are they? First one, alcoholic liquor for human consumption. When it comes to alcoholic liquor for human consumption, as I've already told you, that will never come under GST purview. Why? Because in the constitution itself they have told GST does not include tax on alcoholic liquor for human consumption. So alcoholic liquor for human consumption will never come under GST purview. It will also not come under central excise duty. On alcoholic liquor for human consumption, what will happen is the state government will impose excise duty. State government will impose what? Excise duty they will impose on this, on the alcoholic liquor for human consumption, along with VAT. VAT also will be there, which will be going to state governments only. So alcoholic liquor for human consumption will never come under GST purview. State governments have exclusive power to tax alcoholic liquor for human consumption. And there are 5 petroleum products. There are 5 petroleum related products which are also not under GST purview for the time being now. What are they? Petroleum crude, diesel, petrol, aviation turbine fuel, natural gas. 5 petroleum products. What are they? Petroleum crude, that is crude petroleum, diesel, petrol, aviation turbine fuel, and natural gas. Able to understand? So these 5 petroleum products will never come under, not will never come. For the time being now, they don't come under GST purview. That means what the government told is these are all sensitive. Petrol products are sensitive products. Petroleum crude or diesel, high speed diesel they say, but nothing but diesel, or petrol, aviation turbine fuel, natural gas. These are all very sensitive products. See, even if 1 rupee of price is getting changed for the petroleum products, there will be a lot of ruckus among the citizens. So what the government told is, on these products, we will levy GST, but we will tell you later from which point we will start collecting GST on these 5 petroleum products. That will be decided later. Till that time it is decided, it will not be levied to GST. Say, central government will impose excise duty on it. State government will not have any excise duty on it, but VAT or CST will be there when these 5 petroleum products are sold. One difference, guys, alcoholic liquor for human consumption never come into GST. But these 5 petroleum products, they will come under GST purview at a future date. Government will decide the future date from when on these 5 products GST will be levied. Till that point of time, central government will collect excise duty, and when it is sold, VAT or CST will be there. Tobacco. See, tobacco is a hazardous product. So, tobacco will be levied to GST. Whenever the sale of tobacco is happening, on that GST will be there. Along with that, central government also told we will also impose excise duty. So impose what? Excise duty. So when it comes to tobacco, it is getting covered under GST also. It is also getting covered under central excise. Whereas in opium, Indian hemp, or other narcotics, these are also hazardous products. These are also drug addictive substances. On these products also, what the government has told us, we will impose GST. Along that, state government told we will also impose state level excise duty. We will also impose state level excise duty. So this is special treatment for this 4 products under even after introduction of GST regime. Come on guys, let us quickly revise. Alcoholic liquor for human consumption, no GST. No central excise duty, state level excise duty, state level VAT. 5 petroleum products, what are they? Petroleum crude, high speed diesel, petrol, aviation turbine fuel, natural gas. These 5 petroleum products. For the time being now, they are not under GST, but the government will tell you in the future from when these products will come under GST purview. Till that time, they will be levied under central excise duty and VAT. Tobacco, this will be under GST also, central excise duty also will be there. Opium, Indian hemp, and other narcotics, what will happen? They are currently under GST also, and state government also will impose excise duty on it. Understood? Next. See, when the GST was getting introduced, it needed altogether constitutional amendment. When they want to bring the GST law, they have to make some amendments to the constitution itself. Why, sir? Why? Because let us have some background regarding constitutional provisions. There used to be Article 265. What does Article 265 say? Article 265 6 or Article 265 says government can't levy any taxes except on law. If the government has to impose any taxes, they can do it only after bringing some law. Without any law, no government shall collect any tax. This is what Article 265 says. Then we have Article 245, which says that Parliament can make laws for entire country, whereas legislature of a state can make laws only for states. Earlier in the Article 265, the Constitution has given power Parliament to make the law for entire country, whereas the legislature of the state can make the laws only for respective states. So, and which laws will be, which taxes will be Then which taxes will be imposed by parliament, which taxes will be imposed by state legislature. For that they have given three lists. In the 7th schedule of Article 246, they have given three lists. List 1 contains those taxes which can be levied by central government, that is parliament. List 2 contains those taxes which can be imposed by state list. List 3 used to be concurrent list, which contains the taxes which can be collectively levied by central government as well as state government. These are all existing taxation regimes. These are all existing constitutional provisions before GST came into existence. There used to be Article 265, which says any tax shall be collected only on authority of law. Article 245 says Parliament is having the power to make law for the entire country, whereas legislature of the state will have a power to impose law for any state. And in the 7th schedule of Article 46, Article 246, there used to be three lists. List 1 is a union list, list 2 is a state list, list 3 is a concurrent list. Sir, in the list 3 they could have imposed GST? No. Why? Because even in the existing provisions, they told in the list 3 they have given certain items where government, central government, state government can collectively levy the taxes. But there used to be one more article which says that if the parliament has also made some law, if the legislature of the state also made some law, the law made by the parliament will always prevail. There used to be concurrent list. Even before GST also, there used to be concurrent list. Those taxes which is central government, state government, both can levy. Sir, they could have brought the GST here, no? Why it needed a constitutional amendment? Why? Because there is one more article of the constitution which says, if regarding certain matter, parliament made a law, regarding certain matter, legislature of state also made a law, the law made by the parliament will always prevail. That means they have given an upper hand to parliament. So that's why they don't want the GST. State governments don't want the GST to be introduced here. So that's why what they have done is they have amended the constitution. They brought one new article, Article 246A, which says that Parliament and state legislature both will have the power to levy GST. They updated the constitution, they brought a new article, and they told now going forward we'll bring the GST, which will be levied both by Parliament and state legislature. And Article 269 is also introduced, which says that when it comes to interstate transactions, only central government will collect IGST. And after central government has collected IGST, they can't keep the entire amount. As I have told, 50% they will keep, 50% will be given to the respective state governments. And also Article 269A told whenever goods are getting imported or services are getting imported, that also will be treated as interstate supply. On that also IGST will come. Which article told? Article 269A of the Constitution told in case of import of goods or import of services, Article 269A says that also we treat it as interstate supply, and on that also IGST will be collected. And one more article has been introduced, Article 279A, which is talking about GST Council. See, since the GST is a new law, so many problems might come across. While implementing this law, the authorities might come across various problems. To solve these problems, they have created one forum called GST Council. Sir, when it was created, sir, on 15th of September 2016, it was created. Who will be the chairman of this GST Council? Union Finance Minister. And along with that, ministers in charge of finance or taxation or any other minister nominated by state or nominated from each state or union territory, they also will become members of the GST Council. That means one chairman will be there, who is Union Finance Minister, the current Union Finance Minister Nirmala Sitharaman. Along with that, either ministers in charge of finance or taxation or any other minister nominated by the state government or union territory, they also will become members of the GST Council. And what does the GST Council do? It will make recommendations on tax rate, what should be the tax rate, what should be the exemptions. When it comes to special category states, there are some 11 special category states. Against that 11 special category states also they will give tax recommendations. One more important thing here which we have to focus, what are the 11 special category states that we need to understand. See here. So these are 11 special category states. I have a shortcut for you to remember what are the 11 special category states. So the 11 special category states are Manshat, J&K, Manshat, Jammu Kashmir. So what does that mean? The full form is M stands for 3 states. And let me read it here. Manshat, Jammu and Kashmir. M for 3 special category states, Manipur, Meghalaya, Mizoram. A for Arunachal Pradesh and Assam. N for Nagaland. S for Sikkim, Himachal Pradesh, and U for Uttarakhand, Tripura and Jammu and Kashmir. These are 11 special category states. GST Council also will make recommendations of tax laws for this 11 special category states. And if at all any decision has to be taken by GST Council, for that majority of not less than 3/4 of the weighted votes should be in favor. That means if any decision has to be taken by GST Council, majority of decision should be what? They need 3/4 of majority they want. Not just 50% majority, they want 3/4 of majority for taking any decision by GST Council. Understood? So these are few amendments made in GST law. These are few amendments made in Constitution to bring the GST law. Okay. Next, small few more things are there. Extent of GST law. Sir, this GST law will apply to what extent? There is CGST Act. The CGST Act will apply to whole of India. CGST Act will apply to whole of India. Now the question comes, sir, what is India? India means what? What is included in India? So if you see here, India includes territory of India. So we have this India, no? So all this territory of India will come in. All this landmass of the country will be coming under definition of India. Territorial waters. We will have territorial waters, no? Territorial waters means from the landmass up to 12 nautical miles, that we call it as territorial waters. Even that 12 nautical miles from the seashore also will come under India. Below this, seabed and sea soil will be there. These are territorial waters. Below the water, there will be landmass also, that we call it as seabed and subsoil. That also will form part of India. And it includes exclusive economic zone also. It includes what? Exclusive economic zone. Exclusive economic zone means up to 200 nautical miles. From the sea up to 200 nautical miles, that we call it as exclusive economic zone. That also will form part of India definition. Below this also landmass will be there, no? That we call it as continental shelf. That we call it as continental shelf. And also there are some maritime zones. In the high seas also, there are some zones which are prescribed, which we generally call it as maritime zones. Even that maritime zones also will come under India. And airspace above this territory and territorial waters, not just landmass. Above that airspace also will be there. See, when you travel in the air, they will give you food. On that also GST will come. You can't say, sir, food is not getting supplied on land. No, food is not getting supplied on the water. No GST you can't say. Why? Because they told even the airspace above the territory, above the territory of India and the territorial waters, that also will come under India definition. Able to understand? So what is India, sir? India means the territory of India, which is landmass of India. Territorial waters up to 12 nautical miles. Seabed and subsoil. Exclusive economic zone up to 200 nautical miles. Continental shelf. Maritime zones. And airspace above territory and territorial waters. All that we call it as India. And CGST Act applies to whole of India. SGST Act applies to each state and also union territory with legislature. There are 3 union territories which have a separate legislature: Delhi, Puducherry, Jammu Kashmir. These 3, even though these are union territories, they have their own legislature, they have their own chief minister, they have their own representatives. So even though these 3 union territories are there, but they have legislature, they have their own separate legislature. For the purpose of GST, these 3 union territories also will be considered as state only. For the purpose of GST, all the states and union territories with legislature, 3 union territories with legislature, Delhi, Puducherry, Jammu, Kashmir, these 3 also will be treated as states only. SGST Act will be applicable to all these states and union territories with legislature. UTGST Act, that will be applicable for remaining union territories without legislature. What are they? Andaman and Nicobar Islands, Lakshadweep, Daman and Diu and Dadra Nagar Haveli, Ladakh and Chandigarh. For these 5 union territories without legislature, UTGST Act will be applicable. Understood everybody? Clear and comfortable? So this is what regarding extent of GST laws. Clear everyone? So one simple question I will ask. Assume that there is a person who is located in Delhi. He is also making a supply to another person who is also located in Delhi. That means location of supplier is Delhi, place of supply is also Delhi. What will be collected on this? CGST will be collected, interstate supply. And what else will be collected? SGST or UTGST? SGST or UTGST? Delhi is union territory, but for the purpose of GST, since Delhi is having separate legislature, it will also be considered as state only. SGST only will be collected. Assume that there is a person from Andaman. This person is making supply in Andaman only. That means it is also interstate supply. What will be collected? Intrastate supply. What will be collected? CGST will be collected. and UTGST will be collected. Why? Because it is a union territory without legislature. Understood? So this discussion, just keep it in the back of your mind. Then we have some benefits of GST. This you can manage, this you can read and manage. Sir, what are the benefits of GST? To the economy, there are various benefits. Unified national market, one single tax regime, one single tax system for the entire country. So we have one single unified national market. Make in India initiative gets more boost for this. Enhanced investment opportunities, employment opportunities are increasing in India. And also GST simplifies the tax structure, ease of doing business. You need not take multiple registrations, you need not do multiple compliances, only one law, one compliances. Certainty in tax administration, you need not go across so many government departments, only one GST department will be there. If you have any issues, you can solve only with one department. Certainty in tax administration, easy tax compliances. Today entire GST mechanism is based on technology. You need not go to even offices. Also, just by using one website you can make all your GST compliances, completely automated procedures, reduction in compliance cost. Your compliance cost is also getting reduced. There is industry and trade is also getting benefited. First of all, industry is getting benefited by way of increased investments, employments. So overall industry will get benefited. No more cascading, there is no longer tax on tax, and even small traders will get benefited a lot because of GST. And in order to manage all the GST, as I have told, there is one single website which has been developed by the government, which we call it as GST Common Portal, which can be accessed at www.gst.gov.in. This is the website to manage all our GST compliances. And this website is maintained by GSTN, by an organization called GSTN, GST Network. They will manage that GST portal. And what activities you can do in this GST Common Portal? You can apply for registration, you can file your returns, you can do your computation, you can do your settlements, MIS reports will be generated, analysis will happen, matching of the payments. All these functions can be taken place at the GST Common Portal. And when this GST was introduced, because of GST, some state governments are losing their revenue. Some state governments are losing their revenue. So that's why what the government told us, since some state governments are losing the revenue because of GST, we will compensate. Central government told, because of introduction of GST, there is some loss of revenue for some state governments. Central government told, okay, don't worry, even though you are losing the revenue because of GST, we will compensate. Now central government agreed that they will compensate those state governments who are losing because of introduction of GST. But how the central government will compensate? Will they compensate from their own pocket? No. How the central government will compensate to that losing state governments? Once again, they told, we will collect extra tax called GST compensation cess. They told state governments are losing because of GST. Central government told we will compensate, not from their own pocket, once again from our pocket only, from the citizens' pocket only. So to compensate for that losing state governments, central government imposed one more tax called GST compensation cess. And this GST compensation cess will be imposed only on luxury items and demerit goods like tobacco, etc. And luxury goods like cars and all, on that also compensation cess they will collect. And why? What is the purpose? To compensate the loss of revenue to those state governments. And this GST compensation cess will not be levied forever. For the time being now, it will be levied only up to 31st of March 2026. After that, they will not collect any compensation cess. Nothing but compensation cess is also a kind of tax. And one more small concept, GSP or ASPs, GST Suvidha Providers, Application Service Providers. Nothing but assume that if I'm an individual registered person, if I'm a small business person, I can file my returns easily. In the GST portal, I can do the compliances easily. But if you take big companies, they can't directly do all the compliances in the GST portal. For example, if you take Reliance, if you take DMart, per day thousands, per day crores and lakhs of entries will be there. For them, going and manually filing all that information in the GST portal will be difficult. So that's why what the government has given is, they have given permission to some entities and gave them the name GSP, GST Suvidha Providers. Now what this GSPs will do is, they will develop applications for interacting with the common portal. Nothing but www.gstgov.in is there. No, that is a very basic website. There small businessmen can easily do the compliances. But for big business people, going and doing the filing manually in the GST common portal is very much a difficult task. So that's why what the government has done is, they have identified few entities, they gave them the name called GSPs. Now what this GSPs will do is, they will act as a channel between GST portal and taxpayer. That means what GSPs will do is, they will develop applications for interacting with the GST portal. Instead of directly going and filing with the GST portal, they will develop some easy applications. They will develop some softwares which can be used by the taxpayers for doing the compliances with the GST common portal. So GSPs will act as a connection between the taxpayer and GST common portal, nothing but website. Whatever this www.gstgov.in is there, no, this GSPs will act as a connection, act as a simplifier between the taxpayer and GST network. And these GSPs, in order to develop that applications, they will take help of another service providers whom we call them as ASP. So ASP will act as a connection between GSP and GSTN. Nothing but between the taxpayer and the GST network. Let me put it this way. There is a taxpayer. Now he wants to interact with GSTN. For ease in compliance, GST network. He wants to interact with GST network. For ease in compliance, what they will do is GSPs will come here. So GSPs will develop application for the purpose of this taxpayer using which they can interact with GSTN. But GSP, for the purpose of developing that applications, they take the help of ASPs. So what do I mean by this is, between the taxpayer and GSTN, GSP will act as a connection. Between the GSP and GSTN, ASP will act as a connection. Able to understand? So this much you remember, that will be more than enough. Clear everybody? So with this, successfully we have revised the entire chapter, GST and introduction. GST in India and introduction. Clear everyone? With that first chapter we are done with it. Clear and comfortable everybody? See, since we are done with the revision of the chapter GST and introduction, now we are going to concentrate on the next most important chapter from the examination perspective as well as conceptual perspective. So the chapter which we are going to revise now is supply under GST. See, I can say this chapter is one of the roots of the entire GST mechanism. So without any delay further, let us try to revise in a very comfortable manner what is this supply under GST. See, before I start discussing about supply, first I want to concentrate on the terms what is goods, what are services. Why? Because if you remember the discussion whatever we had in the previous chapter, I told that GST means tax on goods or services or both. That means for GST to be imposed, first there should be goods or services. Only when goods or services are there, then only GST will come into picture. So first it becomes necessary for us to understand what is the definition of goods, what is the definition of services under GST, what will come under goods, what will come under services, that we need to understand. So first of all, I will try to explain first the concept of goods. Sir, what is the definition of goods? In the GST Act, they say that goods means every kind of movable property. Every kind of movable property, we call it as goods. Sir, what is movable property? Now, movable property means which is not an immobile property. Movable property means which is not an immobile property. Then what is immobile property? We will say which is not a movable property. So this loop will never end. Somewhere we have to end it. So they are telling goods means every kinds of movable property, and movable property means which is other than immobile property. So we will try to understand first what is immobile property. What is immobile, yes? What is immobile, guys? So immobile property means they define it as land. Land is an immobile property. Benefits arising out of land, that is also immobile property. Or things which are permanently fastened or attached to the earth. If there are certain things which are permanently fastened or attached to the earth, that also we call it as immobile property. Land is an immobile property. Building is an immobile property. A tree is an immobile property. Cell phone tower, which is permanently attached to the earth, immobile property. A plant and machinery, which is permanently fixed to the earth, immobile property. So they are telling goods are not immobile properties. Something which is movable property, that will come under goods. That means something which is not falling under immobile property definition, that will form part of goods. Take for example this pen, whatever I have, I can move it from one place to another place. That is a movable property. This pen is a good. I have a mouse. So this mouse I can move from one place to another place. Movable property. That mouse is a goods. Watch I can move from one place to another place. Goods. I have a bike. I can move from one place to another place. I have a car. I can move it from one place to another place. Goods. All these are goods. So goods means every kind of movable property. But however, goods does not include money. Money is also movable. For example, I have some 10,000 rupees of cash. So this I am giving it to another person. So will the cash also will form part of goods? No. They are telling money will not form part of goods. Money is not goods. However, if you are holding some currency for its numismatic value, If you are holding the currency for numismatic value, then it will not form part of money definition. If it is not forming part of money definition, then it will form part of goods definition. First, basically what they're telling, it's goods is every kind of movable property, but goods does not include money. Whatever currency you have, that you will not consider it as goods. But however, they said one more point, currency which is held for numismatic value. For example, I am saving some old coins which are no longer a legal tender money. Some 1 paise coins I am having, which used to be there long ago. Why I held that 1 paise coin is for its numismatic value, because that is having some inbuilt value. So if you are holding some antique coins or old coins which are no longer a legal tender money, that currency which is held for numismatic value, it is not money. If it is not money, that is goods. So goods includes every kind of movable property, but goods does not include money. But however, goods include currency which is held for numismatic value, like old coins which are kept for its value. So those will form part of goods. Similarly, goods also does not include securities. Goods also does not include securities. Sir, what do you mean by securities? Shares. If you are doing buying and selling of the shares, debentures, etc., these kind of securities also will not be considered as goods. So number one, goods is every kind of mobile property. It does not include money. However, currency held for numismatic value, not money, that means it is goods. However, even goods does not include securities also. But goods include actionable claims. Goods include what? Actionable claims. Sir, what is actionable claims? Simply you remember, actionable claim means a claim to an unsecured debt. A claim to an unsecured debt. For example, you have sold the goods on credit basis. You have a right to receive the money from the debtor. You have a right to receive the money from the debtor. That right of receiving the money from the debtor, actionable claim. Claim to an unsecured debt, and also claim to beneficial interest in a movable property. You have some beneficial interest in a movable property. For example, you paid an advance for the car. You paid the money. You want to buy a car. You paid the money for the car. Now you have the right in that car. You have a beneficial interest in that car. The car is still not in your possession. You gave the money. That person told he will give the delivery of the car in 1 day. Now you have a beneficial interest in that movable property. That we call it as actionable claim. So goods include actionable claims. What is the meaning of actionable claim, guys? Actionable claim means claim for an unsecured debt. Claim for beneficial interest in a movable property, that we call it as actionable claim. So you need not get stuck in the definition of actionable claim. Just remember, goods include actionable claim. It includes growing crops, grass and things which are attached to or forming part of the land, which are agreed to be severed, before making supply. For example, crops are there. Grass, for example, there is some plantation. Plantation is attached to the earth. It is forming part of the earth. But we agree to cut it. If you are cutting the grass, crops or anything before making supply, that also will form part of goods. For example, there is a wood tree. Wood tree is there. For example, take wood tree is there. Tree is an immobile property. But if I agree to cut the tree before making supply, then also it will become what? Goods. Clear, everybody? So everyone clear with the definition of goods? If someone asks you what is the meaning of the goods, will you be able to answer it? So what you will say, goods includes every kind of mobile property. It does not include money. It does not include securities. However, it includes actionable claims, growing crops, grass and things attached to or forming part of the land, but which are agreed to be severed, which are agreed to be cut before making supply. That also will form part of goods. So now what is services, sir? Anything other than goods, money and securities, all that things will form part of services. Something which is not goods, something which is not money, something which is not securities, all that will form part of services. Take for example, services means I'm a chartered accountant. So I do a written filing for one client. A client came to me and asked me to file the ITR. Am I supplying goods to him? No. Am I supplying money to him? No. Am I giving any securities to him? No. So here, whatever as a chartered accountant, the activity which I am doing for that my client is an service. So anything other than goods, money and securities, they will fall under services. And one more thing here, I told goods does not include money. Goods does not include money. But activities relating to use of money for which a separate consideration is charged, that will be treated as services. Sir, what do you mean by activities relating to use of money? For example, I am a person, I am having 1 lakh rupees. I gave this 1 lakh rupees to another person, Mr. B. For what purpose I have given this money? For the purpose of use. I gave him 1 lakh rupees for his use. And in return, I am charging a separate consideration. I am giving this 1 lakh rupees for use to another person, Mr. B. And I am charging him for the purpose of giving this money to use. I am charging from him some 10,000 rupees of interest. Now this giving of money to use, activities relating to use of money, that will form part of services. That will form part of services. Assume that I am a person, I gave 1 lakh rupees to another person, I received 1 lakh rupees to another person, I received my 1 lakh rupees, I did not charge any separate consideration. I gave 1 lakh, I received 1 lakh. I gave 1 lakh for use to another person, and another person returned it back to me after his use. I did not charge any separate consideration for that use of money. I did not charge any interest. Will that form part of services? No. So in order to fall under services, activities relating to use of money for which a separate consideration in the form of interest, discount, something should be there. When separate consideration is charged for use of money in the form of interest, discount, etc., then that activity will form part of services. So if you are lending the money for the purpose of interest, for a separate consideration in the form of interest, that will form part of services. Similarly, one more activity relating to money is also coming under services. So they have mentioned one more activity here. The activity is relating to conversion of money from one mode to another mode, from one form to another form, from one currency to another currency, from one denomination to another denomination for which a separate consideration has been charged. So here they are telling activities relating to use of money for which a separate consideration is charged. That will come under services. Similarly, activities relating to conversion of cash from one mode to another mode, from one form to another form, from one currency to another currency, from one denomination to another denomination. Like for example, if I am converting the cash, I have cash in my hand. I go to the bank and convert that cash in the form of DD. I have a cash. I am converting that cash in the form of DD. Now the banker will collect some charges for converting the physical cash into the form of DD. So the activity is relating to conversion of cash from one form to another form. That is, the bank is providing the services of converting the cash to DD, for which they will charge a separate consideration. So this activity will fall under supply. I have INR. I have the money in Indian currency. I want to convert it into USD. So I go to a foreign exchange service provider. I convert my currency, which is in the form of INR, into dollars, for which that particular exchange converter, he will charge a separate consideration. This activity also will form part of services. Or I am converting the currency from one denomination to another denomination. For example, I have total 1000 rupee currency notes. I am converting it into 10 rupee notes, for which certain person is charging a separate consideration. That also will form part of services. So money basically will not form part of goods, but activities relating to use of money for which a separate consideration has been charged, or activities relating to conversion of cash from one mode to another mode, from one form to another form, from one currency to another currency, from one denomination to another denomination for which a separate consideration is charged, that will come under services. Similarly, there is one more thing which I want to highlight here. See, I told securities are neither goods. Securities are not goods. Securities are not services also. But the services relating to facilitation of buying and selling of securities, they will fall under services. Securities on its own, they are neither goods, they are not services. But activities in relating to facilitation of selling and buying of that securities will form part of services only. So what I am trying to say here is, let me give you one example. Assume that I am having shares. Securities are neither goods nor services. So if I sell the shares to another person, can that come under goods or services? No. But assume that there is a stockbroker Zerodha. There is a stockbroker Zerodha, or there is a stockbroker Angel One. So what the stockbrokers will do is, they will give a platform. They will give you services. They will provide the services relating to facilitation of buying and selling of securities. Zerodha will provide services services relating to facilitation of buying and selling of securities. For example, I'm a person, I'm an investor, I'm having some securities, I'm having shares of Reliance. I want to sell the shares. How I can sell the shares? I will go through one of the stockbrokers like Zerodha, Angel Broking, some stockbroker. I will have a demat account. Now through this stockbroker, I will sell the securities. For facilitating this buying and selling of the securities is Zerodha, Angel Broking. They will have some brokerage. They will charge from you some brokerage charges. Sir, will this activity come under services? Yes. So securities on its own, they are neither goods nor services, but the services, the activities relating to facilitation of buying and selling of securities. That means here they are trying to cover the services of stockbrokers. So stockbrokers will make you open the demat account, for which they charge you annual maintenance charges. They will let you buy and sell the securities through the stock exchanges, for which they will charge you brokerage commission. Those activities of the stockbrokers like Zerodha, Angel One, ICICI Securities, their activities will fall under services. Their activities will fall under services. Able to understand, everybody? So I have clarified what is the meaning of goods, what is the meaning of services. So for GST to be levied, first there should be goods or there should be services. See, just because goods are there, just because services are there, GST will not be levied automatically. For example, I am a service provider. I teach the classes. I have recorded all my lectures, kept it in my hard disk. I have recorded all the GST lectures and kept it on my computer. Just because I have services, will they come and levy the GST on me? No. Or assume that I am a business person. I have the stock of some goods. For example, I am selling mobile phones. I have some 100 quantity of mobile phones in my office, in my shop. Just because I am having the mobile phones in my shop, will the government will come and levy the GST on me? No. See, just having the goods or having the services alone will not be enough. I'm a business person. I'm in the business of selling mobiles. I bought the mobiles. 100 mobile phones are there in my shop. Will the government impose GST? No. I'm providing services. I recorded all my lectures, kept it in my laptop or system. Will the government impose GST on me? No. Having goods or services alone will not be enough. There should be some activity happening relating to goods or services in order to levy the GST. Sir, what is that activity? So, supply has to happen. What has to happen? Supply has to happen. So that's why if you read the definition of GST, they say GST is a tax on supply of goods or services or both. Supply of goods or services or both. Just because goods are there, just because services are there, GST will not be levied. An activity relating to goods or services should happen. What activity should happen relating to goods or services for GST to be levied? Supply should happen. If there is no supply of goods or services, goods are there, services are there, but no supply is happening, no GST. So goods should be there or services must be there, and supply of that goods or services should happen, then only government will come and levy the GST on me. Sir, now what is supply? So what is supply? You are telling supply should happen. Goods or services should be supplied for GST to be levied. But what do you mean by supply? What activity constitutes the supply? That is addressed under section number 7. So what activities will form part of supply? That is defined in section number 7. So let us try to revise now. What does section number 7 say relating to supply? So section number 7, subsection 1, clause A. It says supply includes all forms of supply. Supply includes all forms of supply. It could be sale, transfer, barter, exchange, license, rental, lease, disposal, whatever you want to call it. Supply includes all form of supply. Sir, I'm selling the goods, sir. I'm selling the services, sir. Supply. Or I'm making transfer, sir. You give whatever name. Sir, I'm transferring, sir. Also will form part of supply. I'm doing barter transaction. Sir, I'm giving the goods, receiving the goods or services in return. Barter transaction I'm doing. I'm not receiving cash. I provide classes, I receive the goods. Barter transactions also will form part of supply. Or exchange, sir. I'm having a old mobile phone. I'm exchanging it. I'm having a mobile phone. I'm exchanging it with new phone. So new phone will cost total 1 lakh rupees, but in exchange, I will give my old mobile phone and give 10,000 rupees extra. Exchange offers. We hear no, exchange is also a supply. License. I am licensing my goods. For example, I have a intellectual property. I have a copyright. I am giving that license to you to use. Supply. Rental. I am having a car. I am giving that car on rent to you. Supply. I am giving that lease of my building. Supply. Disposal. Sir, I'm having a wastage. I run a factory. I have a wastage. In my factory, so much of scrap is getting generated. I'm disposing that scrap. I'm disposing that scrap for a minimal value, sir. That also will form part of supply. Supply includes all forms of supply. It includes sale, transfer, barter, exchange, license, rental, lease, or disposal. And it should be for a consideration. What should be there? It should be for a consideration. There should be consideration for that supply. So if I am doing supply without charging any consideration, then it is not supply. Then it will not form part of supply of goods or services. If it is not supply, GST will not come. So you are doing sale, you are doing transfer, you are doing barter, or you are doing any of this transaction but there should be some consideration involved. When I say consideration, consideration need not be always in money only. Consideration need not be always in money. Consideration can be anything in return. They did not say consideration means only cash. Consideration means anything in return. It could be goods also, it could be services also. Anything in return can be a consideration. But whatever it is, you are doing any of this activity, and for that there is a consideration. There must be a consideration involved, and that should be in the course or furtherance of business. Whatever activity you are doing, that should be in the course or furtherance of business. That should be as a part of your business, or that should be for the purpose of expansion, or that should be for the purpose of conducting your business. So supply includes all kinds of activities like sale, transfer, barter, exchange, license, rental, lease, or disposal. For a consideration, there must be consideration, and that activity should be in the course of business. That should be your day-to-day business, or in the course of furtherance of business. That should be in relating to advancement of your business. For example, assume that I have a car. I used a car. I have a car. I use car for my personal purposes. I'm a lecturer. I teach the classes. I'm a chartered accountant. So what I'm doing is I have a car which I use it for my personal purposes. What I have done is I've sold that car. Since that car is becoming damaged, I have to incur so much of expenses on its repairs. I don't want that to happen. So I sold the car. Tell me, is it my business? Am I doing it in the course of my business? No, I'm not doing it in the course of my business. That is my personal car. I am selling it. So that is not in the course or furtherance of business. That you can't call it as supply. Or assume that I have this watch. See, this watch, I am using it for a long period of time. Now I don't want to use this watch anymore. So assume that some person is ready to buy this watch. So what I have done is I have taken this watch, sold it. I sold this watch. So this is what, once again, am I in the ordinary course of business? Is my business is buying and selling watches? No, it is not in the course or furtherance of business. So in order to be treated as supply, it includes all forms of supply, but it should be done for a consideration, and it should be in the course or furtherance of business. It should be in the course or furtherance of business. See, when I say in the course or furtherance of business, frequency doesn't matter. You do it once or you don't do it once, it doesn't matter. Either it could be even a single transaction also, it could be related to business. If you are doing it only once, for example, you are an artist. Once in a year, you draw one painting and you have sold it. You are an artist. In a year, only one painting you have drawn and you have sold it. That is your business. That is your business. You can't say, sir, regular sales should be there. Then only we call it as business. Not required. So irrespective of the frequency, if your intention is to sell it and make the profit out of it, then it is in the course or furtherance of the business. Able to understand, everybody? So section number 7, subsection 1, clause A says supply includes all forms of supply. That should be consideration, and it should be in the course or furtherance of the business. So when these three considerations are satisfied, then it fulfills the criteria of supply under section 7, subsection 1, clause A. So few important things: consideration need not be always in cash. Consideration can be in kind also. Now, there are some circulars which have been clarified. So one is donations which are received by charitable institution. So assume that there is a charitable institution, an orphanage is there. So, or some religious places are charitable institution. There is one particular person and he has given a donation, 10,000 rupees of donation he has given to the charitable institution. Can that be called as supply? Will that activity form part of supply? See, as I have told, it includes all forms of supply. There should be a consideration. Quid pro quo. For both the parties, there should be a consideration in return. So now you tell me charitable institution is receiving the consideration of 10,000. But what this person is getting in return? What this person is getting in return? The donor, whoever is there, whatever donation he has given, 10,000 rupees, in return what he is getting? Nothing he is getting. Nothing he is getting. So now you tell me, whatever charitable institution they have received the donation, will that form part of supply? Will that form part of supply? No. Are they providing any service in return? No. Should they charge GST? Not required. Should they charge any GST? Not required. So that's what they have clarified in one of the circular. Donations received by charitable institution from individual donors without quid pro quo. There is nothing flowing in return to the donor. Then there is no consideration. If there is no consideration, there is no supply. Then there will be no GST. But let us take another case. There is a charitable institution. Now for that charitable institution, a person has given 1 lakh rupees of donation, with an agreement that this charitable institution should attach big banners. On the banners, the name of this person's business should be promoted. on this banners, the name of this business, this person's business is there. That person's business should be promoted by way of banners, etc. Now there is something in return. Now what? There is a something in return. So charitable institution has received 1 lakh. In return, this person is receiving a kind of advertisement services. Here I can say there is a consideration and this should be treated as supply. So what I am talking is, in case charitable institution has received any donation without doing any advertisement, without any intention of any benefit. So just if the person has received a donation, if the charitable institution has received donation, that can't be treated as quid pro quo. There is nothing in return going to this person. So this is not a supply. If it is not supply, GST also will not be there for this transaction. Understood, everybody? So however, charitable institution received the donation with an agreement, with an acceptance that they will display the name of that person, they will display the business of the person, they will provide advertisement kind of thing, then there will be a quid pro quo. There is a consideration, there is a supply, GST will come there. Able to understand? And one more thing also, one more circular also they have given. What is that circular? That also let me try to explain. Assume there is an artist. There is an artist. He draw one beautiful painting. There is one beautiful painting he has drawn. Now this painting was sent to exhibition for display. This painting was sent to exhibition for display, not sale. Just he is an artist. He moved that painting to the exhibition for the purpose of display. Just it will be displayed. Now, if the artist is sending his painting to the gallery for exhibition, no consideration will flow to him. No consideration will flow him. Just to show his work, he is transferring that artwork for display, for which no consideration will be received from the exhibition, from the gallery. So here, since there is no consideration, it will not be treated as supply. Since it is not a supply, there will not be GST on this transaction. There will not be a GST on this transaction. However, at the exhibition, if someone likes the painting and if he buys it, then supply is happening. See, first you will send the exhibition first you will send your painting to the exhibition for displaying. At that point of time, there is no consideration. This activity is not supply. At the exhibition, a customer came, a person came, liked that painting, he bought it, then there will be a supply. On that sale, GST will come. Okay, just you are sending it for exhibition, just you are sending it for displaying at the exhibition, for which you are not receiving any consideration. If no sale happens, no consideration will be received. This activity can't be treated as supply. This activity will not attract any GST. So that's what another circular which has been released. So till now what I have revised, 7 subsection 1 clause A. Supply includes all forms of supply. There should be consideration and it should be in the course or furtherance of business. Should be in the course or furtherance of business. Now we have one more thing, section 7 subsection 1 clause AA. Section 7 subsection 1 clause AA. What is that? Let us try to understand it. So what they are trying to say here is a person other than individual. They are not talking about individual. They are talking about other than individual. A person other than individual, if they are performing any activities or transactions for cash, for deferred payment or any other valuable consideration to its members or constituents, then those activities also will form part of supply. Sir, what are they actually trying to say here? So they are talking about a person other than individual. Take for example a society. Take for example a society, residential welfare society. So we all have this apartments, no? So in that apartment there is a society created, residential welfare society we call it. There is a society created. Now in that apartment, so many members will be there, so many flats will be there, so many residents will be there. Now what they are doing is, these people are giving consideration. For example, every month the members of this apartment, they are giving to the society some 2,000 rupees of maintenance. 2,000 rupees of maintenance. Now in return, this residential welfare society, they provide certain activities like they generate, maintain the premises of the apartment. They run the generator on that. And also they take care of various other cleaning, housekeeping activities. Now these activities which are performed by residential welfare society, he is a person other than individual. They are not individual, they are other than individual. And this residential welfare society is doing some activities or transactions to whom? To its own members. See, this residential welfare society was created by its members only. So this residential welfare society is providing services or they are providing some activities or transactions to its members for which they are receiving consideration. They told that this activity also will form part of supply. This also should be treated as supply. Why they have specifically introduced this 7 subsection 1 clause AA is, earlier there used to be case law. In that case law, what they have told is society and its members are not two different people, they are same. Under some earlier laws, there used to be one case law, society and its members or any other, this society and its members, they are not two different people, they are same persons only. So what used to happen is, because of that case law, some people used to argue that a residential welfare society and its members both are same people. There is no service happening to any other outsider. How can I provide the services to myself? So this is not supply. These are services to ourselves. Society and member are same people. They are not two different people. They used to refer to this case law. There used to be one case law like that. Society and members are not two different persons. They are same people. There used to be some case law. Now some people used to say that a residential welfare society and its member both are same. There is no outsider involved. How can you say we are providing the services? So this activity is not supply. We will not pay any GST. This is how they used to argue. Now in order to override this case law, in order to override that case law, they have introduced this section 7 subsection 1 clause A, which says that if you are a person other than individual and you are doing some activities or transactions to your own members, to your own constituents, and for which you are receiving some consideration or deferred payment or some other valuable consideration you are receiving, and that activity we will treat it as supply, on that you have to pay the GST. On that, this activity will fall under supply, and on that they have to collect the GST. Able to understand? So that is what they have clarified in this clause AA. A person other than individual, if they are doing some activities or transactions either for cash or deferred payment or any other valuable consideration to its own members who have created that person or to its own constituents, they will be treated as two distinct persons, and that activity will form part of supply and it will be leading to GST. On this activities also GST will come. Understood everybody till here? So I explained two clauses of section 7 subsection 1, clause A, clause AA. Understood? Now let us talk about the next clause 7 subsection 1, clause B. Guys, what did I say in 7 subsection 1 clause A? I told that supply includes all forms will be included, all forms of supply. That should be for a consideration, and that should be in the course or furtherance of business. So three conditions must be there in order to qualify as supply. It includes all forms of supply, consideration should be there, it should be in the course or furtherance of business. Now I will say one exception to this. In one case, even though the activity is not in the course or furtherance of the business, still it will be treated as supply. Sir, what is that, sir? Importation of services. Very important. Importation of services. They are only talking about services, guys, not goods. Very important point. If you are importing services for a consideration, whether or not in the course or furtherance of business, you are importing the services, whether relating to your business or not related to your business, doesn't matter. This activity will form part of supply. This will always be treated as supply. So if I have to give you a few examples, assume that I am a person resident in India. I'm a person resident in India. There is an architect. There is an architect who is located in US. I received services of architect. I asked him to design a building plan for me, and I paid him 1 lakh rupees of consideration, and I asked him to develop a building plan for my office. Develop a building plan for my office. So I am importing services. I'm doing the importation of services for a consideration, and it is relating to my business. Why? Because I'm asking him to design a plan for my office building. It is in the course or furtherance of business. Sir, will this activity be treated as supply? Yes. Let me put the other case. I am a person located in India. There is an architect in US. I asked him to design a building plan for me. So I am importing the services. I paid him 1 lakh rupees. But the building for which I am asking the plan, that is relating to my home. I want to build a home. I want to construct a home. For my home, I am asking the architect in US to design a building plan for me. I am importing services. Yes or no? For a consideration. Is it related to my business? No. I am asking the building plan for my home. It is not in the course or furtherance of my business. Still, it will be treated as supply. Still, it will be treated as supply. So point which I want to make here is, if you are importing the services for a consideration, whether or not in the course or furtherance of business, are you importing that services for your business or for your personal purposes, doesn't matter. You are required to pay the tax on it. This activity will be treated as, this activity will fall under supply, and GST will be there on this transaction. But however, since in this case GST is becoming applicable, Generally what will happen is supplier will collect the GST from the recipient and pay it to the government. This is what normally happen. Normally what will happen is, in normal circumstances, if you buy some goods or if you buy some services, whoever supplier is there, he will collect the GST from the recipient. Supplier will collect the GST amount from the recipient and pay it to the government. This we generally call it as forward charge mechanism. This is what mostly happens. In normal circumstances, supplier will collect the GST from the customer, pay it to the government. This is forward charge mechanism. But in the case of importation of services, if you see here, it will be difficult for the government to ask the supplier to pay the tax. Why? Because supplier is located outside India. No? Supplier is located outside India. Can you expect the government to ask that person in US to collect the GST from our Indian citizen and pay it to the Indian government? No. So that's why in this case, in the case of importation of services, the government has made this, in this case, the tax responsibility to be paid under reverse charge mechanism. Sir, what is reverse charge mechanism? See, I told normal circumstances. In the normal circumstances, supplier will collect the GST from the recipient, pay it to the government. This is forward charge mechanism. Reverse charge mechanism means recipient himself will directly pay the tax to the government. So in some cases, since in some circumstances, it will be difficult for the government to collect the taxes from the supplier. So they have notified a few cases in which the recipient has to pay the GST amount directly to the government. And RCM will get covered here in the case of importation of services. So everybody listen once again here. If you are importing the services for a consideration, whether or not in the course or furtherance of the business, that activity will fall under supply and GST will be levied. And I told you one more point here. Here RCM will become applicable. That means being the recipient, you are directly required to pay the GST amount to the government. You need not pay the GST amount to the supplier and supplier will not pay it to the government. Here what will happen is, here as a recipient, you have to deposit the direct amount of GST to the government. So this activity will get covered under RCM. Understood everybody till here? So we have covered 7 subsection 1A, AA, clause B. Then when it comes to clause C, see I told in order to qualify as supply under 7 subsection 1 clause A, it should include all forms of supply. There should be for a consideration in the course or furtherance of business. Now they are telling, they have mentioned certain activities in schedule 1. They have mentioned certain activities in schedule 1 of the GST, and those activities if you are doing even without consideration, there are certain activities mentioned in schedule 1. If you are doing those activities even without consideration, still they will be treated as supply only. One of the essential rule, supply includes all forms of supply for a consideration in the course or furtherance of business. See, for this, in the course or furtherance of business, I told you one exception. If you are importing the services for a consideration, whether or not in the course of furtherance of business, GST will be levied. It will form part of supply. Now, I am going to tell you a few activities where even though you are doing it without consideration, you are doing some activities even without consideration, still they will fall under supply definition and GST will be imposed. Where those activities are mentioned in the schedule 1, the activities are mentioned. Activities even though without consideration, still they will be treated as supply. Sir, what are they, sir? Here I have given schedule 1. Schedule 1 mentions those activities which will be treated as supply even without consideration. First one, permanent transfer or disposal of a business asset on which input tax credit has been availed. What is the first one they are telling? Permanent transfer or disposal of a business asset according to which you have claimed the input tax credit. Sir, what is this they are trying to say here? Let us try to understand. So very simple examples I will give for each thing. Relevant examples I will give you. Assume that you are a registered person. You are a registered person. You bought some goods. You bought some goods on which you have taken input tax credit, on which you have availed input tax credit, and those goods you are permanently transferring or disposing without consideration. So I have bought the goods. For example, I have bought the shirts. I'm in the business of selling the ready-made garments. I have bought the shirts. I have bought 100 shirts, and on that 100 shirts I have claimed ITC, and out of that 100 shirts, 10 shirts I am permanently transferring without consideration. I'm giving it as a gift. I'm giving that 10 shirts on which I have claimed input tax credit, I'm giving it as gift. Even though there is no consideration, whatever 10 shirts that you have given as gift, still that will be treated as supply. Even though you have given the goods, even though you have given your shirts as gift without any consideration, still it will be treated as supply. On that also you have to pay the GST to the government. On that also you have to pay the GST to the government. Or assume that I have bought some capital goods. I have bought some plant and machinery. I bought that plant and machinery, and on that I have availed input tax credit. Later I am giving away that capital goods free of cost without any consideration. I am permanently transferring or disposing. Even though there is no consideration here, still it will be treated as supply. On this GST you have to pay. So the first activity, even without consideration, which will be treated as supply, is permanent transfer or disposal of a business asset on which you have availed the input tax credit. See, when I say business asset here, business asset can be goods also, capital goods also, anything. It doesn't don't be of a wrong notion. Business assets means only capital goods. No, business assets could be normal stock also. So if you have bought some goods, if you have bought some capital goods on which you have availed input tax credit, on which you should have taken input tax credit, and those business assets you are permanently transferring. You are permanently transferring or you are permanently disposing without consideration. Still there is no consideration. When you are permanently transferring it, like you are gifting it, you are giving it away, in those cases also still it will be treated as supply even without consideration, and you have to pay the GST to the government. But here essential conditions are this: if you transfer the asset without consideration, that will be treated as supply only when you have taken input tax credit, only when you have availed input tax credit. Take for example, you bought some 100 shirts. Out of that 100 shirts, 90 shirts only you have claimed ITC, and those 90 shirts you have sold. Balance 10 shirts, you know that you are not going to sell it, so that's why you did not avail the input tax credit only. Against the 10 shirts, you did not avail the input tax credit only, and those 10 shirts you have given it as gift. That will not be treated as supply. That will not be treated as supply. So if you have permanently transferred or disposed an asset on which you have availed input tax credit, then only at the time of permanently transferring or disposing it, it will be treated as supply. Or assume that you have bought capital goods. Take for example, motor vehicle. See, we have seen in the input tax credit, if you are buying the motor vehicles having a seating capacity of less than or equal to 13, ITC will be blocked. You bought a capital good, but you did not avail input tax credit on this motor vehicle. Why? Because the credit is blocked. Later, you are giving away this motor vehicle without consideration. Will that be treated as supply? No. Why? Because you did not avail input tax credit. Understood, everybody? So this is what the first activity mentioned in schedule 1. Even though it is done without consideration, still it will be treated as supply. So what is the first activity, guys? Permanent transfer or disposal of business asset where input tax credit has been availed. You should have availed input tax credit, and you are permanently transferring or disposing without any consideration. Then only it will be treated as supply. And when I say business asset here, I am not just referring to capital goods. I am referring to all the stock also. I am referring it to. I am referring to even capital goods also. Understood? Next one. Supply of goods or services between related persons or between distinct persons as specified in section number 25 when made in the course or furtherance of business. So they are telling if there is any supply of goods or services is happening between related persons or between distinct persons as per section number 25 in the course or furtherance of business, even without consideration, still it will be treated as supply. Sir, for this, first we need to understand who is a related person, who will form part of related person. Sir, when we can call a person as a related person? If they are officers or directors of one other's business. If I am a director in other person's business, and if that person is a director in my business. So if they are officers or directors in each other's business, they will be treated as related persons. Or if they are legally recognized partners, myself and my another person, we both are partners, legally recognized partners, we both will be treated as related. Employee, employer, an employee and his employer both will always be treated as related persons. A third person who is having more than 25% of the voting or share of both. For example, there is some company A Limited, there is some company B Limited. A third person, some C Limited. C Limited is having greater than or equal to 25% of the shares are voting in A Limited also, and C Limited is having greater than or equal to 25% of the voting power in B Limited also. Since a third person is holding more than 25% of the voting in both the entities, both A and B will be treated as related. Both A and B will be treated as related. I'm not talking about A and C. I'm not talking about A and C and B. I'm telling if a third person is holding more than 25% of the voting shares or power in both, then these two entities, a third person is holding more than 25% in A Limited and B Limited. A Limited and B Limited will be treated as related. Not C and A, not C and B. I'm talking about A Limited and B Limited. They both will be treated as related. Or one controls the other. If I am controlling the other person or other person is controlling me, we both will be treated as related. A third person controls both of them. There is one third person who is controlling both. Then also the both entities will be treated as related. Or such persons together control a third person. Like for example, X Limited is there, Y Limited is there. X Limited, Y Limited both collectively control Z Limited. Then also X Limited, Y Limited will be treated as X Limited, Y Limited will be treated as related, or members of the same family. Members of same family. See, I will give you one simple analogy regarding this control. I will tell you one simple example. Okay, family example will try to understand. Regarding control, I will try to explain. Okay, assume that mummy is there, daddy is there. Okay, so mummy controls daddy and daddy controls mummy. Both are related. One is controlling the other. Now, both of them control child. Both of them control child. Now, mother and child is related, dad and child is related, and mother and child also related. See, one is controlling the other, or both are controlling a third party, child. Now, mummy and daddy both are controlled by grandfather. Both are controlled by grandfather, or both are controlling a child. So, all these people will be treated as related. All these people will be treated as related. So, one is controlling the other, both are controlling one third person, or both are controlled by third person. All they will be treated as related. Next one, members of the same family. The members of the same family also will be treated as related. Sir, who will fall under family, sir? See, the act did not give you scope to decide who will fall in your family, who will not fall in your family. The act has told, we will tell you who will fall under your family. Only those people will be treated as related. Who are they? Spouse, unavoidable. So spouse, a person and his or her spouse, always related. Children, related. Parents, grandparents, brothers and sisters, if they are wholly or fully dependent on you, then only they will be related. So spouse, whether dependent or not dependent on you. For example, wife is a lawyer, husband is a doctor. Will they be related? They are not dependent on each other. Will they be related? Yes. Whether they are dependent or not, related. Family, person and children. For example, my father is a doctor. He's already well established. I'm a son. I'm a chartered accountant. I'm also well established. Will we both be considered as related? Yes. So spouse and children, whether dependent or not, they will always be related. But parents, grandparents, brothers, sisters, they will be related only when they are wholly dependent on us. Only when they are wholly dependent on us. If my father is wholly dependent on me, then only that person is related. My child, whether dependent or not, he will always be related. But my father, if he is wholly dependent on me, then only I am related. Then only my father will be related to me. My grandparents, if they are wholly dependent on me. My brother, wholly dependent on me. My sister, wholly dependent on me. Then only we form part of family. Then only we will be treated as related. And if a person is a sole agent, sole distributor, or sole concessionaire, then also they will be treated as related. So these are all the people who will be coming under related persons. Now what they are telling is, if a supply of goods or services is happening between related person in the course or furtherance of the business, then that activity also will form part of supply, even without consideration. Sir, what they are trying to say here? One simple example I will tell you. Assume that I am a person. So I sell saris. I sell what? Saris. I bought some 100 saris in my shop. So I am doing the business. One fine day, my wife only came to my shop. So she came to my shop. She has gone through the saris, and she picked one sari and took it to the home. Will I take consideration from my wife? I have to go back to home? No. I have to go back to home. If I have to go back to home, I should not collect any consideration. So I am a person selling saris. I have 100 saris in my shop. One day my wife came. She took the sari from my shop and went home without any consideration. Now they are telling this also will be treated as supply. Supply of goods or services is happening in the course or furtherance of the business. I am sitting in my shop. I have brought 100 saris. Against all that saris, I have availed input tax credit, and my wife came to the shop, picked the sari without paying any consideration. The government is telling, still we will treat it as supply. On that you have to pay the GST. Does that mean I should not buy the sari for my wife? It doesn't mean. So if you really want to buy the sari for your wife, no, what you should do is, you collect 100 saris, no, you are buying 100 saris. Now you want, or let me put other way. Let me give the example other way around. See, the government is not against any relationships. What they are telling is, for example, you are a person who is into the business of selling saris. You are a person who are into the selling of business of saris. One fine day you want to give a gift to your wife. Then what you do is, you go and buy that sari separately. Don't bring it to the shop. Don't claim input tax credit on it. Don't claim input tax credit on it. You want to gift it? No. You buy the saree on your own account. Don't avail input tax credit. Directly go and give it to your wife. Government is not at all having any issue. But when the government will have an issue is, you bought 100 sarees, claim the input tax credit, then you are giving it as a gift. Then the government is having a problem. So what the government is telling is, in the course or furtherance of business. Sir, how to decide in the course or furtherance of business? See, one simple rule to identify in the course or furtherance of business is, you are buying the goods availing input tax credit. When you avail the input tax credit, what is your intention? When you are availing input tax credit, what is your intention? That is in the course or furtherance of business. So if you have availed input tax credit on any of your goods or services, and that you are giving it as a gift, to your related person, then the government is telling, boss, you have claimed input tax credit, no? Now you are giving it to your related person, no? That is in the course or furtherance of the business only. Now you have to pay the GST on this. Able to understand? So what they are trying to say here is, when the supply of goods or services is happening between related person, I will talk about distinct person in a while. So when the supply of goods or services or both is happening between related persons in the course or furtherance of the business. In the course or furtherance of the business. Sir, what is in the course or furtherance of the business? You bought some goods for your business and then you are giving it to your related person without consideration. The government is having objection. However, if I rechange the example, if I rephrase the example here, I'm a saree dealer. Agreed. I know my wife's birthday is coming. I want to gift a saree to her. I went to the shop, bought a saree, did not claim credit. Because I know I'm buying this saree for giving it to my wife. So I go to the shop, buy a saree, do not bring it to the shop, directly take it to my wife and give it to her as a gift. I did not claim credit. So this is not in the course or furtherance of the business. Now the government will not ask you to pay the GST. When the government will ask you to pay the GST, you bought a saree, claim the input tax credit, then you are giving it as a gift. Now the government is having problem. Why? Because you bought the goods in the course or furtherance of the business. Now you are giving it to your related person without consideration. Boss, you are doing wrong here. You pay the GST. Understood? And one more thing also they say here, supply of goods or services between distinct persons when made in the course or furtherance of the business. Now we need to understand who are these distinct persons. They are using the term distinct persons. Who are distinct persons? This I have given here. Say, assume that I am a business person. I have a place of business. I am registered in Karnataka. So let me rephrase the example like this. So I am a registered person. So what I have is, in the state of Andhra Pradesh, I have a place of business in Andhra Pradesh. Assume I have a place of business in Vijayawada. I have a place of business in Vizag also. If I have more than one place of business in the same state, I can operate both the places of business under single registration. But what I have done is, for Vijayawada I have taken separate registration. For Vizag also I have taken separate registration. Then the act is telling, you have taken both the registrations under same PAN number. Both the places of business belong to me. Under same PAN, I have taken two registrations. Both of us will be treated as distinct persons. Or assume that I am a registered person. I have a place of business in Tamil Nadu. I have a place of business in Karnataka. Now, if you have multiple places of business in different states, then the government will not let you operate under single registration. You must take separate registration for Telangana separately. Tamil Nadu separately. You must take separate registration for Karnataka separately. So if you are in a single state, more than one business, you can operate them under same registration. If you want, you can take separate registration also when you are having more than one place of business in same state. However, if you have more than one place of business in multiple states, then the government will not let you operate under single registration. You must take separate registration. So you have taken separate registration for Tamil Nadu government separately. You have taken separate registration for Karnataka separately. Now both of these entities will be treated as distinct person. Even though you are under same PAN, still you will be treated as distinct persons. Or let me give you another example. Assume that you are a registered person. You are supplying computers. You are in the business of selling mobile phones. You have a place of business in Karnataka where you sell mobile phones. You have taken registration. You have taken registration for Karnataka store where you are selling mobile phones. Now you have another place of business in AP. In AP, you are selling alcoholic liquor for human consumption. For this, registration is not required. Why? Because alcoholic liquor for human consumption is outside of the purview of GST. So you have a place of business in Karnataka. You have taken registration for that. You have a place of business in AP, but there you are selling alcoholic liquor for human consumption. Here registration is not required. Still, these two entities will be treated as entities of distinct persons. This will be treated as entities of distinct persons. Sir, why I am telling this? See, what they are telling is, assume that I have taken separate registration for my two places of business in the same state. Assume I have transferred some stock. I have transferred from stock from my one branch to another branch without any consideration. Both are my branches only, I transferred some stock from my one branch to another branch which are having separate registration. There is no consideration for this. But still, the government says this activity also will treat it as supply. On that also you have to pay GST. Similarly, I have one store in Tamil Nadu, I have one store in Karnataka. I transferred, both are having two separate registration. I transferred some stock from my Tamil Nadu location to Karnataka state without any registration, because both are my entities without any consideration. Both are my registrations, both are my entities only. I did not charge any consideration. I transferred the stock from here to here. Even though there is no consideration, still the act told it will be treated as supply and you have to pay GST on it. You have to pay GST on it. Or assume that I have a registered place of business in Karnataka. I sell mobile phones. In AP, I have alcoholic liquor for human consumption. I'm running one store in alcoholic liquor for human consumption. I transferred one mobile phone from my Karnataka branch to this AP location where I'm having a bar. To that place, I have transferred a mobile phone to be used for my business. To be used for my business. Both are my businesses only, I run a electronic store, mobile phones selling shop in Karnataka. I transferred one mobile phone from my location in Karnataka to my bar and restaurant, to my bar where I am selling alcoholic liquor for human consumption. I transferred one mobile phone which will be used there. Will I charge any consideration? No. Both are my entities only, But still the government says even though there is no consideration, this activity also will treat it as supply. On that also you have to pay GST. Understood? Clear and comfortable, everybody? Now, so this is what they try to say here. So supply of goods or services or both between related persons or between distinct persons as specified in section 25 when made in the course or furtherance of business. And however, provided that gifts not exceeding 50,000 rupees in value in a financial year by an employer to the employee shall not be treated as supply of goods or services or both. Sir, what is this? See, just now I told when I am talking about related persons, employer, employee. Are they both related? Yes. Are they both related? Yes. So no, see here, employer, employee, both will be treated as related. Yes, employer and employee both are related. Now, employee is giving gift. Employee is giving gift. For example, this employer is running a shop. Which shop he's running? He is running a shop of ready-made garments. He's running a shop of what? Ready-made garments. So he bought some shirts. 100 shirts he has bought. On all that shirts, he has availed input tax credit. Out of that 100 shirts, 90 shirts he sold. 90 shirts, what he did? He sold. Some 10 shirts are there. What he has done to these 10 shirts is he has given it as gift to the employee. He has given it as what? Gift to the employees. Now, the cost of this 10 shirts is, assume each shirt will cost you 500 rupees, total 5,000 rupees. Now, generally, since the transfer of goods or services is happening between related persons, even though there is no consideration, this is cost of the shirt, but he did not charge anything from the employee. Now, since the supply of goods or services is happening between related persons, even though there is no consideration, still it should be treated as supply, as per schedule 1. But what they have told us, if the employer is giving gift to his employee up to a value of 50,000 in a financial year, now he has given a gift of only 5,000 rupees. No, per employee per year, 50,000 rupees of gift you can give. That will not be treated as supply. So now he has given 10 shirts valuing 5,000 rupees only, which is up to a limit of 50,000 rupees. This will not be treated as supply. This will not be treated as supply. See, general rule, when there is supply of goods or services is happening between related persons, even though there is no consideration, still treated as supply, GST will come. But here if you observe, between an employer is giving gift to employee. That means supply of goods or services without consideration in the course or furtherance of the business between related person. It should have become supply. But government has given exception. Okay, if the employer is giving gift to his employee up to a value of 50,000 in a year, we will not treat it as supply. Assume that the employer has given a gift to the employee to the extent of 60,000 rupees. Then it will be treated as supply. Sir, how much value will be treated as supply, sir? Will extra 10,000 rupees, whatever in excess of 50,000, On that 10,000 will it be treated as supply, or entire 60,000 will be treated as supply? Entire value of gift will be treated as supply, not amount excess of 50,000 rupees. The entire value of gift given to the employee, the total value will be treated as supply. On that you have to pay GST. Understood? So what did I tell you? Second activity mentioned in schedule 1, supply of goods or services between related persons or between distinct persons as per section number 25 when made in the course or furtherance of the business. However, the gifts provided by employer to the employee not exceeding 50,000 rupees, it will be not treated as supply. However, if the employer has given a gift to the employee for more than 50,000 rupees, entire value of that gift will be treated as supply. On that GST has to be paid. Let us now try to understand the third activity which is mentioned in schedule 1, which if done without consideration, still it will be treated as supply. So this third point which has been mentioned in schedule 1, this I will try to explain it with the help of one example. So with the example you will understand the concept also. So it will act as a revision also and explanation of the concept also simultaneously. So assume that I'm a person who is into the business of selling some what will sell. So I'm into the business of selling garments. So I sell the garments. So what I have done is I have appointed one agent. So I'm the principal. So I want to sell my goods. For the purpose of selling the goods, I have appointed an agent. So what I have done is, first I have sent the goods. I have sent my goods to the agent. But why I'm selling the goods to the agent? So that he can find the customer and sell them. I'm not selling. Just as a principal, I'm sending the goods to the agent. I'm not making the sale here. Just I'm sending the goods so that agent can find the customers and he will sell it. So now agent ultimately has found the customer and he sold the goods, whatever he has received from the principal, to the ultimate customer. And agent is giving the invoice in his own name. That means when he sold the goods to the customer, agent is giving the invoice in his own name. Now in this case, they are telling that when the principal is sending the garments or goods to the agent, at this point of time, there is no consideration. Is there any consideration at this point of time? No. But still they're told that this activity will be, even without consideration, still it will be treated as supply. Even though there is no consideration, when the principal is sending the goods to an agent, even without consideration, so that the agent will make the further supply of such goods, still it will be treated as supply. This activity of sending the goods by the principal to this agent, even without consideration, this has to be treated as supply. But see, when ultimately the sale is happening, agent should have given the invoice in his own name. Then only that agent is only those kind of agents who give the invoice in their own name, only those activities are covered under schedule 1 para number 3. See, what do I mean by this is, assume that there is a principal. He sent the goods to the agent. Now agent is finding the customer and he is selling the goods, and principal is directly giving the invoice to the customer. Here principal has sent the goods to the agent found the customer, agent sold the goods to the customer, but invoice is given by principal directly. If invoice is given by the principal directly, then whatever goods which are sent by principal to the agent, this will not be treated as supply. Without consideration, whatever movement is happening, that will not be treated as supply. So the movement of goods, the sending of the goods, from supply of goods from principal to agent for making further supply, only when the agent gives the invoice in his own name, in that case only the movement of the goods happening between principal and agent, even without consideration, that will be treated as supply. If the principal himself is giving the invoice, if the invoice is given in the name of the principal, then whatever movement happening between the principal and agent, that will not be treated as supply if there is no consideration. Able to understand? And one more here, they also talk about buying agent also. Take for example, here there is a business person. So I am a business person. Okay. I want to buy some goods. I am unable to find the supplier. So what I have done is I have appointed an agent. Previously, I have appointed the agent for the purpose of making the sale. But in this case, I am appointing the agent for the purpose of buying it. Procuring agent, I will say. So I want to buy some goods. I am a principal. I don't want to sell the goods. I want to buy the goods. But since I'm unable to find the supplier, I have appointed an agent. Now what the agent has done is he found the supplier. Agent found the supplier. Now first from the supplier, agent received the goods and then agent supplied the goods to the principal. In the previous case, the agent was a selling agent. In this case, the agent was a procuring agent. So principal wants to buy some goods, but is unable to find the supplier. He appointed an agent. Now first, agent procured the goods from the supplier and those goods are provided by principal to his agent. And if invoice is given in the name of the agent, then whatever movement of the goods which is happening between the principal and agent, even though there is no consideration here, still it will be treated as supply and it is going to attract the GST. However, if the supplier is giving the invoice, just agent is moving the goods, but invoice is given in the name of the supplier, in that case, this movement happening between agent and principal will not be treated as supply. Guys, able to understand? Very simple. So now if I read the point, you will make better sense of it. So if you read the point, supply of goods by a principal to his agent. That means principal is sending the goods to the agent, where the agent undertakes to supply such goods on behalf of the principal. So principal is sending the goods to the agent and agent will make the further supply of the goods. And at the time of making further supply, invoice should be given in the name of the agent. In that case, whatever movement that is happening between principal and agent, even though there is no consideration, still it will be treated as supply and GST will be levied on this. And the next phrase says, or supply of goods by an agent to his principal, where the agent undertakes to receive such goods on behalf of the principal. Now this point talks about procuring agent. So principal wants to buy some goods. He is unable to find the supplier. He appointed agent. So first agent received the goods on behalf of the principal and then the agent is supplying the goods to principal. Able to understand? In this case also, if invoice is given in the name of the agent, then whatever movement that is happening between the agent and principal, even though there is no consideration, still it will be treated as supply. Still it is going to be treated as supply. So this is the third activity which is mentioned in schedule 1, which happens even without consideration, still it will be treated as supply. Understood everyone? Now let us talk about the last activity which is mentioned in schedule 1, which if done even without consideration will be treated as supply. What is that? Import of services by a person from a related person or from any of his other establishments outside India in the course or furtherance of the business. So now what they are trying to say, assume that there is a person located in India. Now he imported services. What he has done? He imported services, not from everybody. He imported services from either a related persons or either from his own establishment, which is there outside of India. Like for example, I'm a person located in India. I received services from my child who is there in abroad. So he's an architect in US. I received services from my child without consideration. Still this activity will be treated as supply if it is received, provided the condition is in the course or furtherance of the business. So I'm a person in India. I want to have an office building. I want to construct my office building. I received services from my related person. From my related person, I am receiving that services and I am not paying any consideration. So if you are importing services from a related person without any consideration in the course or furtherance of the business, still it will be treated as supply. Or even they use one more thing here, importation of services from his own establishment outside India. Assume there is a company X Limited. It is having a subsidiary company Y Limited in US. So this X Limited company has imported the services from Y Limited, which is a related company. There was no consideration and this importation of services is related to the business activity. Then also it will be treated as supply. Guys, let us try to make one collective understanding of 7 subsection 1 clause B and the activity which has been mentioned above. In 7 subsection 1 clause B also talks about importation of services, whereas para number 4 of schedule 1 also talks about importation of services. I will give you one summary. So if there is any importation of services, I will give you one summary of both. If any importation of services is happening, if any services are getting imported, first we need to check, is it with consideration? Is it with consideration? So if you are importing the services for consideration, whether or not in the course or furtherance of the business, you receive it from anybody. If you are importing the services for a consideration, whether from your related person or not from your related person, whether in the course or furtherance of the business or not in the course or furtherance of the business, we need not check anything. If you are importing services for a consideration, no need to check from whom you are receiving, no need to check whether it is in the course or furtherance of the business. Always it will be a supply. Always it will be treated as supply when you are importing the services with consideration. However, if you are importing the services without consideration, if you are importing the services without any consideration, there is no consideration, then we need to check, is it from a related person or own establishment outside India? Is it from related person or own establishment outside India? And if it is in the course or furtherance of business, if it is in the course or furtherance of business. So if you are importing the services without consideration, but you are importing it from related person or your own establishment outside India, and that importation of service is in the course or furtherance of the business, then in that case it will be a supply. In that case it will be supply. In all other cases, it will not be a supply. That activity will not fall under supply. Understood, everybody? So I have made a collective analysis of 7 subsection 1 clause B and para number 4 of schedule 1. So once again I am repeating, if you are importing the services, if it is with consideration, there is consideration, no need to check from whom you are receiving, no need to check what is the purpose. That could be in the course or furtherance of the business, may not be in the course or furtherance of the business. Always it will be a supply. If you are importing the services without any consideration, then you need to check, is it from the related person or your own establishment outside India? And if it is in the course or furtherance of the business, then it will be treated as supply. In all other cases, that means you are receiving the service, you are importing the services without consideration from a person other than related person or other than your related party, then not a supply. If you are importing the services without consideration from a related person, but not in the course or furtherance of the business, then also it will not form part of supply. So just remember this scenario. So this is very important from the examination perspective. So they will twist and ask you in multiple ways. If you remember this summary, you will be able to answer it in a correct way. So with this, we are done with schedule 1, and we are also successfully done with 7 subsection 1 clause C. We are also done with what? 7 subsection 1 clause C. So what does that say? They are telling that in 7 subsection 1 clause C, they have told that there are certain activities which are mentioned in schedule 1. And if those activities are done even without consideration, still that will be treated as supply. What are they? Number 1, permanent transfer or disposal of a business asset on which you have availed the input tax credit. Number 2, supply of goods or services between related persons or distinct persons as per section number 25, if made in the course or furtherance of the business. However, if employer has given the gifts to the employee up to 50,000 value in a financial year, it will not be treated as supply. Next one, third one, supply of goods by a principal to his agent or supply of goods by the agent to his principal. But only those agents will get covered who are giving the invoice in their own name, not giving the invoice on behalf of their principal. Next one, if you are importing the services from a related person or any of his other establishment outside India in the course or furtherance of the business, that activity also will be treated as supply even if it is done without any consideration. Understood, everybody? Clear and comfortable? So with this, we are successfully done with 7 subsection 1. So let us try to understand few more subsections of section number 7. Few more things relating to supply they will try to say. Let us try to understand them in a detailed manner. So now the remaining content, we will try to revise it quickly from the material itself. We will try to revise. So 7 subsection 1 we are successfully done with. Let us try to understand 7 subsection 2. Let us try to quickly revise it. So 7 subsection 1 we are done. Now we have 7 subsection 1A. Sir, what does this 7 subsection 1A talk about? See, you make supply. Now we have seen which activities will fall under supply. Sometimes there might be a confusion. You are making supply, whether that activity will fall under supply of goods or that activity will fall under supply of services. That confusion you will have. Why? Because depending on whether it is supply of goods or whether it is supply of services, GST rate will be determined. So often you get a confusion. For example, I'm teaching the classes along with the material. Or for example, I'm providing restaurant services. I'm running a restaurant where I'm providing food also, I'm giving restaurant service also. Sir, will that be treated as supply of goods or will that be treated as supply of services? This kind of confusion will arise now. So we have to be very clear. Once an activity falls under supply, the next step what we have to do is whether that supply will form part of supply of goods or that activity will form part of supply of services. Sir, why we need to differentiate it? So why? Because the rate of GST will be depending on that segregation only. So that is clarified under 7 subsection 1A. So when an activity is treated as supply, Either that activity will fall under supply of goods or it has to be treated as supply of service. That guidance has been given under schedule 2. So schedule 2 has given a clear segregation. Let us try to understand what they are trying to say here. Which activity will fall under supply of goods, which activity will fall under supply of services. They have given one segregation in schedule 2. Let us try to quickly revise it from this material itself. Okay, right. So first, let us see para number 1, transfer. If there is any transfer of title in the goods, if title in the goods is getting transferred, if ownership in the goods is getting transferred, then it will always fall under supply of goods. If I'm selling this pen to you, the ownership, the title of this goods will get transferred to you. So it is a supply of goods. Any transfer of right in goods or undivided share in goods without transfer of title thereof. For example, I'm having some goods. I'm transferring the right to use that goods. I'm transferring right in goods. Or let me put it this way. Assume that 3 people have bought the car. There is a car. Now 3 people have collectively bought the car. 3 people, everyone has contributed 2 lakh rupees and they have bought this car. Now every person is having an undivided share in the car. This person is also having some share in the car. This person is also having some share in the car. This person is also having some share in the car. If I am transferring my share, see, I have 1/3 of the portion of the car. I want to sell my share of the car. That means will I cut the car into 3 parts and sell one part, or will I sell the tires only to the other person? No. So assume that there are 3 persons, A, B and C. All the 3 have collectively bought the car. Each of them have undivided share in the car. If you are transferring that undivided share, I have a ownership in this car. I have a part ownership in this car. I am transferring that right in the goods or undivided share in the goods without transferring title. I'm not transferring the entire car, but whatever right I'm having in that car, whatever undivided share I'm having in the car, that right only I'm transferring it to another person. That will be treated as supply of service. If entire title in the goods is getting transferred, supply of goods. If you are transferring right in goods or undivided share in goods without transferring the title, that we call it as supply. That will fall under supply of services. And any transfer of title in goods under an agreement which stipulates that property in goods shall pass at a future date upon full payment or upon payment of full consideration as agreed. So this is nothing but hire purchase. They're talking about hire purchase. I'm selling the goods, but you are required to pay that amount in the installments. When you pay me the last installment, then the actual ownership will get transferred. For example, I'm selling a laptop to you, hire purchase. You are required to pay every month some payment. The laptop will be with you only. Possession will be there with you. But ownership will get transferred only when you make the last payment. This is how hire purchase will happen. So in case of hire purchase transactions also, that also will be treated as supply of goods. Understood everybody? So para number 1, if there is title is getting transferred, supply of goods. Title is not getting transferred, only right in goods or undivided share in goods is getting transferred, then it is supply of service. If there is an agreement in which ownership will get transferred at a future date, that also will fall under supply of goods only. With this, here they are talking about hire purchase. Understood everybody? Next. Second one. Any lease, tenancy, easement, license to occupy the land. If you are leasing out the land, if you are giving tenancy rights to some other person to use the land. So leasing, renting, occupying land, license to occupying the land, all this will fall under supply of services. Similarly, any lease or letting out of buildings, including a commercial, industrial, residential complex for business or commerce, wholly or partly. Either I am renting out or leasing out the land, or I am renting out a building, a residential complex or commercial complex. Those, if I am renting out, that activities will always fall under supply of services. Now, treatment or process. For example, I am having some good. For example, I am having some computer. Okay, my laptop was damaged. I gave this laptop to another person on which he has performed some work. That will always be treated as supply of services. So any treatment or process which is applied to another person's goods, or let me give you one more example. Assume I'm a person who deal in cloth. So I have sent a cloth to another person. On that, he will do the printing. I sent a cloth. He will do the printing on that cloth and give it back to me. That means he is performing some process on my goods. The cloth is mine, but some other person is doing some treatment or doing some process on my goods. That is simply a job work. That will always be treated as supply of service. So a treatment or process which is applied to another person's goods. My goods, If some another person is doing some process on my goods, or if some another person is treating my goods, that will always fall under supply of services. Now, transfer of business asset. Sir, what is this? Goods forming part of business assets are transferred or disposed of under the directions of the person carrying on the business, so as no longer form part of those assets. Sir, what is this, sir? Very simple. Assume that what they're trying to specifically say here is this is similar to permanent transfer or disposal of business asset. So for example, I'm a registered person. I'm having various assets in my business. For example, I have bought so what example I will give? I have some plant and machinery. This is my business asset. If I am transferring or disposing of this business asset, if I am disposing of that business asset, I have a plant and machinery, I used it till now, it is no longer useful to me, I am selling it, I am disposing that business asset. Tell me, will that be treated as supply of goods or supply of service? If my assets of the business, if they are getting disposed of, will that be treated as supply of goods or supply of service? It is treated as supply of goods. Very simple one, guys. No complication at all here. Simple things. So goods forming part of business assets, if they are transferred or they are disposed of under the directions of the person carrying on the business, so as no longer to form part of those assets. So I'm a registered person, I'm running the business. There are some assets in my business. Under my directions, I asked my staff to dispose of that asset, or me myself, I'm going and selling that business asset. Tell me, will that be treated as supply of goods or supply of service? That activity will be treated as supply of goods. Next one. What is this B point? B point says that assume that there is a car. There is some company, X Limited. They have bought a car which should be used for official purposes, which should be used for office purposes. One day, what this company X Limited has done is they have given this car to one of the directors. On a weekend, one of the director wants to go on a vacation. So what the company has done is they have permitted the director to use the car for his personal purposes, not for office purposes. X Limited company bought a car. For which purpose? For office purposes they have bought it. But they have permitted one of the directors to use this car for other than business purpose or for his private purposes. And for that, they are receiving some consideration. They told, okay, dear director, you are our director only, no? So you take the car, you use our office car for your private purposes, and you pay us 1,000 rupees of charges for using that car. Now this company is providing goods or services. What they are doing, is it supply of goods or supply of services? It is supply of services, because permitting the goods to be used. The same thing they say, goods held or used for business, whatever assets which are held for business, they are either put to private use or are made available to any person for use for any purpose other than business by or under the directions of the person carrying on business. So this is a simple example. There is a car which is used for which should be used for official purposes, but the company has given to its director for one day for using it for private purposes. They are letting the business asset to be used for private consumption or for any purpose other than business. This activity will fall under supply of services. Next one, what is the C point? See, this C point is linked with registration chapter, cancellation of registration. For example, you are a registered person. You have done the business for a certain period of time. After a certain period of time, you are cancelling your registration. Your registration is getting cancelled. Okay, let me put it this way. You are a business person, you have started doing business, you are a registered person, you have obtained the registration under GST. After a certain period of time, your registration is getting cancelled. Either you voluntarily went ahead and cancelled your registration, or proper officer, because you have done some non-compliance, proper officer has cancelled your registration. Either you yourself are cancelling the registration, or proper officer himself is cancelling the registration. Assume that your registration is cancelled on 31st of March 2023. On this date, your registration is cancelled. One day prior to this, whatever business assets you are holding, you are cancelling the registration, no? One day prior to that, whatever business assets you are having, that could be goods, that could be stock, that could be capital goods, whatever it is. So whatever assets which are there, one day before you cease to be a taxable person, that means your registration is getting cancelled. One day before the date on which your registration is cancelled, on that date, whatever goods are there, whatever capital goods are there, they all will be deemed to be transferred. They are all deemed to be supplied. You might not have actually sold it, but once your registration is getting cancelled, one day before that, whatever assets, whatever business assets you have, they will be deemed as if you have supplied them. As if you have supplied them, and on that also GST will come, and it will be treated as supply of goods only. It will be treated as what? Supply of goods. So this is linked with the registration chapter. In the registration chapter, when you have attended the classes, we have understood about cancellation of registration. So in some cases, you either voluntarily yourself can go and cancel the registration, or proper officer also, if you have done some non-compliances, he will cancel the registration. One day before your registration is getting cancelled, whatever business assets you are holding, that could be in the form of goods, that could be in the form of capital goods, whatever it is, they all will be deemed to be supplied in the course or furtherance of business, and that will be treated as supply of goods. That will be treated as supply of goods. However, in some cases, this will not be treated as supply of goods. In some cases, either though your registration is getting cancelled, in normal circumstances, they told one day before you cease to be a taxable person, whatever business assets are there, they will be deemed to be supplied. That is what they have told. But however, there are some exceptions. In some cases, it will not be treated as deemed supply of business assets. When, sir? So if we read it, so if I read it in a quick way, goods forming part of assets of any business carried on by a person who ceases to be a taxable person. That means you are ceasing to be a taxable person. You are no longer continuing to be a taxable person. That means if I put it in simple terms, your registration is cancelled. And whatever goods which are forming part of your business, when your registration is getting cancelled, shall be deemed to be supplied by him in the course or furtherance of the business immediately before he ceases to be a taxable person. That's what even I have also told you. So whenever your registration is getting cancelled, immediately prior to that, whatever business assets you have in your stock or capital goods, they will be deemed to be supplied, and that activity will be treated as supply of goods. However, in some cases, even though you are ceasing to be a taxable person, still it will not be deemed you are supplying the goods. It will not be deemed as if you have supplied your goods and capital goods. When, sir? When the business is getting transferred as a going concern to another person. So what do you mean by this is, assume that you are a registered person. You are cancelling your registration. Why you are cancelling your registration is because all this business, you are transferring it as a going concern to another person. All the business assets, whatever you have, whatever your entire business, you are transferring it as a going concern to another person. That means whatever assets you will have, whatever stock you will have, whatever capital goods you will have, everything will get transferred to the another person. That new person, whoever has acquired your business as a going concern, he will use the assets, he will use the capital goods, he will use the stock, and he will make a further supply, and he will pay the output tax liability on that. In that case, it will not be deemed as if you have supplied the goods or capital goods. It will not be deemed as if you have supplied your business assets. Guys, able to understand whatever I'm trying to say? So first they have told, in normal circumstances, the day on which you have ceased to be a taxable person, whatever business assets are there, that will be deemed as if it has been supplied. But however, if you are transferring your entire business as a going concern, in that case, it will not be deemed as if you have supplied all your business assets. No need to pay GST. However, if you are not transferring it as a going concern, but you are cancelling your registration, one day before that, whatever goods you have, whatever capital goods you have, that will be deemed as if you have supplied, and you have to pay the GST. Sir, on what value I have to pay, sir? That is for CA family. Sir, you are telling, even though I did not supply, it will be deemed as if it is supplied. Sir, if it is deemed as if it is supplied, on what value I have to pay the GST? That will be discussed at the CA final level, not relevant for CA inter examination. So just you have to understand this. And also, one more case where it will not be deemed as supply is, business is carried on by a person representative who is deemed to be a taxable person. Now, what is this is? Assume that there is one registered person. One day he died. His registration will be cancelled. No, his registration will be cancelled. What I told, if the registration is getting cancelled, one day before that, whatever business assets are there, they will be deemed to be supplied. But however, if this person has been expired, but his business has been taken over by his representative. His representative is taking over his business. That means he's a legal heir. His son is taking over his business. Now he will obtain separate registration. This person is gone. This person's registration will be cancelled. But after this person has expired, this business is carried on by his representative. In that case also, it will not be deemed as if business assets have been transferred. No need to pay GST. Clear everyone? So one simple logic, guys. If the person ceases to be a taxable person, then whatever assets, whatever business assets are there, which are forming part of that person's business, they will be deemed to be supplied, and that will be treated as supply of goods. On that, you have to pay GST. But however, in two cases, even though a person ceases to be a taxable person, it will not be deemed as if business assets are supplied. What are the two cases? Number one, if the business is transferred on a going concern basis. You are stopping to be a taxable person, but your business is transferred as a going concern to another person. In that case, it will not be deemed as if you have supplied business assets. Similarly, a person has ceased to be a taxable person, but his representatives has carried on the business. Then also it will not be deemed as if business assets have been supplied. No need to pay the GST. Understood everybody? Clear everybody till here? So let us try to proceed ahead and understand the remaining things from the chapter. So we are done with para number 4 also. Next. Renting of immobile property. See, land and buildings, they have anyhow covered in para number 2. Specifically about land and buildings, they have already explained. Renting of land, renting of buildings, that will always be treated as supply of service. Apart from that, if there are any other immovable properties, which are getting rented out other than land and buildings, like plant and machinery will be there, which will be permanently attached or forming part of the earth. If those are getting rented out, apart from land and building, if there are any other immovable properties, if they are given on rent, that will be treated as supply of service. Then construction of complex building or civil structure. If there is any construction happening for complex building or civil structure, then construction activities will be treated as supply of services. However, let me talk about this construction of building complex, etc. in a detailed manner. So this we will understand. So construction activity, assume that there is a builder. Okay. So now what he is doing is he has agreed to construct a building. On this land. So if whether construction activity will be treated as supply of service or not, that depends on what are the payment terms. Whether construction activity will be treated as supply of services or not, that depends on what are the payment terms. Assume that, see, generally what will happen is, first builder will start constructing the building. On one particular day, competent authority will give the certificate, okay, this construction has been completed. A competent authority like urban development authority or local authorities will be there. They will give a certification. So assume that the builder has started construction of the building on 1st of January 2023. Now the competent authority gave the certificate. Some competent authority gave the certificate that yes, this construction of the building has been completed on. Somewhere they have given the completion certificate on 15th of December 2023. Competent authority gave the completion certificate. Now the builder is providing construction services, and if he is receiving entire consideration, assume that he agreed with the landowner to receive a consideration of total 10 lakh rupees. If entire consideration is received after the issuance of completion certificate by the competent authority, if entire consideration has been received after the issuance of completion certificate by the competent authority, entire 10 lakhs of consideration was received after the certificate of completion given. In this case, there is no GST. This activity will not form part of supply. If entire consideration is received after the certificate of issuance of after the competent authority has issued the completion certificate, if entire consideration has been received after that date, then it will be not treated as supply. There will be no GST on this transaction. However, sometimes assume that the builder has started the construction on 1/1/2023. The competent authority gave the certificate, okay, this construction has been completed on 15th of December 2023. They gave the certificate then. Now the builder has received some advance payment. Assume that he received 2 lakh rupees before the completion of before the grant of completion certificate. Balance 8 lakh rupees he has received it later. Then what the government says, Now this entire 10 lakh rupees will treat it as supply of service. On that you have to pay GST. Sir, this builder has received only 1 rupee of consideration before completion of before competent authority gave the completion certificate. 9.9999. So that amount, balance amount, has been received after the completion certificate has been granted. Still, entire 10 lakhs will be treated as supply of services. On that GST will come. That what will come? GST will come. So whether construction activity will fall under supply of services or will not fall under supply of services, it depends on when the consideration has been received. So now they add few more information here. I will explain it to you step by step. Listen carefully. Now sometimes what will happen is, assume the builder has started constructing the building on, he has started providing services on 1st of January 2023. See, generally what will happen is, competent authority will make some delay. It is not so easy to get the completion certificate from the competent authority. But this building was ready for occupation. This building was ready to first occupy. The moment you can go and first occupy that building was first ready for first occupation. The date of first occupation of the building is, it was completed on 1st of December only. It was ready for occupation, first occupation on 1st of December only. But competent authority gave the certificate on 15th of December. So now what the act is telling is, you should consider whether payment is received on or before the date whichever is earlier. Which means the date which is ready for its first occupation, or the date on which competent authority gave the completion certificate, whichever is earlier, that you should take it as a cutoff date. So if you read it here, I will read it, then I will expand the example, then you will understand. Construction of a complex building, civil structure, or a part thereof, including a complex or building intended for sale to a buyer, wholly or partly, except where the entire consideration has been received after issuance of completion certificate where required by the competent authority, or after its first occupation, whichever is earlier. So first we need to decide one cutoff date. See, cutoff date is either the day of first occupation date or issue of completion certificate by the competent authority, whichever is earlier, that you have to determine. Assume that the competent authority gave the certificate on 15th of December. The date of first occupation is 31st of December, whichever is earlier. Which one will be earlier, guys? This date will be earlier. See, if entire consideration is received after this cutoff date, entire 100% of the consideration is received after this cutoff date, then it will neither be treated as supply of services nor will be treated as supply of goods. GST itself will not come. However, even if a part of the consideration is received before this cutoff date, sir, the builder has received 10% of the advance here, balance 90% he received after the cutoff date, then they are telling entire consideration will be treated as supply of services and GST has to be paid on this. Very, very important point. I will give you one more example. First step is determine the cutoff date. Assume that competent authority gave the certificate of completion on 10th of January 2023. Whereas the date of first occupation is 1st of January 2023, whichever is earlier. What will be the cutoff date? This will be the cutoff date. See, if entire 100% of the consideration is received after the cutoff date, construction of building is happening, entire consideration for that construction of building has been received after this cutoff date. Entire 100% should have been received after the cutoff date. Then it will be neither treated as supply of services nor it will be treated as supply of goods. It will be outside of the purview of GST. GST will not be attracting on this transaction. However, at least even a part of the consideration, assume 1 rupee of consideration you are receiving here, balance you are receiving after the cutoff date, then entire value will be treated as supply of services and on that GST has to be paid. Understood, everybody? So when construction of a building will be treated as supply of service, when construction activities will be treated as supply of services, able to understand? So first you have to determine cutoff date. What is the cutoff date? Date of first occupation or date of issuance of completion certificate by the competent authority, whichever is earlier. That will be the cutoff date. If entire consideration is received after the cutoff date, nor supply of goods, nor supply of services, no GST. Even if part of the consideration is received before the cutoff date, even 1 rupee is received before the cutoff date, that entire value will be treated as supply of services and on that GST will be imposed. Understood, everybody? So that is what the meaning of this point. Clear? Next, temporary transfer or permitting use or enjoyment of an intellectual property right. Intellectual property right, guys, intangible assets. For example, I have one patent. Some pharmaceutical company has developed a patent. They have permanently transferred, not permanent transfer, sorry, temporarily transferred, not permanent transfer, guys. They have temporarily transferred. So assume that Dr. Reddy's pharmacy, they have developed one, they have found out a new drug to cure certain kind of disease. Now they have taken a patent of that. That patent, they are temporarily transferring it to Sun Pharma so that they can use it temporarily. So temporary transfer or permitting the use or enjoyment of intellectual property. So they are permitting Sun Pharma to use that patent for a certain period of time. That will be treated as supply of service. So if permanent transfer is happening, supply of goods. If temporarily it is getting transferred, intellectual property right, temporary transfer or temporarily you are permitting the use or temporary enjoyment of an intellectual property, that activity will fall under supply of services. Next one, development, design, programming, customization, adoption, upgradation, enhancement or implementation of IT software. So if anybody is providing services relating to development, design, programming, customization, adoption, upgradation of IT related softwares, that always will be treated as supply of service. Next, E point, agreeing to obligation to refrain from an act or to tolerate an act or to do an act that will be treated as supply of services. So what does this point say? See that saying 3 points here. Agreeing to do an act. If you are agreeing to do an act, for example, assume there is a music composer. One day, a event management company has came. One day, an event manager has came and told, sir, you please perform at our event. We will give you 1 lakh rupees of consideration. Now, if you are agreeing, here what you are doing? You are agreeing to do an act. Which act you are agreeing to do? You are agreeing to do the performance at some event. So if you are agreeing to do an act, this is what? See, this is a supply. But is it a supply of services or supply of goods? You have agreed to do an act. Is this a supply of service or supply of goods? It is supply of service. You are agreeing to do an act. If you are making some supply in which you are agreeing to do an act, you are receiving money and you agree to do a performance on one event. This is what? Supply of services. This will be treated as supply of service. Or agreeing to refrain from doing an act. Refrain from an act. What is that? Refrain from an act. Sir, what do you mean by refrain from an act? Assume that I am a business person. One day, in my locality, at the corner of my shop, another person has opened up the new store. I am selling mobile phones. Adjacent to my shop, another person has opened another mobile store, mobile phones selling shop. I went to that person and told, boss, I will give you 1 lakh rupee. You please don't open any shop in this locality. I will give you 1 lakh rupees. Don't open mobile phone shop in my locality. So this is also supply only. So this person is agreeing to refrain from an act. He is agreeing not to do an act. He is receiving the consideration, but he is agreeing that he will not do certain act. He is agreeing he will not open a mobile shop in this locality. This is also a supply. Is it supply of goods or supply of service? It will be supply of service. Agreeing to refrain from an act. That means you are agreeing not to do an act. That also will be treated as supply of service. Or agreeing to tolerate an act. I will tell you one simple example. Assume that I have a store. So this is my store. This is the road. So what is happening is every day one Pani Puri wala is coming here and he's opening the stall in front of my shop. See, I have a shop on the busy corner. In front of my shop only one Pani Puri person has opened his stall. Now it is a disturbance for me, no? So it is a disturbance for me. But I thought one thing. What I thought is I went to that Pani Puri person and told, or this Pani Puri person himself came to me and told, sir, I will have a Pani Puri stall in front of your shop. Please don't complain. Or he's coming and telling, sir, this is your premises. You have a shop. And in front of your shop, whatever place is there, that is also yours only. But what you do is, I will every day evening, from evening 5 to 7, I will keep my Pani Puri stall here. For that, please permit me to open the Pani Puri stall here. I will give you 10,000 rupees every month. So this is what? Here, the store owner, he's tolerating an act. What he is doing? He is tolerating an act. It is his premises. No, in front of his store, he is tolerating. Even though the Pani Puri person is opening a stall, he is tolerating that act. This is also supply. Is this a supply of service or supply of goods? This activity is also supply of service. Able to understand? So agreeing to do an act or agreeing to refrain from an act, you are agreeing to do some act, that is a supply of service. You are agreeing to refrain from an act, you are stopping yourself from doing an act, that is also supply of service. You are tolerating an act, that is also supply of service. That is also supply of service. So like this, if you are agreeing to do an act, or if you are agreeing to refrain from an act, or if you are agreeing to tolerate an act, those all activities will be treated as supply of services. On that GST will be levied. On that what will be levied? GST will be levied. But however, this point has led to so many confusions. This point has led to so many confusions. Let me address a few issues here. This has created a lot of when they have told that, when they have brought this point, agreeing to obligation to refrain from an act, or agreeing to tolerate an act, or agreeing to do an act, all these activities will be treated as supply of services. This is what Schedule 2 has told. Now, this led to so many confusions. What confusions has come across is, I will explain one summary. There was a circular. I will try to explain the summary of that circular, what they have explained in the circular. So I will not be able to explain everything in a detailed manner. Just I will tell you a few things. Liquidated damages. Sir, if there are any liquidated damages. Sir, what are liquidated damages? Let me give you an example. Yeah. Penalty stipulated in a contract for delayed construction of houses. For example, you have agreed to a person to construct the building on time. You have told that if you don't construct, if you are making a delay in the construction of the house, you have to pay me extra 10,000 rupees. I gave to a builder a contract to construct my building. In the contract, I have told, if you make any delay in the construction of house, assume that I gave him the delivery date by 31st of December, I told building should be completed. I am telling, if you delay the construction of the building by this date, you have to pay me 1 lakh rupees extra. You have to pay me 1 lakh rupees extra. So this 1 lakh rupees, we call it as liquidated damages. This 1 lakh rupees, we call it as liquidated damages. Now you tell me, can this 1 lakh rupees, will this form part of, let me put it this way, landowner? Okay, landowner, there is a builder. So what this builder has done is, he did not complete the construction of the building on time. So that's why what he has done is, as per the contract, this builder has paid 1 lakh rupees of penalty amount to the liquidated damages to the landowner. Now some officers, some GST officers started interpreting that, hey, here landowner is doing an act of tolerating. Builder did not construct the building on time, and the person is receiving 1 lakh rupees for tolerating the builder for delaying construction. Some proper officer did this kind of analysis, and he told that, hey, whatever penalty you are receiving, no, whatever liquidated damages of 1 lakh rupees you are collecting, no, that you are receiving for tolerating an act. Builder made a delay in construction, you are tolerating, and for tolerating you have collected this 1 lakh rupees. The proper officer told, boss, this we will treat it as supply of services, you have to pay the GST on this. The proper officer told, this we will treat it as supply of services, we will impose GST on this. But the circular clarified that these liquidated damages are not for tolerating an act. This liquidated damages you are collecting for not tolerating an act. You are not tolerating, you are not ready to tolerate the delay in construction. For not tolerating the act, you are collecting this liquidated damages. See, supply of, if you are agreeing to tolerate an act, if you are tolerating an act and for that you are receiving consideration, that is supply of service. But circular clarified that if you are receiving any liquidated damages, that is not for tolerating the act, that is for not tolerating an act. There is a minute difference, guys. You are unable to tolerate the act, that's why you are collecting 1 lakh rupees as liquidated damages. So liquidated damages cannot be treated as supply of service. Liquidated damages are not supply of service. On that GST will not come. Able to understand? This is a summary of that circular. More you can read it. More you can read it. Similarly, check dishonor charges. For example, you received a check from another person and that check is dishonored. Since the check is dishonored, you collected some penalty. On that also, that means there also you are tolerating the check dishonor? No. You are unable to tolerate the check dishonor. That's why you have collected that check dishonor charges. So that is also not a consideration for tolerating an act. That is a consideration for not tolerating an act. That also will not be treated as supply of services. This is also not a supply. Check dishonor charges, check dishonor penalty. This is also not a supply. So this also you can read it in a detailed manner. Penalty imposed for violation of law. For example, you violated a traffic signal. You violated a traffic signal. Traffic police has caught you and he gave you a challan, 500 rupees. You paid 500 rupees. Are you tolerating an act? Are you providing any services to the government? Or is the government providing any services to you? So let me put it this way. You did not follow the traffic signal. Traffic police has stopped you. He gave you challan of 500 rupees. Now you paid the 500 rupees to the government. In return, what you are getting? Is the government tolerating? You are unable to, you are not following the law. Since you are not following the law, that's why government is tolerating you. No, since the government is not tolerating, they don't want anybody to make it, to make a violation of law. That's why they are collecting the penalty. So that's why when you pay penalty for violation of laws and regulations, that is on that GST will not come. That is not supply, because whatever penalties you are paying to the government, that is not for the government to tolerate an act. Since they are not ready to tolerate your act, that's why they are collecting the penalty. On that also GST will not come. That will not be treated as supply. Okay, that also you can read it in the detailed manner. Next, forfeiture of salary or payment of bond amount. For example, some companies will put a agreement that in the employee contract agreement that if an employee leaves the organization, if an employee wants to resign, he has to give 3 months of notice period. Assume that if you want to leave early, you have to pay extra amount to the company. So an employee is leaving the organization. For that, he has paid extra amount. He has to serve 3 months of notice period, but he want to go early. He paid 1 lakh rupees to the company for early release. Will that be called as supply? No, this activity also will not be treated as supply. Why? Because here also company is not tolerating. Company is not ready to tolerate your act. That's why they have collected 1 lakh rupees of penalty. This also will not be treated as supply of service. No GST will come on this activity also. Next one, however, late payment charges, late payment surcharge or late payment fee. See, it is quite common in the business transactions to offer credit period. Take for example, a customer has sold the goods. It is very common. It will happen. No, for example, you take electricity. Let me take one simple example. Electricity charges you take. See, electricity charges, for example, you have to make the payment on time. If you don't make the payment on time, you have to deposit the electricity charges along with late fee or surcharge the electricity department will impose. If you did not make electricity charges payment on time, you have to pay late fee or surcharge. Now, whatever late fee or surcharge, whatever you are paying is, that is actually for tolerating act. Why? Because it is for tolerating an act. That means electricity department is tolerating your act of late payment. For that, they are collecting extra charges on you. This can be treated as agreeing to tolerate an act. Why? Because it is quite common for making the late payments. So generally, when electricity department has gave you connection, it is a common for them. Some people will make the late payment. When they are making the late payment, they will collect extra amount from you. So in those cases, that is the act of tolerating, and that can be treated as supply. But summary is electricity supply is exempted. Electricity supply itself is exempted. So even if they are collecting late fee or surcharge, that also will not attract any GST. Why? Because whole electricity services itself are exempted. That you can read it here. And fixed charges for power, guys, you go through this once. Fixed charges for power and all, you can go through it. These are not that important from the examination perspective. However, we have cancellation charges. For example, you book a flight ticket. In the flight ticket, when you book the flight ticket, they will say if you cancel the flight ticket within certain point of time, there will be cancellation charges. Sir, whatever cancellation charges they are charging for cancellation of the ticket, can that be treated as supply of services? Yes. Cancellation charges, bus cancellation charges, hotel cancellation charges, flight tickets cancellation charges, all that cancellation charges will be treated as supply of services only. And they will be taxed at the rate at which original supply is getting taxed. For example, if you booked a flight ticket on flight transportation services, the GST rate is 18%. If you have to cancel the ticket and cancellation charges are 800, on the 800 also the GST rate applicable will be 18%. So that's what they try to explain it in the cancellation charges. I would suggest each and every one of you to go through this circular in a detailed manner. Please go through it. I have explained you the summary, but you take out some time and go through the circular. Very, very important from the examination perspective. See, now coming to the next point, transfer of right to use. See, this I will explain what they are trying to say. If you have any goods, for example, a car is a good. If I am transferring right to use that goods, for example, I am giving this car on rent. Will it be falling under supply of goods or supply of services? That will always form part of supply of services. So if you are transferring right to use any goods for cash, deferred payment or any other valuable consideration, take for example, Zoom car. What the Zoom car app will do, what Zoom car will do is they will have goods. What are the goods for them? They have cars. They will give this cars for rent. That means they are transferring right to use the cars for cash, for deferred payment or any other valuable consideration. So now tell me what Zoom car is doing. Are they supplying goods or are they supplying services? they're transferring right to use the goods, that will always be treated as supply of services. So these are the activities which are mentioned in para number 5 of schedule 2. Now, there is one more thing here. There is one more paragraph, sixth paragraph, works contract. Works contract will always be treated as supply of service. Sir, what do you mean by works contract? Let us try to understand. Works contract means it refers to supply of goods as well as supply of services in relation to construction of an immobile property. If any immobile property is getting constructed, if I am supplying goods as well as services, if I am combining goods and services, both I am supplying for the construction of immobile property, that I generally call it as works contract. That I generally call it as what? Works contract. So if you see here, works contract means a contract for building, construction, fabrication, completion, erection, installation, fitting out, blah blah blah, of any immobile property where property in goods is also getting transferred. Along with that, the property, it also involves services also, wherein transfer of property in goods, whether as goods or in some other form, is involved, is in execution of such contract. That means, if I put it in simple language, it refers to such a supply where goods are also getting supplied, services are also getting supplied in relation to a construction of immobile property. For example, there is already a building. There is already a building. Building is an immobile property, no? So on this building, an extra floor is getting constructed. An extra floor is getting constructed. One person came forward and told, sir, I will supply all the goods, cement, everything, all the goods like sand, cement, along with all that I will supply. Along with that, I will also provide labor services. Nothing but a person came forward and told, sir, I will construct this additional building for you. Raw material also I will provide, labor services also I will provide. Now I will say this person is providing works contract services. So those supplies where there is a supply of goods also, there is a supply of services also, and those supply of goods and services is relating to construction of an immobile property. That means you can call it as a combined supply of goods and services relating to construction of immobile property. So I told, sir, I will take 10 lakh rupees for constructing the additional floor. In this 10 lakh rupees, for this 10 lakh rupees, I will supply the goods also. I will take care of all the cement, sand, steel, whatever required. I will also provide labor services. So what I am doing in a single supply, it involves a supply of goods as well as supply of services. That too in relation to construction of immobile property. That I call it as works contract. Works contract will always be treated as supply of service. Works contract always and always it will be treated as supply of service, even though it involves the supply of goods, but still entire activity will always be treated as supply of service. And one more thing, B point, they say a very lengthy thing, but simply that is restaurant services. See, when you go to a restaurant, it also involves supply of goods. They will give you food also. Along with that, there is a restaurant service also. They will come and serve the food to you. So restaurant services, which include supply of goods as well as supply of services. Sir, how it should be treated, sir? The government has here clarified all the confusion. They told always treat the restaurant services as supply of services only. Even though it involves a supply of goods, still treat that entire activity as supply of services only. So these are all the various activities which are mentioned in schedule 2. Nothing but schedule 2 is clarifying once an activity has fallen under supply, should it be treated as supply of goods or should it be treated as supply of services? That confusion is getting sorted out by this schedule 2. Understood? So now we have few more things to discuss from this chapter. Schedule 3 we have. Now we have few more things to discuss from this chapter, which is schedule 3. So we have seen schedule 2 also. Now let us try to understand the provisions of schedule 3. Let us try to understand the provisions of schedule 3. Sir, what is schedule 3? Schedule 3 talks about certain activities which are not treated as neither supply of goods nor supply of services. There are certain activities they have mentioned in schedule 3 which are neither treated as supply of goods, not even treated as supply of services. What are they, sir? Number 1, services by employee to the employer. Did you ever find an employee will work for the company? Do you find anywhere employee giving a GST invoice to the employer? Why? Because that activity is mentioned in schedule 3, the services provided by employee to the employer in the course or in relation to his employment. If an employee, whatever services provided by employee to the employer in relation to the employment, that is neither treated as supply of goods, not even treated as supply of services. On that GST will not come. That's why we don't see any employee giving an invoice showing GST to the employer. But however, only those services provided by employee to the employer in relation to his employment are only not supply. If employee is providing some extra service beyond his employment terms, then it will be treated as supply. I will tell you one simple example. I'm a chartered accountant. Okay, I'm working with some another person. There is some employer. I'm a chartered accountant. I'm a employer. I'm an employee of that person. So whatever services I'm providing in relation to the employment, that is not at all a supply. On that GST will not come. But this employer came to me and told one fine day, sir, you are a chartered accountant. No, you are working for me. You are employee. You do one more thing for me. You please take CA inter classes for my son. You take CA inter classes for my son. See, whatever services I am providing here, these are not in the course of employment. These are beyond my employment. These are not in the course of my employment. These are what? Beyond my employment. So this activity will be neither treated. This activity will fall under supply. This activity will be supply. But whatever services I am providing in the course or further in the course of my employment, they will be neither treated as supply of goods. They will be neither treated as supply of services. Understood, everybody? Clear and comfortable? Next activity which has been mentioned in schedule 3, which is neither treated as supply of goods nor treated as supply of service. Second one, services by any court or tribunal established under any law for the time being in force. For example, you go to the court. Court will provide you the services. What services court or tribunal will provide? They settle the cases. For that purpose, for filing the case, for fighting the case in the court or tribunal, you have to pay some court fees or court charges, or tribunal fees or tribunal charges will be there. They are telling that whatever services which are provided by court or tribunal, they will be neither treated as supply of services nor treated as supply of goods. On that, they are outside of the purview of GST, because the government don't want to make the justice a costly affair. So that's why they told whatever services which are provided by court or tribunal, they are neither treated as supply of goods, not even treated as supply of services. Similarly, functions which are performed by member of parliament, MPs, MLAs, member of panchayats, member of municipalities, member of other local authorities, they are all providing services. No, they will also get some salary from the government. Will they collect any GST in addition to that? No. So whatever services which are performed by members of parliament, MLAs, MPs, member of municipalities or local authorities, their services will neither be treated as supply of goods nor they will be treated as supply of services. Similarly, duties which are performed by any person who holds any post in the pursuance of provisions of the constitution, like for example, the services provided by President of India, will he collect any GST on his services? No. Services provided by Vice President of India, Prime Minister of India, Chief Justice of India. So these are all the people who are holding the positions under law, and whatever services which are provided by them, on that also there will not be any GST. And similarly, duties provided by any chairperson or a member or a director in a body established by central government, state government or local authority, like for example C&AG. So these people are holding some C&AG is already covered in previous case. Apart from that, duties performed by any person as a chairperson or a member of a director in a body established by central government, like ED will be there. ED department is there, no, there the chairperson will be there, there some members will be there. Whatever services provided by them, on that also there will not be any GST. Able to understand? Like CBI director, the services provided by these people are also neither supply of goods nor supply of services. GST will not come on this. So this is the third activity mentioned in schedule 3. So first one is what? The services provided by employee to the employer in the relation to his employment. Second activity, services which are provided by court or tribunal. Those are also not falling under supply. Functions which are performed by can I call them as people's representatives? So services provided by people's representatives like MLAs, MPs or Prime Minister, Vice President or Chairperson or Director of some government department. So those services also will not be treated as supply. Next one, funeral. See, when if the person has already died, let him rest in peace, no? So that's why the government thought services of funeral, burial, crematorium, mortuary, including transportation of deceased. See, sometimes they will say there is a dead body, someone is providing the services of transportation of that dead body in a flight. Will that be treated as supply? No. Why? Because transportation of the deceased is neither a supply of goods nor supply of service. Just they will confuse you. Transportation of a died person is happening in a aeroplane, in a private jet. See, whatever may be the mode of transportation of the deceased person is neither supply of goods nor supply of services. No GST on that. Next one, sale of land. When you are selling the land, then it will neither be treated as supply of goods nor supply of service outside of the purview of GST. Sale of completed building. I will say it as sale of completed building. This I have already clarified. if entire consideration is received after the completion certificate or date of first occupation, whichever is earlier. If entire consideration is received after that cutoff date, then it is neither supply of goods nor supply of service. This point I have already explained. Now talking about para number 6 of schedule 3. So in the para number 6 of schedule 3, there is an amendment actually which is applicable for May 2024 examination. So very important from the examination perspective, since there is a amendment in para number 6 of the schedule 3. So I would suggest you to watch this marathon along with the GST amendments video, whatever we have uploaded or we are about to upload in the YouTube. So just try to watch this marathon along with the amendments. That will make even more sense. Even you can score even more good marks by following this marathon along with the GST amendments video. So now let us talk about this para number 6 of schedule 3. So as we are seeing, schedule 3 specifies certain activities which are neither treated as supply of goods nor treated as supply of services. Under that, 5 items we have seen, 5 kind of activities which are neither treated as supply of services nor treated as supply of goods that we have seen. There is one more activity which is neither treated as supply of goods nor treated as supply of services. So entry number 6 says that actionable claims other than specified actionable claims. What does entry number 6 say? What activity has been mentioned under para number 6 of schedule 3? They are telling actionable claims other than specified actionable claims. If you remember, when we have understood the goods definition, we have told that goods includes actionable claims as well. Goods includes actionable claims. So when actionable claims are getting included in the goods, so when supply of actionable claims happens, generally it should also be treated as supply of goods and it should come under the purview of GST, right? But they have specifically mentioned under schedule 3 that actionable claims will not be treated as supply of goods, not even treated as supply of services. But the entry number 6 just did not say actionable claims. They said actionable claims other than specified actionable claims. They said what? Actionable claims other than specified actionable claims will be neither treated as supply of goods, not even treated as supply of services. Sir, what they are exactly trying to say? So first we have to clear our concept regarding certain points. Number 1, goods include actionable claims. But they are telling supply of actionable claims is neither treated as supply of goods, nor treated as supply of services, except specified actionable claims. So the summary here is what exactly they are trying to say here is so first we have to check actionable claims. We are going to divide into 2 categories. If it is a specified actionable claim, then that supply of specified actionable claim will be qualifying as supply of goods and on that GST will be levied. Whereas if an actionable claim is other than specified actionable claim, the actionable claim is other than specified actionable claim, then it will be neither treated as supply of goods, not even treated as supply of services. That will be completely outside of the purview of GST. This is what the summary. So whether actionable claims will be treated, whether supply of actionable claims will fall under GST purview or not, that depends on is the actionable claim is a specified actionable claim or is the actionable claim is other than specified actionable claim. If the actionable claim falls under specified actionable claim, then it will be treated as supply of goods, on that GST will come. Whereas if it is other than specified actionable claim, then all that other than specified actionable claims are completely outside of the purview of GST. They will be neither treated as supply of goods nor treated as supply of services, and on that GST will not come. But first we have to understand, sir, what exactly will fall under specified actionable claim? You are telling actionable claim other than specified actionable claims are neither treated as supply of goods nor treated as supply of services. Sir, but what exactly will fall under that meaning of specified actionable claims? What is the meaning of specified actionable claims that they have given in section 2 clause 102A, which says specified actionable claim means the actionable claim in or by way of betting, casinos, gambling, horse racing, lottery or online money gaming. These 6 activities will be treated as specified actionable claims. So what are the 6 specified actionable claims? Betting, casinos, gambling, horse racing, lottery or online money gaming. Which means if any of these 6 activities, if any of these 6 actionable claims are getting supplied, if supply of any of these things is happening, either betting is happening, casinos is happening, gambling is happening, horse racing is happening, lottery, someone is providing that lottery game, or even someone is providing online money gaming. So if these activities are happening, then these activities will be treated as supply of goods and on that GST will be levied. Whereas other than these 6 items, if any other actionable claims are getting supplied, those activities will be neither treated as supply of goods nor treated as supply of services. They will be completely outside of the purview of GST. Able to understand? So the most important thing which you have to remember is this clause is very important. They have a high chance of getting tested in the examination. So actionable claims other than specified actionable claims are neither treated as supply of goods nor treated as supply of services. So that means, which indirectly means that whatever specified actionable claims are there, they will be treated as supply of goods, on that GST will come. Whatever other than specified actionable claims are there, on that GST will not come. Sir, but what exactly is the meaning of specified actionable claim? Under specified actionable claim, 6 activities are included. Number 1, betting, casinos, gambling, horse racing, lottery, or online money gaming. If any of these 6 activities, if any of these 6 actionable claims are getting supplied, then they will be treated as supply of goods. They will come under GST purview. Other than these 6, if any other actionable claims are getting supplied, then they will be neither treated as supply of goods, not even treated as supply of services. They will be completely outside of the purview of GST. Able to understand? So this is what regarding entry number 6 of schedule 3. Very important from the examination perspective. See, these are the activities which are not treated as supplies under schedule 3. However, there are certain activities which are not treated as supplies by way of notification. Government released a notification and they have mentioned certain activities in that notification which they told they will neither treat it as supply of goods nor treat it as supply of services. Sir, what are that, sir? What notification they have given? Activity in relation to panchayat or municipality. See, there are some activities which are entrusted to a panchayat under Article 243G of the Constitution. That means in the Constitution, if you open Article 243G, that will say which activities are required to be performed by panchayat. So panchayat has been given some activities to be performed under Article 243G. Similarly, municipality has also been given some functions which are mentioned under Article 243W. So Article 243G contains functions which are required to be performed by panchayat. Article 243W contains functions which are required to be performed by municipality. So whatever activities which are performed by municipality or panchayat, in relation to those activities which are entrusted to them under Article 243G and 243W, that means if panchayat or municipality, they are fulfilling their functions, they are fulfilling their responsibilities given under Constitution, that will not be treated as either supply of goods, not even supply of services. So if panchayat or municipality is doing something extra in addition to the functions which are entrusted to them under Constitution, that is supply. But if municipality or panchayat, if they are fulfilling the services which are entrusted to them under Article 243G and W, those activities will neither be treated as supply of goods nor supply of services. Similarly, grant of alcoholic liquor license. See, government will give liquor license. If you want to open a wine shop, you have to get the license from the governments. So supply of alcoholic liquor license, not supply of alcoholic liquor for human consumption. See, alcoholic liquor for human consumption completely outside of the purview of GST. Similarly, if the state government is granting license for alcoholic liquor, to open a wine shop, you have to get the license from the state government. For that, they will charge some fees from you. Even that grant of alcoholic liquor license by the state governments is also not treated as neither supply of goods, not even supply of services. However, this exception is there only for grant of alcoholic liquor license. If the state governments are giving some other licenses, like mining licenses, natural resource licenses, these will be treated as supply of service. Only whatever grant of alcoholic liquor license which is provided by the state governments, they are only not treated as supply. Other licenses granting by the state governments or central governments, that will be treated as supply and that will attract GST. Able to understand? Next one, the government has also released some circulation, some clarification also they have released, and they have mentioned in that clarification certain activities which are not treated as supplies. So I will try to explain the summary of this. Assume that there is a distinct person. Let me put it this way. There is a registered person. He is having place of business in Karnataka. He is also having place of business in Tamil Nadu. We know that both are required to take separate registration. Both are required to take separate registration. Assume that this registered person is in the business of transportation of passengers. Is in the business of transportation of passengers. Assume that this person has started his bus in Karnataka with passengers inside the bus. Now this bus, along with the passengers, it is going from Karnataka to the Tamil Nadu. It is going from Karnataka to the Tamil Nadu along with the passengers. Now I told one thing, if there is any supply of goods happening between two distinct persons. Now since both the entities, both the registration belong to the same person having same PAN, these two will be treated as distinct persons. No, I told that when the supply of goods is happening between distinct persons, see both Karnataka and Tamil Nadu both belong to the same person, two separate registration, they will be treated as distinct persons. I told when supply of goods is happening between distinct persons, even without consideration, still it will be treated as supply. Now, what one GST officer has told is, hey, here bus is there. This bus is going from one distinct person's premises to another distinct person. The bus along with the passengers is going from one distinct persons. Karnataka office also belongs to the same registered person. Tamil Nadu office also belongs to the same registered person. So the bus is going from one location to another location. This is movement of the goods between distinct person. On this entire value of the bus, I will treat it as supply of goods. On the entire value of the bus, they have to pay GST. Tell me, is it fair? See, on the transportation of passenger services, if you impose GST, that is okay. But just because the bus is going from here to here, can I say entire value of the bus also will be treated as supply and on that GST you have to pay? No. So that's the same thing which they have clarified. Same thing they have clarified. Or you take another example, assume there is a goods transport agency. They have a office in Delhi. They also have an office in Mumbai. Now both are in two different states. They will take separate registration, but they will be treated as distinct person. Now assume that one truck is there. This truck along with the goods, it is going from Delhi place to the Mumbai stop. Both belong to the same person only. From Mumbai stop to Delhi stop, a truck is going along with goods. Now same GST officer told that a truck is going from this place to another place. What we will do is this the movement of the goods is happening between distinct persons. There is no consideration, but still entire value of lorry, entire value of this truck, we will treat it as supply. On that you have to pay GST. So the government told no, in this case also this interstate movement of conveyance will not be treated as supply. However, whatever goods that are getting transported, on that goods transport service, GST will be there. But since the truck is also moving, you can't say on the value of the truck also you have to pay the GST. Not required. So that is what they tried to clarify here in this point. Interstate movement of various modes of conveyance. So interstate movement of various modes of conveyance between distinct persons like trains, buses, trucks, tankers, trailers, vessels, containers or aircrafts for the purpose of carrying goods, passengers or for repairs, that will not be treated as supply. On that there is no requirement of GST. Similarly, one more circular also they have told. So let me explain it with the help of example. Assume there is a construction company. There is some X Limited real estate construction company is there. They do the constructions in Karnataka also. They do the construction companies in Andhra Pradesh also. So they have a place of business in Karnataka. They will take separate registration for this. In the AP also they will take separate registration. Both are distinct persons, no? So now assume that at their Karnataka side they have one crane. Nothing but this JCBs will be there, no? So that JCB is there. So now this JCB, they want to use it for the construction which is happening in Andhra Pradesh. Now they have moved this JCB from here to here. From Karnataka side, whatever JCB is there, they moved that JCB to the AP construction site. Now once again here proper officer told that movement of the goods is happening between distinct persons. On the entire value of the JCB, you have to pay GST. Is it required? No. The same thing they have clarified it in the next point. Interstate movement of rigs, tools, spares and all goods on wheels like cranes between distinct persons, that will not be treated as supply of goods or supply of service. No GST is required on that. So these are the exemptions. These are the activities which are mentioned in the clarification which will not be treated as supplies. Understood everybody? So with this we are done with all the provisions relating to supply. Understood everybody? So we have understood section 7 subsection 1 in a detailed manner. Then we understood what is schedule 2, schedule 1, schedule 3. 3 schedules also we are done. Now there is one more small concept here from this chapter. With that we will wind up this chapter. One is composite supply, other one is mixed supply. Very simple guys. What is composite supply? Two or more taxable supplies are getting naturally bundled, one of which is a principal supply. Two or more taxable supplies are getting naturally bundled and one of which is a principal supply. For example, if you go on a flight, now in the flight they will give you food also. See, they are providing more than one taxable supply. They are providing passenger transportation services. Along with that, they are also giving food. And these two are naturally bundled. It is not artificially bundled. These are naturally bundled. That means in the normal course of business, they are bundled. Now they are providing, for example, they have charged total 10,000 rupees of price. In this total 10,000 rupees, they are providing flight services also. They're providing passenger transportation services also, and they are also providing food also. Now, two or more taxable supplies are naturally bundled, out of which one is a principal supply. One is main supply. What is main supply? Food is main supply. Food is not the main supply. Passenger transportation is the main supply. So, two or more taxable supplies which are naturally bundled, out of which one is a principal supply, one is a main supply. In that case, the entire value of the supply will be taxed at the rate which is applicable for main supply or principal supply. Assume the same example, total 10,000 they are collecting, and in that total 10,000 rupees, flight services are also there, food is also getting provided. It is a naturally bundled service. Now, they are collecting total 10,000. Sir, at what rate GST has to be collected? Now, if you see here, this is natural bundling. This is a composite supply. What is the principal supply? Passenger transportation services. Assume that passenger transportation services attracts 18%, food attracts 5%. Now you tell me entire 10,000 will be charged to GST at what rate? At the rate of principal supply. So whatever is the principal supplies rate, entire composite value of supply should be taxed at that rate at which principal supply is taxed. The same thing they say here, two or more taxable supplies which are naturally bundled and one of which is a principal supply, then entire value of the supply will be taxed at the rate which is applicable to principal supply. And how to determine, sir? Sir, you are telling here naturally bundled, no? How to decide whether the supplies are naturally bundled or not? That depends on various things, like it depends on perception of the customer. That means sometimes people generally expect various supplies in one single package. So if the customer's perception, customer always expects that services in a package. For example, TV along with warranty, refrigerator along with warranty. Customer always expects this product as a bundle. Then it will treat it. Then we call it as naturally bundled. Or majority of service providers do it. Not just you. So many service providers also do the same. Then also we can call it as naturally bundled. It also depends on nature of various services. See, the services should be of such a nature. The supplies should be of such a nature. One should be main supply. Other supply should be whatever has been bundled, that is required for better enjoyment of the main service. See, in case of same example, flight and food. See, flight is a main service. Food is given to make you enjoy the main service in a much better way. So then also we can call it as naturally bundled. So this is what regarding composite supply, guys. Then what about mixed supply? See, mixed supply means which does not fall under composite supply. Take for example, one confectionery shop is manufacturing one Diwali gift package. In the Diwali gift package, what they have done is they have prepared one Diwali gift package. In that Diwali gift package, they have kept chocolates here. They have kept dry fruits here. And they have also kept biscuits here. They have also put some crackers here. See, now you tell me they are bundling more than one supply. Is it naturally bundled or artificially bundled? This is not naturally bundled. It is artificially bundled. Why? Because you can sell all of this separately. Chocolates you can sell separately. Dry fruits you can sell separately. Biscuits you can sell separately. Crackers you can sell separately. See, generally customers will not expect all this as a package. But you are artificially bundling everything into a package and selling it. This is not composite supply. This is mixed supply. Sir, in case of mixed supply, how it will be taxed, sir? Assume that for this entire box, they have collected 5,000 from you. Now, at what rate GST has to be imposed on this 5,000? They say out of all these supplies, whichever supply attracts highest GST rate, entire value will be taxed at that highest rate. Take for example, chocolates will attract 18%. Dry fruits will attract 12%. Crackers will attract 28%. Biscuits will attract 12%. Now highest rate is what? 28%. Entire 5,000 rupees will be taxed at 28%. So if it is composite supply, entire value of supply will be taxed at the rate applicable to principal supply. In the case of mixed supply, entire value of supply will be taxed at that rate which is the highest of all the supplies. Understood? So this is what regarding mixed supply and composite supply. So that's all, guys. With this, I want to wind up the supply chapter. So we have almost spent a lot of time on this supply chapter, and this revision is worth. Remaining things we will try to understand So whatever time we have spent on this chapter, that is very much worth. Don't imagine that in the remaining chapters also we'll spend 2 hours of time on revising one single chapter. That we will not do it. Since this is major chapter, since this is one of the biggest chapter and very important chapter from the examination perspective, I have taken some extra time in understanding, in making you understand this concepts. Clear everybody? So we are done with revising the first 2 chapters of the GST. So we have successfully revised GST and introduction, and also we have successfully revised about the chapter relating to supply under GST. Now we are going to revise the next most important topic in the GST syllabus, which is about registration. So we are going to understand now, we are going to revise now quickly the provisions relating to registration under GST. See, till now, whatever we have revised, if you paid a quick attention, I told that in order to levy the GST, in order for GST to be attracted, there should be supply. There should be supply. Supply of what? Supply of goods or services or both. So GST will be levied by the government only when we are doing a supply. So which activity falls under supply? We have seen it in the previous chapter. We have understood in a detailed manner the provisions of section number 7, which is talking about which activity will fall under supply, which activity will not fall under supply. We have also understood what will come under the definition of goods, what will come under the definition of services, that also we have seen. So once we are doing any activity called supply of goods or services or both, then what will be levied? GST will be levied. But once the GST is levied, it will be collected only when the person doing that supply is a registered person. GST will be levied. GST will be attracted whenever you are making supply of goods or services or both. The moment you are doing supply of goods or services or both, then GST will be attracted. But once GST is levied, it will be collected only when the supplier is a registered person. If the supplier is not a registered person, then even though GST is attracted on that, the supplier will not collect the GST. So for the collection of GST, once GST has been levied, it will be collected only when the person making that supply is a registered person. Now we are going to understand the provisions of the GST Act relating to registration. Who is required to, who is liable for obtaining registration? When a person is required to get himself registered, what is the procedure for registration? When the registration will be cancelled? So all that provisions we are going to revise in this chapter, registration. So the entire discussion, all the key discussion from this registration chapter, I have summarized it in the form of some simple notes. So let us try to revise quickly what and all are the requirements of this chapter, registration. So actually first we will start with section number 22. Section number 22 is the actual section which is dealing about when a person will become liable for registration. When a person will become liable for registration, those provisions are contained where? In the section number 22. So section number 22 talks about who are the persons liable for registration. So section number 22 subsection 1 says every supplier, he should obtain registration in a state or union territory from wherever he makes a taxable supply if his aggregate turnover exceeds the applicable threshold limit. There is a certain threshold limit given. If you are a supplier making supply of goods or services, and if your aggregate turnover exceeds a specified threshold limit, they have prescribed one threshold limit. If the aggregate turnover of a registered person exceeds that, if the aggregate turnover of that business person exceeds the applicable threshold limit, then he is required to take registration from each and every state or union territory from wherever he is making taxable supply. In all that states or union territories, you are required to obtain the registration. See, I will come to this part later. So first let us try to concentrate. They are telling the supplier of goods or services or both, if his aggregate turnover exceeds a prescribed threshold limit, exceeds the applicable threshold limit, exceeds a certain figure, then he is liable to obtain registration. Sir, you are telling aggregate turnover exceeds the applicable threshold limit. Sir, what is aggregate turnover? How to calculate the aggregate turnover? So how to calculate the aggregate turnover is, when I say aggregate turnover, it includes the value of taxable supplies, the value of exempt supplies. We should also consider the value of the exports and interstate supplies of the persons having same PAN. Even that also should be included in the aggregate turnover. When I say aggregate turnover, how to calculate the aggregate turnover? What will be included in the aggregate turnover? Value of all the taxable supplies. Exempt supply. When I say exempt supply, it includes non-taxable supply. If you are making supply of alcoholic liquor for human consumption, if you are making supply of that 5 specified petroleum products, even that value also should be included in the aggregate turnover. The value of the exports also should be included, and even the value of interstate supplies of persons having same PAN. If you remember in the previous chapter, I told if there is any interstate if there is any supply happening between two distinct persons having same PAN, even without consideration, still it will be treated as supply. Even that value also should be included while calculating aggregate turnover. However, in the aggregate turnover, you should not include your inward supplies on which you are required to pay under reverse charge mechanism. See, when I when I say aggregate turnover, I'm talking about your outward supplies. So whatever outward supplies you have done, whatever outward supply of taxable supplies, exempt supplies, exports or interstate outward supplies, all that will be included. However, in the aggregate turnover, you should not include any value of inward supplies on which you are required to pay tax under reverse charge mechanism. So when I say aggregate turnover, I'm only talking about outward supplies. Inward supplies should not be included in the aggregate turnover. And also whatever taxes you have paid under GST law, either that could be CGST, SGST, ITGST, IGST or UTGST, taxes whatever you have paid under this law should not be included in aggregate turnover. That means the figures should be taken exclusive of taxes. And one more thing here, aggregate turnover should be calculated on all India basis. When I say aggregate turnover, take for example, you are a business person, you are having a place of business in Andhra Pradesh, you are having a place of business in Karnataka, you are also having a place of business in Tamil Nadu. When I say aggregate turnover, you have to take the turnover of all the locations. On all India basis, you have to calculate what is your total turnover. That aggregate turnover you have to compare with the applicable threshold limit. And the aggregate turnover, whatever you have calculated, if it exceeds my applicable threshold limit, then I become liable for registration. So we understood what is aggregate turnover, how to calculate it. Now let us try to understand what is the applicable threshold limit. Sir, if my aggregate turnover exceeds what value, I become liable for registration. So let us see what they are trying to say here. So the applicable threshold limit, I have given it like this. So if you are making taxable supply from Manipur, Mizoram, Nagaland and Tripura, I call it as a shortcut MMNT. If you are making taxable supply from any of these 4 states, which is states Manipur, Mizoram, Nagaland, Tripura, MMNT. So if you are making taxable supply, then either you are making supply of goods or you are making supply of services or you are making supply of goods and services both, then the applicable threshold limit will be only 10 lakhs. If you are a business person, if you are making a taxable supply from any of these 4 states, if you are making taxable supply, either you are supplying goods, either you are supplying services, or you are supplying goods and services both, the applicable threshold limit will be 10 lakh rupees. That means in these 4 states, if you are making any taxable supply, if your aggregate turnover exceeds 10 lakh rupees, then you become liable for registration. Understood everybody? Next. So this is the limit for these 4 states. Then coming to another category of states, which I will call it as UP mats. So when it comes to this UP mats, 6 states are mentioned here: Uttarakhand, Puducherry, Meghalaya, Arunachal Pradesh, Telangana, Sikkim. So that's what I have given the mnemonic here, UP mats. So when it comes to this 6 states, in these 6 states, if you are making any taxable supply, either you are making supply of goods or you are making supply of services or you are making supply of both. Any of this case, if your aggregate turnover exceeds 20 lakh rupees, then you become liable for registration. So in case of MMNT, if your aggregate turnover exceeds applicable threshold limit of 10 lakh rupees, then you become liable for registration. In case of UP mats, in case of these 6 states under UP mats, either you are making supply of goods or supply of service or you are making supply of both. In all the cases, if your aggregate turnover exceeds 20 lakh rupees, then you become liable for registration. Now coming to all other states, apart from this MMNT and apart from this UP mats, whatever all other states are there, if you are making supply of services or you are making supply of goods as well as services, then the applicable threshold limit will be 20 lakh rupees. Which case I am talking about all other states apart from MMNT and apart from UP mats. Any other state, take for example Assam. Assam does not fall under MMNT. Assam does not fall under UP mats. So it comes under other states. in that state, if you are making a taxable, if you are making only supply of services or supply of goods as well as services, both you are making supply. In that case, applicable threshold limit for registration will be 20 lakh rupees. However, in all other states, if you are making supply and you are making supply of exclusively goods only, you are making supply only of goods, you are not making any supply of services. If you are exclusively engaged in supply of goods, then the applicable threshold limit for registration will be 40 lakhs. And the applicable threshold limit will be 40 lakhs. This is there only for all other states apart from MMNT, apart from UP match. If you are having place of business in any of the other states, and in case if you are exclusively engaged, you are making only supply of goods, you are not making any supply of service. If you are exclusively engaged only in the supply of goods, then the applicable threshold limit is going to be 40 lakhs for you. The applicable threshold limit is going to be 40 lakhs for you. Take for example, there is a business person, Mr. A. He is doing the business from Delhi. He is having only place of business in Delhi. Now his aggregate turnover is 35 lakh rupees. And in Delhi, he is selling only shoes. Only shoes. He is engaged in the business of only shoes. So now you tell me, is Mr. A liable for registration? No, he is not liable for registration. Why? Because Delhi forms part of other states and the person is exclusively engaged only in supply of goods, that is shoes, and aggregate turnover is within the limit of 40 lakh rupees, not liable for registration. Understood? Or assume that a person is there in Andhra Pradesh. Andhra Pradesh also fall under all other states only. A person is there in Andhra Pradesh, he is making supply of shoes. Is making supply of shoes. From shoes, he has made a turnover of 12 lakh rupees. He is also providing some services. Assume he is providing, assume myself, I am a chartered accountant. I also provide CA services. My services worth is 10 lakh rupees. Sir, am I become liable for registration? Yes. So you are in all other states and you are making not exclusively supply of goods, you are engaged in supply of goods as well as supply of services. That means you are doing both. In this case, your applicable threshold limit will be only 20 lakh rupees. Here your aggregate turnover has become 22 lakh rupees. The moment my aggregate turnover exceeds this applicable limit of 20 lakh rupees, I become liable for registration. Understood everybody? Clear and comfortable? So this is how you need to check the applicability criteria. This is how you need to check what is the applicable threshold limit for registration. Let me give you one more last example to make you understand. Guys, whatever I am telling you, these are all chances of asking the examination question. Assume there is a business person. He is having one place of business in Manipur. He is having one place of business in Manipur, which falls under MMNT state. Okay. He is also having a place of business in Telangana. He is also having a place of business in Telangana. UP match. He is also having a place of business in Karnataka. Now assume that his aggregate turnover, he's engaged in only supply of goods. He's engaged only in supply of goods. His aggregate turnover is 15 lakh rupees. Is he become liable for registration? Now how to check it, sir? When they ask you the question, how to check it? See, first you need to check the business person. Is he having a place of business in MMNT? That you need to check first. So now they are telling, yes, this person is having a place of business in Manipur. Manipur falls under MMNT. Since you are having a place of business in MMNT, in this case, whether you are engaged in supply of goods, supply of service, or supply of both, the applicable threshold limit will be only 10 lakh rupees. In the given case, your aggregate turnover is 15 lakh rupees. You exceeded the applicable threshold limit. You are required to take registration in all the areas. In all the states, you are required to take registration, provided you are making taxable supplies from that states. Now, let me change the facts. So let us do the illustrations here. See, these things are very important for examination perspective. Assume there is a business person. He is having a place of business in Puducherry. He is also having place of business in Delhi. So first what I need to check is this person having place of business in MMNT? No, MMNT is not there. Next thing I need to check, is he having place of business in UP Mats? Yes, he is having a place of business in UP Mats. Now I should decide that since he is having a place of business in one of UP Mats, applicable threshold limit is 20 lakh. Whether you are engaged in supply of goods, supply of services, or both, applicable threshold limit will be 20 lakhs. Now they will say his total aggregate turnover figure also they will tell you in the question. Now you need to decide, is your aggregate turnover exceeded 20 lakh rupees? If yes, this person becomes liable for registration. Now assume that there is another business person. He is having place of business in Karnataka and Andhra Pradesh. Now first we will check, is he having place of business in MMNT? No. Is he having place of business in UP Mats? No. So that means he is having place of business in other states. Now we need to check, is he exclusively engaged in supply of goods? If yes, applicable threshold limit is 40. If he is exclusively engaged in supply of services or supply of goods as well as services, applicable threshold limit is 20. Now compare aggregate turnover with these limits depending on the circumstances. If it has exceeded the applicable threshold limit, that person becomes liable for registration. That person's become liable for registration. Guys, able to understand everybody? Clear and comfortable? See, one more thing I will say here. The act says you are required to take registration in each state or union territory from wherever you are making taxable supply. You are required, if your aggregate turnover exceeds the applicable threshold limit, you are required to take registration only in that state or union territory from where you are making taxable supply. Sir, how they can ask a question from this? Let me give you a scenario. Assume there is a business person. He is having a place of business in Manipur. He is also having a place of business in Telangana. He is also having a place of business in Karnataka. Okay. In Manipur, he is making only exempt supply. In Manipur, he is making only exempt supply. Let me put it this way. Assume that from Manipur, he is making a taxable supply. He has made 8 lakh rupees of taxable supply. From Telangana, he has made exempt supply. 2 lakh rupees of exempt supply he has made. From Karnataka, he has made taxable supply of 10 lakh rupees. Now, what I need to check for applicable threshold limit? Is he having place of business in MMNT? Yes. So, applicable threshold limit is 10 lakh. What is the total aggregate turnover? When I say aggregate turnover, include even exempt supplies also. 8 plus 2 plus 10, 20. Has it exceeded applicable threshold limit? Yes. Is he becomes liable for registration? Yes. From where he will take registration? From wherever he is making taxable supply. Is he making taxable supply from Manipur? Yes. Will he take registration with Manipur state government? Yes. Is he making taxable supply from Telangana? No. In Telangana, he is making only exempt supply. With the Telangana state, he will not apply registration. No need to obtain registration in Telangana state. In Karnataka, is he making taxable supply? Yes. He will obtain registration with the Karnataka state government. So, that is what the significance of the term here. Every supplier is liable to take registration in a state or union territory from wherever you are making a taxable supply. If you are having a place of business in a state, but from there you are not making any taxable supply, even though your aggregate turnover exceeded the applicable threshold limit, you are not required to take registration in that respective state. So you are required to obtain registration only in that state or union territory from wherever you are making a taxable supply. From wherever you are making a taxable supply. So this is what few important discussion from persons who are liable for registration. Now, let me try to expand the discussion further here. See, I told that in all other states, if you are exclusively engaged in supply of goods, when I say other states, apart from MMNT, apart from UP match, in other states, if you are engaged only in supply of goods, then I told applicable threshold limit is 40. But the act said that even though you are in other states, even though you are exclusively engaged in supply of goods, but still in some cases, they will not give you this extended threshold limit of 40 lakh rupees. Even though you are in other states, even though you are exclusively engaged in supply of goods, in some cases, this extended threshold limit of 40 lakhs will not be given. In some cases, you will be eligible only for threshold limit of 20 lakh rupees. So general rule says if you are in all other states and you are exclusively engaged in supply of goods, then the government told we will give you a extended threshold limit of 40. But once again government is telling, but in some cases we will not give you extended threshold limit of 40 even though you are exclusively engaged in supply of goods, still we will give you 20 lakh rupees of threshold only in some cases. Sir, what are that cases? If you are required to obtain compulsory registration. So we will see in section number 24, there are certain people who are required to take compulsory registration. So if you are a person who is required to take compulsory registration, no limit will be seen for you. Irrespective of your limit, you have to take compulsory registration. Sir, who is required to take compulsory registration? That we will see it in a short while. And if you are a person who is engaged in making supplies of below mentioned items, if you are engaged in supply of goods only, but if you are supplying any of these goods, sir, which goods, sir? Ice cream and other edible ice. If you are engaged in supply of pan masala, if you are engaged in supply of tobacco, if you are engaged in supply of fly ash bricks or fly ash aggregate, if you are engaged in supply of bricks of fossil meals or siliceous earth, if you are engaged in supply of building bricks, or if you are engaged in supply of earthen or roofing tiles. If you are engaged in supply of any of these 7 products, then the government told even though you are in other states, even though you are exclusively engaged in supply of goods, we will not give you a extended threshold limit of 40 lakh rupees. If you are engaged in any of the supply of these goods, you become liable to take the registration if your aggregate turnover exceeds 20 lakh rupees. So government told, if you are engaged in any of this supply of these 7 products, then we will not give you extended threshold limit of 40 lakh rupees. We will give you a threshold limit of only up to 20 lakh rupees. If your turnover exceeds 20 lakh rupees, you are liable to take registration. Understood everybody? Clear and comfortable? So this is what section number 22 subsection 1 is saying. So if your turnover exceeds applicable threshold limit, you are required to take a registration from every state or union territory from wherever you are making a taxable supply. Now, however, there is one important point which I need to explain. See, in 22 subsection 1, just now as we have seen, if you are a person who are exclusively engaged in supply of goods, if you are a person exclusively engaged in supply of goods, then applicable threshold limit is going to be 40 lakh rupees. Now, one issue came before the government is, sir, there is a business person. He is in the business of supplying goods only. He is in the business of supplying goods. He is selling water bottles. He's selling water bottles. But whatever money he has made from the business, he's keeping that in the bank account. He's keeping that in the bank account. And bank is giving interest for him. Every business person will do this, no? Every business person, whatever money he has made, he will keep that money in the bank account. And on that means he's giving the money for use to the bank, and the bank will pay him interest. Sir, he is supplying goods, he's selling water bottles, and he's also providing services, no? Is also providing services, activities relating to use of money, for which a separate consideration in the form of interest is charged. This activity will come under service. Now, some proper officer told that, some proper officer came and told, hey, for you 40 lakh rupees of limit is not applicable. Why? Because you are engaged in supply of goods also, you are providing services also. Why? Because you have given money for use. See, if this is the case, then what will happen is, no person in India will be eligible for 40 lakh rupees of threshold limit. No person will be eligible for 40 lakhs of threshold limit. Why? Because every businessman will have a bank account. He will keep the money in the bank account. Bank will pay him interest. That means every person will be having bank account, and every person will be doing this kind of service of giving money for use and collecting interest. If that is the case, for no one 40 lakh rupees of limit will become applicable. Then what is the purpose of giving this extended limit? So that's why what the act has told us, if you are a business person, even though you are doing the services of giving the money for use, and even though you are collecting interest for that, still even though you are doing this service, still we will treat you as a person exclusively engaged in supply of goods only, and we will give you an extended threshold limit of 40 lakh rupees. Don't worry. So nothing but this clarification they have given, this notification they have given to rule out this some misinterpretations done by proper officers. So what proper officers started doing is, hey, you become applicable for 40 lakh rupees of limit we will give you only when you are exclusively engaged in supply of goods. But you are keeping your money in the bank account and collecting interest. That means you are providing services also. We will not give you 40 lakh rupees of limit. These kind of issues have started. So that's why what the government told us, if you read it, a person shall be considered to be engaged exclusively in supply of goods only, even if he is engaged in exempt supply of services provided by way of extending deposits, loans or advances for which you are collecting interest or discount. Simply, this is what I tried to explain it here. Even though you are providing services of giving the money for use and collecting interest, still you will be deemed as if you are exclusively engaged in supply of goods only. Understood? That means you can enjoy the extended limit of 40 lakh rupees. So this is what the person's liable for registration under section 22 subsection 1. Now 22 subsection 2 says, if you are a person already registered under existing law. See, before GST came into picture, we had excise duty, we had VAT, we had service tax. If you are already registered under any of this existing indirect tax laws, no turnover, nothing will be seen for you. You have to become compulsorily registered under GST regime, compulsory. So if you are already registered under existing law, existing indirect taxes like excise duty, VAT, service tax, etc., no turnover, nothing will be seen for you. You become automatically liable for registration under GST. Next, subsection 3 says few more categories of persons who are liable to take registration. Transfer of business as a going concern. If a person is transferring the business as a going concern to another person, that transferee is required to take compulsory registration. He becomes liable for taking registration with effect from the date of such a transfer or succession. Take for example, I am a business person. I am a registered person. I am selling my entire business as on a going concern basis to another transferee. I am the transferor. He is a transferee. I am selling my entire business on a going concern basis to this transferee. Now this transferee is required to take compulsory registration irrespective of his turnover. Now the government will not say, okay, you are buying the business. No, we will wait till your turnover exceeds applicable threshold limit. Then you apply for registration. Government has not given that freedom. If the business is getting transferred as a going concern, immediately you become liable for registration. Similarly, assume that there is a registered person. He expired. He died. Now his business was taken by his legal hire. If the business is taken over by the legal hire, this person is successor. This person is required to compulsorily take the registration. Whenever the business is getting transferred, whenever he is taking up the business, he becomes liable for registration with effect from that date, irrespective of his turnover. So that's what they are telling. Transfer of business. When the business is transferred as a going concern, either because of succession or any other reason, with effect from the date of such a transfer or succession, the transferee is required to get the registration. Similarly, sometimes what will happen is the companies will get amalgamated. There will be a demerger of the companies will happen. So in that case, for example, A Limited, B Limited, both have amalgamated into AB Limited. Now this AB Limited is required to take compulsory registration, irrespective of its turnover, the moment with effect from the date on which ROC issues a certificate of incorporation. So A Limited, B Limited amalgamated, they have formed into a company AB Limited. ROC has given certificate of incorporation on 15th of February 2023. They gave the certificate of incorporation. From this date, this new entity AB Limited will become liable for registration irrespective of their turnover. Sometimes what will happen is demerger will happen. Assume that XY Limited has been demerged into two companies, X Limited, Y Limited. Now ROC will give certificate of incorporation incorporating these two companies separately. From the date of certificate of incorporation given by ROC, this X Limited and Y Limited, these resulting companies become liable for registration irrespective of their turnover. So these are the people who are required, who are liable to obtain registration under section number 22. So I explained three subsections. Subsection 1 talks about when your aggregate turnover exceeds the applicable threshold limit. Subsection 2, if you are already a person registered under existing law, you become compulsorily liable for registration under GST. In case if the business is getting transferred as a going concern, or if there is any amalgamation or demerger is happening, then also the successee or transferee or the resulting company or amalgamated company, they become liable for registration irrespective of their turnovers. Clear? So this is what section number 22 says. Everybody able to understand till here, guys? See this chapter, if you have listened to the regular class, whatever I revised in this half an hour of time, this I have explained in my regular classes almost for 5 hours. For 5 hours we have understood, not 5 hours, some 3.5 to 4 hours. In that span of time, I used to explain all this content along with a lot of examples. So if you would have listened to the classes already once, if you have already done one level of preparation, then only this marathon will become useful for you. If you are straight away watching the marathon, then sorry guys, this marathon will not help you out. So you should have one conceptual clarity, then only this marathon is going to help you out. Clear everybody? So this is what section number 22 says. Let us try to proceed ahead and revise the remaining sections relating to registration. So now let us have a look at the next chart, next content. So we have seen section number 22, who are the people liable for registration, that we have seen. Now we will see section number 24, compulsory registration. See, when I say compulsory registration, section 24 is listing out a few people, those who are required to take registration compulsorily irrespective of their turnover. Irrespective of the person's turnover in the financial year, whatever may be your aggregate turnover, you are required to take compulsory registration without any reference to your turnover. Some people are required to take compulsory registration. Those people are mentioned in section number 24. Let us see what does section number 24 say. So first point says, if a person is making interstate taxable supply, if you are making interstate supply, for example, I am a person registered in Andhra Pradesh. I have made a supply to another person located in Karnataka. I made a interstate supply. The act is telling the moment you made interstate supply, no turnover, nothing, you are required to take compulsory registration. But later the government came up and gave some exceptions. First they have told the person whoever is making interstate supply, take compulsory registration. But later they gave exceptions. What exceptions they have given? Boss, if you are exclusively making only interstate supply of taxable services, if you are making interstate supply, but if you are making interstate supply of only services, not goods. For example, I am a chartered accountant located in AP. I filed a IT return for one person who is located in Delhi. I made interstate supply of services. So now they are telling, if you are making interstate supply of services, we will not make you compulsorily liable for registration. You can follow the limits of 20 lakh rupees or 10 lakh rupees. So if I'm a person, if I'm making only interstate supply of services, I don't become compulsorily registered. I become registered only when my aggregate turnover exceeds 20 lakh rupees. In case if it is MMNT, if my aggregate turnover exceeds 10 lakh rupees, then only I'm liable to take the registration. Understood? So first what they have told, the moment you make interstate supply, take compulsory registration. Then they told, boss, you are making interstate supply, but you are making only supply of services, no need to take compulsory registration until your aggregate turnover exceeds 20 lakh rupees. In case of MMNT, until your aggregate turnover exceeds 10 lakh rupees. So that means after this exception, they are indirectly trying to say that if you are making only interstate supply of goods, then only you become compulsorily liable for registration. But however, in that case also, they have given one more exception. What exception they have given is, if you are a person making interstate supplies of notified handicraft goods up to a turnover of 20 lakh rupees or 10 lakh rupees, you are not required to take registration. Assume that I am a person in Rajasthan. I am a person in Rajasthan. So I make notified handicraft products. I'm making some notified handicraft products. I'm making handmade goods. I'm notified handicraft products I have made. I brought it to Karnataka and I brought it there and I sold it. I'm making interstate supply. See, there I'm making interstate supply of goods. Now section number 24 says if I'm making interstate supply of goods, I'm required to take compulsory registration. But I'm selling notified handicraft products. No, that means I'm promoting the culture of our country. So that's why what the government told. Okay, you are making interstate supply of goods. Then also you are not required. If you are making interstate supply of goods, but you are supplying notified handicraft products. Okay, we will not make you liable for compulsory registration. You become liable for registration only when your aggregate turnover exceeds 20 lakh rupees. In case of MMNT, in case if your aggregate turnover exceeds 10 lakh rupees, then only we will make you liable for registration. Understood? So this is what the first point they have told. So what is the summary, guys? First, they have told a person making interstate supply, compulsorily you are required to take registration. But later they told if you are making interstate supply, but you are making interstate supply of services, you need not become liable for registration until your aggregate turnover exceeds 20 lakh rupees, or in case of MMNT, 10 lakh rupees. Then if you are making interstate supply of goods, but the goods which you are making interstate supply is notified handicraft products, then also will not make you compulsorily registered unless and until your aggregate turnover exceeds 20 lakh rupees or 10 lakh rupees in case of MMNT. Understood? Next. Second category of persons who are required to obtain compulsory registration, CTP, casual taxable person. Sir, who is CTP, sir? CTP means a person who doesn't have any fixed establishment in a state. For example, I'm a registered person. I'm a business person. I went to another state. Where I don't have any place of business. Some exhibition is happening. I participate in that exhibition, sell my goods, and I go back to my state. So for example, I belong to Rajasthan, or I belong to Kerala. Okay. Now I came to know that in Karnataka one exhibition is happening. So I came to Karnataka, participated in the exhibition. In that exhibition, I sold some goods and went back to Kerala. In Karnataka, I didn't have any place of business. Just on a temporary basis, I came to the Karnataka state, did the business, went back to my place. Now I will fall under casual taxable person. So what the act has told is, if you are a casual taxable person, if you are going to the other state where you don't have any place of business, you make the supply and come back. So you are not having any fixed place of business. So you fall under casual taxable person, and the act told if you are falling under casual taxable person, you are required to take compulsory registration. So you are going to Karnataka for participating in the exhibition. No. So in the Karnataka state, you are a casual taxable person. You are required to take compulsory registration irrespective of your turnover. However, here also they have given one exception. You are a CTP, but you are making interstate supplies of notified handicraft goods. See, you came to participate in this exhibition, but in that exhibition you are selling the notified handicraft products. Then also government told, okay, you are trying to promote the culture of our country. We will not make you compulsorily registered unless and until your aggregate turnover exceeds 20 lakh rupees, or in case of MMNT, if it exceeds 10 lakh rupees. Understood? So two category of persons I have explained who are required to obtain compulsory registration. Third category, person who is required to pay tax under reverse charge mechanism on inward supplies. Assume that there is a registered person. Okay. Now he is making supply of goods or services to another person. He is a recipient. But these goods and services are covered under RCM. When I say RCM, recipient is directly required to pay the tax to the government. Now they are telling if you are the recipient, you are required to pay the tax under reverse charge mechanism to the government. Irrespective of your turnover, you are required to obtain compulsory registration. who is required to obtain compulsory registration? The recipient is required to obtain compulsory registration. If you are a recipient and you are receiving some inward supplies on which you are liable to pay the tax under reverse charge mechanism, that recipient is required to make compulsory registration. Now, the Act has given one more clarification here. Assume that, let me put it this way. Okay. So, assume that I am a supplier. Okay. Now, I am providing some services. Assume I am an advocate. See, advocate services are covered under reverse charge mechanism. I am an advocate. I am providing my services. I am a lawyer. I am providing my services. See, I am providing outward supplies, but all my outward supplies are covered under reverse charge mechanism. That means whatever services I am providing, on all that services, only recipients are required to pay the tax to the government. So now, since the recipient is required to pay the tax under reverse charge mechanism, recipient is liable to take registration, compulsory registration. But if I am a supplier, I am making only those outward supplies on which RCM is applicable, then the Act is telling you supplier, you are not liable to get the registration. You are not liable to get registration. Even if your aggregate turnover exceeds the applicable threshold limit, this supplier who is exclusively making outward supplies which are covered under RCM, anyhow recipients will pay the tax there, recipients will take the registration, you don't have any outward supplies on which you have to pay the tax, government gave you relaxation, okay, you need not take any registration, we will exempt you from taking registration. Understood everybody whatever I'm trying to say? So that's here I have covered 2 points. So number one, who is required to take compulsory registration? If you are a recipient, you are receiving some inward supplies on which you are required to pay tax under reverse charge mechanism. As a recipient, you are required to take registration. Now assume that there is some supplier, he is only making those outward supplies which are covered under RCM. That means this person is not having any responsibility to collect the tax and pay it to the government. Since you don't have any responsibility to collect the tax and pay it to the government told, okay, you need not take any registration even though your aggregate turnover exceeded the applicable threshold limit. Why? Because recipients will pay the tax, recipients will take the registration. So the government told, okay, we will leave you. Understood everybody? So that is what I have tried to read. I have tried to write it here. Persons required to pay the tax under RCM on inward supplies, compulsory registration. However, person making only outward supplies covered under RCM is exempted from taking registration. Similarly, NRTP. NRTP is also required to take compulsory registration. Sir, who is NRTP? Non-resident taxable person. Sir, who is non-resident taxable person? Assume that a person is in US. In India, he came to know some exhibition is happening. So a person from US came to India, participated in the exhibition, sold the goods and went back to the US. Now this kind of person we call him as NRTP, non-resident taxable person. So when a foreign citizen comes to India on a temporary basis, participate in some exhibition or so, sells the goods and go back or provide the services and goes back, that person we call him as NRTP, and the Act has told NRTP is required to take compulsory registration. So whenever a foreign citizen is coming to India to participate in the exhibition, irrespective of his turnover, he is required to take compulsory registration. Next, one more thing. Person who makes taxable supply on behalf of another taxable person. Assume that there is a, let me write the example in another page. I will write it here in the running notes. Right. So what they are trying to say, if I put it in simple terms, agent is always required to take registration. Agent is always required to take registration. So what do I mean by this? Assume that there is a taxable person. He is making taxable supplies. There is a registered person. He is making taxable supplies. Now he appointed an agent. Why he appointed agent? Why? Because this agent will supply the goods on behalf of this another taxable person. So he is a principal who is a taxable person and who is making taxable supplies, and he appointed an agent to supply the goods or services on behalf of his principal who is a taxable person. Now they are telling this agent is required to take compulsory registration irrespective of his turnover. So that is what simply they try to say here. Person who makes a taxable supply on behalf of another taxable person. That means you have a principal who is a taxable person, and you are an agent of a principal, and your principal is also a taxable person. On behalf of your principal, if you are making any taxable supply as an agent, you are required to take compulsory registration irrespective of your turnover limits. Now here there is one important thing which you have to pay attention. Sometimes they will say there is a principal. This principal is not a registered person. Now he appointed an agent. To make the supplies on behalf of this principal. Now you tell me, is this agent required to take compulsory registration? No. See, agent is required to take compulsory registration only when his principal is also a registered, only when his principal is also a taxable person, or only when his principal is a registered person and he's making taxable supply. He's making what? Taxable supply. So the agent is required to take registration only when he's acting as an agent on behalf of his principal, who is a taxable person and who is making taxable supply. Then only agent also will become liable for registration. Understood, everybody? Sometimes what else they will say you is, assume that there is a principal. Principal is a taxable person only, but he appointed an agent for making supply of exempted goods. Principal is a taxable person, is a registered person. He appointed agent not for making taxable supply. He appointed an agent for making exempt supply. Now you tell me, is this agent liable for registration? No. So two condition, guys, the agent will become liable for registration only when his principal is a taxable person and when his principal appointed that agent to make taxable supply. Then only agent will become liable for registration. If you are an agent, either your principal is not a taxable person or your principal has appointed you for making exempt supply, not taxable supply, then that kind of agent will not become liable for registration. Very important from the examination perspective. So apart from these people, even there are two more persons who are required to obtain compulsory registration. So those people who are required to deduct TDS under section 51 of the GST Act, and also a e-commerce operator who is required to collect TCS under section 52 of the GST Act. These two persons are also mandatorily required to obtain registration. So who are the two extra people who are required to obtain mandatory registration? The persons who are required to deduct TDS under section 51, and also every e-commerce operator who is required to collect TCS under section 52. Even these two persons are also mandatorily required to obtain registration. So what is this TDS? Who are the persons required? Who are the e-commerce operator who are required to collect TCS? These things we will try to discuss separately in the chapter TDS and TCS. This regarding these provisions, regarding these persons, we will try to talk about in a much more detailed manner when we take up the chapter TDS and TCS. So these are the people who are liable to obtain compulsory registration. Now we will see section number 23. Section number 23, what they have told is it has exempted some people from taking registration. That means section number 23 has notified certain people, even though their aggregate turnover exceeds the applicable threshold limit, still they are not required to obtain registration. Sir, who has been exempted from that registration? To whom the benefit has been given? They are telling persons who are exclusively engaged in making only exempt supplies. If you are exclusively engaged only in making exempt supplies, if you are not making even 1 rupee of taxable supply you are not making, then you need not take any registration. Sir, what they are trying to say here, assume that I am a business person. I sell vegetables. I am in the business of selling vegetables. I sell milk. Milk is also exempted. So like this, I am from selling vegetables, I have made a turnover of 20 lakh rupees. From selling milk, I have made a turnover of 50 lakh rupees. Total my aggregate turnover is 70 lakh rupees. It has exceeded the applicable threshold limit. Sir, generally I become liable for registration. When my aggregate turnover exceeds the applicable threshold limit, I am liable to take the registration. But here if you observe, I am the business person, my aggregate turnover exceeds the threshold limit, but I am making only exempt supplies. Vegetables exempted, milk exempted. I am not making even one transaction of taxable supply also. I am exclusively engaged only in exempt supplies. I am not making any taxable supply. Act is telling you need not take any registration. Why? Because you are not making any taxable supply. No. Guys, why registration is required? So that you collect the tax, pay to the government. See, when you are making only exempt supply, you don't have any obligation to collect the tax and pay to the government. Why unnecessary registration? So the government told you are not required to obtain any registration. So one more person who has exempted from taking registration is an agriculturist to the extent of supplying agricultural produce. If you are an agriculturist, that means you are cultivating the land, you are growing the tree, you are growing some agricultural produce, and you are supplying that agricultural produce. No matter whatever your turnover is, you become not liable for registration. So if you are an agriculturist and if you are making supply of agricultural produce only, then you are not liable to take registration. Now they will ask you a question. They will say there is an agriculturist. He is selling agricultural produce also. He is selling rice also. He is selling rice also. Will he become liable for registration? Yes. If his aggregate turnover exceeds the applicable threshold limit, he becomes liable. Why? Because rice is not an agricultural produce. Paddy is an agricultural produce. Rice is not an agricultural produce. So an agriculturist is exempted from taking registration only to the extent he is making supply of only agricultural produce. Like he's cutting the plant, he's cutting sugarcane, selling it. He's cutting the vegetables, selling it. Those are agricultural produce. But rice is not an agricultural produce. Jaggery, they will say jaggery. An agricultural is selling the jaggery. Jaggery is also not an agricultural produce. Okay, so an agriculturist, to the extent of supplying only agricultural produce, he will be exempted. Apart from agricultural produce, if he is making supply of any other produce like rice, jaggery, etc., these are not agricultural produces, then he will become liable for registration. Understood, everybody? So these are the persons who are not liable for registration. So we have covered 3 sections till now. Section number 22, section number 23, exempted from registration, section number 24, compulsory registration. Understood, everybody? Now we will talk about some procedures for registration, some important points regarding procedure for registration. Sir, when I should apply for registration? So if you are a normal person, if you are other than CTP or NRTP, whenever you become liable for registration, within 30 days of becoming liable for registration, you have to submit an application. Within 30 days, you become liable for registration, you have to submit an application. This is the time limit. Sir, what they are trying to say here, assume that if my aggregate turnover exceeds my applicable threshold limit on 30th of January, from this 30th of January, within 30 days, from this 30th of January, within 30 days, you have to make an application. You ignore 30th of January, ignoring the date when you become liable, then you have to start counting. So for example, if my applicable threshold limit exceeded on, if my aggregate turnover exceeded the applicable threshold limit on 30th of January, now start counting from 31st. So 31 and plus 29 days. So one day in January, total 31 days. So 30 days are over. One day will be there in January, plus 29 days. In February, only 28 days, plus one more day. That is on or before 1st of March, you have to submit an application for registration. Sir, if I am person becoming compulsorily registered, sir, I am making interstate supply of goods, I become compulsorily registered, no? From the date on which you have made interstate supply, from that date, within 30 days, you have to submit an application for registration. Understood, everybody? So if you are a person liable to registration under section number 22 or 24, within 30 days from the date you become liable for registration, you have to submit an application in GST REG 01. Sir, if I am a CTP or NRTP, then you have to submit an application 5 days prior to the commencement of the business. 5 days prior to the commencement of the business, you have to get the registration certificate. So this is the time limit when to apply for registration. Sir, generally what will happen is, if you have multiple, now 25 subsection 2, if you pay attention, if you have multiple places of business in same state, if you have multiple places of business in same state, you can operate all that businesses under single registration. If you have places of business in multiple states, you have to take multiple registration. Now, sometimes what some people will do is, sir, in the same state, I have more than one business. I have more than one place of business. For example, I am in Tamil Nadu state. I have a business in Chennai also. I have a business in Madurai also. Sir, can I take 2 separate registration? Yes. If you want to take it, take it. However, the government is telling, if you want to operate both the businesses in the same state under single registration, that is also fine. If you want separate registration, that is also fine. We will give it to you. No problem. But if you are having places of business in multiple states, then in each state, you have to take separate registration. See, and one more thing also, the act says here, assume that you are in Tamil Nadu state. In Tamil Nadu, there is an SEZ. There is a SEZ area. You have one place of business in non-SEZ area. You have a place of business in SEZ area. Within same state only. You have one place of business in non-SEZ area. You have one place of business in SEZ area. Now the act says, even though both are under same state, still for this, you have to take separate registration. Still you have to take separate registration, mandatory. Generally, it is not mandatory. If you are having multiple places of business in same state, you can operate all of them under single registration. But one exception, guys, if you in the same state, if you have a place of business in non-SEZ, if you have a place of business in SEZ of the same state, you have to take separate registration. You can't operate both under single registration. Understood, everybody? Clear and comfortable? Next, few more things let us try to understand. Subsection 3. Sir, my aggregate turnover did not exceed the applicable threshold limit. I'm also not getting covered under section number 25. I don't become liable for compulsory registration also. But still, I voluntarily, even though I'm not liable for registration, I myself want to go and take the registration. Can I do it, sir? Do it. No one will stop you. If you yourself voluntarily go and want to opt for registration, no one will stop you. You can happily go and take that registration. Government will be very happy to give you that registration. Next one. 4 and 5, this I have already covered. See, if you have taken separate registration, you will be treated as distinct persons. This I have already covered in the supply chapter. In the supply chapter only I have explained what is that definition of distinct persons. We have understood, no? So that only they try to say here in subsection 4 and subsection 5. If you have taken multiple registrations under same PAN, that will be treated as distinct persons. Next, PAN is compulsory for registration. If you want to get the registration under GST, what is the most important document which you should have? PAN is compulsory. Sir, NRTP will not have PAN, no? A person from US is coming to do business in an exhibition in India. Will he have PAN? No, he will not have PAN. So then how he will get registration? If he is not having PAN, he can submit some other documents. He can submit his passport, all the documents he can submit. So NRTP, PAN is not needed. And assume that you become liable for registration, but you are not taking registration. One day, proper officer came for inquiry, inspection, survey he conducted, and he found that you are liable for registration, but you did not apply for registration. Then what proper officer will do, he will grant you the temporary registration. If you are the person liable for registration, but you are not taking the registration, one day proper officer came, he came for inquiry, inspection, survey, he found that even though you are liable for registration, you have not taken it, then what the proper officer will do, he will grant you temporary registration. Now, the moment he granted temporary registration, within 90 days, either you have to submit your application for registration, or if you want to file an appeal, you can file it. You are believing that you are not liable, but proper officer thinks that you become liable. Now he will give you temporary registration. Now you have two options. One is either accept it and submit a application on your own. And if you don't agree with the proper officer, you file an appeal. Within what time you have to do? Within 90 days, you have that option to do it. Next one. One more thing here. See, when it comes to specialized agency of United Nations organization, multilateral financial institutions or organizations, foreign consulate or foreign embassy, or other notified persons, they have to obtain one more thing. They have to obtain a different kind of registration for obtaining UIN. For obtaining what? UIN, unique identity number. Sir, who is required to get this unique identity number, sir? Specialized agency of UNOs, multilateral financial institutions, foreign consulate, foreign embassy, or other notified person, they are required to get one number called UIN. Sir, why they will get a number for UIN, sir? Not for collecting tax, but these foreign embassy, foreign consulate, these kind of entities. For example, we have foreign embassy in India, US embassy in India. We have this US embassy will receive various goods and services. So we have foreign embassy in Chennai. So that US embassy will buy so many goods, will receive so many services. On all that, they might have paid GST, on their inward supplies. Now what they can do is, this foreign embassy, they can apply, get a registration called UIN number they can get, and whatever taxes they have paid on their inward supplies, all that they can claim a refund. So for claiming that refund, these entities are required to get one number called UIN. They will not get GSTIN. They will not take GST registration. They will get a separate kind of registration with a number, with a unique number called UIN they will get, and they can use that UIN to claim the refund of the taxes, whatever they have paid on their inward supplies of goods and services. So these are the few important provisions relating to procedure for registration. Now I have given you the detailed procedure for registration, so you can now go through it. So this is very much routine information, time limits. So within what time limit the registration certificate will be granted. So all this discussion I have tried to summarize it in the form of chart. This you can refer it. This thing will be shared with you. This entire document will be shared with you. See here, there is no concept to revise actually when it comes to procedure for registration. It is just a procedural formality. So I'm not wasting my time on revising this. Anyhow, since I have already summarized it in the form of the chart, this chart will be given to you. If you go through this chart, you can automatically understand it. So I don't want to waste the time here because there is no concept here. So I will focus on few more important things for revision. Now we will try to revise rule number 10A, which is actually talking about when you are supposed to furnish your bank account details. See, at the time when we submit an application for registration, we need not submit our bank account details at that point of time only. So generally, when we become liable for registration or when we are going for voluntary registration, we submit an application for registration, right? So when you are submitting the application for registration, at that point of time only, you are not supposed to submit your bank account details. Even without submission of the bank account details also, the department will give you GSTIN, GST identification number. They will grant you registration certificate and they will give you GSTIN number. But what the GST Act says is, once you have given the registration certificate, once you have obtained the registration, once you have got that GSTI number, within a certain period of time, you are supposed to submit the bank account details. within a specified period of time. So without submitting the bank account details, you will be given the registration certificate. But once you have got that registration certificate, once you have got the GSTN number, within certain period of time, you are supposed to submit the bank account details. In case if you don't submit the bank account details within the prescribed time limit, then your registration will be liable to be cancelled. So first they will give you registration certificate, but within a certain time period, you are supposed to submit what? Bank account details. If you don't submit that within the given time limit, your registration will be liable for cancellation. Sir, what is that time limit, sir, within which I am supposed to submit the bank account details? So those time limit has actually been given under rule number 10A, and actually regarding this rule number 10A, there is an amendment. So whatever we are going to read now, that is an amended provision. So let us see what is the time limit for submitting the bank account details. So rule 10A says you have to furnish the details of the bank accounts on the common portal within either 30 days from the grant of registration or before furnishing the details of outward supplies in the GSTR1 or IFF, whichever is earlier. So what is the time limit they have given within which we are supposed to submit the bank account details? Either within 30 days from the date of grant of the registration certificate, or after you have got the registration certificate, first time you will submit the GSTR1 or IFF, no, before that date, whichever is earlier. So either 30 days from the grant of registration certificate or before furnishing the details of your outward supplies in your GSTR1 or IFF, whichever is earlier, within that time limit, you are supposed to submit your bank account details. This is an amended provision, guys. Earlier it used to be 45 days. Now they have reduced the time limit. Now they are telling within 30 days from the grant of registration or before you furnish your details of outward supplies in GSTR1 or IFF, whichever is earlier. Before these dates, you are supposed to submit your bank account details at the GST common portal. So this is what rule number 10A says regarding the furnishing of the bank account details with the GST department at the common portal. Next. So once your registration has been approved, you will be given one unique number, GSTIN. GST identification number will be allotted to you. And you have to display that GST identification number at your principal place of business, at your additional place of business, and also you should display that GSTIN on the name boards also. And one more important thing here, sir, what is the effective date of registration? What is effective date of registration? This is very important. Most of the times they ask a question from here. Assume that you become liable for registration on this date. You become liable for registration. I told within 30 days you have to submit an application. 30 days ends here. If you have submitted the application for registration within 30 days, if you have submitted the application for registration within 30 days, see, this will take some time till the PO grants the registration certificate. It will take some time. So assume that your registration certificate was granted on at this date. For example, you become liable for registration on 1st of January. So you have to submit the application on or before 31st of January. But you submitted the application on 28th of January only. Within 30 days only you submitted the application. You are granted the registration certificate on 15th of February. See, even though registration certificate was granted on 15th of February, but the registration will be effective from the date when you become liable for registration. If you have submitted the application within 30 days, then the registration will be effective from the date from which you have become liable for registration. So you become liable here. You submitted the application here. You got the registration certificate here. But that registration will be effective from the date on which you become liable. When you become liable on 1st of January, from this date only registration will be effective. So that is what the effective date of registration, where an applicant submits the application for registration within 30 days. From the date he becomes liable for registration. The effective date will be the date on which he becomes liable only. The date on which he becomes liable. However, if he has submitted the application after 30 days, he has submitted the application after 30 days. For example, you become liable for registration here on 1st of January, you become liable. Within 30 days, on or before 31st of January, you should have submitted the application. But you submitted the application here. After 30 days, you have submitted the application. Now, PO gave the registration certificate on 15th of February. In this case, your registration will be effective from the date of grant of registration certificate. From here only, the registration certificate will be effective. You will not get retrospective effective registration. Understood? So if you submitted within 30 days, from the date you become liable for registration. If you are making the application beyond 30 days, on whatever date the registration certificate has been granted, from that date registration will be effective. So I think there is a small mistake here. I have to change it. So this I have to change it from the date of grant of registration certificate. From the date of grant of registration certificate. Understood, everybody? So this is what the effective date of registration. Now, when it comes to CTP, NRTP registration, there are some special points. As I've already told, CTP, NRTP, they have to submit the application at least 5 days prior to the commencement of the business. And sir, NRTP will not have PAN card, no? Then how he will get the registration, sir? If you don't have PAN card, don't worry. NRTP has to submit other documents like self-attested copy of passport. He will have passport, no? He has to self-attest is nothing but he has to take a copy, sign it and submit it. And also the application should be signed by authorized signatory who should be a resident of India. NRTP, you can submit application with your passport, but that application should be signed by authorized signatory on your behalf. You should appoint some authorized signatory who is resident of India. That authorized signatory should sign that application for registration. Sir, what will be the validity of registration certificate? When CTP or NRTP has been given the registration certificate, what is the validity? See, in normal cases, the registration certificate will be valid forever. Unless until cancelled, the registration certificate will be valid in case of other than CTP and NRTP. However, in case of CTP or NRTP, there is a time limit up to which the certificate will be valid. So the time limit is either the period which you have specified in the application. When you are making the application, in that application you will say, I want the registration up to this date. So whatever period you have mentioned in the application, or 90 days from the effective date of registration, whichever is earlier, till that point of time, the registration given to CTP or NRTP will be valid. So up to what time limit the CTP and NRTP registration will be valid? Up to the period which has been specified in the application, or 90 days from the date of grant of registration certificate, whichever is earlier, till that point of time only CTP and NRTP's registration will be valid. However, what can happen is, see, for example, you thought you will be doing the business only for 10 days. You have asked the certificate only for 10 days, but later you wanted to extend it. Can you extend it? Yes. The above time limit can be extended by further period of 90 more days. If you submit the application before expiry of that certificate, they will extend that certificate's validity for further 90 more days they will give you. Initially they will give you this time limit, but because of some reason, if you want to extend the validity of the certificate, that also you can do it by submitting an application. And one more important thing in case of CTP and NRTP, whenever you are submitting the application, even before the grant of registration certificate only, you have to make an advance deposit of tax. At the time of submitting the application only, you have to estimate your tax liability and make the advance deposit of the tax. Then only they will give you registration certificate. If you are not estimating your tax liability and making the deposit of the tax, CTP and NRTP will never get the registration. So even in the case of extension, if you want to extend your registration, then also you have to deposit the advance tax. Able to understand? So this is one special case in case of CTP and NRTP. CTP and NRTP will be given a registration only on advance deposit of tax. You have to estimate your tax liability and deposit the tax well in advance. Understood? Sir, I have obtained registration, but I want to amend some details in the registration. I have got the registration certificate, but I want to amend some details in my registration certificate. Can I do the amendment, sir? Yes, you can do the amendment, and the procedure for amendment also I have added it here. So in case of non-core areas, the procedure is very simple. If you want to amend any non-core areas, directly you yourself can do it at the GST common portal. If you want to amend any details of the core areas, what you have to do is you have to follow one specified procedure with the time limits also I have given it here. So once again, this contains only time limits and procedural formalities, so you can refer it. Since there is no concept involved here, even in the procedure for amendment also, this chat will be anyhow shared with you. You can refer this chat. This chat itself is a marathon. Preparation of chat itself is what? Marathon. There is nothing here for me to explain. There is no concept here. So this chat will be shared with you. You can read it on your own, how to do the amendment. What is the procedure for doing the amendment? This chart also will be shared with you. Just go through it, guys. This chart itself is marathon. If I have to revise, what I will revise, I will read out the chat once again. I will read out the chat once again. So why to do it? That time we can use it somewhere else to understand the concept. No, so that's why I'm not doing it. You please do it on your own. Same logic here also. Why I did not explain is, if I have to do the revision, I have to read this entire thing. Why I have to read it? You know how to read it, no? So whatever these charts are there, procedure for registration, procedure for amendments, so just these charts you can go through. That itself will act as a revision for you. Able to understand? So with this we are done with procedural formalities also. Clear everybody till here? So now we will try to cover section number 29. So what does section number 29 talk about? Just a minute, guys. Where this color has come here? Yeah, okay. So let us try to understand now. Let us try to revise now section number 29, which is about cancellation of registration. Guys, when you feel like obtaining registration, you will obtain the registration. But sometimes what will happen is you yourself don't want to be a registered person. For example, you are closing down your business, or assume that a person has expired. The person has expired, what the hell he will do with his own registration? Nothing, no value addition there, no. So you will get the registration, but in some cases you would like to cancel your registration. In some cases what will happen is you will take the registration, but you will try to not comply with the laws and regulations. Uh, you do some wrong activities after taking registration. Then what will happen, then the department itself will cancel your registration. So after you have obtained the registration, if you yourself want to cancel the registration, or if the department wants to cancel the registration, they can do it. So in what circumstances the registration will be cancelled, what is the procedure for cancellation of registration, all that we will try to see now. Okay, so first we will see section number 29. First we will see the circumstances in which the registration can be cancelled by the registered person himself, or if he is not there, his legal hires, that is legal representatives or proper officer. So the circumstances in which you yourself can cancel your registration, or the legal hires of a registered person can cancel the registration, or proper officer can cancel the registration. So what are that circumstances? Number one, you are discontinuing the business. You no longer want to continue the business, you want to discontinue the business. Then you yourself can go and apply for cancellation of registration. Or there is a death of a person, a registered person has died, then his legal representatives can apply for the cancellation of registration. Or amalgamation, two companies are getting amalgamated into new company will get amalgamated, company will get the new registration. What about those companies which are merged? So A Limited, B Limited, both amalgamated become AB Limited. AB Limited will get the registration now. What about A Limited, B Limited? The registration will be cancelled. Demerger, or any other scenario, or any other disposal, that means the business is getting sold to another. So in those cases, death, amalgamation, demerger, or otherwise dispose, there also you can make an application for cancellation of registration. Or there is a change in constitution. Sir, what is change in constitution? Change in constitution means partnership form is getting converted into company. In this case, PAN will change. Partnership form is getting converted into company. PAN number will change, no? Change in constitution. New registration you have to take. You can't continue under old registration. Sir, LLP is getting converted into company. Registration is getting changed. Constitution is getting changed. PAN will get changed. New registration you have to obtain. Old registration will get cancelled. Or sir, individual is getting converted into partnership form. PAN number will change. Now you can't continue under same registration. Old registration you have to cancel. Apply for new registration. Able to understand? But in case if you assume that, sir, there used to be 3 partners in the firm ABC and Co. There used to be 3 partners. Sir, one more partner got added in the firm, sir. Then also do I need to take new registration? No. In that case, if one new partner is getting added, partnership firm remains the same? No. Firm's PAN number will remain the same? No. If only one extra partner is getting added, or if one partner is getting removed from the partnership firm, then don't need to apply for new registration. What you can do is you can do the amendment. However, in case if the individual is getting converted into partnership, or LLP is getting converted into company, partnership firm is getting converted into company, in these cases PAN number will change. When the PAN number is changing, you need to apply for new registration. Old registration you have to cancel. Understood? Or person no longer liable for registration. See, your aggregate turnover is no longer exceeding the applicable threshold limit. You have taken registration earlier, you are making interstate supply, but you are no longer making any interstate supply. You are no longer liable for registration. Then also you can apply for cancellation. Or you, out of your own anxiety, you voluntarily and went ahead and registered yourself. Even though you are not liable for registration, you are so much out of anxiety, you yourself went ahead and got registered, but you want to opt out of voluntary registration. Then also you can submit an application for cancellation of registration. So these are the circumstances in which the registered person himself, or his legal heirs, or the proper officer can submit an application for cancellation of registration. Now they are telling a few cases where proper officer himself can come and do the cancellation of registration. They are going to tell us some circumstances where if you have committed some non-compliances, if you did not follow the GST laws, if you are doing something wrong after obtaining GST registration, then the proper officer himself will suo motu cancel your registration. Even without your application, proper officer himself will take the action and cancel the registration. Sir, in which circumstances, sir? If you apply your mind, you will get the answer. See, when the department voluntarily will come and cancel your registration here, when you are doing something wrong only, no? Sir, what wrongs if I commit? My registration will be cancelled by the proper officer or department itself suo motu when they will cancel the registration. Let us see. if you have done some prescribed contravention, not all contraventions, there are some contraventions which are prescribed in rule number 21. If you are committing any of that contraventions given in rule number 21, then your registration will be cancelled by the proper officer. Sir, what are the contraventions which are mentioned in rule number 21? That list I have given here. For example, you have taken registration, but you are not conducting any business from your declared place of business. You have taken registration. You told that, sir, in Chennai, I am taking registration, but after taking registration, you are not doing business from that place. In that case, PO will cancel your registration. Or you are giving invoice bill without making supply of goods. For example, you are not making any supply of goods or services. Fake invoices you are giving. You are giving invoices to pass on the credit. You are not making any supply just for the sake of, you want to do a favor to your friend. So what you are doing is you are not supplying him any goods. You are just giving him fake invoices. So if the department came to know that you are giving invoices without making supply of goods or services to pass on the credit, then the department will come and cancel your registration. Or if you have violated the provisions of section 171. What is section 171? We will discuss at the CA final level, not relevant now. Or you have violated the provisions of rule 10A. Sir, what is rule 10A? You did not furnish the bank account details. This one, you are required to furnish the bank account details within 45 days or due date of furnishing the return. No, you are not doing it. Then also PO will cancel your registration. Or you are availing input tax credit in violation of section 16. We will discuss in the input tax credit chapter. There are certain conditions which you have to fulfill. If you want to avail the input tax credit, there are some conditions which you are required to follow. If you fulfill some conditions, then only government will give you credit. You are availing the input tax credit without complying with the conditions given in section number 16. If the government came to know you did not fulfill the conditions, like for example, one simple example, if I have to tell you, section number 16 says that if you want to avail input tax credit, you should have tax invoice in your possession. You should have some tax paying document in your possession. Even though you did not have any tax paying document, still you availed input tax credit. If the department comes to know, they will come and cancel your registration. And furnishes the details of outward supplies. Just a minute. Yeah. Furnishes the details of outward supplies in GSTR 1, which are in excess of outward supplies. See, this point will be covered in the returns chapter. But anyhow, since you might have already listened to the classes, so I think I can explain it here. See, what is this point they are trying to say is, as we all know, registered person is required to file 2 returns. GSTR 1 he has to file, GSTR 3B he has to file. In GSTR 1, he will show only what are his outward supplies. In GSTR 3B, he will tell what is his input, what is his output tax liability, what is his input tax credit, net amount what he has to pay, that will be declared in GSTR 3B. A registered person is required to file 2 returns. GSTR 1, in that he will declare outward supplies. GSTR 3B, that is a summary return. You will say what is your input tax credit, what is your output tax liability, what balance amount you have to pay. Now assume that you are a registered person. In your GSTR 1, you told that you have made total supply of 10 lakh rupees and 1,80,000 rupees is the GST amount, output tax liability. Where you have shown GSTR 1, you are telling 10 lakh rupees is the value of supplies and outward tax liability is the GST on that outward supplies is 1,80,000. But when you are submitting GSTR 3B, no, there you are telling you have only output tax liability of 50,000. That means in your GSTR 1, you are declaring more outward supplies and passing on the credit. But when you have to actually pay the taxes by filing GSTR 3B, you are declaring less amount of outward tax supplies than shown in GSTR 1. That means you are trying to fool the government. So if the government came to know that in your GSTR 1, you have declared more outward supplies, but in your GSTR 3B, you are reducing your output tax liability and showing it, then also a proper officer can come and cancel your registration. That is what the summary of this point. So furnishes the details of outward supplies, which is in excess of outward supplies declared in GSTR 3B. Written under section 39 means GSTR 3B. And if he violates the provisions of rule number 86B, this also we'll talk about it later. So just remember here, if you violated the provisions of rule number 86B, then also the registration will be cancelled. Then being a registered person required to file return under GSTR 3B for each month, and he has not furnished the return for a continuous period of 6 months. And if you are a quarterly return filer, you did not furnish the return for 2 quarters. Sir, what is this? What they are trying to say here? Assume that you are a registered person other than composition dealer. See, if you are a registered person other than composition dealer, you have to file the returns. Here also 2 options will be there. You can be either monthly return filer or you can be a quarterly return filer. There is a scheme called QRMP scheme. So if you are a registered person, not a composition dealer, regular person only, if you are a monthly return filer, if you did not file the return for 6 continuous months, if you did not file the return for 6 continuous months, for example, April, you did not file the return, May, you did not file the return, June, you did not file the return, July also you did not file, August also did not file, September also did not file. If you did not file the monthly returns for 6 continuous months, PO will cancel your registration. However, if you are a quarterly return filer, for one quarter you will file only one return. In case if you did not file, you are a quarterly return filer, and if you did not file returns for 2 quarters, 2 continuous quarters, April to June, for this quarter you did not file the return, for July to September, for this quarter also you did not file the return. So when you did not file the return for 2 continuous quarters, if you are a quarterly return filer, then also PO will cancel your registration. If you are a monthly return filer and you did not file the monthly returns for 6 continuous months, then also PO will cancel your registration. So that's why if you have taken the registration, it is your responsibility to file the returns. If you are not filing the returns for certain number of continuous periods, certain number of continuous tax periods, then also registration will be cancelled. Understood? Next one. Sir, I am a registered person, but I am a composition dealer. So if you are a composition dealer, you are required to file one return for the entire year. GSTR 4 you are required to file. And the due date of the GSTR 4 is 30th of April following the end of the financial year. If you are a composition dealer, if you did not file GSTR 4 beyond 3 months from the due date, see the due date is 30th of April. This due date is over. After that, 3 months also over, but still you did not file the GSTR 4. If you are a composition dealer, you did not file the return for the financial year, which is GSTR 4, beyond 3 months from the due date is 30th of April. Beyond this, from the due date, 3 months is over, but still if you did not file GSTR 1, then also department will cancel your registration. So regular dealer, if you are a regular dealer, if you did not file GSTR 3B, if you did not file GSTR 3B for 6 continuous months or 2 continuous quarters, then PO will cancel your registration. If you are a composition dealer, if you did not file GSTR 4, in case of composition dealer, only one return for the entire financial year, GSTR 4. If you are not filing that GSTR 4 beyond 3 months from the due date, then also PO will cancel your registration. Next, registered person has not furnished such return for the continuous period. Nothing but this, you have to refer to these points. The same thing they have told it here. So first they have mentioned in the rules, then they have mentioned it as a separate clause. Okay. So same point here, registered person not furnished a return for such continuous period. This you have to refer to this two things. That is, if you are a monthly return filer, you did not file the return for 6 continuous months. If you are a quarterly return filer, you did not file the quarterly return for 2 continuous quarters. Regular person, not composition dealer. And also, if you have taken voluntary registration, but if you did not start the business within 6 months, you came forward and took the voluntary registration, but even after taking registration 6 months is over, but you did not commence the business, then also department will cancel your registration. And if the department came to know that you have obtained the registration by means of fraud, by doing willful misstatement, by presenting wrong information, you have taken the registration, or you have hidden some facts and took the registration, later if the department comes to know about it, they will come forward and cancel your registration. Understood, everybody? So these are all the various circumstances where proper officer, department on suo motu, they can cancel the registration. Whereas these are the circumstances where you yourself, your legal heirs or proper officer can cancel the registration. Whereas second circumstances which we have seen, those are the circumstances where proper officer himself come forward and cancel your registration. So what are they? If you have done this prescribed contraventions, or you are a composition dealer, did not file the returns, or you have taken voluntary registration, did not commence the business, or you have obtained the registration by way of fraud, willful misstatement, or suppression of facts. Understood? So these are the circumstances where your registration will be cancelled. However, if you are a person to whom UIN has been given, like you are a, I have talked about this one. Where is it? Here. See, I told that for this UNO organizations, multilateral financial institutions, consulate, embassies, they will be given UINO. These people can't apply for cancellation. These people can't apply for cancellation of registration. Next one. Sir, what is the procedure for voluntary cancellation? Sir, if you yourself want to cancel the registration, what you should do? So registered person or legal heirs, what they can do? They can submit an application. Within how many days, sir? Within 30 days of the occurrence of the event. So if any of this is happening, you want to cancel your registration, no? From the date of this event, within 30 days, either the registered person himself or his legal heirs, they will submit an application. Sir, I want to cancel my registration. Then it will go to the PO, proper officer. Within 30 days of receipt of the application, he will give you order of cancellation of registration. So within 30 days, you submit the application to the proper officer, and the proper officer within 30 days, he will issue, within 30 days of receipt of the application, he will issue a order of cancellation. Sir, if the proper officer himself wants to cancel the registration, then what is the procedure, sir? In that case, first a proper officer will give a show cause notice. He will tell you, boss, you have done this contravention. Why I should not cancel your registration? He will give show cause notice. To whom? To the registered person. And he will give 7 days of time to reply. In 7 days, various things can happen. In 7 days, reply has been given by the registered person. Proper officer found that you did some contravention. He sent you show cause notice. He will give you 7 days of time. In 7 days of time, you have to take some action. If 7 days of time, reply has been given, registered person gave some reply. If that reply is satisfactory, okay, proper officer thought that, okay, we are only wrong. This person has complied with the provisions and the registered person has given satisfactory reply. Then what the PO will do? He will drop the cancellation proceedings. That means he will not cancel the registration. He will drop the proceedings. When within 7 days, registered person has given the reply and reply is satisfactory. Registered person has given satisfactory reply. Sir, please don't cancel my registration. You are wrong. I complied. If you have given valid reply, then the PO will drop the cancellation proceedings. He will not cancel. He will stop there. However, if you have given the reply within 7 days, but that reply is not satisfactory, if the PO is not satisfied with your reply, what he will do? He will issue an order of cancellation. Or PO has served you show cause notice and he has given you show cause notice. Why? Because you did not file the returns. Like I told you just now, if you are a composition dealer, if you did not file a GSTR4 beyond 3 months. If you are a regular person, if you are a monthly return filer, you did not file the return for 6 continuous months. If you are a quarterly return filer, you did not file the quarterly return for 2 quarters. In that case also PO can cancel the registration, no? So because of that reason, PO wants to cancel the registration. He gave you show cause notice. Now within 7 days of receiving the show cause notice, you did not give reply. But what you have done is within 7 days, you have furnished all the returns, whatever are pending. Along with that, on that returns, whatever payment of tax, interest, penalty you have to do, that payment also you have done. Within 7 days of receipt of show cause notice, you did not give reply. But instead what you have done, you have furnished all returns, you have made all the payments which are due. Then also PO will drop the cancellation proceedings. Then also he will not cancel the registration, he will drop the cancellation proceedings. And one more thing, what could happen is PO has given you show cause notice. You did not reply within 7 days. Then also what will happen? PO will issue order of cancellation. He will cancel your registration. Understood? So this is the procedure for suo motu cancellation by the department. This is the procedure if you yourself voluntarily want to go ahead and cancel your registration. Understood, everybody? Now there is one more last provision which I have to revise regarding the registration chapter, which is relating to revocation of cancellation of registration. So there is one small provision talking about revocation of cancellation of registration. Let us try to revise what is this revocation of cancellation of registration. See, we have seen either the registration can be cancelled voluntarily by you or the legal heirs, or in some cases, if the proper officer is satisfied with certain reasons, even PO can also cancel your registration certificate, right? So assume that the proper officer, on finding some reasons, whatever we have discussed, whatever we have revised earlier, if he come across any of the circumstances, if the PO deems fit, what he will do is he will give you a show cause notice and cancel your registration. And assume that proper officer has cancelled the registration of certain registered person. Now the government is giving him an opportunity. The registered person whose registration has been cancelled, he can make an application to the proper officer asking the proper officer to revoke the cancellation. What do you mean by revoking the cancellation? So you can make a request to the proper officer asking, sir, you have cancelled my registration. Please give me back my registration. Revoke my cancellation. Whatever cancellation you have done for my registration, you please give back my registration. You can make an application for revocation of cancellation of registration. Sir, in what circumstances the person can make an application for revocation of cancellation of registration? Within what time limit he can make an application for revocation of cancellation? What the proper officer will do after receiving that application? So all that things, there is one short provision. Let us try to understand it. But one thing we all have to be clear, see, revocation of cancellation of registration will be possible only when proper officer has cancelled the registration. On a suo motu basis, if the PO has cancelled the registration, then only you can make an application for revocation of cancellation. Which means that if you have voluntarily made an application and got your registration cancelled, or if the registered person has expired and the legal heirs have cancelled their registration by making an application, in those circumstances, there is no case of revocation of cancellation. Revocation of cancellation will be permissible only when the registration has been cancelled by proper officer on his suo motu basis. So when the registered person voluntarily made an application for cancellation, or the legal heirs of a registered person made an voluntary application for revocation of for cancellation of registration, in those circumstances there is no concept of revocation. Revocation will be possible only when PO on his suo motu basis he has cancelled the registration. So let us see what is the procedure for that. So registered person whose registration is cancelled on suo motu basis by the proper officer. So when the revocation is possible, only when registration was cancelled by proper officer on his suo motu basis. So if the registered person himself has cancelled his registration by making application, there is no concept of revocation of cancellation there. So registered person whose registration has been cancelled on suo motu basis by the proper officer within 90 days of cancellation of registration, the registered person can make an application to the proper officer asking him, sir, please give me back my registration. That application he can make within how many days? Within 90 days from the date of cancellation of registration. However, if there is a valid reason, this 90 days time limit can be extended by commissioner or additional commissioner or joint commissioner by a further 180 days. Which means initially the registered person whose registration has been cancelled, within 90 days without anybody's permission, within 90 days he can make an application. If because of some valid reason, if this registered person is not able to submit the application for revocation within 90 days, then he can apply for permission from the commissioner AC or JC, and by getting the permission from them, this period to make an application for revocation can be extended by further 180 days. Which means 90 days without any permission from the commissioner, assistant commissioner, joint commissioner. If you have any valid reason, you can get extra 180 days. That means total you have a time here of 270 days. Initially 90 days, but if you have a valid reason, you can go and request commissioner, assistant commissioner or joint commissioner, and if they are satisfied, they will extend this time limit to make an application for revocation for further 180 days. So whatever it is, within this time limit, application will be made by registered person to the proper officer. Now, once the proper officer receives that application, then what will happen? Then he will try to review the application. If the proper officer is also satisfied, okay, this is a valid case, we can revoke the cancellation. We can give back we can give back the registration to the concerned person. Then what the proper officer will do? If the PO is satisfied, he will revoke the cancellation within 30 days of receipt of the application. That means once application has been received, the proper officer will verify it, and if he is satisfied, yes, there is a valid reason, we can give back the registration to this person. If the PO is satisfied, he will revoke the cancellation within how many days? Within 30 days of receipt of the application. However, PO has received the application but is not satisfied with the reasons. He is not satisfied. We should not give him. Why I should give him? Why I should give back his registration? PO is not satisfied. Then what he will do is he will issue show cause notice. He will say, sir, why I should not? You are asking me for revocation of cancellation. Why we should give back your registration? Why we should not give back your registration? He will give you show cause notice. And on receiving the show cause notice, within 7 days, the registered person has to reply. So if the registered person replies to that show cause notice within 7 days, and if the PO is satisfied with that replies, then he will revoke your cancellation. On the other hand, within 7 days, if the registered person did not reply, or registered person submitted a reply but the PO is not satisfied with that replies, in those cases also he will drop that application for revocation of cancellation. That means he will not give back the registration, he will cancel that application. So that's what they say. If the PO is not satisfied with that application, first he will issue show cause notice, and within 7 days the registered person should reply to that show cause notice. And if the reply has been received within 30 days of receipt of the clarification, PO should either dispose. That means either if he is satisfied with that replies within 30 days of receiving the reply, either he will give back the registration to the concerned person, or if he is not satisfied with the reasons, he will reject that application and he will not give back that registration to that concerned person. Able to understand, everybody? So this is what the procedure for revocation of cancellation of registration. This is also an amended provision. Here also there is one slight amendment is there. There is an amendment relating to time limit. Previously the time limit used to be low. Now the time limit has been increased. So once again, a quick recap. So what is the procedure for revocation of cancellation of registration? First of all, when revocation of cancellation is possible, only when the registration has been cancelled by proper officer on his suo motu basis. Then the registered person can make an application. What time limit? 90 days. However, this time limit can be extended by further 180 days by receiving permission from Commissioner, AC or JC. And once the application has been received by the proper officer, and if PO is satisfied, he will revoke the cancellation within 30 days of receipt of the application. However, if the PO is not satisfied, first he will issue the show cause notice. Within 7 days, the registered person is required to reply. Within 7 days, if the registered person submits a reply, and within 30 days of receiving that reply, the proper officer will take the decision whether he can revoke the cancellation, or if he is not satisfied, satisfied, he will cancel that application. However, here also, once receiving the show cause notice, if the registered person did not reply only, then also PO will cancel the application. So this is what the procedure for revocation of cancellation of registration. Hope you guys have understood. There is amendment here, important from the examination perspective. So with this, I will not say entire 100% of the registration chapter I have revised, but almost all 80 to 85% of the content from the registration chapter I have revised, which is very, very important from the examination perspective. Understood everybody till here? So this is what regarding the revision of registration chapter. Understood everybody? So since we are done with revising the chapter registration, now we will try to discuss one more related topic to the registration only, which is composition levy. So let us try to revise now quickly what exactly is this composition levy and how does it differ from regular registration. All those things we will try to quickly revise now. First of all, a quick background about why this composition scheme has been introduced. See why? Because when you are a regular person, what I mean to say is, if you are a business person and if your aggregate turnover has exceeded the applicable threshold limit, what generally we will do is we will apply for registration. But when we apply for registration or when the registration certificate has been granted to us, we will be called as registered person. Now, the moment you are registered, what will happen is you are required to do various compliances. The moment you are a registered person, it is not actually a privilege, guys. The moment you are registered under GST laws, there are numerous compliances which you have to do. Number one, you have to file returns every month, in some cases every quarter. And you have to collect the tax from the customer, deposit it with the government. You have to maintain certain records. So like that, the moment you are a registered person, there are so many obligations which you are required to fulfill. So now some registered persons, what they have thought is, some small registered persons, the people who have already obtained registration, but they are relatively smaller people. They do a limited amount of business. They went and made a request before the government, sir, all these compliances like monthly return filing, quarterly return filing, collecting the amount from the customer every time, adjusting the input tax credit, calculating the balance amount and making that payment to the government, all that is going to be a very burdensome task. It is not an easy task. So they went ahead to the government and requested, sir, please give us some simple mechanism. We are registered persons, agreed. So we are registered persons, we have to pay the GST, okay, but we don't want all this headache, we don't want all this so many compliances. Please give us some simple tax structure. So then the government came up with this concept called composition levy. So composition levy is actually a kind of status given to certain registered persons who can ease their compliances. So various advantages which this people who have opted for composition levy will enjoy is, they did not file monthly returns, they did not file quarterly returns. Only one return by the end of the financial year. Only one return for the entire year will be there. And one more thing, every time they are making supply, they need not collect the tax from the customer, determine their input tax liability, adjust it, pay the balance amount. All this headache will not be there for a composition dealer. So easy compliance mechanism has been suggested for the person who is ready to opt for composition scheme. Let us try to understand who is eligible for opting this composition scheme. Sir, if I am a registered person, if I have opted for composition scheme, what amount of tax I am required to pay and what other conditions and restrictions are there, all that we will try to understand. And which section actually talks about this composition levy? Section 10 of the CGST Act talks about composition levy. Let us try to understand what are the, let us try to revise quickly what are the provisions of that section 10. So first we will start with section 10 subsection 1, which says that, which is talking about, if you are a person engaged in the supply of goods, if you are a registered person and you are in the business of supply of goods, then there is a kind of composition scheme which the government has gave to you. So that has actually been covered under 10 subsection 1, which is talking about composition levy in case of that registered person who is engaged in the supply of goods. Sir, who is eligible? First of all, if you opt for composition scheme under 10 subsection 1, what will happen? So the government says that if you are engaged in the supply of goods and you have opted for composition scheme under 10 subsection 1, then you are not required to collect the amounts of 5%, 10%, 12%, 18%. This amount of GST you need not collect it from the customer. If you are opting for composition scheme, you will not have any power to collect the GST from the customer. For example, if I am a regular person, assume I am in the business of supplying some mobile phones. If I'm a regular person who did not opt for composition scheme, if I'm a regular person who did not opt for composition scheme, generally what will happen is, okay, so let me put it this way. If I'm a regular person, I did not opt for composition scheme. What will happen, sir? Assume I'm in the business of selling mobile phones. I'm selling a mobile phone whose worth is 1 lakh rupees. If I'm a registered person, regular person, other than composition, what I should do is, if I'm selling this mobile phone, along with this 1 lakh rupees, I have to collect 18% of GST from the customer. I have to collect 18% of GST from the customer, 9% CGST, 9% SGST. That GST amount I have to collect it from the customer and pay to the government. Who? Normal registered person who did not opt for composition scheme. But the what Act has told is, if you are a person, if you fulfill some conditions, we will give you an option to avail composition scheme. And if I am a registered person, if I opted for composition scheme, I have no right to collect the tax from the customer. I have no right to collect the tax from the customer. For example, sir, I am a composition dealer. I am into business of selling mobile phones. I sold a mobile phone to this customer. So the value of the mobile phone is 1 lakh rupees. How much amount I will collect, sir? 1 lakh rupees only you will collect. GST amount you should not collect it from the customer. GST amount you should not collect it from customer. Sir, does that mean if I am a composition dealer, am I not required to pay the GST amount to the government? No. See, I will revise it in phases. Please follow me. So one thing, if you are opting for composition scheme, the government told you should not collect any amount of GST from the customer. Sir, I sold a mobile phone worth 1 lakh rupees. Applicable rate is 18%. I am a composition dealer. Will I collect GST? No, you have to collect only 1 lakh rupees. Sir, since I am not collecting any GST from the customer, am I not required to pay the tax to the government? No, you have to pay it. Sir, how you have to pay it, sir? The Act says, if you opted for composition levy, in one quarter, you determine how much total turnover you have made. Assume that in the quarter April to June, I have made a total turnover of 10 lakh rupees of turnover I have made. How much turnover I have made? 10 lakh rupees of turnover I have made in the quarter April to June. Now the government is telling on this entire turnover, you pay the tax at a discounted rate. You pay the tax at a discounted rate, not normal rate. We will specify a discounted rate of GST. That much amount of GST you have to pay it from your own pocket. You should not collect this from the customer. For example, assume that I am into business of selling goods. I'm into business of selling goods. So assume I'm manufacturing some goods and I'm selling it. So now what the government says here is, in this case, on my turnover, whatever I made in a quarter, on that turnover, I'm required to pay 1% of GST, which is 0.5% of CGST, 0.5% of SGST. This much amount of GST I have to pay to the government. Now, if I calculate on this 10 lakh rupees, 1%, it will be 10,000 rupees. So in this quarter, I have made a turnover of 10 lakh rupees. On this 10 lakh rupees, by the end of the quarter, once the quarter gets completed, I have to pay this 10,000 rupees of amount of GST to the government without collecting from the customer. From my own pocket, I have to pay. From my own pocket, I have to pay. Assume next quarter has come. July to September, this quarter has come. In this quarter, I made a turnover of 5 lakh rupees. Sir, on this 5 lakh rupees of turnover, whatever I have made, would I have collected the GST from the customer? No, you should not do it. Now, once this quarter gets over, I determined my turnover is 5 lakh rupees. On this 1% of GST, I should calculate. It will be 5,000 rupees. This 5,000 rupees, I have to pay it from my own pocket. This 5,000 rupees, I have to pay it from my own pocket. So this is what, as a composition dealer, you are supposed to do. So if you are a composition dealer, every time you are making a sale, every time you are making a supply, you should not collect any GST from the customer. At the same time, whatever inputs you have received, whatever input goods, input services, whatever you have received, on that also government will not give you GST. You are not entitled to collect the amount of tax from the customer. You are not even entitled to avail the input tax credit. Once in every quarter, you have to determine how much turnover you have made. On that turnover, the Act has prescribed a certain discounted rate of GST. That much amount of GST you have to pay it from your own pocket. Understood? So if you are opting for composition scheme, you are not entitled to, see, let me explain it here. If you are opting for composition scheme, such person shall not collect any tax from the recipient. Whenever you are making any supply, you should not collect any GST amount. At the same time, whatever inputs you have purchased, on that you can't avail input tax rate also. But every quarter you have to decide your turnover. On that turnover, you have to pay a tax at a discounted rate, which we are going to read now. Okay. So this is what 10 subsection 1 says. So 10 subsection 1 is giving is a composition scheme. It is prescribing composition scheme for a certain kind of suppliers. Sir, who can opt composition scheme under 10 subsection 1? The government told, if you are a manufacturer, if you are a what? Manufacturer. If you are manufacturing some goods and they are selling it, if you are a manufacturer, you are required to pay tax at the rate of 0.5% of the turnover in the state or union territory. When I say 0.5% here, 0.5% of CGST and another 0.5% of SGST also will be added. Total effective rate will become 1%. That they have told 0.5%, that 0.5% is only under CGST Act. So assume that I am into manufacturing. I manufacture water bottles and I sell it. I'm manufacturer. I manufacture water bottles and I sell it. In every quarter, and if I have opted for composition scheme, in every quarter, whatever turnover I have made, on that turnover, 1%, 0.5% CGST, 0.5% SGST, that much amount I have to pay. Sir, I am not a manufacturer, sir. I am a trader. Like, I am not doing any manufacturing. For example, I am a trader. I buy the water bottles, I sell the water bottles. I don't do any manufacturing. I am a trader. So if you are a manufacturer, then you are required to pay 1% of turnover as GST. If I'm a trader, if I'm not doing any manufacturing, but I'm engaged in supply of goods only, but I don't do any manufacturing activity, I buy the goods, I sell the goods. If you are a trader, if you are not into manufacturing activity, then also you are required to pay 1% of GST. Here also they are telling 0.5%, which is SGST. Effective rate will be 1% of taxable supplies. Very important point I'm telling here. From this equation will come. Listen carefully. So if you are a manufacturer, if you are opting for composition scheme, you are required to pay effectively 1% of GST of your turnover on your total turnover. On your total turnover. When I say total turnover here, it includes taxable supplies also, it includes exempt supplies also. If you are a manufacturer and you have opted for composition scheme, on your turnover, you have to effectively pay 1% of GST on your entire turnover. Even on exempt supplies also, you have to pay 1%. On the other hand, if you are a trader, you are required to pay effectively 1% of GST on only turnover of your taxable supplies. On your exempt supply, you need not pay 1%. This is where the question definitely they will ask you. This is where most of the students will do the mistake. So you have to be very careful. If they are asking you composition scheme, you have to find out whether the registered person is a manufacturer or he is a trader. If they are telling he is a manufacturer, he is required to pay 1% of the turnover of entire turnover, including exempt supplies also. If you are a trader, you are required to pay 1% of taxable turnover only. 1% of taxable turnover only. Assume, I will give you an example. Assume there is a registered person, he is a manufacturer. They have told that he is making taxable supplies 10 lakh rupees in a quarter. He has made exempt supplies of 15 lakh rupees in a quarter. He is opted for composition scheme. How much amount of GST he has to pay in the quarter? Now you have to say on 10 lakh rupees plus 15 lakh rupees at the rate of 1% on total 25 lakh rupees, 1%, 25,000 rupees of GST he has to pay to the government. However, in some cases, they will give the question, a person is not manufacturer, he is a trader. He is a what? Trader. He is only trading. He is buying the goods and selling. He is not doing any manufacturing. Now they will say, he is a taxable supply. He made a taxable supply of 10 lakh rupees. He made an exempt supply of 15 lakh rupees. How much amount of GST he has to pay for this quarter? Then you have to write, since he is a trader, he is required to pay 1% only on taxable supply, not on exempt supply. Why? Because the terminology which they have used is 0.5% of turnover of taxable supplies only. If you are a trader, you are required to pay GST only on taxable supply. In this case, if you are a trader, you are required to pay GST under composition scheme of 10 lakhs into 1%, only 10,000 rupees you have to pay. Very important. Clear everybody? So this is the rate of GST which you have to pay if you are a trader. So hope you guys will keep this point in your mind. Very, very important. This is where questions mostly will come. And the government also told one more thing. If you are a restaurant service provider, if you are running a restaurant, then also we will make you eligible for opting the composition scheme under 10 subsection 1. If you are a restaurant scheme, if you are providing restaurant, see, when you say restaurant, it involves supply of goods also, it involves supply of services also. But what the government told is, okay, you are a restaurant service provider, you are doing supply of services also, but we will consider you. Even though you are a restaurant service provider, even though you are making supply of services also, but still we will treat you as if you are making supply of goods only. We will also permit you to opt for composition scheme under 10 subsection 1, even if you are running restaurant services. But if you are a restaurant service provider, you are required to pay 2.5% of the turnover. So 2.5% of CGST. That means effectively 5% of GST. Effectively, you have to pay 5% of GST on your turnover. Once again, here also they are telling turnover, not only on taxable turnover, on your entire turnover, you have to pay 5% of GST. So 1% is for whom, guys? For manufacturer, 1% of total turnover. For trader, 1% of taxable turnover. For restaurant service provider, they have also been given the option to avail the composition scheme. But the government told, if you are a restaurant service provider, you want to opt for composition scheme, you pay effectively 5% of the GST on your turnover. Understood? And all these three people, they should not collect any GST from the customer. They should not avail input tax credit. Whatever tax they have to pay, 1%, 5%, 1%, they have to pay it from their own pocket. They have to pay it from their own pocket. Understood everybody till here? Okay. So I told who can opt composition scheme. Sir, can every manufacturer opt for composition scheme? Can every restaurant services provider opt for composition scheme? Can any trader opt for composition scheme? No. They have given a turnover criteria. If your turnover is within a specified limit, then only they will make you eligible for composition scheme. So under 10 subsection 1, if you want to opt for composition scheme, only those registered persons whose aggregate turnover in the preceding financial year, is less than or equal to 1.5 crores, whose aggregate turnover in the preceding financial year, not in the current year. For example, you want to opt for composition scheme for the financial year 23-24. Then you have to check in the preceding financial year, that is in the year 22-23, what is your aggregate turnover. If your aggregate turnover is less than or equal to 1.5 crores in the preceding financial year, then you become eligible for opting for the composition scheme under opting for composition scheme for current year. Sir, what if I have started the business in the current year only? I started business in the current year only. I don't have any business in the previous year. I started business in the current year itself. No problem. Then in the current year, you can directly become eligible for composition levy. You can become eligible for composition levy. Why? Because in the last year, you did not have any turnover. That means obviously you have zero turnover, less than or equal to 1.5 crores only. No. So either you are starting the business this year only, or you are already having the business in the previous year. But if your aggregate turnover in the preceding financial year is less than or equal to 1.5 crores, then only you become eligible for composition scheme. Okay. Next one. However, some state governments told, these 8 special category states told, sir, we don't want 1.5 crores. In our state, if they are doing supplies, we will allow them to opt for composition levy in case if their aggregate turnover in the preceding financial year is less than or equal to 75 lakhs. So these 8 special category states told, we will not give 1.5 crores of limit for opting for composition scheme. In our states, if the person is registered in our states, they become eligible for composition scheme only if their aggregate turnover in the preceding financial year is less than or equal to 75 lakhs. Sir, which states are 8 special category states? We have total 11 special category states. No, out of that 8 states told, we will permit a person to opt for composition scheme only if their aggregate turnover is less than or equal to 75 lakhs. Sir, who, sir? So Manipur, Mizoram, Meghalaya, Arunachal Pradesh, Sikkim, Nagaland, Uttarakhand and Tripura. So you can use a mnemonic here. So I can't think of better mnemonic. If you can create a better mnemonic, you can do it. So I am using here mass nut. So if you can think of any alternative mnemonic, you remember it. But these 8 special category states told, we will allow the person to opt for composition scheme only if the aggregate turnover in the preceding financial year is less than or equal to 75 lakhs. All other states told, we will allow a person to opt for composition scheme if his aggregate turnover is less than or equal to 1.5 crores in the preceding financial year. Understood? And there are even few more conditions also. If you want to opt for composition scheme under 10 subsection 1, there are few more conditions, or certain people will become ineligible for composition levy, even though their aggregate turnover in the preceding financial year is less than or equal to 1.5 crores. Or in these 8 states, even though their aggregate turnover in the preceding financial year is less than or equal to 75 lakhs, but still some people become ineligible for composition levy under 10 subsection 1. Sir, who, sir? First point, I will come to that later. So let us have a revision from the second point. Registered person not engaged in supply of goods and services not leviable to tax. That means alcoholic liquor for human consumption, 5 petroleum products. If you are engaged in the supply of these kind of supplies which are not leviable to GST, that means if you are a person, if you are making supply of alcoholic liquor for human consumption, then you are not eligible for composition levy. If you are into business of supplying any of the 5 petroleum based products like petroleum crude, high speed diesel, motor spirit, etc., then also you become ineligible for composition levy. So if you are a registered person, but if you are engaged in the supply of goods or services which are not leviable to tax, which are outside of the purview of GST, like alcoholic liquor for human consumption and 5 petroleum products, if you are doing that, you are not eligible for composition levy. Next, registered person not engaged in any interstate. Sorry, let me put it this way. It is not ineligibility, eligibility. So if you want to opt for composition levy, you have to fulfill these conditions. If you want to opt for composition levy, number one condition is your aggregate turnover should be within the prescribed limits. In addition to that, you should also fulfill these conditions. Okay, so you should not be engaged in supply of goods or services which are not leviable to tax. You should not be engaged in making any interstate outward supply. If you are a registered person, but if you are making any interstate outward supply, if you are making interstate supplies, outward supplies, then also you become ineligible composition levy. See, in the exam, they will confuse you. They will say there is a registered person. There is a registered person. Now this person is receiving inwards of interstate supplies. This is a registered person. He is making interstate inward supplies. He is buying goods or services from other states. Will he become eligible for composition levy? Yes. Yes, he will become eligible. See, the restriction is there only when the registered person is making outward supplies of goods or services. If he is receiving inward supplies, interstate supplies of inwards, if he is receiving, if he is buying the goods and services from other states, no restriction, you become eligible. If you are making outward supplies, you are supplying goods, you are supplying services to other states. If you are making outward supplies, outward interstate supplies, then you become ineligible for composition levy. If you are receiving inward supplies, no issue, you become eligible for composition levy. Important. This also they can pose a question. Next one. Registered persons not making supplies through e-commerce operator. See, if you are making supplies through e-commerce operator, then also you become ineligible for composition levy. Next one. And you should not be engaged in manufacturing of these 8 products. You should not be engaged in manufacturing. See, here they are putting a restriction only on manufacturing. You should not manufacture. You can do trading. If you are trading these 8 products, you become eligible. Only restriction is there if you are manufacturing. Very, very important. Sir, which 8 products I should not be manufacturing, sir? Ice cream and other edible ice, pan masala, tobacco, aerated water, fly ash bricks or aggregate, bricks of fossil meals or siliceous earth, building bricks, earthen or roofing tiles. Something sounding familiar? These products we have seen somewhere? Yes. Sir, where we have seen? If you remember, in the registration chapter. If I take you back to the chapter of registration, so if you would have remembered, if you are exclusively engaged in the supply of goods, government has told 40 lakh rupees of limit we will give you, threshold limit. But if you want to enjoy this 40 lakh rupees of threshold limit, you should not be engaged in making supplies of these 7 products. Here they have told 7 products. You should not be engaged in making supply of the 7 products. And here one more product is getting added to the list here. If you want to opt for composition scheme, you should not be engaged in manufacturing of those 7 products. Along with that, they have also mentioned one more product here, aerated water. You should also not be in the manufacturing of aerated water. See, the applicable threshold limit of 40 lakh rupees will not become applicable if you are engaged in supplies. And one more important distinction I have to make here. See, the government told they will not give you 40 lakh rupees of threshold limit if you are engaged in supply. In the registration chapter, the terminology which they have used is supply. That means either you are trading or you are manufacturing. Where, guys? In the registration chapter. In the registration chapter, they told applicable threshold limit is 40. But if you are either trading or you are manufacturing any of the 7 products, then you will not become entitled for 40 lakh rupees of limit. You will become entitled only for 20 lakh rupees of limit. This were registration. Why? Because the term they have used is making supply. When they say making supply, whether for trading or you are doing either trading or manufacturing. But when it comes to composition scheme, the restriction is there only for manufacturing. You should not manufacture. You can trade. If you are trading in this 8 products, no restriction. You can opt for composition scheme. But if you are manufacturing any of these 8 products, then only you become ineligible for composition scheme. Then only you become ineligible for composition scheme. If you are doing trading, you become eligible. But for 40 lakh rupees, but to enjoy that 40 lakh rupees of extended limit, you should not be either trading or manufacturing for enjoying the limit of 40 lakh rupees. There are 7 products, here 8 products, one more product will get added to the list, which is aerated water. So if you want to opt for composition scheme, you should not be a manufacturer of any of these 8 products. And you should not be a CTP or NRTP. You should not be a what? CTP, NRTP. If you are a CTP or NRTP, then also you become ineligible for composition levy. That means you are a casual taxable person or you are non-resident taxable person. Then the government told we will not give you composition scheme. And also one more condition is there. See, under 10 subsection 1, they told that if you are a manufacturer of goods, then only we will give you composition scheme. If you are trader in goods, then only we will give you composition scheme. If you are restaurant service provider, then also we will give you composition scheme. Now, in order, if you are a manufacturer or trader, if you are restaurant services, even though you are providing services, government told we will make you eligible for composition scheme. But if you are a manufacturer or trader, you should be only engaged in supply of goods to opt for composition scheme under 10 subsection 1. If you are a manufacturer or trader, and if you want to enjoy composition scheme under 10 subsection 1, you should be only engaged in supply of goods. You should not be doing any supply of service. Who? Manufacturer and a trader. But this created lot of problem. So there are in some cases there will be some manufacturers or traders who will mainly do supply of goods, but they do marginal supply of services. Like take for example a person who is into the business of selling TVs. So now it is quite common that the person whoever is in the business of electronics, he will majorly do supply of goods, but he will do marginal services also. What marginal services he will provide? Warranty services also he will provide. That means this person is a trader or manufacturer. He is trading or manufacturing electronics, but he is making supply of goods also. He is making supply of services also. That means he become ineligible for composition scheme under 10 subsection 1. Why? Because 10 subsection 1 says a manufacturer or a trader who are doing only supply of goods, they become eligible for composition levy. But it is quite common that in some cases the person will be mainly doing supply of goods, but he will be doing marginal supply of services. Very limited services he will do. But if you are making supply of services, you become ineligible for composition levy under 10 subsection 1. So that's why government gave some relaxation. Why? Because it is quite common. Every person who is in the business of selling goods, minimal, marginal services he will provide. So that's why what the government told is, okay, this is the problem you are facing. We'll do one thing. If you are manufacturer or trader, you are doing supply of goods and you are providing marginal services. If you are doing marginal services, very limited services you are doing, then also we will permit you to opt for composition levy under 10 subsection 1. Sir, how to decide marginal services, sir? You are telling if you are majorly supply of goods, but you are doing marginal supply of services, very limited amount of supply of services you are doing, then also we will make you permit under composition scheme under 10 subsection 1. Sir, but what amount can be called as marginal services, sir? They have given criteria. So if I read it here, the first condition, registered person must be engaged in supply of goods, but he can also provide marginal services. Sir, how to decide services are marginal or not? If the services are less than or equal to 10% of the turnover in the preceding financial year or 5 lakh rupees, whichever is lower. When we say that is a marginal supply of service, if the turnover is, if the supply of services, the turnover which you are making from supply of services is less than or equal to 10% of the turnover in the preceding financial year, in the last financial year, whatever turnover you have made, and you are make in the current year. So let me put it this way. I will give you an example that can understand, that will help you understand in a much better way. So if I give you an example for this, assume that last year my turnover was 80 lakh rupees. In the current year, this is the last year's turnover. In the current year, I am making supply of goods. My supply of goods was 73 lakh rupees. I am making a supply of services of 7 lakh rupees. In the current year, will I become eligible for composition levy? Yes. Will I become eligible for composition levy? Yes. Why? Because I am making supply of services. How much? 7 lakh rupees only. What is the last year's turnover? Less than or equal to 10% of the preceding financial year. What is the preceding financial year's turnover? 80 lakhs. 10% is how much? 8 lakh rupees. Or they say one more thing here. Marginal services is less than or equal to 10% of turnover in the preceding financial year or 5 lakhs, whichever is lower. I want to add this point here. So 10 lakh rupees or 10% of the previous turnover, 8 lakh rupees or 5 lakh rupees, whichever is lower, 5 lakh rupees. In the current year, I can supply services only up to a value of 5 lakh rupees. In the current year, I have supplied the services of 7 lakh rupees. That means I have provided more than the marginal services. In the current year, I become ineligible for composition levy. So this, when they told exclusively a manufacturer or trader who is exclusively engaged in supply of goods, they only become eligible for composition levy. It created trouble. So that's why government gave a permission. Boss, you do one thing. You are primarily engaged in supply of goods. We will permit you to opt for composition scheme if you are doing marginal services. Sir, how to decide marginal services, sir? They told less than or equal to, that means in the current year, you can provide the services up to a value of 10% of turnover in the preceding financial year or 5 lakh rupees, whichever is lower. This much amount of services you can provide. If you are providing only this much amount of services, even though you are engaged in supply of services, we will treat you as person engaged in supply of goods. We will let you opt for composition levy under 10 subsection 1. Able to understand, everybody? So I can't keep on giving more examples. Why? Because this is a marathon class, not a regular class. So this one point alone, we can do so many illustrations, but I hope you got the point here. Able to understand, everybody? So we have seen which persons are eligible for composition levy under section 10 subsection 1. Able to understand? And one more point here. This point, whatever content is there in the box here, I will talk about it in the later scenario. Guys, did you understand 10 subsection 1, 10 subsection 2? Who can opt for composition scheme under 10 subsection 1 and who becomes ineligible? Clear, everybody? Now, see, now some people started complaining. Sir, you are telling if you are a restaurant service provider, you can opt for composition scheme under 10 subsection 1. If I'm a manufacturer, if I'm a trader, I can also opt for composition scheme and I can also provide marginal services. Sir, what mistakes supplier of services have done? Why don't you give composition scheme for those registered persons who are engaged in supply of services? They also started crying. Then the government told, okay, don't worry. We have brought one more composition scheme for those people who are engaged in supply of services. Government gave composition scheme for those who are in the supply of goods. They gave composition scheme for restaurant services also under 10 subsection 1. Now service providers came and told, sir, what mistake we have done? Why don't you give the composition scheme for service providers also? So that's why government introduced one more section, 10 subsection 2A they have introduced, and they told under this section, even those people who are engaged in supply of services can also opt for composition scheme. But here different criteria they have given. What criteria they have given is, sir, if I am engaged in supply of services, when I become eligible for composition scheme, in case if your aggregate turnover in the preceding financial year is less than or equal to 50 lakh rupees. If your aggregate turnover in the preceding financial year is less than or equal to 50 lakh rupees. See, under 10 subsection 1, in case of restaurant service and those persons who are engaged in supply of goods, they told that if aggregate turnover is less than or equal to 1.5 crores in the preceding financial year. But for the supplier of service, they told the person whose aggregate turnover in the preceding financial year is less than or equal to 50 lakh rupees. In case of supplier of services, they become eligible for composition levy. Sir, how much rate of tax we have to pay? For goods supplier, for manufacturer trader, you told 1%. For restaurant services, you told 5%. How much amount we are required to pay, sir? Service providers, the government told, if the service provider is opting for composition scheme, they have to pay 3% of the turnover in the state or union territory. 3% of CGST, that means effective rate will become 6%. How much will be effective rate? They have to pay effectively 6% of the turnover. Who? Those people who are engaged in supply of service. Or I can put it in other way around. If you are ineligible for composition scheme under 10 subsection 1, no need to worry. You have one more option. If you become ineligible for composition scheme under 10 subsection 1, don't worry. You have another option. You can avail composition scheme under 10 subsection 2A also. See here, why I am telling you is, see, take this example. I am a person, trader of goods. I am making supply of goods, but my supply of services exceeded the applicable limit. I told you are a marginal service provider. You can provide services up to 10% of the turnover of the preceding year or 5 lakh rupees, whichever is lower. Sir, because of that reason, I became ineligible for composition scheme under 10 subsection 1. Don't worry. If you become ineligible for composition scheme under 10 subsection 1, you have one more option. You can avail composition scheme under 10 subsection 2A. Able to understand? So those people who are engaged in supply of services or those people who become ineligible for composition levy under 10 subsection 1, government has given one more option for them. You come and enjoy the composition scheme under 10 subsection 2A if your aggregate turnover in the preceding financial year is less than or equal to 50 lakh rupees. And if you are opting for composition scheme under 10 subsection 2A, the rate of tax which you have to pay here will be effectively 6%. Here also you have to fulfill some conditions. What are they? Registered person should not be engaged in supply of goods and services not leviable to tax. Obviously, you should not be engaged in supply of alcoholic liquor for human consumption and that 5 petroleum products. You should not be engaged in making any interstate outward supply. You can have inward supplies, interstate inward supplies you can have, but you should not be engaged in making any interstate outward supplies. And also you should not be making any supplies through e-commerce operator, and you should not be a CTP or NRTP. If you fulfill these conditions, then you still have a chance to opt for composition scheme under 10 subsection 2A. Able to understand, everybody? Now, one more scenario here. In the current year, since your aggregate turnover in the preceding financial year did not exceed the applicable threshold limit. So for composition dealer, what is the limit, guys? Under 10 subsection 1, if you want to opt for composition scheme, your aggregate turnover in the preceding financial year should be less than or equal to 1.5 crore. In some states, 75 lakhs. If you want to opt for composition scheme under 10 subsection 2A, your aggregate turnover in the preceding financial year should be less than or equal to 50 lakh rupees. And one more thing also they say here, in the current year, you can enjoy composition scheme only till your turnover is within this limit. If the moment your turnover exceeds the applicable threshold, the moment your turnover exceeds this limit, you have to opt out of the composition scheme. That means you can be under composition scheme only till the point of time your turnover, your aggregate turnover in the current year is within the limit of 1.5 crores or 75 lakhs or 50 lakh rupees. So what I am trying to say here is, assume that there is a registered person. This person is a manufacturer. His aggregate turnover in the preceding financial year is 90 lakh rupees. He is not from any of that 8 special category states who told 75 lakh rupees. So this person is there, assume, in Andhra Pradesh. So will he become eligible for composition scheme? Yes. Assume current financial year is 23-24. In the current financial year, he can enjoy composition scheme. Now assume that in the current financial year, his turnover exceeded 1.5 crores on 1st of December 2023. His turnover exceeded 1.5 crore. Now he shall opt out of the moment his turnover exceeds 1.5 crores, he can no longer follow composition scheme. Then he has to become a regular person. That means after this date, whatever supplies he is making, on that he has to collect the GST at the applicable rate. He can enjoy the input tax credit. You have to file the monthly returns. All that things will come into picture. Now assume that there is a registered person. He is from the state of Manipur. He's a trader or manufacturer. His turnover in the preceding financial year is 70 lakh rupees. In the current year, will he become eligible for composition scheme? Yes. Now in the current year, he can stay under composition scheme only till the point of time his turnover is 75 lakhs. Why? Because for the purpose of Manipur, what is the turnover limit for composition scheme? 75 lakh. So in the current year, assume that his turnover has exceeded 75 lakh rupees on 15th of December 2023. From this date, he should opt out of composition scheme. After this date, whatever supplies he is making, he will be treated as regular person, collect the GST paid to the government. Understood, everybody? So same thing applies in the case of supply of services also. If you are opting for composition scheme under 10-2A, you can be under composition scheme only till the point of time your turnover in the current year is up to 50 lakh. The moment it exceeds, you have to opt out of composition scheme. Understood? So that is what I tried to write it here. That is what even has been mentioned under 10 subsection 3. So composition scheme shall lapse if aggregate turnover in the financial year, in the current financial year, exceeds 1.5 crore, 75 lakh rupees or 50 lakh rupees. And one more point, this thing is there in the box here. What is that item? Let me also explain this. Assume that you are a registered person. You have a PAN. Now you have one place of business in Telangana. Tamil Nadu. You have one place of business in Andhra Pradesh. You have one place of business in Telangana also. You have one place of business in Karnataka. Issue. Can I say, sir, in one place, in one state, I will opt for composition scheme. In all other states, I will be a regular person. Will it be permitted? No. So what the act has told is, if you have more than one registration under same PAN, you have to opt for composition scheme for all the registrations under your PAN. You can't say for one registration I will be a composition dealer, for another registration I will be a regular dealer. That act will not permit. If you have more than one registration under same PAN, all that registrations have to simultaneously opt for composition scheme. Clear? So that is what has been there in the brackets. Is there anything extra? See, one more condition. Sir, you have opted for composition scheme. You have opted for composition scheme. Let me put it this way. So I am a registered person. I opted for composition scheme. That means whenever I am making any outward supplies, I should not collect any GST from the customer. I should not collect any GST from the customer. Sir, I am a composition dealer. I received some inward supplies, either goods or services, which are covered under reverse charge mechanism. For example, I received advocate services. Advocate services are covered under RCM. Sir, I am a registered person. I received advocate services, but I'm a composition dealer. Will I still be required to pay tax under reverse charge mechanism? Yes. Yes. Even though you are a composition dealer, if you have received any inwards which are covered under reverse charge mechanism, still a composition dealer is required to pay the GST as per the applicable rate. Here you cannot say, sir, on my inward supplies also I will pay the GST at a discounted rate. Government will ask you to get lost. So assume that if advocate services attract 18% of GST on these inward supplies, since you are required to pay tax under reverse charge mechanism, you have to discharge that tax liability under reverse charge mechanism at the applicable rate of 18% only. Here you can't say I will pay even tax on my reverse charge, tax on my inward supplies under reverse charge mechanism also at discounted rate. You can't say, you have to pay the full tax at the applicable rate. Anyhow, you can't enjoy the credit also. Why? Because if you are a composition dealer, you can't enjoy input tax credit, but still you have to pay the tax under reverse charge mechanism at the applicable rate. You will not become exempted from paying tax under reverse charge mechanism. You still have that responsibility. Next one. And one more important thing, if you have opted for composition scheme, you should mention the term composition taxable person on your bill of supply. That means whenever you make a supply, in case of composition dealer, he will give a document called bill of supply. In that bill of supply, you have to clearly mention that you are a composite taxable person, and even you have to display that composition taxable person at your principal place of business, at your additional place of business, at all the locations wherever you are doing business. You have to mention that you are a composite taxable person. So on your bill of supply, you have to mention that you are a composite taxable person. At your principal place of business, at your additional place of business, also you have to mention that you are a person required to pay tax under composition scheme. Simply you have to say, I am a composite taxable person. Understood? So this is what these are the most important things relating to composition scheme. Hope you guys have understood this chapter. Clear and comfortable, everybody? Understood? So since we are done with the chapter, since we are done with revising the chapter, okay, so since we are done with the chapter composition scheme, now we will try to revise the chapter charge of GST. Very small chapter, very simple chapter. So we'll not take much of a time for this chapter. Why? Because this chapter itself is a self-explanatory one. So let me set out what exactly is this chapter about and what kind of questions will be tested from this chapter. Very simple, guys. From this chapter, in this chapter, we are going to mainly talk about those supply of services which are covered under reverse charge mechanism. See, I told when it comes to mechanism for deposit of taxes with the government, there can be two ways. One is forward charge mechanism, other one is reverse charge mechanism. What is forward charge mechanism? It is what majorly happens. A supplier of goods or services, whenever he makes a supply, he will collect the GST amount from the customer, pay to the government. This is what forward charge mechanism. But the government thought in some cases, collection of GST from the supplier might not be that practically feasible. So they have notified certain goods, they have notified certain services, which if getting supplied, the supplier will not have any obligation to collect the GST from the customer and pay to the government. They have made the recipient directly liable to pay the GST amount to the government. Here, in some cases, the government has notified certain goods or services in which they have mentioned that if those goods and services which are notified are getting supplied, supplier will not collect the GST and pay to the government. In fact, the recipient is directly liable to pay the GST amount to the government. And in this chapter, we will not talk about goods which are covered under reverse charge mechanism. We are not talking about goods. This chapter is mainly about those supply of services which are covered under reverse charge mechanism. That means in this chapter, we are going to see a prescribed list of services which, if getting supplied, the supplier will not collect the GST and pay to the government. In fact, recipient will directly pay the GST amount to the government. So we are going to concentrate on those kind of services which are covered under reverse charge mechanism. That is what the agenda of this complete chapter. So let us try to have look at it. So I'm not talking about all the introduction. I'm going to focus on that reverse charge mechanism related services. I will try to explain one by one. We'll try to revise one by one. First, we'll start with the easy ones. So we will start with simple ones like this one. Services supplied by an insurance agent to any person carrying on insurance business located in the taxable territory. Sir, what is this, sir? See, we all know there will be insurance agents will be there. Insurance agents will be there or not. So now assume that there is some LIC company. There is some LIC company. They have appointed one insurance agent. What insurance agent will do? He will find the customers, sell the policies to them. And for that, LIC company will pay the commission. LIC company will pay the consideration. And here, insurance agent is providing services to the insurance company. Insurance agent providing the services to the insurance company. Service provider is a insurance agent. Service recipient is a insurance company, be it life insurance or be it general insurance, whatever it is. Service provider will be insurance agent, service recipient will be insurance company. The act told this activity will be covered under reverse charge mechanism. Your insurance agent will not collect any GST and pay it to the government, but instead the insurance company, being a recipient, they are directly required to pay the GST amount to the government. That's all. This is the first activity. So services provided by insurance agent to an insurance company or to any person carrying on insurance business, this activity will be covered under reverse charge mechanism. Understood? Now let us talk about the next one. Services provided by recovery agent to a banking company, to a financial institution or a non-banking financial company. Sir, what is this? Recovery agents. We will have recovery agents now. See, for example, some people will take the loan from banks, financial institutions or NBFC, but they will not repay the loan. Bank manager can't go and collect the amount from each and every borrower. So what banks will do is a banking company or financial institution or NBFC. They will appoint a recovery agent. What recovery agent will do? He will go to the borrower and collect the money from the borrower and pay it to the bank. That means recovery agent is providing services to the banking company or financial institution or NBFC, and this banks, financial institutions or NBFCs will pay the consideration. To recovery agent. Who is providing services? Recovery agent. Who is receiving the services? Banking company, financial institution, NBFC. The government told this activity also will be covered under reverse charge mechanism. The recovery agent will not collect any GST from the banking company, financial institution or NBFC and pay to the government. Directly, these recipients are only required to pay the tax under reverse charge mechanism directly to the government. So this activity is also covered under RCM. Now let us have a look at few more services. This one we will see supply of services by a music composer, photographer, artist or the like by way of transferring or permitting the use or enjoyment of a copyright covered under the Copyright Act to a music company, producer or the similar located in the taxable territory. Located where? In the taxable territory. Even in the previous cases also, the recipient, in case of insurance agent services, if the insurance company is located in the taxable territory, then only RCM will become applicable. Similarly, services provided by recovery agent to the banking company, financial institution or NBFC which is located in a taxable territory, then only RCM will come. Similarly, assume that I am a music composer. I composed a song and I gave this song, I permitted T-Series, a music company. I gave the permission for T-Series to publicize my song, to promote my song. So here I am providing the services. Who is providing the services? I am a music composer. I composed a song, gave it to T-Series and I let them use this song and make revenue. So I am a music composer. I gave the services to a music company. Whatever song I have composed, I gave it to I permitted T-Series to enjoy to enjoy this copyright. So now I'm a service provider. I'm a music composer. Recipient is music company. Now they have told, as a music composer, I'm not required to collect the GST from the music company and pay it to the government. Directly, music company is only directly required to pay the GST amount to the government under reverse charge mechanism. Or you are a photographer. You have captured some images. You have taken copyright of that. And that images, you have given that copyright to be used to any producer. Then also that producer being the recipient, they are required to pay the GST under reverse charge mechanism. Or you are an artist, you have drawn some painting, etc., something like that, and you gave it to some producer for exhibition. Now you are providing services, you are permitting the enjoyment, you are permitting the use of your copyright, which is a painting, to some producer for display at an exhibition. So now if you are receiving consideration and you are providing services, this activity also will cover under reverse charge mechanism. As an artist, you are not required to collect any GST from that producer and pay to the government. Directly producer only will pay it to the government. Understood everybody? So very simple. If you are a music composer or you are a photographer or you are an artist, you are permitting the use of copyright relating to some dramatic artistic work to some music company or producer. You are a service provider, service recipient is that music company or producer. This activity will get covered under reverse charge mechanism. This music company or producer, whoever has received that services, they will directly pay the GST amount to the government. Able to understand everybody? Next one. Next we will try to understand this one also. Author. If I'm an author, for example, I have written some book. I have some content. I have written some book, and this book I have given it to the publisher. For example, there is a Penguin company. Penguin is one of the popular publishers. So I have written the book and I gave the rights of my book. I have a copyright against my book. I have written some novel. I have taken the copyright of that novel. That copyright I have given it to some publisher like Penguin. Penguin is a book publisher. I have given that right to the copyright to the publisher. So I am providing the services of permitting the publisher to use my content. So here I am the service provider. I am an author. Let me put it this way. So I am an author. I have taken a copyright for my book. Now there is a Penguin company. Penguin company is a publisher. I permitted this Penguin company. So if you read the terminology here, supply of services by an author. As an author, I am providing services by transfer or permitting the use of enjoyment of a copyright. I have written a novel, I have taken a copyright for that. I am permitting the use of that copyright to some publisher who is located in a taxable territory. Now they are telling this activity will get covered in the reverse charge mechanism. As an author, I am permitting the use of my copyright. I am a service provider. Publisher is a service recipient. But this activity is covered under reverse charge mechanism. In this case, the recipient being the publisher, he will directly pay the GST amount to the government under reverse charge mechanism. However, an author can choose to pay the tax under forward charge mechanism. So which means as an author, you voluntarily you have taken the registration, you took the registration under GST and you have opted for forward charge mechanism. You told, hey, I am a registration, I will take the registration, I will only pay the GST under forward charge mechanism. So if you are an author, if you are a registered person and you voluntarily come forward and say, no, I will only pay the GST under forward charge mechanism, then the recipient need not pay the GST under reverse charge mechanism. As an author, if you voluntarily come and say, I will take the registration, I will pay the GST on my outward supplies, I will collect it from the publisher and pay it to the government. If you voluntarily come forward, take the registration and pay the GST under forward charge mechanism, then RCM will not become applicable. Here option has been given. Guys, in the previous three cases, whatever we have seen, insurance agent, recovery agent, this artistic music composer, photographer, artist, these are mandatory. Option is not given. But in the case of author, they have given an option. If you are an author, generally RCM, but we are also giving you an option. If you are an author, you want to opt for composition, if you are an author, if you take registration by yourself and you voluntarily want to pay forward charge mechanism, then you can do it. We will not make a compulsion on the recipient. You happily collect the amount from the recipient and pay it to the government. So in this case only they have given option. That option has not been given in the previous cases, whatever we have discussed. So whatever they have mentioned, unless they have given an option, it is mandatory. If they have given an option, then it becomes optional. So that's what they say. However, an author can choose, not compulsion. He can choose to pay the tax under forward charge if he has taken registration and he has filed a declaration with the government. Sir, I am an author. I am permitting the use of my copyright to some publisher. This activity is covered under reverse charge mechanism. Sir, but I will take the registration. I will pay the tax under forward charge mechanism. That a prescribed form you have to submit. And he has to exercise the option to pay the tax under forward charge mechanism, and he has to comply with all the provisions of the GST. And whatever invoice you are giving, whatever invoice as an author you are giving, in that invoice you have to mention, I am only paying the tax under forward charge mechanism. My publisher need not pay the GST once again under reverse charge mechanism. That declaration also you have to give in your invoice. And one more thing also they say here, you shall not withdraw from the said option within a period of 1 year. You are an author. You voluntarily came forward and told, no, I don't want to go for reverse charge mechanism. I don't want my publishers to have a burden. I will only pay the tax under forward charge mechanism. You came forward. After 1 month, you want to opt out of forward charge mechanism. After 1 month, you want to opt out of forward charge mechanism. Is it permissible? No. If you once you have exercised the option for a period of 1 year, you only require to pay the tax under forward charge mechanism. Able to understand everybody? Now, one more simple activity. See, RBI will be there. RBI will have a overseeing committee. Some members will be there. RBI will have one committee. They have given a name called overseeing committee. Some professionals will be there in the committee. Now, what that members in the committee will do is they will study the banking structure and give some recommendations to the RBI. So these members of overseeing committee, they are providing services to the RBI. RBI will pay consideration to the members of this overseas committee. Now they told this activity also will get covered under reverse charge mechanism. Who is service provider? Members of overseeing committee. Who is service recipient? RBI. They told reverse charge mechanism. That means RBI only directly required to pay the tax under reverse charge mechanism to the government. So supply of services by the members of overseeing committee to Reserve Bank of India. These activities will get covered under reverse charge mechanism. And one more activity, services provided by directors. Services supplied by a director of a company to a body corporate which is located in a taxable territory, even that services also will get covered under reverse charge mechanism. Sir, what they are trying to say here, sir? Assume that there is a company, Reliance Industries Limited. Okay, there is a director of a company. Now director is also providing the services to the company, director will provide the services to the company, and in return company will pay remuneration to the director in the form of sitting fees, etc. They will pay the remuneration. So now who is the service provider? Director is a service provider. Who is the service recipient? Body corporate. Body corporate, like company, generally they are the service recipient. Now they are telling service provider is a director, service recipient is body corporate. So this director will not collect any GST from the company and pay to the government. This body corporate is directly required to pay the tax under reverse charge mechanism to the government. So services supplied by a director to a body corporate will be covered under reverse charge mechanism. But here there is one important point from the examination perspective. See, whether RCM will become applicable or not in case of supply of services by the director, we need to see what kind of relationship exists between the company and the director. What kind of relationship exists between company and director? See, if the director is a whole-time director, like is a employee, if there exists employee-employer relationship, if there exists employee or employer relationship, if director is an employee of the company, then that activity will not be treated as supply only. Why? Because in Schedule 3, if you remember, services provided by employee to the employer in the course or furtherance of employment, that is neither a supply of goods nor supply of services, that activity will not come under supply, that activity will not fall under GST. So we need to check, is a director an employee or is a director rendering professional services? So if you came to know that director is providing services to the body corporate, but the relationship between them is in the form of employee-employer relationship, then in that case, that activity will not come under supply only. GST itself will not be there. No forward charge mechanism, no reverse charge mechanism. However, if the services provided by the director are in the nature of professional services, there is no employee-employer relationship between director and the company. The services provided by the director are in the nature of professional services. If they are in the professional services, yes, then it becomes a supply. Then RCM will become applicable. Then the company will pay the GST to the government under reverse charge mechanism. Sir, how to know whether there is a employee-employer relationship? Is the director is an employee of a company or is he providing professional services? How we can know, sir? You can check under which section TDS is getting deducted. Under which section TDS is getting deducted. See, the TDS of the employee, whatever remuneration which is getting paid to the director, if the TDS is getting deducted under section 192, see, company is paying remuneration to the director and TDS they are deducting under section 192, that means they are deducting TDS under salary provision. In that case, director is an employee of the company. It will not fall under supply, no GST. However, company is paying remuneration to the director, but TDS is getting deducted under section 194J. TDS is getting deducted under section 194J. Then director is not an employee. He is providing professional services. Then it will come under supply. Then it will fall under reverse charge mechanism. So in case of services provided by director to the company, whether reverse charge mechanism will come or will not come, it depends on what is the relationship between the director and the company. If there exists employee-employer relationship, it will not fall under supply, no GST, no RCM, no FCM. However, if the services provided by the director are professional in nature, then it will be treated as supply of service. RCM will become applicable. Body corporate is only required to pay the GST amount to the government. Sir, how to decide employee-employer relationship or professional services? Check under which section TDS is getting deducted. If it is getting deducted under 192, employee-employer. If it is deducted under 194J, it is professional service. It is what? Professional service. Understood, everybody? So this is what regarding services provided by director to a company or body corporate located in a taxable territory. Now, few more things we'll try to understand. Services supplied by individual direct selling agent other than a body corporate, partnership or LLP firm to bank, NBFC located in a taxable territory. Sir, what they are trying to say here? So if there is a direct selling agent, so direct selling agent in the sense, for example, there is a bank, there is a financial institution. See, they come up with new kinds of loan. Banks will have different kinds of loan. Now what the direct selling agent will do is, on behalf of the bank, he will go and sell that products of the bank to the customers. Nothing but he will go to the different people and he will explain the new loans, etc., which has released by the banker. So now here direct selling agent is providing services to the bank. That means on behalf of the bank, he is going to the customers, explaining the terms and conditions of the loans, and he will take them to the bank, get them a loan from the bank. So he is providing services to the bank. He is explaining, he is acting on behalf of the bank. He will go to the customers, explain the terms and condition. In return, the bank will pay consideration in the form of commission, etc. Whatever it is, they will pay some consideration to the direct selling agent. So direct selling agent is providing services to the bank or financial institution, and in return, bank will pay him consideration. Now they are telling, if the direct selling agent who is other than body corporate, other than partnership firm, other than LLP, then these activities will be covered under reverse charge mechanism. So and so bank and financial institution, whoever is receiving the services of the direct selling agent, they will only pay the amount of GST under reverse charge mechanism to the government. However, if a body corporate, if there is some company X Limited, they are providing direct selling agent services to the bank or financial institution, then RCM will not become applicable. This body corporate only will collect the GST and pay to the government. However, if the direct selling agent is a partnership firm, then also forward charge mechanism. If the direct selling agent is a LLP, then also forward charge mechanism. So if the direct selling agent is other than body corporate, other than partnership firm, other than LLP, then only those activities will get covered under reverse charge mechanism. If the direct selling agent is a body corporate, is a partnership firm, or is a LLP, then RCM will not become applicable. Those services will be taxed under forward charge mechanism only. Direct selling agent only will collect the GST from the customer, pay to the government. Clear? Able to understand everybody? Next one. Next activity. Services provided by a business facilitator to a banking company located in a taxable territory. Sir, there is a banking company. There is a what? Banking company. Very carefully you have to listen here. So there is a banking company. Assume SBI is there or any other Axis Bank is there. They have appointed one business facilitator. What they have done? They have appointed one business facilitator. See, what is this business facilitator is? Let me put it this way. He is also like one agent on behalf of the bank, you can say. You can also say he will be an agent on behalf of the bank. See, like for example, if the bank wants to open the, if the bank wants some new customers to open the deposits, they will ask the business facilitator to go and explain the customers, bring them to the bank. Bring them to the bank. For example, this bank is there, Axis Bank. They want to get new customers. What they will do is they want to get more accounts opened in the Axis Bank. They can't go and do the marketing on their own. What they will do is they will appoint a business facilitator. Now this business facilitator on behalf of the bank, he will go and do the marketing for the bank, bring the customers to the bank and make them open their accounts with the bank. So these services we call them as business facilitator. Now the business facilitator on behalf of the bank, he will go to the customers and explain. No, that means business facilitator is providing the services, and in return the banking company will pay the consideration to the business facilitator. They told this activity will get covered under reverse charge mechanism. Being the banking company which is a recipient of the service, they are only required to pay the tax to the government directly under reverse charge mechanism. They are only required to make the payment of tax to the government under reverse charge mechanism. So that is what they say here. Services provided by business facilitator to a banking company located in a taxable territory. Now one more thing, services provided by an agent of business correspondent to a business correspondent located in taxable territory. Very interesting thing here. Listen carefully. Assume there is a banking company. Now banking company will appoint someone called business correspondent. Sir, who is business correspondent? See, business correspondent is little bit more extended version of business facilitator. See, what business facilitator will do is he will go and motivate the customers, bring them to the bank. But what business correspondent will do is he will do the transactions on behalf of the bank also. For example, now business facilitator, what he will do, if any customer wants to open the bank account, if any customer wants to deposit the money in the bank, he will bring that customer to the bank and make him deposit with the bank directly. But what business correspondent will do is, if any customer want to deposit the money, he will get that money and he will go and deposit the money on behalf of this customer. Able to understand? So some much more advanced services, even more services will be provided by business correspondent. So assume that there is a banking company. Now, to the banking company, someone is providing business correspondent services. Now, what this business correspondents will do is they will have further agents. Business correspondent will have further agent. So there is a agent of business correspondent. Now, agent of business correspondent will provide the services to business correspondent, and the business correspondent will pay the consideration. Now they are telling this wing of this transaction is covered under RCM. This wing is covered under RCM. The services provided by agent of business correspondent to the business correspondent, this is covered under RCM. In this case, business correspondent will pay the tax amount directly to the government, being a recipient. But the services provided by business correspondent to the banking company, these are not covered under reverse charge mechanism. These are covered under forward charge mechanism. So the services provided by agent of business correspondent to the business correspondent, this is covered under reverse charge mechanism. The services provided by business correspondent to the banking company, this is covered under forward charge mechanism. But when we talk about business facilitator, the services provided by business facilitator to the banking company will be covered under reverse charge mechanism. However, assume that there is an agent of business facilitator. He is providing services to business facilitator. This is not covered under forward charge mechanism. This is not covered under reverse charge mechanism. This is covered under forward charge mechanism only. Whereas services provided by business facilitator to a banking company, this is covered under RCM. Able to understand? The reverse applies for business correspondent. Services provided by business correspondent to the banking company, this is under forward charge mechanism. Whereas services provided by agent of business correspondent to the business correspondent, this is covered under reverse charge mechanism. The reverse applies here. Understood? So just have this snippet, have the snapshot of this diagram, whatever I have drawn here. So please do revise it one day before the examination. This point you have to compulsorily revise. Most of the students will do the mistake here. So once again I am repeating. Services provided by business facilitator to the banking company, reverse charge mechanism. Services provided by agent of business correspondent to the business correspondent, this is covered under reverse charge mechanism. Understood? Clear and comfortable, everybody? Understood? So this is what regarding services relating to business facilitator and business correspondent. Able to understand, everybody, till here? See, let me cover one more related exemption also here. See, the services of business facilitator, business correspondent, or an agent of business facilitator or an agent of business correspondent, if those services are provided in relation to rural areas, all that services will be exempted. No forward charge mechanism, no reverse charge mechanism. So generally, these services are taxable. So what I was saying, generally, whenever the business correspondent provide the services to the bank, or agent of business correspondent provide the services to the business correspondent, all these services are taxable. Same with the business facilitator. When a business facilitator provides the services to the banking company, when an agent of business facilitator provides the services to business facilitator, those services are generally taxable. But in the exemptions, they have given one specific exemption here. If the services of business facilitator, business correspondent, agent of business facilitator, or agent of business correspondent is in relation to rural areas, then all that services will be exempted. That means if the services are related to urban areas, then it will be taxable. Then we have to see whether forward charge mechanism or reverse charge mechanism. But the services of business facilitator, business correspondent, agent of business facilitator, agent of business correspondent, if provided in relation to rural areas, they will be completely exempted. They will be completely exempted. So let us proceed ahead and try to understand remaining cases where the reverse charge mechanism will become applicable. So till now we have covered a few services we have covered. So let me talk about a few more things. So now we will see supply of security services. Supply of security services. See, if someone is providing security services, when I say security services, what do I mean by that is services provided by way of supply of security personnel. We will have security guards, no? So generally there will be some people who will provide you with the security guards. So that is what is the meaning of security services. So what they are trying to say here is, so if some person is there, let me put it this way. So there is a person, he is a supplier. See, what he is doing is he is providing security services. He is providing what? Security services. Sir, what do you mean by security services? He is providing security personnel to some business entity, Then they are telling these activities will be covered under reverse charge mechanism. these activities will be covered under reverse charge mechanism. Who is service provider? Service provider is a person whoever is providing security services. Whereas who is recipient? Business entity is a recipient. They are telling recipient will be required to pay the tax under reverse charge mechanism. But however, they say some more minute details here. Let us try to pay attention on that also. So services, security services, that is services provided by way of supply of security personnel provided by a person other than body corporate. Other than body corporate. So what do they say here? Supplier should be other than body corporate, other than company. That means if an individual, partnership firm, if these kind of people are providing security services, then only the activity will come under reverse charge mechanism. If the body corporate, if it is a body corporate which is providing the security services, then RCM will not become applicable. Forward charge mechanism only will become applicable. In which case, when the person whoever is providing security services, he is a body corporate. It is a body corporate. One more condition also they say here, recipient should be a registered person located in taxable territory. Recipient should be a registered person. I told business entity here, but let me change it, change my perspective here. If the recipient, the person whoever is receiving the security services, if the recipient is a registered person, then only RCM will become applicable. Then only RCM will become applicable. Sir, two cases. Sir, assume that there is a supplier, he is other than body corporate. He is other than body corporate. He is providing security services to an unregistered person. Recipient is unregistered. Will it get covered under RCM? No, it will not get covered under RCM. It will get covered under forward charge mechanism. It will get covered under forward charge mechanism. But however, this person will collect the GST and pay to the government only when he is registered. That thing anyhow will be there. So always you have to remember with regard to security services, supplier should be other than body corporate, recipient should be a registered person located in the taxable territory, then only RCM will come, then only that recipient will be required to pay the amount of GST to the government directly. Understood? However, nothing contained in this entry shall apply to a department, establishment of the central government or state government or union territory, a local authority or government agencies which have taken registration only for the purpose of deducting of tax under section 51. And also, if the recipient is a registered person but is opting to pay the tax under composition scheme, for that person also RCM will not become applicable. So two things I have told here. Number one, in order for RCM to become applicable, recipient should be a registered person. Sir, recipient is a registered person, sir, but he is a casual taxable, he is a composition dealer, sir. Recipient is a registered person, but he is a composition dealer, sir. Then also RCM will not become applicable. When I say RCM not becoming applicable, FCM will become applicable. Forward charge mechanism will be there. Similarly, sir, recipient is registered person, but recipient falls under any of this category, a department or establishment of central government, state government, union territory, local authority or government agency who have taken registration only to deduct TDS under section 51. If the recipient is registered person, but they fall under any of these categories, then for RCM will not become applicable, forward charge mechanism will become applicable. Able to understand everybody, whatever I am trying to say here? Everyone able to understand, able to get whatever I am trying to convey here? So this is what regarding security services. Understood everybody? Next one. So now let us talk about few more services. So we are done with this body corporate also. We are done with services of the director. All these things we are done. So now let me talk about few more cases. We'll be talking about services provided by an individual advocate, including a senior advocate or firm of advocates. So if an advocate or a firm of advocates, if they are providing legal services to the recipient, then they are telling, then the recipient is required to pay the tax under reverse charge mechanism. What they are saying, the service provider, who is a service provider? Individual advocate or a senior advocate. Senior advocate means a designation given to some lawyers who are having some minimum number of years of experience. That people will be given an extra designation called senior advocate. So services provided by individual advocate, senior advocate, or there could be a partnership form of advocates. If these people are providing the services, they are service provider, but they are telling here FCM will not become applicable, RCM will become applicable. That is the recipient, whoever is receiving the services of individual advocate, senior advocate or form of advocates, that recipient is required to pay the tax under reverse charge mechanism. But however, there is something which we need to understand here. There is something which we need to understand here. There are some exemptions relating to that. There are some exemptions relating to legal services. So this I will try to cover here simultaneously. So when it comes to legal services, in which cases reverse charge mechanism will become applicable, in which cases forward charge mechanism will become applicable, when services are exempted, we will try to understand it here itself. So let us talk about legal services. See, if the services are provided by individual advocate other than senior advocate, I'm not talking about senior advocate. If the services are provided by individual advocate other than senior advocate or a firm of advocates. So there is an individual advocate other than senior advocate, or there is a firm of advocate, and they are providing services, and the recipients are different people. I have given recipients under different categories. If depending on the recipient, we have to decide whether the services will be taxable, exempted. If taxable, RCM or FCM, it depends on who is the recipient. Sir, an individual advocate other than senior advocate or a firm of advocate, they are providing legal services, but the recipient is another advocate or firm of advocate. One advocate might provide services to another advocate. No. So if a individual advocate other than senior advocate or a firm of advocates, if they are providing the services to another advocate or firm of advocates, they are telling those services will be exempted. No tax, no RCM, no FCM, services are completely exempted. Sir, an individual advocate other than senior advocate or firm of advocates, they are providing services but to other than business entity. They are providing legal services not relating to business entity. Recipient is other than business entity. Sir, what do you mean by other than business entity? Assume that there is a person. So he's a lawyer. Okay, advocate is there. Now there is a recipient. There is a person. This person is receiving services of lawyer. What legal services he is receiving is, this person wants to fight his divorce case. That's why he appointed a lawyer. So here advocate is providing services. Is a recipient a business entity? No. Here the recipient is receiving the services for fighting is a divorce case, not a business entity. So if the recipient is other than business entity, then also they are telling it is completely exempted. Why? Because legal service is necessity of the people. No, legal services should not become costly. So that's why they have told, if you are receiving the services of an individual advocate or firm of advocate, but the recipient is other than business entity, then also the services are exempted. Next one. Sir, recipient is central government, state government, union territory, local authority, government authority or government entity. If the recipient falls under any of these cases, see central government, state government, local authority, they also will appoint the lawyers for fighting some legal cases. If these people are recipient, then also the services will be exempted. Sir, services are provided by individual advocate or firm of advocate, but the recipient is a business entity only. But here they have told two cases. Recipient is a business entity whose aggregate turnover in the preceding financial year is less than or equal to applicable threshold limit. Like in some cases we have 40 lakh rupees of applicable threshold limit. In some cases we have 20 lakh rupees of applicable threshold limit. In some cases we have 10 lakh rupees of applicable threshold limit for taking registration. Do you remember the registration chapter which we have revised? So depending upon the state, depending upon which activity you are engaged into, in some states the applicable threshold limit is 40 if you are exclusively engaged in supply of goods. In some cases it is 20 lakhs. In case of MMNT it is 10 lakh. So if you are providing legal services, if an advocate is providing legal services to a business entity only, but it is a small business entity. Sir, what is the criteria for small business entity? If that business entity is having aggregate turnover, not in the current financial year, in the previous financial year, if that business entity's aggregate turnover is within the applicable threshold limit, whatever may be the case, 40, 20 or 10, whatever it is, depending on that respective state, if the aggregate turnover in the preceding financial year is less than the applicable threshold limit, then also the act is telling those services are also exempted. On that also we don't want GST. However, if the services are provided by an individual advocate other than senior advocate or firm of advocates to a business entity whose aggregate turnover in the preceding financial year exceeds the applicable threshold limit of 40, 20 or 10 depending on the case, in that case these services will be taxable, and in this case a reverse charge mechanism will come. That means business entity itself has to pay the GST amount to the government directly. Understood? And if you pay attention, in rest of all the cases the exemption has been given. Individual advocate other than senior advocate or firm of advocates, they provide services to another advocate or firm of advocates, exempted. No GST, no forward charge mechanism, no reverse charge mechanism. Sir, individual advocate or firm of advocate, they are providing services to other than business entity. not a business entity. Recipient is other than business entity. Then also government told exempted. Sir, recipient falls under central government, state government, union territory, local authority, or government entity. Exempted. We don't want GST on it. Sir, recipient is business entity, sir, but it's a small business entity. Sir, what is the criteria for small business entity? If its aggregate turnover in the preceding financial year is less than the applicable threshold limit required for registration, then the government told, okay, we don't want GST. In this case also exempted. And who is left out? Business entity whose aggregate turnover in the preceding financial year exceeded the applicable threshold limit required for registration. That means they are already a registered person. So these people will be required to pay the tax under reverse charge mechanism. See here in this table, I was telling other than senior advocate. Sir, why other than senior advocate? Why? Because if the services are provided by a senior advocate, there is a little bit of change. See, these 4 cases remain the same. Even in the case of senior advocate also, 4 cases remain the same. If the senior advocate is providing services to other than business entity, exempted. If the recipient is central government, state government, union territory, local authority, government entity, government authority, exempted. Senior advocate providing business services to a business entity, that is small business entity, then also exempted. Senior advocate providing the services to a business entity whose aggregate turnover exceeds 40 lakh rupees or 20 lakh rupees or 10 lakh rupees, that is applicable threshold limit in the preceding financial year. Then they are taxable, but RCM will become applicable here. See, in one case, there is a slight difference. What is the difference is, sir, senior advocate providing services to another advocate or form of advocates. Senior advocate is providing services to another advocate or form of advocates. Then these services will be taxable, and these will be taxable under forward charge mechanism. These services will be taxable under what? Forward charge mechanism. So this is the only change in case of individual advocate other than senior advocate or form of advocates and the services provided by senior advocate. Once again, I am telling, very important here. So if the services are provided by individual advocate other than senior advocate or form of advocates to another advocate or form of advocate, then they are exempted. However, if a senior advocate provides the services to another advocate or form of advocates, then those services will be taxable under forward charge mechanism. Able to understand? Remaining 4 cases are common when it comes to senior advocate or normal advocate. Remaining 4 cases will remain common. Only first paragraph will change. So this chart anyhow will be shared with you. Please have a look at it once. Before examination, please do refer it once. Understood, everybody? So this is what regarding reverse charge mechanism relating to advocate services. So second point also I have covered. Similarly, third point, services supplied by arbitrary tribunal to a business entity. If an arbitral tribunal is providing services to a business entity, sir, what are arbitral tribunals? Nothing but outside of the court, some people want to settle their cases. See, our judicial system, we know, our judicial system takes a lot of time. So sometimes what people will do is they want to settle the cases outside of the court. That that outside entities, we call them as arbitral tribunal. They do the settlements outside of the court. Not rowdy settlements here. Authorized settlements only, not like some rowdy, not like some gunda rowdy is coming and doing the settlement. I am not talking about those kind of settlements. Arbitrary tribunals are legalized way of settlements. So services provided by an arbitral tribunal to a business entity. Sir, who is providing services? Arbitral tribunal. Who is recipient? Business entity. Business entity is required to pay the tax to the government directly under reverse charge mechanism. However, relating to this also, there is an exemption. Relating to arbitral tribunal also, there is some exemption. Let me try to explain the exemption also here. Same exemption, guys, same like advocates only. Services are provided by arbitral tribunal if the recipient is other than business entity. If the recipient is other than business entity, government told, we don't want tax on it, we will exempt that service completely. Arbitral tribunal is providing services, but the recipient falls under central government, state government, union territory, local authority, government authority or government entity. Then also government told, we don't want GST on it, we will exempt you. Sir, arbitral tribunal is providing services to a business entity, sir, but it is a small business entity. How to decide small business entity? Same criteria, like I have told you in the case of advocate services. If arbitral tribunal is providing services to a business entity whose aggregate turnover in the preceding financial year is within the applicable threshold limit, then also government told, okay sir, we don't want tax on it, we will exempt you. So who will be left out? Arbitral tribunal providing the services to a business entity whose aggregate turnover in the preceding financial year has exceeded the applicable threshold limit. That means they would have already taken registration. Only for that people the services are taxable, and that too under reverse charge mechanism. The recipient being a business entity, they are required to pay the tax amount directly to the government. And in remaining 3 cases, those services will be exempted. Understood? So this is one more activity covered under reverse charge mechanism. Everybody able to understand? So let us see. See, these are very important things, guys. These are the in most of the cases, this is where the questions will come in the examination. But still we have few more services also left. Let us try to understand in a detailed manner. Let us try to understand them also in a detailed manner. So let us talk about the fourth point here. Services provided by way of sponsorship to body corporate or partnership firm. So if an entity, if a person, if they are providing sponsorship services, supplier is providing sponsorship services to a recipient, and if the recipient is body corporate or partnership firm, then only RCM will come. Then only RCM. Sir, recipient is a individual person, sir. Recipient is not a body corporate, recipient is not a partnership firm. Then forward charge mechanism only. So services of sponsorship where the recipient is either a body corporate or a partnership firm, then only reverse charge mechanism will become applicable. Able to understand, everybody? So now let me try to explain the provisions of entry number 5 and 5A, which is talking about services provided by central government, state government, union territory or local authority. And in these kind of services which are provided by government and government related entities, when reverse charge mechanism will be applicable, when forward charge mechanism will be applicable. So that is actually covered in entry number 5 and 5A. And when it comes to entry number 5 and 5A, there is actually recent amendment which has taken place, which is applicable for your May 2024 examination. So when it comes to these services which are supplied by central government, state government, union territory or local authority, concerning entry number 5 and 5A, there is a recent amendment which has taken place, which will be applicable for your May 2024 examination. So if you want to understand that amendment in a detailed manner, you can watch the amendment related video. But anyhow, here I will try to summarize once again. Here I will try to revise that amended reverse charge mechanism provisions here once again. And what actually I will try to do here is I will try to talk about services which are provided by central government, state government, union territory, local authority, when they will be exempted, when they will be taxable, if they are taxable under forward charge mechanism or under reverse charge mechanism. All I have tried to summarize in the form of one simple chart. All I have tried to summarize in the form of this simple chart. So this chart, whatever we have, this chart will address about services provided by central government, state government, union territory or local authority, when they will be exempted, when they will be taxable, in case if they are taxable, whether they will be taxable under forward charge mechanism, whether they will be taxable under reverse charge mechanism. So that detailed comprehensive summary I have included in this chart. So in this chart, I'm going to cover about this a few content of that reverse charge mechanism. Along with that, I'm also trying to cover the exemptions relating to services provided by central government, state government, union territory, local authority. So both we are actually trying to cover here. So what we are trying to cover here, we are trying to talk about when the services will be covered under reverse charge mechanism. Along with that, exemptions relating to services provided by government and government related authorities, both we are going to cover in this one single chart. So let us try to revise it. So, and once again, I'm telling you guys, this contains some amended provision. Here there is an amendment. So high chance that it will be tested in your examination. So this particular chart is trying to summarize services provided by central government, state government, union territory, local authority, whatever services which are provided either by central government, state government, union territory, local authority. So when the services are provided by these entities, when they will be taxable, when they will be exempted, if they are taxable, whether they will be taxable under forward charge mechanism, whether they are taxable under reverse charge mechanism. So all that I have tried to comprehensively provide it here. So first let us try to understand it. In case if the services are provided by central government, state government, union territory or local authority to another central government, state government, union territory or local authority. That means between the governments only services are getting provided. If one government, central government is providing services to state government providing services to central government. So like that, if the services are provided by central government, state government, union territory or local authority to another central government, state government, union territory or local authority, then what we have to see? We have to see whether services provided is in the nature of specified services. Whether services provided is in the nature of specified services. If it is in the nature of specified services, then they will be taxable under forward charge mechanism. If it is any other services other than specified services, if any other service is provided, then it is completely exempted. But before that, first we have to know what are these specified services. What are these specified services? So specified services I have listed down here. When I say specified services by the government, here three kinds of services are given. Services provided by Department of Post. and Ministry of Railways. See, this Ministry of Railways is actually amendment. The services which are provided by Department of Post. Post office will provide various kinds of services, no? So that will fall under specified services. And services provided by Ministry of Railways, nothing but Indian Railways. The services provided by Indian Railways. Similarly, services in relation to an aircraft or a vessel inside or outside the precincts of a port or an airport. In case if the government is providing any services to an aircraft, that is aeroplanes, or if the services are provided by government to any vessel, nothing but ships and all, whether inside the port or outside the port, that services also will fall under specified services. Similarly, transportation of goods or passengers. If the government is providing goods services by way of transportation of goods or passengers, like RTC, transportation of passengers by RTC, etc. So transportation of passengers or goods. These 4 services provided by the government will be treated as specified services. So whenever I say specified services provided by government, I'm actually referring to these 4 specified services. What are they? Services provided by Department of Post, services provided by Ministry of Railways, services provided by government in relation to aircraft or vessel, and services provided by way of transportation of passengers or goods. So these 4 will fall under specified services. So now what they're actually trying to say is, if one government has provided services to another government, and if these services are specified services, that means government has provided post office services to another government, or government has provided transportation of goods to another government. So like that, if one government has provided services to another government, and if the services provided fall under any of these 4 categories, any of these 4 specified services, then what will happen? Then those services will be taxable. And on that services, tax has to be paid under forward charge mechanism. On that services, tax has to be paid by that concerned government, whoever is supplying that services. Supplier will collect the amount of GST from the recipient, pay to the government. So under forward charge mechanism, the tax will be payable. Other than these 4 specified services, if any other service is provided by government to another government, then the GST Act says it is exempted. All other services are exempted. No GST is required to be paid. If there is no GST is required to be paid, there is no need to discuss about FCM or RCM. Why? Because exempted means there is no requirement to pay the GST only. So this is what in case if the services are provided by one government to another government. So in case if one government is providing services to another government, and if they fall under specified services, they will be taxable under forward charge mechanism. Other than specified services, if any other service is getting provided, then they will be completely exempted outside of the purview of GST. So this is what will happen in case services are getting provided in between the governments. Next one, another category. In case if the services are provided by central government, state government, union territory or local authority, but the services are provided to non-business entity. That means government is providing services, but the recipient is not a business entity. That means recipient is a ordinary person like you and me. Recipient is not a business entity. So then we have to see what kind of services are provided to a non-business entity. In case if the services are provided by the government to the non-business entity are falling under specified services. Sir, what are specified services? Sorry. So just now, as I have explained, specified services are nothing but services provided by Department of Post, services are provided by Ministry of Railways, services provided in relation to aircraft or vessel, and services provided by way of transportation of goods or passengers. So if the government is providing any of these 4 specified services to a non-business entity, taxable. Always taxable. And how it will be taxable? Under forward charge mechanism. Like for example, I'm a non-business entity. I go to the Department of Post. I want to do some personal courier to my relatives. So I went to the post office. I made a speed post with the post office. So here the services are provided by government to me. I'm a non-business entity. But since it is falling under specified services, on that will GST come? Yes, GST will come under forward charge mechanism, which means post office, they will pay. I have to pay some money to the post office, no? So they will collect from me along with the consideration. GST also they will collect, and the post office will pay that to the government. Able to understand? Clear and comfortable, everybody? Apart from these specified services, if any other services are provided by the government to a non-business entity, then they are completely exempted. Apart from specified services, apart from these 4 specified services, if any other service is provided to a non-business entity, then they are exempted. Understood? Like for example, I want to get some birth certificate, death certificate. So these are all what? Services provided by government. to other than business entity. And do they fall under specified services? No, they do not fall under specified services. These are completely outside of the purview of the GST. GST will not be imposed there, exempted. Clear? So now I could say in both the cases the position is same. Services provided by government to another government or services provided by government to a non-business entity, the position is same. If they fall under specified services, they will be taxable under forward charge mechanism. If they fall under any others, if they fall under any other than specified services, then they will be completely exempted. Now the most important thing is, what if the services are provided by government, central government, state government, union territory or local authority to a business entity? So here government is providing services and the recipient of that services is who? Business entity. In that case, what will be the taxability and what will be exempted? If it is taxable, whether it is RCM or FCM, let us try to have a look at it. So services are provided by government to a business entity. Here also, first we need to check, is it specified services? See, specified services always taxable under forward charge mechanism. So if the government is providing specified services to a business entity, what are specified services once again? Services by Department of Post, Ministry of Railways, services in relation to aircraft or vessel, services provided by way of transportation of goods or passengers. So in case if the government is providing services to a business entity and if they are specified services, they will be taxable under forward charge mechanism. If you pay close attention here, whenever government is providing specified services to anybody, always it is getting taxed. That too under forward charge mechanism. Now, second one. Services are provided to business entity and the services provided are falling under renting of immovable property. That means government is renting an immovable property to a recipient who is a business entity. So government is renting out one immovable property to business entities. Then what will be the taxability position? Let us see. So in case if the government is renting immovable property, but that renting of immovable property is done by Ministry of Railways. So Ministry of Railways is also a part of government only, no? So if the Ministry of Railways is renting out immovable property to a business entity, that will always be taxable under forward charge mechanism. That means Ministry of Railways, since they are the suppliers providing the services of renting of immovable property, they will collect along with the consideration GST component from the recipient and pay that to the government. Clear? So in case if the government is providing services by way of renting of immovable property, if it is provided by renting of immovable property is done by Ministry of Railways, then it will be taxable under forward charge mechanism. However, renting of immovable property services are done by government, but not by Ministry of Railways, by other departments of the government, by other government entities. In case if the renting of immovable property is done by Ministry of Railways, we have seen it is always taxable under forward charge mechanism. In case renting of immovable property is done by government other than Ministry of Railways to a business entity, then what is the position? Then if the recipient is a registered person, other than Ministry of Railways, some other department of the government is renting out immovable property to a business entity and this business entity is a registered person, then that services will be taxable under reverse charge mechanism. Since the recipient is already registered as a recipient, he is required to pay the tax amount directly to the government under reverse charge mechanism. However, other than Ministry of Railways, some other government is renting out immovable property and if the recipient is unregistered, recipient is what? Unregistered, then also the service is taxable but under forward charge mechanism. Under what? Forward charge mechanism. So if you pay close attention, in case if I summarize it here, renting of immovable property by the government to a business entity is always taxable. Renting of immovable property by the government to the business entity is always taxable. But who will pay the tax? Whether it is taxable under forward charge mechanism or reverse charge mechanism, that is a question here. For that, we need to check whether it is whether the service is provided by Ministry of Railways. See, always taxable. Taxability is always there. But who has to pay the tax? That will be decided on the basis of who is supplying it, who is receiving it. So in case if the renting of immovable property is done by Ministry of Railways, irrespective of what is the status of the recipient, whether he is registered or unregistered, doesn't matter. In this case, the tax is always payable under forward charge mechanism. That means Ministry of Railways, being the supplier, they will collect the GST from the recipient, paid to the government. However, if the renting of immovable property is done by government other than Ministry of Railways, then we have to check what is the status of the recipient. If the recipient is a registered person, taxable under reverse charge mechanism. If the recipient is unregistered person, then it is taxable under forward charge mechanism. So one thing is very much sure, renting of immovable property to a business entity by the government is always taxable. But only question is who will pay that tax? That depends on who is providing it and what is the status of the recipient. Clear? So in case of services provided by central government, state government or union territory or local authority to a business entity, we have seen two cases. What will be the position in the case of specified services? What will be the position in case renting of immovable property services are getting provided? Sir, what if other services are provided? Other than specified services, other than renting of immobile property, if any other service is provided by government to the business entity, then what is the position? Let us see. So in case if any other service is provided by government to a business entity, first we need to check what is the consideration charged. If the consideration charged for any other service provided by government to the business entity is less than or equal to 5,000 rupees, then it is completely exempted. Other than specified services, other than renting of immobile property, if any other service is provided by government to a business entity, then we need to check what is the consideration first. If the consideration is less than or equal to 5,000 rupees, no need to pay GST on that. It is completely exempted. Clear everybody? Sir, what if consideration is more than 5,000 rupees? Sir, government is providing services to a business entity which is other than specified service, which is other than renting of immobile property, and the consideration charged is also more than 5,000. Then what we need to check? In that case, you need to check whether the aggregate turnover of that recipient does not exceed the applicable threshold limit in the preceding financial year. So the service is provided by government to the business entity. The consideration is more than 5,000 rupees. It is not a specified service. It is not a renting of immobile property. Then what we need to check is if the consideration is more than 5,000, then we have to check what is the aggregate turnover of that business entity in the preceding financial year. If the aggregate turnover of that entity in the preceding financial year is less than or equal to the applicable threshold limit, applicable threshold limit will be 40, 20 or 10 depending on what the entity is doing, which you have seen in the registration chapter. So in case if the consideration for in case if the consideration for the services provided by the government to the business entity is more than 5,000, next thing which we have to check is what is the aggregate turnover of that business entity in the preceding financial year. If it is less than or equal to applicable threshold limit, then the government is telling exempted. No GST, we will exempt you. So when the GST will become taxable, consideration is more than 5,000 and aggregate turnover is more than applicable threshold limit for this business entity. The aggregate turnover in the preceding financial year has exceeded the applicable threshold limit. Then that service will be taxable, and the tax on that services is required to be paid under reverse charge mechanism. The tax on that services is required to be paid under what? A reverse charge mechanism. Clear? So summary, if I have to say, in case if the services are provided by government to the business entity which are other than specified services, other than renting of immobile property, they will be taxed only when consideration is more than 5,000 and the aggregate turnover in the preceding financial year has exceeded the applicable threshold limit of that recipient. Then only the service will become taxable, and in that case the tax has to be paid by the recipient under reverse charge mechanism. Clear everybody? So this is what I have tried to summarize here. So this chart is going to summarize reverse charge, forward charge mechanism position. Along with that, I have also covered here exemptions as well relating to services provided by central government, state government, union territory or local authority. Clear? So you can refer to this one simple chart. This will set everything in place. This chart is definitely going to help you out in your preparation. Okay, so this will help you to quickly revise the entire concept regarding the services provided by central government, state government, union territory, local authority, when, who has to pay, when it will be exempted. Everything I have tried to summarize it here. This chart you can refer. And regarding this, I have explained in a detailed manner, even in the amendments video also. You can refer to that amendments video as well. There I have given even much more in-depth explanation regarding it. And this area contains amendment. Definitely a question will be tested in the coming examination for May 2024. Clear? So this is what I have tried to summarize, whatever content which is there in entry number 5 and 5A along with exemptions. I have tried to summarize it here. Clear? Comfortable everybody? Now let me explain about 5B, 5C. 5B, 5C also I will explain. Okay. So what is this 5B and 5C? Very simple guys. I will try to summarize in simple way. So assume that there is a business person. There is a normal person. He is having a piece of land. He's having a piece of land. Now he's transferring development rights in respect of this land. That is what we call it as TDR. Generally, this person is having this land, he will give it to the promoter will construct the apartment on it, and he will give some 2 flats 3 flats to this. That is what the meaning of transfer of development rights. So if there is a person, he is transferring the development rights, or he is giving floor space index. See, when your property gets demolished because of some government works and all, they will give you something called extra floor space index. The government will give you right to construct some extra floors. In one locality, assume that you are permitted to construct only 3 floors. You have constructed 3 floors, but because of some road extension, etc., they damaged a little bit of property. So what the government will do is, as a compensation, they will give you right to construct one extra floor, that we call it as floor space index. So this person is having floor space index, or this person is transferring TDRs, transfer of development rights, to a promoter. To whom? To a promoter. Now promoter will use this transfer of development rights, uses TDRs or FSIs for the construction of the projects. Now here, who is the supplier? This person is a supplier. What services he is providing? He is transferring development rights or floor space index. To whom? To the promoter. Who is the recipient? Promoter is the recipient. Now the government is telling it is very much difficult from the suppliers to collect the tax. Why? Because generally these people will be unregistered. See, if I have a piece of land, does that mean I am required to obtain registration? No. So that's why it will be difficult for the government to collect the tax from the suppliers in this case. So what they have told us, if someone is transferring the TD or FSIs to the promoters, these promoters are big people. It is very much easy for the government to collect the tax from them. So they told the promoter to directly pay the GST amount to the government under reverse charge mechanism. Now what some people started doing is, okay, if they get the transfer of development rights, or if they are transferring the floor space index, government is taxing it. So what some people have thought is, they stopped taking this TDRs. Instead, what they have done is, they have started taking the land on long-term lease. They have started taking the land on long-term lease. What some promoters, what some cunning fellows have done is, hey, if we are getting the development rights, government is asking us to pay the GST on reverse charge mechanism. No, we will do one thing. We will not get the development rights in respect of land. What we will do is, we will take the land on lease. We will take the land on lease for a long-term period, long-term duration, like 30 years or more. We'll take the we'll take the land on long-term lease. So why promoters are now taking the land on leases? To avoid the tax under reverse charge mechanism. Government identified this. Okay, these promoters are playing it safe. So what they have told is, they have covered this scenario also. They have covered this scenario also. Even if you take the long-term lease of a land, whatever premium you pay to that land owner, you will pay some premium or amount you will pay for taking that lease on land on lease. On that amount, the promoter is required to pay the GST under reverse charge mechanism. So that's what they have told here in 5C. So first they told, when you are transferring development rights or floor space index, then only RC. But what some promoters started doing is, they stopped getting the development rights. Instead, they have started taking the lands on lease, long-term lease. So government told, okay, on that also we'll make the RCM applicable. So long-term lease of land, 30 years or more, by a person against consideration in the form of upfront amount. So for giving the land on lease, you will get either a lump sum amount well in advance, or even you might be getting periodical rent. Even in that case also, the project, whoever is promoter is there, whoever that builder is there, whoever that promoter of the project is there, that person is only required to pay the tax under reverse charge mechanism. Understood everybody? Clear and comfortable? So now let me try to explain one more scenario. Services by way of renting of residential dwelling. Sir, what do you mean by residential dwelling? Very important, guys. I will try to cover here some exemptions also. So what is residential dwelling? A place or a building which has been meant for residential purposes. I have a house, not a commercial complex. I have a house. So I am giving this house. I have a house. Residential house I am having, not a commercial complex. I have a residential house. This residential house, I have given it on rent. This residential house, I have given it on rent to a registered person. To a registered person. Now the government is telling, on this activity, when you are taking even residential house, but if the recipient is a registered person, then also government told the recipient is only required to pay the tax under reverse charge mechanism. The recipient is only required to pay the tax under reverse charge mechanism. This I will spend some time. Very important from the examination perspective. Assume that I have a house. I have a house. Okay. Now I am a supplier. I am the landowner. I am the house owner. So what has happened is, one registered person, for example, myself being the registered person, I went to this landowner and told, sir, you have a house which is generally established for residential purposes. What I will do is, I will use this as my office. I will use this as my office. So I am a registered person I am coming to this landowner. This building is actually a residential dwelling. It is actually a house meant for residential purposes, an apartment flat meant for residential purposes. I am a registered person. I went to this landowner and told, sir, I want this house, but I will use this house for my office. I will open a CA office there. Now what you are doing is you are taking residential dwelling, and for business purposes you are taking the residential dwelling. Now the government is telling you are required to pay tax for this rental amount under reverse charge mechanism. I am a registered person. I am the recipient. No, landowner is providing the land, providing the residential dwelling on rent. He is a service provider. I am the recipient. So government told I am only required to pay the tax under reverse charge mechanism. I am only required to pay the tax under reverse charge mechanism. Let me give you one more scenario, one more example. Assume that there is a house meant for residential purposes only. I am a registered person. I am a chartered accountant. I am registered under GST. But I am taking this house not for putting my office. I am taking this house not for putting my office. Why I am taking this house on rent is to stay there along with my family. I want to stay there with my family. I am not taking for my business purposes. I am a proprietor. I am a sole proprietor. I am not a partner. I am a sole proprietor. I am an individual person. I have taken a house not for my business purposes, but for staying along with my family. I don't want to open the office there. I want to stay with my family. For my own personal purposes, I am taking this house on rent. Government told, on this we don't want tax. On this, GST is altogether exempted. GST is altogether exempted. So if you are a individual registered person, if you are taking the residential dwelling on rent, but you are taking it on your own account, not for your business, then you need not pay tax under reverse charge mechanism. That will be exempted. That will be exempted. Sir, what if the recipient is unregistered, sir? Assume that there is a residential dwelling. There is a residential dwelling. Some person has taken on rent. Unregistered person. Recipient is unregistered, then altogether it is exempted. If the recipient is unregistered, then altogether the service will be exempted. Guys, able to understand whatever I am trying to say here? See, if you are giving government act told, if you are a person who are taking, if you are a registered person and if you are taking any residential dwelling on rent, that will be taxable under reverse charge mechanism. But I told one more scenario. Sir, if the recipient is a registered person, if the recipient is a sole proprietor individual and he is a registered person only, he is taking the residential dwelling only, not for commercial purposes, sir. He wants to stay in that house along with his family, sir. Government told, okay, if that is the purpose, even though you are a registered person, we don't want any tax from you, we will exempt it. Sir, residential dwelling is given on rent. Recipient is unregistered person. Altogether exempted. Altogether exempted. So just remember this. Able to understand? So I have one extract. So let me not. I think even if you refer the exemption chapter, there also you'll be able to find the same scenario. That's what I have summarized here. But very, very important, guys. Important from the examination perspective. I hope everybody understood this. Clear and comfortable, everybody. Sir, what if it is a commercial space, sir? Sir, what if it is not a residential house? If it is a commercial space, then it is always taxable under forward charge mechanism. Always taxable. If you are renting out the commercial space either to a registered person or unregistered person, that will not get covered under forward charge. That will not get covered under RCM. That will not get exempted. Those services will be taxable under forward charge mechanism. They will be taxable. Reverse charge mechanism only in the case of residential dwelling only. Reverse charge mechanism for the case of residential dwelling only. If it is a commercial complex, if it is a commercial space for renting out, for example, there is a complex. In that complex, shops are there. If those shops are getting rented out either to a registered person or unregistered person, doesn't matter. Those activities always will be taxable under forward charge mechanism. We have to see exemption and reverse charge mechanism only in case of residential dwelling. Understood? Comfortable, everybody? So this is what regarding RCM for renting of immovable properties. So let us talk about a few more things which are left in this chapter. So hardly some 3-4 entries will be there which are left out. So let me try to complete that also. So coming to the first one, GTA services. Even GTA services, goods transport agency services also will get covered under reverse charge mechanism. Sir, when GTA services will be covered under reverse charge mechanism? So when the service provider, so let me put it this way here. So GTA services, when they will get covered under reverse charge mechanism. So there is a GTA service provider who is providing the services of transportation of goods, that too through road. So the supplier should be who? So supply of services by a good transport agency in respect of transportation of goods by road. not to every recipient. They have mentioned certain kind of specified recipients. The person, the recipient, whoever is receiving this GTA services, if he falls under specified recipients. Sir, who are specified recipients? Don't worry, we will talk about it. So if the recipient falls under specified recipients, then only those recipients are required to discharge their tax liability under reverse charge mechanism. Now the next question comes, sir, who will fall under specified recipients? Sir, who are actually the specified recipients? The list has been given here. Any factory registered under or governed by the Factories Act, not under GST Act, any factory, whether registered or unregistered under GST, but the factory registered under Factories Act. Similarly, any society registered under Society Registration Act, or any cooperative society established under any law, and also a partnership firm, whether registered or not, and any body corporate. See, I will talk about remaining things also. I will talk about the other recipients also, but let me put it this way. So I will explain one simple way to understand. So if the specified recipient is a body corporate, or if the specified recipient is a partnership firm, or the specified or the recipient of GTA services is any factory, or the recipient of GTA services is some society, or the recipient of GTA services is some cooperative society. Sir, if these recipients are already registered, no issue. If these recipients are already registered, since they are already registered, they will pay the GST amount to the government. If these people, body corporate, partnership firm, factory, society or cooperative society, sir, what if these people are not yet registered? If they are not yet registered, but if they are receiving GTA services, now they have to obtain the registration. Now they have to take the compulsory registration under GST and pay the taxes under reverse charge mechanism. So if these people are already registered, no issue. If these people are not yet registered, who? Body corporate, partnership firm, factory, society, cooperative society, if they are not yet registered under GST law, now they have to take a registration under GST law and pay the tax under reverse charge mechanism. And also, if the recipient is already registered person, no problem. If the recipient is a registered person, then also he fall under specified recipient, then also he is required to pay the tax under reverse charge mechanism. If they are already registered, anyhow they will pay the tax under reverse charge mechanism. But the above 5 people who even though unregistered, now they have to take the registration and pay the tax under reverse charge mechanism. If the recipient is registered already, no issue at all. Since he has already taken registration, he will pay the tax under reverse charge mechanism. However, that's what they say here in the fourth point. Any person who is already registered under CGST Act, IGST Act, SGST Act or UTGST Act, nothing but if the recipient is registered under GST law, then also he is required to pay the tax under reverse charge mechanism, including a casual taxable person. Even if you are a casual taxable person, you are a registered person, or you are a casual taxable person, even though you are a casual taxable person, still you are also required to pay the tax under reverse charge mechanism. So these people will fall under specified recipients. You have to remember it carefully. So who will fall under specified recipient? If the recipient of GTA services falls under these specified recipients, then only reverse charge RCM will become applicable. Sir, who are they, sir? Any factory registered under Factories Act, any society registered under Societies Registration Act, any cooperative society registered under any law, person registered under registered, that is nothing but already registered person, a body corporate, a partnership firm, and any casual taxable person. If the recipient falls under these 7 categories, then he will be considered as specified recipient, and these activities will be covered under reverse charge mechanism. That means these recipients are directly required to deposit the GST amount with the government. Understood? However, this entry is not yet over. They say one more thing here. However, reverse charge mechanism shall not apply to services provided by GTA in case of a department, establishment, central government, state government, union territory or local authority or government agencies which have taken registration under section 51 simply to deduct tax, not for making any taxable supply. Sir, recipient is a registered person. You told that if the GTA services are received by registered person, then that registered person is only required to pay the tax under reverse charge mechanism. But they told that the recipient is registered, but the recipient is falling under any of this category, a department or establishment created by central government, state government, union territory, local authority, or any government agency which have taken registration under section 51 only for the purpose of deduction of TDS. Even these people are registered and they are receiving the GTA services, still RCM will not become applicable. When the recipient is registered but he falls under any of this category. And one more thing also they say, see, GTA service provider came forward and told, sir, I want to opt for forward charge mechanism. You are telling reverse charge mechanism. No, you are telling GTA services will be covered under reverse charge mechanism. But they have given option to the GTA service provider. If they want to pay the tax on forward charge mechanism, they can exercise that option. So that means in GTA services, two options. If the service provider did not do anything, recipient is required to pay the tax under reverse charge mechanism. If the GTA service provider came forward and told, sir, I will take the registration, I will only pay the GST under forward charge mechanism, then there is no requirement of reverse charge mechanism. Like in the case of security services, that option has been given here also. So reverse charge not applicable if GTA opts for forward charge. That's what they are selling. That's what they're saying. If the supplier, GTA service provider, if he has taken registration and he has exercised the option to pay the tax on services of GTA, that means he has exercised. He went to the government and told, sir, I am a GTA service provider. I will take the registration. I will opt for forward charge mechanism. So then the supplier will issue a tax invoice. GTA service provider, if he has exercised the option to pay the tax under forward charge mechanism, he will give the tax invoice, and there also he will mention in the tax invoice, as a supplier, I am only collecting the GST. There is no obligation on the recipient to pay the GST under reverse charge mechanism. That declaration, that text also you are required to mention in the invoice. So this is what regarding RCM applicability in case of GTA services. Very simple, guys. Service provider, GTA. What services are getting provided? Services are getting provided relating to transportation of goods through road. When RCM will become applicable? Only when the recipient falls under specified recipients. Sir, who are specified recipients? Body corporate, partnership firm, factory, society, cooperative society, registered person, casual taxable person. However, in some cases, even though the recipients falls under this category, RCM will not become applicable. When, sir? The recipient is a registered person, but it is a department or establishment of central government, state government, union territory, local authority, or government entity who have taken registration only to deduct the TDS. If the recipient falls under that category, even though they are registered, GTA will not become applicable. However, there is also one more option given to the GTA service provider. If he comes forward voluntarily, take the registration and say, sir, I will pay the tax on forward charge mechanism. I don't want to opt for reverse charge mechanism. I will only pay the tax under forward charge mechanism. If the GTA service provider comes forward, takes the registration and undertakes the obligation to pay the tax under forward charge mechanism, then also RCM will not become applicable. Understood? So this is what regarding GTA services under reverse charge mechanism. Understood? So now I think we are only left with one more service, which is in case of renting of any motor vehicle which is designed to carry passengers. If I am renting out a motor vehicle to carry the passengers, then also RCM will become applicable. But however, here also some conditions. Services provided by way of renting of any motor vehicle designed to carry passengers. They are not talking about vehicles to carry the goods. They are talking about motor vehicle designed to carry passengers by any person other than body corporate. That means supplier should be other than body corporate, and cost of fuel is included in the consideration. One more condition for RCM to become applicable. Number one, supplier should be other than body corporate. Whoever is giving that motor vehicle on rent, that person should be other than body corporate. Number two, cost of fuel should be included in the consideration, and the recipient should be body corporate. Recipient should be who? Recipient should also be body corporate. And one more condition, the person whoever is providing the service of renting of motor vehicle, he should not give a invoice charging GST at the rate of 12%. See, what is that? What does that mean is, in case of motor vehicle, for renting of motor vehicle also, two rates of GST. See, if the person whoever is providing that motor vehicle on rent, he has one option. What he can do is he can charge 12% of GST under forward charge mechanism. However, if he doesn't opt for forward charge mechanism, then he has to collect the GST. Then the recipient himself will pay the tax at the rate of 5%. So what do I mean by this is, if we make a summary of this, number one, what are the conditions? Whoever is providing the motor vehicle for carrying of passengers on rent. Condition number one, other than body corporate. Supplier should be other than body corporate. Number two, cost of fuel included in consideration. Cost of fuel included in consideration. Third condition, recipient should be a body corporate. Recipient should be a body corporate. One more condition, this is third condition. One more condition also they are telling, the person whoever is providing this services of renting a motor vehicle, he should not give a tax invoice charging GST at the rate of 6%. 6 plus 6, 12. Effective rate will be 12%. So the person whoever is providing the services of renting of motor vehicle, he should not have given the tax invoice charging 6% of GST. In this cases, RCM will become applicable. The recipient, being the body corporate, he will pay the GST amount directly to the government at the rate of 5%. He will pay at the rate of 5%, that is 2.5% CGST, 2.5% SGST. At that rate, body corporate itself will directly pay the GST amount to the government. So these are the conditions. Able to understand everybody? 4 conditions, guys. Renting of services provided by way of renting of motor vehicle designed to carry passengers when RCM will become applicable. Condition number 1, supplier of the service should be other than body corporate. Condition number 2, cost of fuel should be included in the consideration. Condition number 3, recipient should be a body corporate. Condition number 4, supplier should not give an invoice containing the tax at the rate of 6%. That is effectively 12% of GST. The same thing I have tried to summarize here in the form of chart. You will be able to see that also in the material. So if you see this chart here, person liable to pay the tax under renting of motor vehicle service, where GST payable is 5%, whether GST payable is 5%. See, if the GST payable is 12%, then there is no concept of reverse charge mechanism, always forward charge mechanism. If the supplier of motor vehicle, renting of motor vehicle services, if he gives a tax invoice containing 12% of GST, no reverse charge mechanism, always forward charge mechanism. So when GST payable is 5%, then we need to check, is the supplier is a body corporate. See, if supplier is body corporate, then also directly forward charge mechanism. One condition violated, no. First condition, supplier should be other than body corporate. If supplier is a body corporate, no reverse charge mechanism, forward charge mechanism. Sir, supplier is other than body corporate, then you need to check, is the recipient a body corporate or recipient is other than body corporate? Sir, recipient is other than body corporate, forward charge mechanism. So recipient is body corporate, so then reverse charge mechanism will become applicable. The recipient being the body corporate, they will pay the GST amount to the government. Able to understand? So this is how you need to check for conditions. So 4 conditions: supplier other than body corporate, recipient should be body corporate, cost of fuel should be included in the consideration, and the supplier should not have given a tax invoice containing the GST at the rate of 12%. When all these conditions are satisfied, then the renting of motor vehicle for passengers will come under reverse charge mechanism. Understood? So one more activity covered under reverse charge mechanism. Okay, so this 16th one we will talk about it. So which is services of lending of securities through an intermediary. So this I will try to summarize in simple way, not that important from the examination perspective. So securities lending, what does that mean? Assume that I am a person, I'm having some shares, securities in the sense of shares, debentures, etc. So I have some shares. Now whatever shares I have, that also I can lend. So there is another person, he wants to borrow the shares. I own some shares. For example, I'm having some Reliance Industries Limited shares. I can lend these shares. So I am lending these shares to a recipient. So I am providing the services. I am a supplier. I am lending the securities to the recipient who is borrowing that securities. Generally, this transaction will happen through an intermediary. This transaction will happen through a intermediary like stockbrokers, like Zerodha. We have this kind of stockbrokers. No, this transaction will generally happen through intermediaries. So this person who is owning the shares, he is providing the services of lending the shares to the recipient. Who is service provider? The person whoever is owning the shares. Who is service recipient? Whoever is borrowing the shares. They are telling this service will be covered under reverse charge mechanism. The recipient, whoever is borrowing the shares, he is required to pay the GST on that transaction directly to the government under reverse charge mechanism. Able to understand? That is what the simple thing they try to say there. Nothing much here to elaborate. The person whoever is lending the shares through an intermediary. Generally, this lending and borrowing will happen through an intermediary. But whatever it is, the supplier will be a person whoever is lending the shares. Recipient will be the person whoever is borrowing the shares. This recipient, this activity is covered under reverse charge mechanism. The person whoever is receiving these services, he is required to pay the tax under reverse charge mechanism. Last one, this point I have already covered. When you are importing the services, I have already covered it in the supply chapter. If you are importing the services, then on that also you are required to pay GST under reverse charge mechanism. Why? Because in case of imports, supplier will be located outside of India, especially supplier of services will be located outside of India. It will be difficult for the government to collect the tax from those. So since we are done with the revision of the chapter charge of GST, so now we will be revising the next chapter, which is value of supply. See this particular chapter, value of supply, very small chapter, very simple chapter, but very important from the examination perspective. So without any delay further, let us try to revise quickly this chapter, value of supply. Once again, I am telling very important from the examination perspective. Compulsorily, you will get a question from this chapter. So what exactly this chapter, value of supply, deal about? So if we have one quick background, what exactly we are going to deal in this chapter. See, till now, whatever content we have revised, in order for GST to get levied, there are various conditions which are required to be fulfilled. First, there should be either goods or services, and there should be supply of goods or services is happening. Just because goods are there, just because services are there, GST will not be imposed. An activity relating to such goods or services should happen. So which activity should happen? Whenever there is a supply of goods or services is happening, then only GST will be levied. Okay, supply of goods is happening, supply of services will be happening. So if any supply of goods or services takes place, then GST will be levied. But GST will be collected by the supplier only when he is a registered person. So we have seen also which persons are required to take registration, which persons are not required to take registration. And in the register, after you have taken registration also, you can opt for composition levy, you may not opt for composition levy. So all these things we have covered till now. So now once a supplier is also a registered person, if he has made a supply, now he has to collect the GST. Whenever he is making a supply, he has to collect GST. Sir, on what value? How to calculate that amount of GST, sir? You are telling if I am a supplier, if I am a registered person, if I am making any taxable supply, I have to collect the GST. Sir, but how much amount of GST I have to collect? What is the value of the GST? How to calculate the amount of GST I have to collect? So how to calculate the GST is you need to determine value of supply, and that value of supply should be multiplied with appropriate rate. See, rate of GST depends on the nature of the goods you are supplying, the nature of the services you are supplying. Depending on the nature of the goods, services, the rate of GST will be decided. Now you need to determine value of supply. So how to determine this value of supply? So that's what this particular chapter, value of supply, talks about. And in this chapter, we are going to cover only one section, section number 15 we are going to talk about. So section number 15 is a section which is talking about how to determine the value of supply. And why determining value of supply is very important? Why? Because if you know value of supply, then only you can determine how much amount of GST has to be charged from the customer and paid to the government. Okay, so let us try to understand what does section number 15 say regarding the value of supply. So let us try to have a look at it. So this also, for this also I have prepared a chart, and that chapter I have summarized in the form of this chart. We will try to revise it from this chart. So section 15 is a section which is actually talking about value of supply. So what does this section number 15 say? First we will try to cover section number 15 subsection 1. So section number 15 subsection 1 is talking about how to determine value of supply. Not in all the cases. Section number 15 subsection 1 will become applicable when the supply is taking place between a supplier and the recipient and they are unrelated. They are not related to each other. Section number 15 subsection 1 talks about how to determine value of supply. But section number 15 subsection 1 talks about determining value of supply only when the supplier and recipient both are unrelated. They are not related to each other. And price should be only consideration. Price is the only consideration. There is no other consideration. For example, assume that I am supplying goods. In return, I am receiving money also. Along with that, I am also receiving some goods or services also in return. Some barter transaction is happening. So if barter transaction is happening, then price is not the only consideration. You are receiving some consideration in the form of goods or services also. Then also 15 subsection 1 will not become applicable. So 15 subsection 1 will talk about how to determine value of supply in only two cases. Supplier and recipient both should be unrelated. They should not relate to each other, and price should be only consideration. Apart from price, there should not be any other consideration. Then only 15 subsection 1 will become applicable. Sir, what if the supplier and recipient both are related? Then how to determine value of supply, sir? Sir, if price is not the only consideration, then how to determine the value of supply, sir? That is covered under section number 15 subsection 4. 15 subsection 4 talks about other cases. What other cases? If supplier recipient both are unrelated, when price is not the only consideration, in that cases how to determine value of supply, that is covered in 15 subsection 4, which says in those cases you have to determine supply as per valuation rules. This is not a part of CA inter syllabus. This is a part of CA final syllabus. This is not a part of 15 subsection 4. Sir, when supplier recipient both are related or when price is not the only consideration, how to determine value of supply? 15 subsection 4 says then you follow valuation rules, but luckily valuation rules we don't have as a part of our CA inter syllabus. Valuation rules will form part of our CA final syllabus. There we will learn. Okay, so now let us try to understand what does 15 subsection 1 say. When supplier recipient both are unrelated, when price is only consideration, then what is the value of supply? They say in those cases value of supply will be transaction value. In that cases, when supplier and recipient both are unrelated and when price is only consideration, what will be the value of supply? They simply say value of supply will be transaction value in those cases. Sir, what is a transaction value? Very simple. Transaction value means price which is actually paid or payable. For example, if I'm selling you the classes, I'm telling you, you pay me 4,000 rupees for my classes. Now transaction value will be 4,000. You are paying me 4,000. Or I am telling 2,000 you pay now, 2,000 you pay it later. Now what is the transaction value? 4,000 only. 2,000 you have received, but 2,000 you are yet to receive in the future. Able to understand? So transaction value means price paid or payable, both will be included in the transaction value. This is what simply 15 subsection 1 says. So when the supplier and the recipient both are unrelated and when price is only consideration, then in those cases value of supply will be transaction value. Take for example, I am selling the mobile phone to one customer. Customer is not at all related to me. I sold the mobile phone to him. I told him the total price for this mobile phone is 1 lakh rupees. That is the price paid or payable. Now this will become transaction value. Value of supply will be this transaction value of 1 lakh rupees only. Now I have to determine what is the GST rate applicable for the mobile phone. I came to know GST rate applicable is 18%. If you multiply 18,000 rupees will be the value of the GST. This much amount I will collect it from the customer, pay it to the government. Able to understand? So this is what 15 subsection 1 says. Guys, repeat everyone. When 15 subsection 1 becomes applicable, see why I am repeating. Even in the marathon also I am repeating this many times. Why? Because it is very important. When 15 subsection 1 becomes applicable, supplier recipient both are unrelated. Prices only consideration. In those cases, value of supply is equal to transaction value. What is transaction value? Price paid or payable. Understood? Next one. Now, let us come to 15 subsection 2. 15 subsection 2 says in the transaction value, there should be certain items included. In the transaction value, certain items should be included to determine the value of supply. So what should be added? Inclusion means what should be added to the transaction value to determine the value of supply. Number one, if you are paying any taxes other than GST and compensation cess, all those taxes should be included in the value of supply. If any tax is collected from you, if the supplier is collecting any tax other than GSTs, other than CGST, SGST, UTGST or IGST, other than compensation cess, if any other tax is collected, tax or cess, whatever it is, if any tax or cess apart from GST and compensation cess collected by the supplier from the recipient, that should be added to the value of supply. Sir, what do you mean by this? Very simple. Assume that I am supplying some goods to the recipient. I told him the price of the goods is 10,000 rupees. On that, government tax is there. Some municipality tax is there. 2,000 rupees. On that, some government cess is there. 1,000 rupees. Now, what will be my transaction value? On what value I have to collect the GST? Should I collect only on transaction value 10,000? No, you have to collect GST on entire value of 13,000 rupees. So if there are any taxes apart from GST, any tax other than GST like CGST, SGST, UTGST, IGST or even GST compensation cess, apart from GST and compensation cess, if any other tax is collected from the recipient, that should be added to the value of supply. On this entire value of supply, GST should be calculated. However, there is one small circular given. TCS, if any TCS is getting collected by the supplier, if any TCS is getting collected from the supplier, TCS is also another kind of tax collection mechanism only. This is apart from GST tax only, but still TCS shall not form part of value of supply. This circular they have given. They have given a circular. When I say taxes other than GST and compensation cess should be included in the value of supply. However, the government released a circular and told TCS collected under Income Tax Act should not form part of value of supply. Very simple logic. See, assume that there is a car seller. There is a car seller. He is a supplier. He sold a car. To recipient. See, generally, in the case of sale of car, when the value of the car is more than 10 lakh rupees, government is asking the supplier to collect even one more component called TCS under Income Tax Act. So now assume that the price of the car is 12 lakh rupees. On that, the supplier will collect consideration of 12 lakh rupees. Along with that, he will also collect some 10% of TCS. 1.2 lakh rupees also he will collect. This is a TCS which is collected from the customer. Now what this supplier will do is, this TCS he will deposit with the government. Now TCS amount, whatever has been deposited with the government will go and give it as a credit. Income tax credit, not GST credit. Whatever TCS which has been collected from the customer, that supplier will go and deposit with the income tax department. That income tax department will give it as a credit, income tax credit to the recipient. So that's why what the circular has clarified is TCS is not actually a tax. TCS is not actually a tax. It is just collected to ensure that there is a proper to avoid under reporting of the transactions under Income Tax Act. This TCS was brought. So whatever TCS the supplier is collecting, assume that 12 lakh rupees of consideration he has collected, 1.2 lakh rupees of TCS also he has collected. For the purpose of GST, what will be the value of supply? Here they are telling don't include TCS, only value of supply will be 12 lakhs. On the 12 lakh rupees only GST will be calculated at the applicable rate. So this is what the first item which should be included in the transaction value. Very important guys. Taxes other than GST compensation like cess, like municipal tax or municipal cess, if these kind of other taxes are there apart from GST, that should be added to the value of consideration. However, TCS is not required to be included in the value of supply. So what do you mean by TCS? Tax collected at source. Next one. Another item which should be included in the value of supply, payments made to the third parties by the recipient which actually the supplier is liable to pay. Sir, what is this? Let me try to explain this also with the help of example. Assume that there is one supplier. So supplier agreed to provide some services to me. Take for example, I have availed this, I am a recipient. So I will put it this way. What kind of services I am receiving? Assume I'm conducting some function. I asked this person to do the catering, to provide catering services to me. Catering services to me. When I say catering, I told him to offer some 10 different kinds of foods and drinks. Supplier told, okay sir, I will provide all the 10 different kinds of catering services to you. He quoted one figure. Assume that he quoted, okay sir, you are required to pay me total 10 lakh rupees, etc. Whatever it is, he told. So I agreed. This supplier is providing catering services to the recipient. So what actually happening is, when that function was getting conducted, one of the food supplier has came. For example, this person has ordered for some food item, this cake. So he ordered for cake. For example, supplier ordered for the cake. Now this cake person came to the venue and he gave the delivery of the cake. Now this recipient told cake person is asking a money from the recipient. Sir, the cake is costing 2000 rupees. You pay it to me. Now this recipient called the supplier. He told, boss, someone has brought a cake and he is asking me to make the payment. Supplier was not there at the venue. Supplier told me, okay sir, you do one thing. Actually, I am only required to pay. Supplier is liable to pay the amount of 2000 rupees to this cake person. But what he has told us, he asked the recipient, sir, you pay me on my behalf. So he paid this 2000 rupees to this cake person which is actually a liability of the supplier. Supplier is required to make the payment to this person. But on behalf of the supplier, recipient has made the payment to the recipient. Recipient has made the payment to the third party. He is a third party. No, he is supplier, he is recipient. This person is some third party. So recipient is making payment to a third party, which is actually whose obligation? Which is actually a supplier's obligation. Now, what the supplier told is, assume that I am required to pay him some figure. I am required to pay him 1 lakh rupees. He told me, sir, you pay me 98,000 rupees only. Finally, I am paying 98,000 rupees. Why? Because supplier told, okay, sir, it was my liability to pay 2,000 rupees for the cake, but you paid me on my behalf. No, from the total consideration, you deducted that 2,000 rupees and pay me only 98,000 rupees. Now you tell me, in this case, what will be the value of supply? See here, the consideration which is going from the recipient to the supplier is 98,000 only. But 15 subsection 2 says, if the recipient is making any payment to a third party, which is actually the obligation of a supplier, that also should be included in the value of supply. Here, the recipient has made a payment of 2,000 rupees to a third party, which is actually the liability of the supplier to pay it. So now this 2,000 rupees also will be added. The total value of supply will be 1 lakh rupees. On this 1 lakh rupees, GST amount will be calculated. On this total 1 lakh rupees, what will happen? GST amount will be calculated. Guys, able to understand whatever I'm trying to say? So second item which should be included in the value of supply is payments made to third parties. By whom? By the recipient, which is actually whose obligation? Supplier's obligation. So supplier is required to make some payment to third party, but on his behalf, the recipient is making a payment to the third party. Even those payments also should be added to the value of supply for calculating the GST. Next one. Next item which should be added to the value of supply. They told all other incidental expenses which are collected by the supplier from the recipient. Any other incidental expenses, whatever has been collected, all that things also should be added to the value of supply. What are they? Commission. If there is any commission which is collected by the supplier from the recipient, selling agent's commission. So if the supplier is collecting from the recipient, in addition to the consideration, he is charging some extra amount in the name of commission, that should be added to the value of supply. Packing cost. If the supplier is collecting the packing cost from the recipient, that should be added to the value of supply. Inspection or certification charges. Sometimes supplier will collect inspection or certification charges. That also should be added to the value of supply. Installation and testing charges. So if the supplier is collecting, for example, I bought a air conditioner from a supplier. He told, okay, sir, we will the price of the air conditioner is 35,000. Installation charges 3,000 rupees. What will be value of supply? Total 38,000, not just 35,000. So installation, testing charges, this also will be added to the value of supply. Weighment charges, loading charges, and designing charges. If any this kind of charges are collected by the supplier, added to the value of supply. And outward freight and transit insurance. If the supplier is collecting freight, if the supplier is collecting insurance charges from the recipient, add it to the value of supply. Interest, late fee, penalty for delayed payment. Sometimes what it will happen is the supplier will give a due date. If you don't make the payment within due date, he will collect interest from you. He will collect late fee from you. He will collect penalty from you. Even that things also should be added to the value of supply. Next, subsidies. This point is once again very important. Subsidies linked with the price given by other than state government or central government. If the supplier is receiving any subsidy in relation to supply of goods or services, government. Sorry guys, one second, let me check the audio. So if he is collecting any subsidies, if the supplier is collecting any subsidies, receiving any subsidies from other than central government or state government, that also should be added to the value of supply. But here there are some important things which you need to pay attention, where examiner will test this minute details. Listen carefully. Assume that there is a supplier. There is a supplier. So now what he is doing is he is manufacturing some notebooks. He is manufacturing some notebooks, and he sells this notebooks to the students. He sells this notebooks to the students. Students will buy these notebooks. See, actually the price of this notebook is 20 rupees. The price of the notebook will be 20 rupees. But what has happened is some good company has come. For example, TCS company has come. See, this company is required to meet some CSR expenditure. Now what this company came to the supplier and told is, boss, for what price you will sell the notebook? I told I will sell it at 20 rupees. But what the TCS told is, you do one thing. Since education is very much important, since you are doing a good job of manufacturing notebooks and selling it, you don't collect from the students. When you sell the notebook, don't collect 20 rupees. You sell the notebook for 10 rupees only. You sell the notebook for 10 rupees only. Well, the supplier will be happy. No, he will say, who are you to tell me to sell the price, to sell the notebook at 10 rupees? Now TCS told, cool, don't worry. The balance 10 rupees, we will give it to you as a subsidy. On every notebook, you sell it at 10 rupees only. The balance 10 rupees, we will give it to you as a subsidy. So here you tell me the supplier is collecting from the customer how much amount? 10 rupees. But for determining value of supply, you should also add the subsidy received by this supplier. He is receiving subsidy of 10 rupees for each product, no? So for the purpose of GST, it will be 20 rupees of value of supply. For GST, it will, for the calculation of GST, it will be 20 rupees as value of supply. So 10 rupees you will collect it from the student, that is whoever your customer is there, from them you will collect 10 rupees, but GST will be calculated on 20. Assume 10% is a GST, 2 rupees, total 2 rupees of GST you will collect. 10 plus 2, total 12 rupees you have to collect it from the customer. Total 12 rupees he has to collect it from the customer. So that's what they say, subsidy linked with price given by other than central government, state government. Now assume that if TCS is not giving the subsidy, if the subsidy is given by central government, if central government is telling you sell the notebook at 10 rupees only, balance 10 rupees, we will give it to you. Now you tell me, will this 10 rupees be added? No. Subsidy given by central government or state government need not be added, should not be added to the value of supply. So subsidy given by other than central government or state government, only those subsidies should be added to the value of supply. Subsidies given by a central government or state government. If the central government has given that subsidy or if the state government has given that subsidy, this will not be added to the value of supply. This will not be added to value of supply. Guys, able to understand whatever I'm trying to say? There is one more thing, one more important point you need to remember. Assume that there is a supplier. There is a supplier. Same, he is manufacturing notebooks and selling it. Is manufacturing notebooks and selling it. Now I am selling the notebooks at certain price. So one day a company has came, TCS has came, and they told that, boss, you are doing a good job of selling the notebooks and all. We'll do one thing, we will give you a bulk subsidy of 10 lakh rupees. You use it for the purpose of buying plant and machinery, or you use it for your business purposes. In the previous case, the TCS is giving subsidy linked with price. So on every 20 rupees of price, the TCS is giving a subsidy of 10 rupees. But here in this case, the TCS is giving a bulk subsidy, not related to the price. They are giving one bulk subsidy. Even these subsidies also should not be added to the value of supply. Bulk subsidies will not be added to the value of supply. So if you pay attention here, subsidies which are linked with the price. If subsidy is directly linked with the price. So here they are telling you sell the notebook at 10 rupees. For every notebook, we will give 10 rupees of subsidy. So here subsidy is linked with the price. But here whatever I have told, here the company is giving a bulk subsidy, not specifically linked with the price. If the subsidy is not linked with the price, even though given by other than central government or state government, need not be added to the value of supply. Need not be added to value of supply. Guys, able to understand whatever I'm trying to say? So subsidies which are linked with price given by other than central government or state government, those only should be added to the value of supply. So these are, as per 17 subsection 2, these are all the conditions which are required to be, these are all the things which are needed to be included in the value of supply for the purpose of calculating GST amount. Able to understand? What are they? Tell me. 15 subsection 2 clause A, taxes other than GST and GST compensation says they should be added. TCS not added. Payments made to third parties by the recipient that the supplier is liable to pay, added. All other incidental expenses like commission, packaging, inspection, certification charges, installation and testing charges, weighment, loading, and especially finally subsidies linked with the price given by other than central government, state government. All this should be included in the value of supply. But here you have to be very careful, guys. In the incidental expenses, they will be included in the value of supply only when the supplier is collecting it from the customer. If the supplier collects these amounts from the customer, then only add it to the value of supply. If the supplier is not collecting these amounts from the customer, why do you add it to the value of supply? Don't add it. Why I am telling you is, sometimes they will ask you a question. So what question they will ask you is, there is a supplier. He sold the goods to a recipient. The value of supply was 1 lakh rupees. He gave the customer 1 month of time. As per the agreement, if he did not make the payment within due date, 5,000 rupees of interest will be collected. But however, this recipient is making the payment after due date, but this interest has been waived off. They will use this terminology in the examination. They will say interest has been waived off. Penalty has been waived off. That means he is not at all collecting. Supplier actually is having a right to collect interest or penalty, but he is not collecting. He waived off that interest, penalty or late fee. Still, will you add it in the value of supply? No, we will not add it to the value of supply. So these, especially incidental expenses, you have to be very careful. These things will be added to the value of supply only when collected. When they are waived off or when they are not collected, then they will not be added to the value of supply. Understood, everybody? So this is what regarding 15 subsection 2, the items which should be included in the value of supply, which should be included in the transaction value for the purpose of determining value of supply. Sir, now what about discounts, sir? What about discounts? Should I exclude the discount amount from the value of supply, or should I include it? What should I do with regard to discounts? So when it comes to discounts, what should be done to the discounts, that has been explained in 15 subsection 3. And 15 subsection 3 divides the discounts into two categories. Number one, discounts given before or at the time of supply, and they are shown in the invoice. If any discount is shown in the invoice, for example, you are going for the shopping. So you went to some Reliance Trends. They told, well in advance only they told, for example, if you buy 3,000 rupees worth of merchandise, they will give 10% of discount. So at the time of supply only, they are giving you that 10% of discount. So you did a shopping for 3,000 rupees. They mentioned in the invoice 500 rupees as discount. They are collecting total 2,500 rupees only. Now you tell me what is value of supply? Will you pay GST on this total 3000, or are you required to collect GST on only 2500? You are required to collect GST only on 2500. So if the discount is given at the time of making supply or before making supply, and if that discount is clearly shown in the invoice, the discount is there in invoice only, that discount should be excluded. You should not include that discount in the value of supply. The discount should be excluded. So they are telling 3000 rupees is the consideration. In the invoice itself, they have told 500 rupees is discount. Net is 2500. GST also will be calculated only on 2500, not on the entire value of 3000 rupees. Able to understand? So discounts which are given before or at the time of making supply, and which is shown in the invoice, that should be excluded from the value of supply. Understood? Now let us come to other things. Sometimes all the discounts will not be given at the time of making supply only. Sometimes a discount will be given after supply has completed. After supply has completed, then the discount will be given. Take for example, this will generally happen in the case of wholesalers, retailers, etc. So a company is there. There is a company which is manufacturing certain items. Okay. So this company has sold some goods to the wholesaler. So they did not give discount at the time of making supply, but they told to the wholesaler that if he orders minimum 10,000 quantity throughout the year, for the entire year, if he orders total 10,000 quantity, then on the total purchases whatever he has made, on that they will give 10% of discount. On that they will give 10% of discount. This we call it as post supply discount. That means at regular intervals he will buying. For example, initially he bought 1000 quantity, no discount will be given. Then he bought some 5000 quantity, no discount will be given. After certain time he has bought balance 4000 quantity, then they will give discount on all the purchases whatever you have made. That means discount is not given when the supply has taken place. Discount is given after the supply has taken place. This we call it as post supply discounts. This we call it as what? Post supply discounts. So in the case of post supply discounts, will it be excluded from the value of supply or will it not be excluded from the value of supply? What will happen to the post supply discounts? They say that post supply discounts will be excluded from the value of supply. See, generally what will happen is, assume that first I will tell you the conditions, then we will see how it will happen. So if you see the conditions here, post supply discounts will be excluded from value of supply when three conditions are satisfied. Number one, there should be an agreement existing at the time of supply. Even though discount is not given at the time of making supply, but it was agreed. For example, here the manufacturer told, if you buy total 10,000 quantity during the year, then I will give you discount. That means it was not given at the time of making supply, but it was agreed to be given. When at the time of making supply, there was an agreement to give the discount. Number two, second condition, discount should be calculated invoice wise. It is not like ad hoc discount. It is not like some random figure of discount has been given. We should be able to calculate discount every invoice wise. For example, manufacturer told, on every invoice whatever I have given, on every invoice I will give you 5% of discount. So that means here discount we can calculate invoice wise. Second condition. Third one, proportionate ITC has to be reversed by the recipient. Now what actually third condition is, when you are giving discount and the recipient would have taken initially total credit. Take for example, assume that the manufacturer is there. Initially he did not give any discount. Initially he told, okay, he sold the goods worth 1 lakh rupees to the recipient. He gave tax invoice. He gave a tax invoice saying 1 lakh rupees is the invoice value, 18,000 rupees is the GST, total 1 lakh 18,000 rupees. Amount has been, invoice has been given to whom? To the recipient. Now he told, at the time of making supply, he told, in this year total if you make 10 lakh rupees of purchases from me, then I will give you 10% of discount. But at the time when this 1 lakh rupees of supply happened, did he get discount? No. Just there was an agreement, no discount was given. So since no discount is there, this person has generated 1 lakh rupees of tax invoice and gave it to the recipient. Now what the recipient will do? If he is also a registered person, he will take a credit of 18,000 rupees. No. He will take a input tax credit of how much? 18,000 rupees of input tax credit he will take. Now what actually happened is, during the entire year, this recipient actually ordered for 10 lakh rupees of merchandise. He ordered total 10 lakh rupees of quantity. Now as agreed, this manufacturer told, okay boss, I will give you discount. He told, okay, initially I did not give you discount, but since you have made total 10 lakhs worth of purchase, I will give you discount now. How he will give the discount is he will give credit note. He will give credit note. So how much credit note he will give? 10%. So 10% means on total consideration of 1 lakh rupees, 10% of discount, that is 10,000 rupees of discount. Along with that, GST also you have to give it back. No, initially you have collected 18,000 of GST. Now if you are giving discount, that means you agreed to give the discount. Now you will give the discount. No, now you have to give him back whatever 18,000 rupees of GST you have collected. In that also 10% you have to give it back. In that also 10% you have to give it back. Discount is not only on consideration. Discount should be on GST also. I agreed to give 10% discount. No, on this 1 lakh rupees, I will give 10% of discount. But I did not collect only 1 lakh rupees from the customer. I have also collected how much? 18,000 rupees of GST. In this also 10% of discount I have to give it or not? Yes, I have to give. So I will give a credit note by giving discount on this GST amount also. How much? 10%. 1800 rupees. Total 11,1800 rupees of credit note will be given to the recipient. Now I will go to the government and say, sir, initially I paid you 18,000, no, but I am giving 1800 rupees back to the customer now. Initially, whatever this person has collected, whatever manufacturer, whatever supplier has collected from the recipient, this he would have paid it to the government. How much he would have paid? 18,000 rupees. Now when he is giving the credit note, what he will go to the government and say, sir, I am giving him a credit note. 18,000 rupees of GST I have paid to you, but out of that 18,000, 1800 I am giving it back. So you also give me back 1800 rupees. You also give me back 1800 rupees. So now what the supplier will do is when he gives a credit note, this credit note will be updated in the return and the government will actually give him back 1800 rupees. Actually, he will give him back 1800 rupees. Now this credit note will be given to the recipient. Now what they are asking the recipient to do is this recipient should also reverse 1800 rupees of GST. See, initially when the tax invoice was given, you have taken 18,000 rupees of input tax credit. Now they are giving you credit note. No. Now what the recipient should do is he should also reverse this proportionate amount. He should also reverse 1800 rupees of GST ITC credit. Initially when you received the tax invoice, you availed 18,000 rupees of input tax credit. But now the credit note is given to you. So this recipient should also reverse 1800 rupees of input tax credit. So if you have availed it, if you have used it already, you have to give it back to the government 1800 rupees of GST. See, if you observe the total scenario here, net manufacturer has paid, net the supplier has paid how much amount of GST to the government? 18,000 rupees initially he has paid, government gave him 1800 back. So net he has paid 16,200 rupees to the government. Net how much amount has been availed by the recipient as input tax credit? Initially he availed 18,000 rupees, 1800 has been given back, net he is also availing only 16,200 rupees of credit. So government has collected 16,200 and the recipient has also taken a credit of 16,200 only. Able to understand? So that is actually the third condition. So you can reduce the post supply discount from the value of supply if three conditions are satisfied. Number one, agreement should be there. Even though discount is not given at the time of making supply, there should be an agreement to give the discount at the time when the supply is made. So there should be an agreement to give a discount at the time of making supply. Number two, the discount we should be able to calculate invoice wise. You should not give some random figure of discount. We should be able to calculate the discount invoice wise. Number three, recipient should agree to reverse the proportionate amount of input tax credit. The recipient should reverse whatever discount is getting given to him on that GST component. He should reverse it. So when all these three conditions are satisfied, then the supplier will give a credit note as per the GST Act and that discount amount can be reduced from the value of supply and your GST liability will be reduced. Able to understand everybody? Sir, if these conditions are not getting satisfied, assume there is no agreement at the time of making supply. Or even though there is agreement, invoice, we can't calculate discount invoice wise because a bulk amount of discount has been given. Or recipient is not agreeing to reverse the ITC. Then what will happen is you give discount, but the government will not reduce your output tax liability. The government will not give you back 1800 rupees. Why? Because if any of these conditions are violated, then the government will not reduce. Then in that cases, you can't reduce that discount amount from the value of supply. That means government will not give you back 1800 rupees. Government will not give you back 1800 rupees. That means total government will keep 18,000 rupees. In these cases, recipient is also not required to reverse the input tax credit. So very simple guys, if these three conditions are satisfied, supplier will give a credit note as per GST Act. Supplier will give credit note as per GST Act. That means he will give a discount of GST amount also. In that cases, what will happen is supplier will get back that 1800 whatever he has paid, that amount of discount on GST whatever has been paid, that he will give it back. Recipient also should reverse. Recipient also should reverse. In other case, for example, if any of these three conditions are not satisfied, then the supplier will not give credit note as per GST Act. He will give something called a commercial credit note. He will give. What he will give? Commercial credit note he will give. That means he will give only a commercial credit note, not as per the GST Act. He will give a discount of only 10,000 rupees. In this cases, supplier will not get back that 1800 rupees, that proportionate amount of GST. He will not get it back. Recipient is also not required to reverse any amount of GST. Able to understand? So when all these three conditions are satisfied, then only the supplier will give credit note as per GST Act, and in that case the supplier will get back his amount of GST whatever he has earlier paid, and recipient is required to reverse it. In case if any of these conditions is getting violated, then the credit note as per GST Act will not be given. Only a commercial credit note will be given. Supplier will not get back the amount whatever he has paid. Recipient need not reverse whatever amount he has availed. As simple as that. Understood everybody? So the summary is this. When it comes to discounts, whether it will be excluded from the value of supply or not. Very simple. If the discount is given at the time of making supply or before making supply, and the discount amount has been clearly shown in the invoice, those kind of discount will be excluded from the value of supply. On that, GST will not be collected. Next, coming to the post-supply discounts. Post-supply discounts will be excluded from the value of supply only when all the three conditions should be satisfied. What are they? There should be an agreement at the time of making supply to give a discount. There should be some form of agreement should be there. Number 2, we should be able to calculate discount invoice wise, not a bulk discount. We should be able to calculate discount invoice wise. Number 3, proportionate amount of input tax rate should be reversed by the recipient. When all these three conditions are satisfied, then the supplier will give credit note as per the GST Act, and that will be excluded from the value of supply. In other cases, if any of these conditions is not satisfied, he will give only commercial credit note, no reversal of input tax credit, no refund of the GST amount paid by the supplier. Understood? So this is what regarding 15 subsection 3. That's all guys. As for CA inter level, we have only 15 subsection 1, subsection 2 and subsection 3. Subsection 4 I have already told you. When 15 subsection 1 does not become applicable, then how to determine value of supply, that has been mentioned under valuation rules, which we will learn it at CA final level. And subsection 5 we have government may prescribe certain kinds of goods or services in which they will say how to calculate the value of supply. Sometimes the government will say in certain case of goods and services, don't follow 15 subsection 1, follow some other method. That also government can prescribe. That means government reserved the power to mention or to prescribe how the valuation should be done in case of certain kind of supply of goods and services. Clear? Now I want to explain one more small amendment I have to explain. See, there is one small circular which has been given. See, in the case of insurance company, just remember the summary of the amendment might be important from the examination perspective. See, in case of insurance company, for example, if insurance company is selling you insurance policy, they will collect from the insured premium amount. They will collect from the insured premium amount. And sometimes insurance company will reduce the premium to be collected from the customer by a figure called no claim bonus. For example, you have taken health insurance. This commonly happens in health insurance. So let me take some time to explain this amendment. Very, very important from the examination perspective. Why? Because recent circular. So assume that there is an insurance company. Star Health Insurance is that. Just for example's sake, assume that from Star Health Insurance, I have taken medical insurance. In year 1, I have paid 30,000 rupees of premium. How much I have paid? 30,000 rupees of premium. Now insurance company will collect the GST on 30,000 rupees. In insurance company, in insurance policies, there will be one privilege. So if you have taken policy in the previous year, now year 2 has come. They will say it in the agreement itself. In the previous year, if you did not claim any insurance, last year you have taken policy, 30,000 premium you have paid and you have taken health insurance, but you did not claim anything. Nothing serious has happened to you. You did not lodge any insurance claim. Now what the company will say is, in the year 2, since you did not claim any insurance compensation in the previous year, in this year what they will do is, okay, we'll do one thing. 30,000 rupees is the total premium. No, we will give you no claim bonus of 5,000 rupees. No claim bonus. That means since in the last year you did not claim any compensation, from this year's premium we will reduce some amount. That will be generally called as no claim bonus. What is the full form? What is the why the meaning? Why the name? No claim bonus. Since you did not claim any compensation in the previous year, in the current year we will give you bonus. How they will give me the bonus? They will give me the bonus in the form of reduction of the premium. Now in year 2, the company is saying you pay us only 25,000 rupees. You pay us only 25,000. Now the doubt which has come to the some assessing officers is, sir, should the GST be collected on total premium value of 30,000 or on the net value after reducing no claim bonus of 5,000? That is, should the GST amount be calculated on the total figure of 30,000 or net figure of 25,000? Government gave a clarification. The GST amount in case of insurance companies should be collected only on 25,000, the premium net of no claim bonus. So no claim bonus also should be excluded from the value of supply. Why? Because it is also something like secondary discount. It is also like post supply discount only, where it satisfies all the conditions. Why? Because generally in the agreement itself they will say, if you don't claim, we will give you bonus. There will be agreement. Number 2, it could be calculated invoice wise. We can calculate no claim bonus for every policy separately it can be calculated. And generally recipients will not be any registered persons. Generally recipients will not be registered persons in most of the cases. They will give even if any registered person is taking the policy, generally they will give commercial credit note. Generally insurance company will give a credit note, and the supplier will actually, and the recipient will actually reverse the proportionate amount of ATC. So just remember this summary. In the case of insurance companies, no claim bonus is excluded from the value of supply. On the net amount after no claim bonus, on that only GST will be collected. So recent circular, guys, important from the examination perspective. Understood? So with this I have covered one small amendment relating to no claim bonus also. Understood everybody? So that's all. Value of supply is very simple chapter, very limited provisions are there, but as I am telling you, very important from the examination perspective. Definitely they will ask a question. Without question from this chapter, there will not be a question paper. Okay, so very, very important. Don't ignore. Understood? But anyhow, I have covered everything in this revision from where they can ask you the questions relating to value of supply. Hope you guys have understood this chapter. So now we will start revising the chapter tax invoice, debit and credit notes. But before I start revising this chapter, I want to give you one small caution. So the caution which I want to give here is, see, the chapter tax invoice, debit and credit notes is actually very lengthy chapter. But the weightage from this chapter is very less. Very limited number of questions will be tested. So what I'm trying to do here is, I will not go into the detailed revision of this chapter. I will try to cover important aspects from the examination perspective. Why? Because the content itself is very huge. We will not be able to cover all that in a marathon, because weightage is also little bit lower, but still I will try to cover most of the important points from this chapter. So the chapter which we are going to revise now is tax invoice, debit and credit notes. See, when you are making supply, there should be some proof. When you are collecting GST, when you make the supply to the customer, there should be some proof. So that proof is tax invoice. So if you are making supply, there should be some supporting documentation. Even when the GST department wants to come and do the inspection, how much sales you are doing, how much purchases you have made. If someone wants to even do the inspection, you need to have some supporting documents. So what are that documents which will be created in the GST mechanism? That's what going to be our prime focus in this chapter. So mainly we are going to talk about 3 things here. We are going to talk about a document called tax invoice, when it will be issued, how it will be issued, all that things we will cover. And also we'll throw some light on what are debit notes, what are credit notes. Along with that, few more things like what is delivery challan. Those things also we'll try to focus. So first we'll talk about tax invoice. Tax invoice related discussion is contained in section number 31. So section number 31 of the act actually contains details regarding tax invoice. And basically section number 31 mainly going to talk about time limit for issuing the tax invoice. In case of supply of goods, within what time limit you have to generate the invoice. In case of supply of services, what is the time limit? In case of continuous supply of goods and services, what is the time limit within which you are supposed to give the invoice? So all that things we are going to cover now. So we'll start with 31 subsection 1. Sir, if a supplier is making supply of goods, within what time limit tax invoice is required to be given? For that purpose, in the case of supply of goods, we need to check, does the supply involve movement or does the supply does not involve any movement? So if the supply involves movement of the goods, in that case, invoice should be given on or before the removal of the goods. So in case you are making supply of goods, first thing, before we decide what is the time limit for issue of invoice, we need to check whether that supply involves movement of goods or does that supply does not involve any movement of the goods. If the supply is involving the movement of the goods, then the tax invoice is required to be given on or before the removal of goods. However, if there is no movement, the supply does not involve any movement, then we need to give the invoice on or before the delivery of goods or making the goods available to the recipient. If there is no movement of the goods, then the tax invoice should be given on or before delivery of such goods or making that goods available to the recipient. So this is how you need to give tax invoice. This is the time limit within which you have to give tax invoice in case of supply of goods. Very simple, guys. If it involves movement, on or before removal. If it does not involve any movement, on or before delivery of the goods or making the goods available to the recipient. Sir, what in the case of supply of services? In the case of supply of services, they have told supplier should give the tax invoice within 30 days from the provision of service. Within 30 days from provision of service. So here I will try to cover some important things. For example, I am a chartered accountant. I filed a return for my client. Sir, within what time limit I have to give the invoice, sir? They are telling from the date of provision of service. Assume that I provided this service on 15th of July. On 15th of July 2023, I provided the services of ITR filing. Sir, within what time limit I have to give? Within 30 days from the provision of service. Sir, within 30 days, how to count it? The date on which you have provided the service, that you ignore it. 15 you ignore. In July, how many days will be there? 31 days will be there. In that, take out 15 days, including this date of provision of service, that also you exclude. So by 31st of July, 16 days will be over. They are telling within 30 days I have to give the invoice. How many days I want? 14 days more in August I want. That means on or before 14th of August, I should have given my tax invoice. So if I am providing services, I need to give tax invoice on or before 30 days from the provision of services. However, the Act has also told in case of insurance companies, banking companies, financial institution or NBFCs, these service providers, they can give the invoice within 45 days of provision of the service. Apart from this 4, if anybody else is providing the services, they need to give the invoice within 30 days from the provision of service. However, in the case of insurer, banking company, financial institution, NBFC, the Act has told for these people, we will give 45 days of time from the date of provision of service. They can give the invoice within 45 days. So this is what time limit for issuing tax invoice in case of supply of goods and in case of supply of services. Now, sometimes what will happen is continuous supply of goods will happen. Continuous supply. Take for example, I am running a CA office. So I am running an office. I am a chartered accountant. I run office. Okay. There is one stationery shop. So this stationery shop, I need continuous stationery for running my office. So what I have went to the stationery shop and told is, boss, every time I come and buy, all that we will not do. What we will do is, you continuously keep on supplying me the stationery. You supply me stationery as per my requirement. What we will do is, once in 15 days or once in 30 days, we will settle the transaction. So this is what we call it as continuous supply of goods, where the supply of goods is happening continuously, not once. So in this case of continuous supply of goods, what is the time limit for issue of tax invoice? They say periodically what will happen is, in case of continuous supply of goods, this supplier, in my example, this stationery shop, he will give me a periodic statement. For example, once in 15 days, he is giving me a statement. Sir, for this 15 days, this much stationery I have supplied. So like that, if he is giving me statement on or before the generation of that statement, on or before that statement is getting received, on or before that particular date on which the statement is getting given to the supplier, given to the recipient, on or before that date, you have to generate the tax invoice. So that's what even they say here. If you see it, before or at the time, each such a statement is issued. So most of the cases, what will happen is, in case of supply of goods, whoever is making that continuous supply of goods, periodically he will submit a statement. Sir, for this duration, this much amount you have, I have supplied. So on or before you generate that statement, this supplier should give a tax invoice. Sir, there is no concept of statements. There is no agreement that he will send the statement, etc. But periodically you will receive the payment, no. In case there is no issuing of statement, only payment is happening on or before that receipt of the payment, tax invoice should be given. So this is what the time limit for issuing of tax invoice in case of continuous supply of goods. So that's what they say. In case of continuous supply of goods, before or at the time, each such a statement is issued. If the supplier is issuing a periodical statement, on or before that date of the statement, tax invoice should be given. Sir, there is no concept of issuing the statement, sir. You will receive the payment, no. on or before such payment is received, then the tax invoice in case of continuous supply of goods should be given. Able to understand? Sir, what about continuous supply of services? What about continuous supply of services? See, take for example, I agreed, there is a builder. There is a builder. Now he agreed to construct a building for me. He agreed to construct a building for me. So now he is providing services. He is providing services. And this service duration, if it is going to take for a duration of more than 3 months, continuously he will supply me the services. And in case if the continuous supply of services happen for more than 3 months, then we call it as continuous supply of services. Sir, if it is a continuous supply of services, he is continuously supplying me the services for construction, then when the tax invoice is required to be given. Here they say 3 terms. In case of continuous supply of services, when to give tax invoice, to determine it, we need to check the payment terms. We need to check what? Payment terms. Sometimes in the contract, the payment terms are ascertainable. That means between the contract here, between the two parties of this service, there is a contract. In the contract, it was clearly mentioned. So on certain date, for example, on 15th of January, 30% of the consideration should be paid. On 25th of December, on 25th of February, 25% of the consideration should be paid. On 31st of March, another 20% of the consideration should be paid. Finally, on 30th of June, entire balance consideration has to be paid. That means in the contract, due date for payment is clearly ascertainable. If the due date for payment is clearly ascertainable, on or before that due date, invoice should be given. So on or before this due date, first due date is 15th of January, on or before this date, for this 30% tax invoice should be given by the supplier. On or before the second due date, 25th of February is the second due date. On or before this date, the supplier should give tax invoice for this 25%. So like this, if the due date for payment is ascertainable, supplier should give tax invoice on or before that respective due date in the agreement. So that's what even we have mentioned here also. If the due date of payment is ascertainable, tax invoice should be given on or before such due date. Sometimes what will happen is, in the contract, specific due date will not be given. Due date for payment will be linked with completion of event. Due date for payment will be determined on the basis of it is linked with completion of some event. For example, in the contract it was written 30% of the consideration will be given on the construction of the first floor. Another 30% of the construction will be given on construction of second floor. Balance 40% of the construction will be given once the third floor also gets completed. So here the payment is linked with completion of event. In this case, the supplier should give tax invoice on or before the completion of that event. For example, first floor got completed on 31st of March. On or before this date, for this 30% consideration should be given. For this 30% tax invoices should be given. So like this, if the payment terms are linked with completion of the event, in that cases, tax invoice should be given on or before the completion of that event. So if the specific due dates are there, on or before that due date, tax invoice should be given. If the payment terms are ascertainable, if the payment terms are linked with the completion of the event, in that case, tax invoice should be given on or before the completion of event. Sir, nothing is there. In the contract, there is no due date for payment. Even it is not linked with the completion of the event also. In that case, when to give tax invoice, sir? If nothing is ascertainable, the supplier will receive the payment. No, periodically he is receiving some payment. On or before the receipt of the payment, tax invoice should be given. Able to understand, everybody? So that's what they simply try to say here. In case due date of payment is ascertainable, on or before the due date. If payment is linked to completion of the event, on or before completion of that event. If the due date of payment is not ascertainable, that means specific due date is also not given. It is not even linked with the completion of the event. In that cases, on or before the supplier receives the payment. At some point of time, you will receive the consideration, no? On or before that receipt of the consideration, tax invoice should be given. So I explained you 4 subsections of 31. So 31 subsection 1 talking about when to give tax invoice in case of supply of goods. When to subsection 2 talks about when to give tax invoice in case of supply of services. Subsection 4, subsection 3 we will talk about it later. Subsection 4 talks about tax invoice in case of continuous supply of goods, and subsection 5 talks about tax invoice in the case of continuous supply of services. Now let us have a look at subsection 6 also. Service ceases before completion of supply. That means I agreed to provide the service, but before my service can get completed, the service is getting stopped. For example, I agreed to teach the classes for you. I told that for 4 months I will teach the classes. Able to understand? So I told for a span of 4 months I will teach you the classes. So when I agreed to teach you the classes for 4 months, what you have actually told is, after coming to the classes for 15 days, you told, sir, I no longer want to continue with your classes. So now I told, for 15 days, I have taught you 2 chapters, no? Give me proportionate amount. For this, when you have to give the invoice. See, this is the case when the service is ceasing, that is when the service is stopping before even completion of the supply. See, my supply will get completed only when I teach you the full class. But before I complete my classes, in between only you are stopping it. So that means service is ceasing before completion of supply. In that cases, you will get the proportionate amount, no? When you have to give that invoice, they say in those cases, invoice shall be issued to the extent of the supply made before cessation. So before that service, when the service is getting ended, till that point of time, I might collect proportionate consideration, no? For that, I have to give the tax invoice. For that, I have to give the tax invoice on or before that cessation of service. So these are a few sections which are talking about the time limit for issuance of tax invoice. However, there is also one more case here. Subsection 7 also I will explain. Once I am done with subsection 7, then I will talk about subsection 3. So subsection 7 says goods sent or taken on approval or sale or return basis. See, if I am sending the goods on approval or sale or return basis, in that case, I have to issue the invoice before or at the time of supply, or 6 months from the date of removal, whichever is earlier. Sir, what do you mean by this? Very important point here. Let me try to explain it with the help of once again a small example. Assume that I am a supplier. I am sending the goods to recipient. I am a supplier. I am sending the goods to recipient. I am not making supply. I am not making sale. I send these goods on sale or approval basis. Assume that I have sent the goods on 1st of January 2023. I have sent the goods. I told this person, sir, if you want, you accept it or you can send it back. See, when I am sending the goods, will I give tax invoice here? No, I will not give tax invoice. Now, if this recipient, if he approves the goods, if he is telling, okay, sir, I will approve the goods. At that point of time, supply is taking place. At that point of time, invoice should be given. When you are moving the goods, at that point of time, invoice will not be given. At that point of time, actually delivery challan will be given, which we will talk about it later. So when actually tax invoice will be given? When the recipient has accepted, okay, whatever goods you have sent, that I am accepting. With on that acceptance, tax invoice will be given. Now, sir, what time limit will be given to him? Now, what the act says is, this for this goods, if within 6 months, if you did not get any approval, by the end of the 6 months also you have to give the tax invoice. By the end of 6 months also you have to give the tax invoice. Which means, if you read the provision once again, invoice shall be issued before or at the time of supply. When I say supply, when it is actually accepted, or 6 months from the date of removal, whichever is earlier. So assume that I am sending the goods on 1st of January 2023. Assume that 6 months from the end of this month will be 30th of June 2023. This will be the end of 6 months. Okay, so on or before this date, if the recipient is accepting, if the recipient has accepted, approved the goods, for example, he approved the goods on 31st of May 2023. I am liable to give the tax invoice on 31st of May 2023. Sir, 30th of June is over, 6 months is over. From the date I have sent the goods, 6 months is over. But still those are not approved by the recipient. Still, it will be deemed as supply. You have to give the invoice as on 30th of June 2023. So for example, if the recipient gives the approval on or before 6 months, whenever that supply takes place, then we will give the invoice. If within 6 months, the supplier is not giving approval, still by the end of 6 months, you have to give the tax invoice. Able to understand? So if I put it in other way around, the maximum time limit given for goods sent on sale or return or approval basis is within 6 months. The recipient has to accept it. If you do not take any action within 6 months, still under GST Act, it will be treated as supply and the supplier has to give a tax invoice. Understood, everybody? So this is the time limit within which you have to give the invoice in case of goods sent or goods sent on approval, sale or return basis. So we have covered various scenarios for time limit for issuing the tax invoice. What we have covered in case of supply of goods, supply of services, continuous supply of goods, continuous supply of services, service ceases before completion of supply, goods sent out on approval or sale or return basis. Now let us come to subsection 3. See, subsection 3 contains various clauses. Let us try to understand each and everything in a detailed manner. Let me try to explain 31 subsection 3 clause A. Guys, if you remember, when we understood the registration chapter, I told you what will be the effective date of registration. Assume that this is the date Example, assume on 1st of January 2023, you became liable for registration. You became liable for registration. Within 30 days, if you make an application, assume that before 30 days only you made the application. Now, PO has granted registration certificate on 15th of February 2023, he granted registration. Even though you got the registration certificate here, your registration will be effective from the date you become liable for registration. From the date you become liable for registration, retrospectively your registration will be effective. That means actually from this date itself, you actually become liable to collect the GST. Liable to collect the GST and pay to the government. But if you pay attention here carefully, I got my GSTIN number only on 15th of February. So that's why whatever supplies I have made from the date I become liable for registration till the time I got the registration certificate, since I don't know what is my GSTIN number, without GSTIN number, I can't collect any GST. So whatever supplies that I have made from the date I become liable for registration till the grant of registration certificate, I would not have collected GST. I would not have given tax invoice. I would have just given commercial invoice. I would have just given what? Commercial invoice. But when I got the registration certificate, they are telling my registration will be effective from the date I become liable for registration. That means your liability to pay GST arises from this date only. But whatever supplies you have made between these dates, that you have given the commercial invoice without charging GST. Now what the act says is, from this date, from the grant of registration certificate, within 30 days, the supplier can give revised tax invoice. The supplier can give what? Revised tax invoice. For whatever supplies you have made between the date you have become liable for registration till the grant of registration certificate, for all these supplies, you can give a revised tax invoice. Now in the revised tax invoice, you can show the consideration along with the GST amount separately and issue it to the recipient. So this is what 31 subsection 3 clause A says. You can give revised tax invoice within 30 days from the grant of registration certificate. Able to understand? So that is what has been mentioned in 31 subsection 3 clause A. Revised tax invoice within 30 days from the issue of registration certificate. But here there will be problem. Sir, assume I'm a business person. Mainly I do the business with unregistered persons. Mainly I do the business with unregistered persons. For example, during this time span, I have made some 1000 invoices. Sir, will I be able to generate 1000 revised tax invoices? Not required. The act has given you some relaxation. You need not give individual revised tax invoice. You can give consolidated revised tax invoice. You can issue one single consolidated revised tax invoice for cumulative amounts. But in some cases, you can give consolidated revised tax invoice. In some cases, you have to give separate revised tax invoice. Sir, when I can give consolidated revised tax invoice, when I have to give separate revised tax invoice, let us have a look at it once. So supplier where recipient is unregistered. See, if the suppliers are registered, during this duration you have made supplies. But if your recipient is registered, you have to compulsorily give separate revised tax invoice. You can't give consolidated revised tax invoice in case if your recipient is registered. So during this time span, whatever supplies you have made, if the recipient is a registered person, compulsorily you have to give separate revised tax invoice. You can give consolidated revised tax invoice only when your recipient is unregistered. During this time span, whatever supplies you have made, if the recipient is unregistered, in those cases you can give consolidated revised tax invoice. When, sir, there also we need to check one more thing. So supplies where recipient is unregistered. If you are making intrastate supply, for all the intrastate supplies, you can give one single revised consolidated tax invoice. For example, assume that during this time you have sold some 100, you have gave some 100 commercial invoices, and all that 100 sales you have made is intrastate sales within the same state you have made. Sir, am I required to give 100 separate revised tax invoices? No. Irrespective of value of supply, for all these 100 invoices, calculate the total amount. For that total amount, you can give one single consolidated revised tax invoice. So that's what they are saying. Supplies where recipient is unregistered. If it is intrastate supply, for the entire cumulative amount, you can give one consolidated revised tax invoice. Sir, if it is an interstate supply, then I need to check the value of supply. If the value of supply is less than or equal to 2,50,000, in one state, whatever supplies you have made, for all that you can give consolidated revised tax invoice. When the value of supply is less than or equal to 2,50,000. However, if the value of supply in case of interstate supply to an unregistered person exceeds 2,50,000, then you have to give separate revised tax invoices. Separate revised tax invoices you have to give. Sir, what is this? Once again, let me tell you an example. Assume that I am located in Karnataka. So I made some interstate supplies. So I sold to some persons who are in Tamil Nadu. For one recipient who is unregistered, all the recipients are unregistered, guys. If the recipient is unregistered, separate revised tax invoices you have to give. Consolidated revised tax invoice will become applicable only when the recipient is unregistered. So I sold to one customer, unregistered person. I gave one invoice worth 2,25,000. Then another person, unregistered person only recipient, Mr. B, I have sold him for 1,50,000. There is another person, Mr. C, interstate supply. To this person, I have sold 2,65,000. Now what the act says is, for this 2,65,000, since the value of supply has exceeded more than 2,50,000, you have to give separate revised tax invoice. But for these two supplies, you can give one consolidated revised tax invoice for the total amount. What is the total amount? For 3,75,000, you can give one consolidated revised tax invoice. Understood, everybody? So this is what regarding consolidated revised tax invoice. And once again, I am telling consolidated revised tax invoice will become applicable only when your recipient is unregistered. Clear, everybody? Next. Once again, clause B. Clause B says, for example, sir, I am selling stationery. One day, a student came to me, bought a pen from me. Unregistered person. A student came to me, unregistered person. He asked me to buy a pen. He bought 10 rupees of pen. Sir, for that also I have to give tax invoice. For that also I have to give tax invoice. 10 rupees of pen I will sell. 1 rupee of margin I will make. For printing invoice, giving it to the customer, my 1 rupee of margin also will go out. So that's why government has given you some relaxation. In some cases, if you are a supplier and your recipient is an unregistered person, and if the value of supply is less than 200, and recipient does not ask for invoice, an unregistered person came to my shop, I supplied him something and value of supply is less than 200, that recipient is not specifically asking for invoice, then what I can do is I need not give tax invoice. By the end of the day, I can determine how many of such supplies I have made for less than 200. For all that, I can generate one consolidated tax invoice at the end of each day. Sir, when this will become applicable? Supplier is a registered person. Obviously, when supplier is a registered person, then only he will give tax invoice. Recipient should be an unregistered person and he does not require invoice. He is not specifically asking for any invoice. And in case if the value of supply is less than 200, no need to give separate tax invoice. By the end of the day, you can generate one single consolidated tax invoice for the purpose of your books. However, if your recipient is registered, even if he is buying 2 rupees of item also, you have to give him tax invoice. This relaxation has been given only when the recipient is unregistered. And one more thing, in case of admission to admission to film at a multiplex screen, if you are going and watching a movie in a multiplex screen, if the price of the ticket is even less than 200, still that multiplex supplier, he has to give tax invoice. So this, if value of supply is less than 200, unregistered person does not require tax invoice, no need to give tax invoice. That does not become applicable for supplier who is supplying the services of admission to a multiplex screen. If you are going and watching a movie, if you are going and watching a film in a multiplex screen, you are an unregistered person. Value of the ticket is less than 200. You don't ask for it, but still the theater owner, that multiplex screen supplier, should definitely give invoice. In the case of multiplex screens and all, invoice is nothing but a ticket only. You will get that ticket, no, e-ticket you will get, that itself is a tax invoice. So one exception where tax invoice has to be given, even though value of supply is less than 200, recipient is unregistered, he is not asking for invoice. Still in those cases, if the service provider is providing the services of admission to multiplex screen, only I am talking about multiplex screen. If it is a single screen theater, then they can follow exemption. Then they can say, okay, value of supply is less than 200, recipient is unregistered, he is not asking for invoice, they will not give any invoice. This exception, this thing will not become applicable only in the case of admission to multiplex screens. Able to understand? So this is what clause B says. Next one. Clause C says, if you are a registered person, but you are a composition dealer. You are a composition dealer. See, if you are a composition dealer, do you have a right to collect the GST from the customer? No. So if you are a composition dealer, you can't give tax invoice. You will give a document called bill of supply. Similarly, you are a registered person, but you are making exempt supplies. Which are on which you should not collect a GST. Even if you are a regular person, but if you are making a exempt supply, So let me add that also here. You are a regular person, but you are making exempt supply. Then also you will not give tax invoice. You can give bill of supply. Here also the same logic will become applicable. Value of supply is less than 200. Then even composition dealer or making exempt supply, they also need not issue separate bill of supply. They can give consolidated. Same above logic also will become applicable here. So what I want to say here is, if you are a composition dealer, you will not give tax invoice, you will give bill of supply. You are a regular person only, but you are not making a taxable supply. You are making an exempt supply of goods or services. You can't give tax invoice, you have to give bill of supply. Now, one more important point I want to bring it here. Assume that I'm a regular person only. Okay. So I'm selling packaged food. A customer came to me and bought the packaged food. Packaged food is a taxable supply. Along with that, I'm also selling milk. Assume milk is an exempt supply. To single customer, I'm making a taxable supply also. I'm making exempt supply also. Sir, I'm a supplier to single customer. I'm making taxable supply. I'm also making exempt supply. Sir, should I give one tax invoice separately and one bill of supply separately? Not required. In these cases, the government has given you one relaxation. If to a same supplier, you are making taxable supply as well as exempt supply, you can give one single document called invoice cum bill of supply. You can give one single document called invoice cum bill of supply. In that you can mention exempt supply, taxable supply, tax amount, all that you can mention in single document. No need to give separately tax invoice and no bill of supply separately required. You can give one single document called invoice cum bill of supply. Important from the examination perspective. Understood everybody? So let us have a look at next one. So 3 clauses of 31 subsection 3 I have explained. Now let us talk about clause D. See, if you are receiving advance, for example, you are a supplier, you did not make the supply yet, but from the recipient, you have received an advance. Now the government says, when you are receiving advance, you have to generate one document called receipt voucher. Supplier, whenever he is collecting advance, he has to generate a document called receipt voucher. Assume you are receiving 1 lakh rupees of advance. Along with that 1 lakh rupees of advance, you have to collect the applicable rate of GST also. You have to collect applicable rate, not 18%. Whatever rate is applicable for that goods, you have to collect that amount of GST also along with the advance. And you have to generate a document called receipt voucher. See, sometimes what will happen is, I will receive the advance, but I don't know what supply I am going to make against this advance. For example, I am a supplier. I sell various kinds of goods. Some goods which I sell attract 5%. Some goods which I sell attract 12%. Some goods attract 18%. Some goods attract 28%. What recipient told is, first you take the advance. Later we will decide which goods I will buy. Sir, I am receiving advance, but I don't know what goods I will supply. I don't know what rate I will supply later. What rate of goods I will supply the later. In that case, how much amount of GST I have to collect, sir? See, if I am selling only one good and if I am receiving advance, I know what supply I am going to make against this advance. But in this case, I received advance, but I don't know what supply I am going to make against this advance. Then how much amount of GST I have to collect? In this case, government told, if the rate is not determinable, assume the GST rate as 18% and collect it appropriately. 18% you have to collect it. Later, if you determine actually whatever supply you are making is other supply, then you can do the adjustments by giving debit notes, credit notes, whatever it is. But when you are receiving advance, when you don't know what is the rate, when the rate is not determinable, then collect the GST assuming the rate as 18%. Similarly, sometimes what will happen is, sir, I am receiving advance, but whatever supply I will make, will it be a interstate supply or will it be a intrastate supply? That I don't know. I got advance, but will I make against this advance interstate supply or intrastate supply? That I don't know. Then how I have to treat it, sir? Then the government says, in case if you are unable to determine what is the nature of supply, assume it as interstate supply and collect IGST. Able to understand? So that is what clause D says. Whenever you are receiving advance, generate a receipt voucher. Rate of tax, if it is not determinable, collect GST at the rate of 18%. Nature of supply not determinable, treat it as interstate. Understood? One more thing. For example, sir, I received advance. Against this advance, later I am making supply. If I make a supply later, I will give tax invoice. Will I pay the GST once again to the government? No. You need not pay the GST once again to the government. Why? Because you have already paid it when you received the advance. Later when you make a supply, just I will give tax invoice, but I need not pay any GST to the government. Why? Because I have already paid it when I received the advance. So you received advance, you made a supply, later you will give tax invoice. Sometimes what will happen is you received an advance, but supply did not happen. You are refunding the advance amount. You are refunding advance amount because of some reasons you initially received advance, but the contract did not materialize. You did not make the supply. So then what I should do, sir? Then you have to give something called refund voucher. You have to give something called refund voucher. You are giving the money back. Whatever advance you have collected, you are giving it back. No supply you have made. You have to give a refund voucher. In that, when you give the refund voucher, you can declare that refund voucher in the return, and whatever tax you have paid to the government, that will be given back to you. Whatever tax that you have already paid, that will be given back to you. If supply happens, you will not get any refund. So whatever things, whatever payment you have made, that will go to the government. In case you received advance, but later you are giving it back, then you will generate refund voucher, and that refund voucher you will submit it in the return. They will reduce your tax liability. Understood? So this is what refund voucher, that will be the next clause. If you see here, next clause, refund voucher. Next, two more clauses are there. Let me try to explain it also. Assume there is a supplier. He is supplying some goods or services to the recipient, but those goods and services are covered under reverse charge mechanism. Those goods and services are covered under reverse charge mechanism. That means recipient will directly pay the tax to the government. So in case you are a recipient who are paying the tax under reverse charge mechanism, you have to generate one document called payment voucher. Whatever taxes you have paid, for that you have to generate something called payment voucher. I am talking about G clause. So payment voucher, the recipient, whoever is under reverse charge mechanism, whatever taxes he has paid, for the payment of that taxes, he will generate one voucher called payment voucher. He will generate one voucher called payment voucher. Now there is one more point I want to talk here. So assume that there is a supplier. There is a supplier. Now this supplier is supplying the goods to recipient. Now this recipient is required to pay the tax under reverse charge mechanism. Okay, well and good. When he for whatever tax he has paid, for that he will generate payment voucher. Now when it comes to supplier, if the supplier is already a registered person, if the supplier is a registered person, if he is making supply of goods or services to the recipient, he will give tax invoice. He will give tax invoice. But anyhow, he will not collect any tax from the customer. Recipient directly will pay the tax to the government. But still, if the supplier is registered, he will give tax invoice. What if supplier is unregistered? If you are a recipient required to pay the tax under reverse charge mechanism, and when your supplier is unregistered, he will definitely not give any tax invoice. In those cases, recipient himself has to do something called self-invoicing. He himself has to generate what? Self-invoicing. He has to generate one invoice on his own. So this is separate from payment voucher. For whatever taxes you have paid, for that payment voucher you have to generate. Always you have to generate payment voucher. Whether supplier is registered or unregistered, always you have to generate a payment voucher. When it comes to self-invoicing, this will be done by those recipients who are receiving the goods or services from an unregistered supplier. They have to do the self-invoicing. Whereas if the supplier is already a registered person, he will give you invoice. But when the supplier is unregistered, then there will be self-invoicing, and payment voucher, always it will be there. Payment voucher will be for the amount of taxes paid. Self-invoicing is for that receipt of goods and services. Understood everybody? So this is what clause F says. Self-invoicing, recipient under reverse charge mechanism should generate it when he received goods or services from unregistered person. But when it comes to payment voucher, recipient should always generate it. Whether the supplier is registered or unregistered, in all the cases, he has to generate the payment voucher. Understood everyone? So this is what regarding section number 31. With that, we are done with successfully section number 31, which is going to talk about tax invoice. Now we will try to revise the concept of e-invoice. So let us try to revise now what is this concept of e-invoice, for whom it will be applicable, for whom it will not be applicable. So we'll try to have one quick revision. So first of all, what exactly is the concept of e-invoice? See, generally, the GST Act says if you are a registered person and if you are making a taxable supply of goods or services, you will issue a document called tax invoice. So we have seen in the previous provisions what details are required to be there in the tax invoice, how many copies of tax invoice is required to be given. In the case of supply of goods, tax invoice has to be given in 3 copies. In case of supply of services, tax invoice should be given in 2 copies. So like that, as a registered person, whenever you are making a taxable supply of goods or services, you will give a document called tax invoice. And in that tax invoice, various details will be included. But the GST Act also says that certain registered persons, while they are making a taxable supply, in addition to that tax invoice, they have to issue another document called e-invoice. So what does the GST Act say? Certain registered person. Once again, I'm telling you, not all registered persons, guys. The Act has told only certain registered persons who fulfill certain turnover criteria. So if those registered persons who have fulfilled certain criteria whenever they are making a taxable supply, they have to give one more document in addition to the tax invoice, which we call it as e-invoice. So first of all, let us try to understand who are those registered persons who are required to issue the e-invoice. Let us first have a look at the applicability criteria. First, we will see for whom it is applicable. So GST Act says those registered persons whose aggregate turnover in any preceding financial year from the year 2017-18, if it has exceeded 5 crore rupees, then e-invoice is required to be given only for B2B supplies. So what exactly they are trying to say? See here, whether e-invoicing requirements will be applicable or not, that depends on the turnover, aggregate turnover of the registered person. And the criteria which has been given is a registered person whose aggregate turnover in any preceding financial year. So what they are telling? The aggregate turnover in any preceding financial year from the year 2017-18. Take for example, you are in the year 2022-23. They are not just asking you to check the turnover of 1 year. From the year 2017-18 till the current year, you have to check in any of that years, in any of that financial years, whether aggregate turnover has exceeded 5 crore rupees. Like take for example, in the year 2017-18, the registered person's turnover is 3 crore rupees. In the year 18-19, the registered person's turnover is 4 crore rupees. In the year 2019-20, the aggregate turnover is 6 crore rupees. So like that, from the year 2017-18, I have to see that what is the aggregate turnover. If in any financial year, not cumulative value guys, if in any financial year the aggregate turnover has exceeded 5 crore rupees, then they are required to, then those registered persons, they are required to mandatorily issue a document called e-invoice. There was an amendment in this area. Earlier, the e-invoice requirements were made mandatory when the aggregate turnover is exceeding 10 crore rupees, but this limit has been reduced even further. Now, as per the amended provisions, e-invoice is required to be given when the aggregate turnover from the financial year 2017-18, in any year from the year 2017-18, if the aggregate turnover has exceeded 5 crore rupees, then the registered person is required to issue a document called e-invoice. And one more thing you have to remember here, e-invoice is required to be given only for B2B supplies. E-invoice is required to be given only for B2B supplies. That means if you are a registered person, if you are making supply to a recipient, the recipient is also a registered person. So supplier is also a registered person, recipient is also a registered person. Then we generally call it as B2B transaction. E-invoice is required to be given only for B2B transactions. For B2C transaction, there is no requirement of e-invoice. For B2C transactions, there is no requirement of e-invoice. E-invoice is required to be given only for B2B transactions. So that is what the applicability says. So a registered person whose aggregate turnover in any preceding financial year from the year 2017-18 has exceeded 5 crore rupees, then they are required to mandatorily issue e-invoice, and e-invoice is required to be given only for B2B supplies. However, there are certain exemptions. That means even if a registered person has fulfilled the above criteria, still certain registered persons are exempted from issuing e-invoice. That means if a registered person, even though his aggregate turnover has exceeded 5 crore rupees, generally as per rule he is required to give e-invoice for B2B supplies. But still the GST Act has given some exemption. If you are a registered person and if you have fulfilled the above criteria, still if you fall under this exemptions category, you are not required to issue e-invoice. Sir, who are exempted from issuing e-invoice? Number one, SCZ units. If you are a unit operating from a SCZ, then for you, even though your aggregate turnover has exceeded 5 crore rupees, still you are not required to issue e-invoice. And you have to be very careful here, guys. Exemption from e-invoicing is only there for SCZ units. It is not there for SCZ developers. They might ask a question in the examination. They might ask you a question. So there is so and so SCZ developer. His aggregate turnover has exceeded 5 crores in one of the financial year from the year 2017-18. Will he be required to give e-invoice? Yes. Exemption is there only for SCZ unit. Exemption from e-invoicing is not there for SCZ developer. SCZ developers are required to issue e-invoice if they fulfill the above criteria. Exemption is there only for SCZ units. Similarly, an insurance company, banking company, financial institution, NBFC, these kind of financial institutions are also not required to issue e-invoice even though they fulfill the above criteria. So which kind of financial institutions? Insurance companies, banking companies, financial institutions, and NBFCs. Similarly, GTA, goods transport agency. If you are a GTA, if you are a good transport agency, even though if your aggregate turnover has exceeded 5 crore rupees, still you are not required to issue e-invoice. And also passenger transportation service. If you are a registered person, if you are providing passenger transportation services, even though your aggregate turnover has exceeded 5 crore rupees, you are not required to issue any kind of e-invoice. And also exhibition of films in multiplex theaters. In case if you are running a movie, if you are running a multiplex theater, you are a registered person. The service which you are providing is exhibition of films in a multiplex theater. Even though your aggregate turnover has exceeded 5 crore rupees, still you are exempted from giving e-invoice. You need not give e-invoice. Similarly, government departments are also exempted from giving e-invoice, and local authorities are also exempted from giving e-invoice. So these are the people, even though they have fulfilled the above criteria, still they will be exempted from giving e-invoice. So what is that list, guys? SEZ units, not SEZ developers, insurance company, banking company, financial institution, NBFC, goods transport agency, passenger transportation services, exhibition of films in multiplex, government departments, and local authorities. So these are the people exempted from issuing the e-invoice even after fulfilling the said criteria. Sir, how to generate e-invoice, sir? A simple brief of process I will do. First, what the registered person will do is he will open his accounting software or ERP software like Tally, etc. In that Tally, he will generate the tax invoice. First, in his accounting software, he will generate the e-invoice. And the format of the e-invoice should be GST INV01, important for MCQs and true or false. So the registered person, first he will generate the tax invoice in his ERP or accounting software. Then he will upload the details of that invoice in the invoice registration portal. In the invoice registration portal. Sir, what is invoice registration portal? So let me show you what is the invoice registration portal. Nothing but www.einvoice12 like that. So many things they have created, so many portals they have created. Let me show you that. Just a moment, guys. Yeah, this one. So these are the IRPs, nothing but e-invoice registration portals. So once you have generated tax invoice in your accounting software or ERP, you have to visit any of this website and upload the details of the tax invoice in this website. So then what will happen is once you update that details, once you upload that details in the invoice registration portal, then invoice reference number, a unique number for each invoice will be generated along with the QR code. See, this QR code is not for payment. On e-invoice, whatever QR code will be there, that is not for the purpose of payment. That will capture various details relating to invoice, like who is the name, who is the supplier, who is the recipient, what quantity of goods, what is the value of supply. Those details will be captured in that QR code. Understood? And one more important thing, in case of issue of e-invoice, there is no need to carry physical copy of the tax invoice. In case if e-invoice is getting generated during the movement of the goods, during the transit of the goods, there is no need to carry a physical copy of the tax invoice. Understood? Like this, we have one more concept also. There is something called dynamic QR code. Some registered persons are required to include one dynamic QR code for the purpose of payment. For the purpose of offering payment mechanism, some registered persons are required to quote dynamic QR code on their invoices. So dynamic QR code is required for whom? Let us see. Applicability. Sir, who are required to generate the dynamic QR code? Those registered persons whose aggregate turnover in any preceding financial year from 2017-18, if it exceeds 500 crores, then they are required to generate one dynamic QR code, whereas dynamic QR code is required only for B2C supplies. E-invoicing is requirement for B2B supplies, whereas dynamic QR code is requirement only for B2C supplies. And even some clients, even some registered persons fulfill the above criteria. Still, some people are exempted from dynamic QR code. Who are they? Insurance, banking company, financial institution, NBFC, GTA, passenger transportation services, exhibition of films in multiplex, OIDAR, online information data access retrieval, Netflix, Amazon Prime. These kind of people are also not required to mention the dynamic QR code. So you can do the comparison here for which people e-invoicing is exempted, for which people dynamic QR code is exempted. Okay, so just have a comparison once. So with this we are done with all the invoice related requirements. Now we will talk about debit notes and credit notes. First we will see subsection 1, 34, section 34 actually talks about debit and credit notes. Subsection 1 and subsection 2 of section number 34 actually talk about credit notes. First let us try to understand when the supplier will give credit note. When the supplier will give credit note. When the taxable value or tax charged exceeds taxable value or tax payable. Sir, when I will give credit note, one simple example I will give you. Assume that I am a supplier. I made some supply to the recipient. I gave tax invoice. In my tax invoice, I charged the consideration of 1 lakh rupees and I have charged the GST of 18,000, 1,18,000. But later I realized that I collected extra amount from the customer. I collected extra amount. Whatever goods I have sold, those are actually worth 90,000 rupees only. But by mistake, I have collected extra amount. So if whatever taxable value or whatever tax that has been charged exceeded than the actual amount of taxable value or tax that you should have collected, that means you want to get lesser payment from the recipient. You want to get the lesser payment from the recipient. In those cases, I will give a document called credit note. So initially I gave a tax invoice for 1,18,000, but later I realized I charged extra amount from the recipient. Now I'll give something called credit note. In that credit note, I will say 10,000 rupees discount. Nothing but I'm giving reduction to the recipient. For this 10,000 and 1,800, for total 11,800, I will give a document called credit note. Okay, so one case when the supplier will give credit notice, whatever taxable value you have charged, whatever tax you have collected, that is more than the actual amount. See, sometimes what will happen is I have gave a tax invoice. In my tax invoice, I have gave 1 lakh rupees as consideration, 18,000 rupees of GST I have collected, 18% of GST I have collected. Later I realized that whatever goods I have sold, they don't attract 18%, they attract only 5%. They attract only 5%. Then the government, then I want to reduce this amount. I collected extra tax from the recipient. Now what I will do, I will give a credit note only for the tax amount. Consideration is correct only, but tax I have collected extra. So what I will do, I will give a credit note for only the tax component of 13,000. Able to understand, everybody? So when I want to collect less from the recipient, then I will issue something called credit note. So that is what even I have written here. First case, when the credit note will be given, where the taxable value or tax charge has exceeded the actual taxable value and tax payable, then the supplier may issue either one credit note or more than one credit notes. I will talk about one or more credit notes in a short while. One more case where the credit note will be given, goods returned by the supplier. You send the goods to the supplier, you send the goods to the recipient. Recipient did not like it, he returned it. Initially, when you supplied the goods, you gave tax invoice. Now, if the recipient is returning the goods back to you, in that cases also we have to give credit note. Or goods or services, whatever you have supplied, those are found to be deficient. Those are not actually good. Those are damaged quality. For example, you supply the goods to the recipient, but those are found to be deficient. They are damaged stock. Now also you have to give credit note. So in these three circumstances, the supplier will issue credit note. Either he can issue one single credit note or more than one credit note. Sir, what do you mean by this? Assume that to one supplier, I have made three supplies. To one supplier, I have made three supplies. For example, why I have given one tax invoice, 1 lakh rupees and 18,000 rupees of GST I have collected. I have given one more tax invoice, 2 lakh rupees of consideration, 36,000 rupees of GST. And one more invoice I have given once again for 1 lakh rupees, 18,000 rupees of GST I have collected. Later I realized that in all these tax invoices, I have charged extra amount. I want to give credit note. One thing I can do, you can give separate credit note for each tax invoice, or alternatively what you can do is one single credit note you can give for all the cumulative tax invoices also. It's up to the choice of the supplier. Very important. This they might ask you as one theoretical question. So you can give either one single credit note or you can give more credit notes also. Separately you can give credit note or you can give one single credit note for all the tax invoices. Next one. Sir, what is the time limit for declaring the credit note in the return? See, for example, you have given credit note. See, what I mean to say here is, assume that you made a supply in the month of April. In the month of April 2023, you made the supply. You gave tax invoice. You told, sir, 1 lakh rupees is the consideration, 18,000 rupees is the GST, total 1,18,000. Now what you will do, this 18,000 rupees you will pay to the government. As a supplier, this 18,000 you should pay to the government, no? So you paid it to the government. Now what will happen is, in the month of May, because of some reason, you are giving credit note. 10% credit note you are giving. So you gave a credit note for 10,000 rupees, proportionate amount of GST also, total 11,800 rupees of credit note you have given in May. Now what you will do is, in the month of May, when the supplier is filing the return, he will declare this credit note. Sir, initially I paid 18,000 rupees of GST, no, but I am giving it back 1,800 to my customer. Please give it back to me. So when you file the return for May 2023, you can actually declare that credit note in the return for May 2023 and you can get back that reduction in the tax liability of 1,800. See, initially you paid 18,000 already to the government when you gave a tax invoice. But since now you are giving credit note, you can get back that proportionate amount of tax whatever you have paid. Sir, I gave a credit note in May. I did not declare it in the May month return. Don't worry. You declare it in the June month's return. Sir, I did not declare in the June month's return also. Don't worry. You can declare in July 23 return. Sir, I forgot it. Sir, I realized it in December 2023. No problem, do it. In December 2023's return, you can declare it. Sir, like this, at any point of time, I can declare the credit note? No, there is a maximum time limit within which you have to declare the credit note in the return. So what is the time limit is 30th of November following the end of the financial year or actual date of filing of the annual return, whichever is earlier. See, initial supply I have made in April 2023. That means this supply belongs to 23-24 financial year. So maximum, whatever supply I have made in April, till what time I can declare that credit note in my return? I can declare it 30th of November succeeding the end of the financial year. When this financial year will end? 31st of March 24. What is 30th of November succeeding it? 30th of November 2024. On or before this date or actual date of filing of annual return. See, the due date of filing of annual return is 31st of December following the end of the financial year. So actual due date is for this year 23-24. I will file my, the due date for filing the annual return is 31st of December 2024. They are not talking about due date, they are talking about actual date. See, I filed my return on 15th of October only I filed my return, whichever is earlier. 30th of November or due date of filing the annual return, whichever is earlier, this date will be earlier. Till this date, on or before this date, you can declare that credit note. You can declare credit note. Then only government will give back that proportionate tax, whatever you have paid. If you declare it, if you declare that credit note after this date, you declare it, but the government will not give back your credit. They will not give back your taxes. Able to understand whatever I am trying to say? So there is a time limit. If you want the government to give back the tax relating to that credit note, you have to declare that credit note on or before 30th of November following the end of the financial year or actual date of filing of the annual 30th of November following the end of the financial year or actual date of filing of annual return, whichever is earlier. Take for example, I made a supply in May 2023. For this supply, if I have given any credit note, maximum within what time limit I have to declare this? 30th of November following the end of the financial year. This belongs to financial year 23-24. That means 30th of November 2024 or actual date of filing of annual return. Assume that actual date of filing of annual return is 15th of December 2024, whichever is earlier. Whichever is earlier, 30th of November is earlier. So on or before this date, you have to declare that credit note. If you declare this on or before that date, then only government will give back that proportionate amount of tax. If you declare it later, for example, you are declaring it for the month of December, in the December 2024, whenever you are filing return, then you are declaring it. You declare it, but the government will not give back your taxes. Able to understand everybody? The government will not give you the refund of the taxes, whatever you have already paid. Understood? So this is what the time limit, very important from the examination perspective. Definitely they might ask a question. I have a gut feeling. So time limit for declaring the credit notes in the return. When you will declare the credit note, 30th of November following the end of the financial year or date of furnishing of the annual return, whichever is earlier. If you declare the credit note after this date, you can declare it, but the government will not give back your taxes. So this is what regarding debit note. Now let us talk about credit. This is what subsection 1 and subsection 2 actually talk about credit note. Now let us talk about debit note. Subsection 3 and subsection 4 talk about debit note. Sir, when you will give debit note, exactly opposite of credit note. If you realize that you have actually collected less amount from the recipient, you want to collect some extra amount from the recipient, then you have to give debit note. For example, I want to collect interest late fee penalty. I made a supply, but I want to collect now interest late fee penalty. You give the debit note. You give the debit note and pay the extra taxes. For example, what is happening here is one simple logic. I will wind up. I will end this chapter in remaining 3-4 minutes. Please have some patience. Supplier is there. I supplied the goods to the recipient. So initially, I gave a tax invoice for 1 lakh rupees, 18,000 rupees of GST I have collected. Later, I realized I charged less from the customer. I want to collect extra. Now, what you have to give is you have to give debit note. Now you will give debit note. Sir, I charged less from you, 10,000 rupees extra I want, extra 1800 rupees of GST I want. Now what will happen is initially when you made the tax invoice, you will pay 18,000 rupees of amount to the amount of GST to the government. Later, whenever you give the debit note, that you have to declare the return and pay this extra amount also to the government. See, when you are giving debit note, you want to pay extra tax to the government. When you are giving credit note, you are asking your taxes back whatever you have paid. Understood everybody? So debit note will be given when the supplier wants to collect something extra from the recipient. And when you give the debit note, you have to declare that in the return and pay the extra taxes to the government. Now, sir, is there any time limit for declaring the debit note in the return? No, there is no time limit for declaring the debit note. At any point of time, you can declare. Even after 10 years also, you can declare the debit note. Why? Because government will be happy. When you are declaring debit note, you are paying extra taxes to the government. Why do you think government will put a limit? When you are paying the taxes to the government will be happy, no? So that's why they told debit note can be declared at any point of time. But credit note, they put a limit. Why? Because when you are declaring credit note, you are asking your money back from the government. So that's why they put a limit. Understood? Clear and comfortable? So this is what 34 subsection 3 and 34 subsection 4 says. No time limit for declaring debit note. I will end my discussion with one more small topic, rule number 55, which is talking about delivery challan. See, when you are making supply, when you are making the movement of the goods, but not for the purpose of supply, you are making the movement of the goods, but the purpose of movement of the goods is not supply. Then you have to give some supporting document. No, when the goods are getting moved, some supporting document should go along with the goods. But you can't issue tax invoice. Why you can't issue tax invoice? Why? Because you are not making supply. If you make supply, you will give tax invoice. But you are moving the goods for any purpose other than supply. Sir, what supporting documents I have to send along with the movement of the goods, sir? You have to generate one document called delivery challan. Examples, if I have to say, for example, you are moving the goods for job work. You are not moving the goods for supply. For example, I am selling shirts. I have sent these shirts for my logo to be printed on this shirt. I am not making supply. I am sending this shirt so that other printer is there. He will print a logo on my shirt and he will send it back to me. I am sending the goods for the purpose of supply? No, for job work. I can't give tax invoice, but when the goods are getting moved, you need one supporting document. So there we will generate delivery challan. Or you are moving the goods for reason other than supply. Like I told, when you are moving the goods for sale or return basis, approval basis, then also you can't give tax invoice, but you have to give something called delivery challan. Or government also might notify other supplies, and also supply of liquid gas when quantity is not known. Sometimes, for example, Indian Oil Corporation is sending a truck, is sending a tanker. This tanker contains oil. Now it will go to petrol pump. In the petrol pump, there will be storage tank. In that storage tank, it will fill how much quantity they require. That means if they take this tanker, for example, this tanker contains 100 liters. But how much quantity will be unloaded in the tanker, that they don't know. That they will come to know when actually filling. So initially, IOCL is sending 100 liters of liquid gas. But how much quantity will be supplied, it will known only when that unloading is happening. Assume that this truck has in the storage tank, there is a space only for 95 liters. 95 liters. So actual quantity of supply is getting determined only at the time of unloading. But initially, IOCL is moving 100 liters of liquid gas. No. Can they generate tax invoice for 100 liters? No. Why? Because how much supply, how much quantity supply will happen, they will come to know only when that unloading takes place. So initially, when they are sending 100 liters of liquid gas, they will give something called delivery challan. When quantity becomes clear, okay, 95 liters of supply is happening, then they will give tax invoice. But initially, when this truck is going along with 100 liters of this liquid gas, they will move it on delivery challan. Why? Because they don't know how much quantity supply will take place. Once the quantity is confirmed, then they will give tax invoice. So nothing but one simple discussion, if I have to say, delivery challan is required to be given when the movement of the goods is happening for any purpose other than supply. Then we have to move the goods along with the supporting document called delivery challan. That's it. This is what rule number 55 talks about relating to delivery challan. Understood everybody till here? That's all. This will be enough relating to tax invoice, credit and debit notes. That's all regarding this chapter. Okay, so the next chapter which we have is time of supply. But guys, I'm not going to revise this chapter. Why? Because there is no such concept in this chapter to revise. So this chapter is completely about remembrance of dates. What is the time of supply in case of goods? What is the time of supply in case of services? So there is no such concept involved here in this chapter to revise. So what I will do is, anyhow, I have given a summary. So entire summarized version of the chapter, I have drawn it in the form of summary notes here. So just use this notes. If you go through these notes, that itself is like a marathon. That itself is like a revision. So there is no specifically I need to revise it here. Why? Because even if I revise it, I will be nothing but doing this content, reading this content, whatever has been there already here. So that's why I'm skipping this chapter. I'm not going to revise it. This notes anyhow will be shared with you. If you read this notes, that itself will serve as a good revision. Now, So let me proceed directly with the next chapter for revision. Very important chapter, very conceptual chapter. Majority of the questions comes from this chapter, input tax credit. So we are going to spend now significant amount of time to understand this concept of input tax credit. So let us try to revise quickly the important provisions from the chapter input tax credit. So what exactly is this input tax credit? See, when I say input tax credit, we all know that. So whenever there is a supplier, if there is a supplier, if he is a registered person other than composition dealer, if he is making any supply of, just a minute. So if he is making any supply of goods or supply of services or both to the recipient, so whenever he is making any supply, he will give a tax invoice. In the tax invoice, he will mention what is the value of supply. In that GST also he will mention. Yes or no? Now the recipient, if he is also a registered person, the recipient, if he is also a registered person, whatever tax that he is paying on his inward supplies goods like services etc., whatever goods or services which a registered person is receiving, on which he has paid some amount of GST, that amount is not a cost of this recipient, that amount will be actually given as input tax credit. That amount will be given as what? Input tax credit to the recipient. That means government will collect it, but they will give it back to the recipient only in the form of some credit. So now what the registered person can do with this input tax credit, what he can do with this input tax credit is, now if this person is going ahead and making further supply of goods or further supply of services or further supply of both, then he will also collect, he will also have output tax liability. For example, if he is making supply, this person has received the goods and services, further he is making supply. Now whenever he makes any supply, now what will happen is he will also give tax invoice. In that tax invoice he will mention value of supply. In that tax invoice he will also mention GST amount. Now that becomes his output tax liability. So this person on his outward supplies is required to pay output tax liability. So whatever his output tax liability is there, all that amount he need not pay it in the cash. What he can do is, whatever GST which he has paid on his inward goods and services, that input tax credit he can use it. Balance, if any is left, that only he will pay it in cash. That only he will pay it in cash. So this is what the entire concept of input tax credit. So if a registered person, if the registered person buys the goods or services from another registered person, and if he has paid any, if he has been charged any GST on that purchases of services, goods, etc., on that the recipient can avail the input tax credit, which he can adjust it against his output tax liability. Understood? So this is what the entire concept of input tax credit. Now let us try to revise. Three sections are actually associated with this chapter. When I say I'm teaching you the chapter input tax credit, we are actually trying to learn three sections: section number 16, section number 17, and section number 18. So if we revise these three sections, input tax credit chapter will be over. Without any delay further, let me try to explain it. First, we will start with section number 16, which is going to talk about eligibility, who is eligible for availing input tax credit, and what are the conditions which are required to be fulfilled in order to avail the input tax credit. So what does section number 16 talk about? Who is eligible for availing input tax credit, and what are the conditions subject to which a recipient can be able to avail the input tax credit? Let us try to understand it in a detailed manner. So let us start with 16 subsection 1. See, 16 subsection 1 talks about eligibility. Who is eligible for availing input tax credit? A registered person. Who is eligible for availing input tax credit? Only a registered person. And on what he can avail input tax credit? On the supply of goods or services or both which are supplied to him. Nothing but on your inwards, whatever goods which are supplied to you, whatever services which are supplied to you. If I am a registered person, if I am receiving any goods, if I am receiving any services, or if I am receiving both, and on what goods and services which are used or intended to be used in the course or furtherance of the business. So I'm buying some goods, I'm buying some services. With what purpose I'm buying the goods and services? To use it in the course of business. Or I'm not using it now, but at the time when I'm buying it, my intention is to use that goods and services in the course or furtherance of my business. On that goods and services, on that inward supplies of goods or services, the registered person can take input tax credit through his electronic credit ledger. Through his what? Electronic credit ledger. Guys, able to understand everybody? So 16 subsection 1 talks about who is eligible for availing input tax credit. What does 16 subsection 1 say? So 16 subsection 1 says a registered person on supply of goods or services or both to him, which are supplied to him, that means which are received, which are used, those goods and services which are used or intended to be used in the course or furtherance of the business, then that registered person can take input tax credit through his electronic credit ledger. So this is what 16 subsection talks about. Now let us try to understand what are the conditions which are required to be fulfilled for availing input tax credit. Sir, I am a registered person. I have bought some goods and services. I want to use it in the course or furtherance of my business. Can I always take input tax credit? No, there are some conditions. There are some conditions which are required to be fulfilled. Those conditions are given in 16 subsection 2. Let us see what are that conditions. So conditions to be fulfilled for claiming input tax credit. What are they? Clause A, 16 subsection 2 clause A says, registered person should be in possession of tax paying document. See, if you want to avail input tax credit, you should have some supporting document. There should be some proof that you have been charged GST. There should be some tax paying document, no? So the government is telling, if you want to avail input tax credit, the first and foremost condition, the recipient should always have some supporting document. Sir, what can be accepted as supporting document? Those things are actually mentioned in rule number 36. Sir, which documents will be accepted for availing input tax credit? What details are required to be there in the input tax credit? So those details are covered under rule number 36. Let us see what does rule number 36 say about supporting documents. Sir, which documents are accepted for claiming input tax credit? That is addressed in rule number 36 sub rule 1. So 36 sub rule 1 says, in order to avail input tax credit, you should have at least one of the below mentioned documents. What are they? Either you should have tax invoice. And if you are a person required to pay the tax under reverse charge mechanism, and if the person required to pay tax under reverse charge mechanism, if he buys the goods or services from an unregistered person, there will be a concept of self-invoicing. Do you remember? Just in the previous revision only I covered. So I have told you self-invoicing concept. So where is it? Self-invoicing concept. Yeah, here it is. So I have explained you about self-invoicing concept. Here it is. So self-invoicing, if the recipient is under reverse charge mechanism and he is receiving goods or services from unregistered person, then there will be a self-invoicing, no? At least the recipient should have that self-invoicing document in order to avail the input tax credit. Or he can claim the input tax credit on the basis of debit note also. Or bill of entry, in the case of imports and all, even bill of entry is also accepted. Or revised tax invoice. If you have revised tax invoice, on that basis also you can avail input tax credit. Or document issued by input service distributor. So what is input service distributor? That is at the CA final level we will discuss. So these are the documents which are required to be possessed by a registered person in order to avail the input tax credit. Sir, what details are required to be there in the document? See, you need not the invoice need not contain all the details required as per rules. If in the document, if in the tax paying document, if these details are there, that will be enough to avail the input tax credit. Sir, which details? If the invoice, if the document shows what is the amount of tax, and if the document shows description of the goods and services, if the document shows what is the value of supply, GSTN of the recipient and the supplier, and also place of supply in case of interstate supply. So if these details are there in the document, that will be enough in order to avail the input tax credit. Extra documents, extra details, whether they are there or not, that doesn't matter. If in the tax paying document, if these details are there, that will be enough for the registered person to avail the input tax credit. Now let us talk about 36 sub rule 3. 36 sub rule 3 says, in case if you have paid any tax because of any fraud towards a demand involving fraud, then the government will never give you that credit. Sir, what they are trying to say here? What they are trying to say here is, assume that there is a supplier. There is a supplier. Now he is sending the goods. He is sending the goods in a truck. So this is a truck. In the truck, he is sending the goods to recipient. Now supplier and recipient both have mutually agreed. Hey, you send the goods without attaching tax invoice. You just send the goods without attaching tax invoice. If this person gives a tax invoice, they have to pay the GST to the government. So what they have both mutually agreed is, supplier and recipient both have mutually agreed, boss, you send the goods without charging GST, without giving tax invoice. No one will stop us. If at all somebody stops, we will see. Okay, so this person has dispatched the goods on the truck without giving him the tax invoice. Now in between there is a GST officer. There is a proper officer. Now this officer stopped the vehicle and he caught the truck. He told, okay, you are moving the goods without tax invoice. I will not let you move the goods. Now he gave a demand order. He caught you. That means you are trying to commit a fraud. He caught you and he told, since you are moving the goods without tax invoice, now you pay the tax amount and also penalty. So since the officer has stopped, now you are paying the tax. For example, 1 lakh worth of goods you are moving and 18,000 rupees of tax was paid now. See, this you have paid, this 18,000 rupees of GST you have paid because you are caught doing the fraud. Proper officer has caught you doing the fraud. That's why you paid this GST. Now later you informed the recipient, hey, we both mutually agreed, no, police officer stopped me and I have to pay 18,000 rupees. You pay me that 18,000 rupees of GST. Okay, you have paid that 18,000 rupees of GST also now. Now, can this recipient avail this input tax credit of whatever 18,000 rupees he has paid to the supplier? Can he avail that input tax credit? Never. Government told never. If you are paying any tax because you are caught doing the fraud, government told we will never ever give you credit. Why? Because you have committed a mistake? No, that's why we will not give you credit. So that is what rule number 36 sub rule 3 says. Next one, rule number 36 sub rule 4. One more condition they say. So if you want to avail input tax credit, those details of outward supplies should be furnished by the supplier in GSTR1 or invoice furnishing facility, and that input tax credit should have been communicated to you in GSTR 2B. You can avail input tax credit only when the supplier, for example, you have bought this, let us ignore this fraud and all, assume that there is a supplier. There is a supplier. He sent the goods to the recipient. He has given a tax invoice. 1 lakh rupees worth of goods, 18,000 rupees of GST. Total 1,18,000. Sir, as a recipient, I have a tax invoice now. In my possession, I have a tax paying document. And in the tax paying document, GST was shown as 18,000 rupees. Can I avail this input tax credit? Wait. The act says this recipient can avail input tax credit only when this supplier will furnish one return. GSTR1 he will furnish details of outward supplies. So this outward supply information should have been furnished by the supplier in his GSTR1, and that respective input tax credit should have been reflected in the recipient's GSTR2B. So if in the GSTR2B also it is showing, okay, 18,000 rupees of credit you are eligible for, then only the recipient can avail that input tax credit. If this supplier did not file his GSTR1, then obviously it will not show it in GSTR2B. Even though you have a tax invoice, you can't avail this input tax credit. So the recipient, the registered person, can avail input tax credit only against those supplies which are declared by the supplier in his GSTR1, and that input tax credit has been communicated to the recipient in GSTR2B. Only that amount can be availed as input tax credit. That is one more condition. Understood? So what we have covered till now? So first one condition we have covered. First 16 subsection 2 clause A says if you have to avail the input tax credit, you should have some supporting tax paying document. Sir, what kinds of documents will be accepted? I told invoice, self-invoicing, debit note, BOE, that is bill of entry, and revised tax invoice or document issued by invoice service distributor. Input service distributor. Then 36 sub rule 2 says what contents should be there. 36 sub rule 3 mentioned, in case if you have paid any tax because of committing fraud, you will never be able to take the credit of it. And 36 sub rule 4 says whatever you can avail input tax credit only when the details of such outward supplies are furnished by the supplier in GSTR1 and the same has been communicated to you in your GSTR2B. Then only you can avail input tax credit. Everybody clear till here? Next one. So let us have a look at few more conditions. Now let us come back to 16 subsection 2. So clause A we are done. Now what is clause AA? There is one more clause. Clause AA. What is the condition mentioned in clause AA? Nothing guys. Whatever they have mentioned in rule number 36 sub rule 4, the same they have included in the main section also. Initially, they put that condition that the details of outward supply should be furnished in GSTR1. The same should be communicated to the recipient in GSTR2B. That was initially mentioned in the rule. The same thing they have drafted a separate section also. So one more condition, clause AA, nothing but it contains the same information whatever has been given in rule number 36 sub rule 4. Which is what details of outward supplies should be furnished by the supplier in his GSTR1 or IFF, and input tax credit should be communicated to the recipient in his GSTR2B. Then only you can avail input tax credit. Same guys, 36 sub rule 4 and 16 subsection 2 clause AA, both are saying the same thing. Next one, clause B, next condition. One more condition is the recipient should have received such goods, services or both. See, if you want to avail input tax credit, just having a tax invoice alone will not be enough. You should have received the goods or services or both. For example, assume that you received the invoice on 15th of November 2023, you received the invoice. But actually the goods you have received it on, the respective goods you have received it on, assume some 10th of December 2023, you received the goods. Now you tell me for which month I can avail input tax credit. Since invoice has been given in the month of November only, can I avail input tax credit? No, you can avail input tax credit only in the month when the goods or services are received by you. So having an invoice alone will not be enough. Even you should have received that goods or services in order to avail that input tax credit. Sir, I have a tax invoice, but I did not receive yet goods or respective services. Can I avail input tax credit? No, you can't. You can't receive it. You can't avail it. There is one more important point I will try to highlight here. See, sometimes what will happen is you will receive the goods in installments. For example, you bought total 10,000 quantity. Now it is very much difficult for the supplier to dispatch all the 10,000 quantity once. He is dispatching the quantities in installments. For example, first he dispatched 1,000, one more container 1,000 quantity, one more container 1,000 quantity. So like that, in installments, he has sent you goods. Sir, when I should claim input tax credit? When I receive the first lot, will I be able to avail input tax credit? Or when I receive the last lot or installment, I am eligible for claiming input tax credit? The act has told, in case if you are receiving the goods or services in installments or lots, the registered person can avail input tax credit only on receipt of last lot or last installment. Then only you can avail the input tax credit. Sir, where it was mentioned, I have written it here also. So like as you could see, yeah, this one. Some important points as you could see here. Goods received in lots or installments. The recipient is entitled to take the input tax credit on receipt of last installment or last lot. Only after the last lot or last installment has been received, then only you can avail the input tax credit. So that is the one more condition. You should have received such goods or services or both. See, one more explanation they have given here, one more provision they have added here. Assume that there is a person, Mr. B. He is a wholesaler. He's a wholesaler. Now he placed an order with Mr. A. He's the ultimate supplier. He placed an order. How much order he has placed? Assume that he is in the business of selling garments. Mr. B is a wholesaler. Mr. A is a manufacturer. Mr. B is a wholesaler. Now wholesaler ordered some 1,000 shirts. Wholesaler ordered 1,000 shirts from Mr. A. Okay. But before this goods, before this 1,000 shirts can be delivered to Mr. B, Mr. B already received an order from Mr. C. Mr. B received an order from another retailer. Sir, I need 1,000 shirts. This person placed an order. He has actually placed the same order with the manufacturer. Now what he told to the manufacturer is, boss, I have ordered the shirts. No, don't dispatch it to me. Don't dispatch it to me. Dispatch the shirts directly to Mr. C. Dispatch the goods directly to Mr. C. Send the goods directly to Mr. C. Now Mr. A will give tax invoice to Mr. B only. Mr. A will give tax invoice to Mr. B. Assume 1 lakh worth of goods, 18,000 rupees of GST. But the goods are not given to Mr. B. The goods are directly dispatched to Mr. C. This we call it as bill to ship to model. This we generally call it as what? Bill to ship to supply. Why? Because Mr. A is billing the goods to Mr. B, whereas he is shipping the goods to Mr. C. Sir, now Mr. B is having tax invoice, but he did not actually receive the goods. No. Can he avail this input tax credit of 18,000 rupees? Yes. Still he can avail. Why? Because they have explained, they have given in the section that in case of bill to ship to model, it will be deemed that this person has received such goods. This person has received, even though the goods are received by ultimately Mr. C, but in this case bill to ship to model, the act told it will be deemed as if this person has received the goods and he can take the input tax credit. Understood? So that is what one more condition here. So he should have received such goods or services or both. However, in case of bill to ship to model, it will be deemed as if the recipient has received the goods. Understood? Next, let us see few more conditions. ITC should not have been restricted. See, this is not relevant at CA inter level. Just one condition which we will discuss at the CA final level. The credit should not have been restricted. Sir, when credit will be restricted, when credit will not be restricted, not relevant for CA inter examination. So just remember it as a condition. The ITC should not have been restricted. Sir, when restricted, when it will not be restricted, not relevant for our discussion now. One more thing. Tax charged should have been paid to the government either in cash or through utilization of input tax credit. Sir, what is this? Let me try to explain this also. Assume that there is a supplier. He sold the goods to recipient. He sold the goods to recipient. He gave a tax invoice. In that tax invoice, he told value of supply is 1 lakh and 18,000 rupees is the GST. Now, as a recipient, you paid the amount. Total 1,18,000 you have paid it to the supplier. Now, what supplier should do? Supplier can keep only 1 lakh rupees, but he has to pay 18,000 rupees to the government. He has to pay 18,000 rupees to the government. But what actually happening here is the supplier received the amount from you, but he is not paying it to the government. Whatever tax the supplier has charged from the recipient, he is not paying it to the government. He is keeping it with himself. Now, initially, what you will do is on the basis of tax invoice, you will avail the input tax credit. You will take 18,000 rupees of credit, no? But later, when the government, but if this supplier, after collecting the money from the recipient, if he is not paying it to the government, the act is telling as a recipient, you have to reverse whatever amount of ITC you have availed along with interest. Along with interest. That's what they have told. So in case the supplier has collected the amount of GST from the recipient, but if he is not paying it to the government is not getting that money, then the government told, boss, we are not getting the GST amount. No, we will not give the credit to you. We will not give the credit. Government is straightforward. See, when we get the amount, we will give you credit. If this person is not paying us the tax, how can we give the credit? The government told, in this case, we will not give you the credit. Sir, it is not my mistake, no. Now, some people will get hurt here. Sir, as a recipient, I am a genuine person. I made the payment of 18,000 to the supplier. But if he is not paying me, why are you punishing me? Yes, we will punish you only. Why? Because you did not buy the goods from a genuine supplier. Next time, you will stop buying from that person. So, in order to ensure the compliance, see, government is also in a trouble. No, if they get the amount, they can give you credit. Without getting the amount, how can they give you credit here? See, without getting the money, if they give the credit to the recipient, the government is giving the money from their own pocket. So that's why government told, if the supplier is not making the payment to the government, if recipient has already availed input tax credit, you have to reverse it along with interest. Sir, okay, I reversed it, sir. Initially, I availed the credit. Later, I reversed it, sir. But after a certain point of time, supplier paid it to the government. Since government told, boss, supplier did not pay, first we have reversed it. But after some time, for example, after a certain period of time, supplier realized his mistake and told, okay, sir, I will come and pay this 18,000 rupees to the government. Later, if the supplier pays the money to the government, once again, the recipient can avail it. So first he will avail. In case when he is informed that supplier did not pay it, he will reverse. But later, supplier went ahead and made the payment. Then no issue. You can avail the credit once again. Understood? So that is the next condition. Taxes, whatever have been charged, they should be actually paid to the government. And one more condition, sir, how can I avail the input tax credit, sir? How can you avail the input tax credit? If you want input tax credit, file your GSTR 3B. File the return GSTR 3B. By filing that return GSTR 3B, you can avail that input tax credit. So these are all the conditions which are required to be fulfilled in order to avail the input tax credit. What are they, guys? Which section actually talks about conditions to be fulfilled? 16 subsection 2. What does 16 subsection 2 say? Clause A says, in case if you want to avail input tax credit, you need to have some supporting document. Clause AA says that details of outward supply should be furnished by the supplier in his GSTR 1 or IFF, and the same should have been communicated to the recipient in his GSTR 2B. Then clause B says you should have actually received the goods or services or both. Clause BA says input tax rate should not have been restricted. Clause C says whatever tax that has been charged, that should be actually paid to the government. Clause D says you should furnish the report, you should furnish the return GSTR 3B in order to avail the input tax credit. Still, there are few more important points. Let us try to understand it. See, this point I have already explained. If you are receiving the goods in lots or installments, you are eligible to take the input tax credit only on receipt of last installment or last lot. Then they have put one more condition. So what is that? Very important provision I am going to explain here. Let us see what is that. So there is a supplier. He supplied some goods or services, whatever it is, to the recipient. He gave tax invoice. In the tax invoice, he charged 1 lakh rupees of value of supply, 18,000 rupees of GST. Total 1,18,000 rupees of GST he has collected from you. Now you have tax invoice, you received the goods and services, you availed input tax credit of 18,000 rupees. Now the act says if the recipient did not make the payment to the supplier, if the recipient is not paying the amount to the supplier, and they have given the time limit also. If the recipient is not making the payment within 180 days from the date of invoice, you received invoice, but within 180 days, if you are not making the payment to the supplier, you availed input tax credit, you got the tax invoice, you received the goods, but you did not make the payment to the supplier within 180 days. Then how many days? Within 180 days, if you did not make the payment, the government is telling you, you have to reverse your input tax credit. Whatever ITC you have availed, that you have to reverse it along with interest. Able to understand whatever I'm trying to say here? So that's what they say. Even interest rate is 18%. So if you read it, if the recipient fails to make the payment to the supplier within 180 days from the issue of invoice, input tax credit should be reversed along with the interest at the rate of 18%. So you took the input tax credit. Take for example, invoice was given on 1st of January 2023. You availed input tax credit, but from this date of invoice within 180 days you are not making the payment. Sir, how to calculate 180 days, sir? Ignore the date of invoice. In January, 31 days, take 1 day, 30 days are over by 31st of January. February, 28 days. March, 31. April, 30. Then May, 31. How many days are over till here? So just I need one quick calculation. Let me do it. So, just a minute. You also do it in the meantime. So 30 days in the month of January, 28 days. 30 days in the month of January. Wait a minute. 38. Next we have 31 days in the month of March. Then we have 30 days in the month of April and 31 days in the month of May. 150. We need 30 more days. So 30 days will actually fall on 30th of June. 30th of June. So payment has to be made on or before 30th of June. So if you are not making the payment even within 30th of June also, then what you should do is you have availed this input tax credit now, reverse that input tax credit along with the interest at the rate of 18%. Along with the interest at the rate of 18%, you have to reverse it. Sir, okay, I did not make the payment by 30th of June. Later, I reversed it. Since I did not make the payment within 180 days in compliance with the GST laws, I reversed my input tax credit along with interest. But after I realized it by mistake, sir, I have actually made the payment to that person on 18th of September. Can I avail input tax credit once again? Yes. Whenever you make the payment again, you can avail the input tax credit. Able to understand? Sir, what if I made part payment? Sir, I reversed entire amount of GST. 18,000 I have availed, 18,000 I have reversed. So what I am doing is I am making a part payment. On 18th of September, I made a payment of 50,000 along with that 9,000 GST. So 59,000 rupees of payment I have made, sir. Now you can avail proportionate amount of GST once again. If you make full payment, you can avail full GST. If you make part payment, avail proportionate amount of GST. Able to understand? Guys, able to understand the sequence of the steps? So first, as a recipient, you receive the goods, you have a tax invoice, you will avail input tax credit. Then you have an obligation to make the payment within 180 days from the date of invoice. If you don't do it, reverse the input tax credit along with interest. If you pay it later, you can avail it. If you make full payment, avail full ITC. If you make part payment, avail proportionate amount of ITC. Understood? So that's what I have written here. However, if the recipient makes the payment later, he will be entitled to take the credit again without any time limit. Without any time limit. Sir, I made the payment after 10 years. Avail it. No issue. I'm making the payment after 10 years. Enjoy. Avail the input tax rate after 10 years. No issue. However, this condition of making payment within 180 days does not apply in certain cases. I told within 180 days you have to make the payment. Otherwise, you have to reverse. But this condition does not apply in some cases. In which cases, sir? In case of reverse charge mechanism. In case of RCM. See, if you are a person liable to pay the tax under reverse charge mechanism. If you are the person liable to pay you are recipient, there is a supplier. You received some goods or services. But as under reverse charge mechanism, you paid the GST amount to the government. But you are not making the payment to the supplier within 180 days. Whatever sale value is there, that you are not making the payment within 180 days. No worry. In this case, you need not reverse your input tax credit. So the condition of making the payment within 180 days does not become applicable in case of reverse charge mechanism supplies. And also deemed supplies without consideration. If you remember schedule 1, in the schedule 1 we have covered various activities. If done even without consideration, still it will be treated as supply. So in case of deemed supplies, there is no consideration only. There is no obligation of payment only. Then why the condition of making payment within 180 days? Not required, no. So in case of deemed supplies without consideration, then also there is no condition for making payment within 180 days. And also payments made to third parties on behalf of the supplier. See, this point I have already covered in the case of value of supply. Assume that there is a supplier. He is providing some services to the recipient. But supplier is having an obligation to make a payment to third party. For example, total consideration agreed was 1 lakh rupees. Now, supplier is having some obligation to make a payment to third party. On behalf of the supplier, recipient paid that 10,000. Assume that in relation to making this supply, the supplier is required to make payment of some third party. You remember that event I'm conducting event, one day food person came, supplier is required to pay, but instead of him I'm paying. So that scenario has happened. So instead of the supplier, I paid the amount of 10,000 to the third party. Balance how much I will pay? 90,000 only I will pay. Initially, we agreed for a total consideration of 1 lakh. But on behalf of the supplier, as a recipient, I paid 10,000 to third party. Balance 90,000 only I am paying it to the supplier. Now can the government come and say, hey, balance 10,000 you are not paying. Initially consideration agreed was 1 lakh rupees, 90,000 you have paid, but total payable is 1 lakh rupees. Since you are not paying 10,000 rupees extra to the supplier, we have to reverse that input tax credit. Can the government say no? Why? Because even though I am not paying it to the supplier, I have met the obligation of the supplier to a third party. No. So that's why in this case also, whatever amount that you have paid it to the third party, there is no obligation. This amount also you have to pay to the supplier within 180 days. Why? Because you have already paid it to third party. Able to understand everybody? Clear and comfortable? So this is what regarding the cases where this condition of making payment within 180 days does not apply. What is that? So number one, reverse charge mechanism in case of deemed supplies without any consideration, and also payments which are made to third parties on behalf of supplier. In these cases, the condition of making payment to the supplier within 180 days does not become applicable. So this is what important discussion regarding 16 subsection 2. Able to understand everybody till here? Now let us talk about 16 subsection 3, which is relating to input tax credit on capital goods. See, when you want to run the business, you will not run the business only with goods and services. You buy the capital goods also, you buy the plant and machinery, you buy the various other kinds of capital goods. On that also you will pay GST. Can you avail GST on that capital goods also? Yes, you can avail GST on capital goods also, but you should not claim depreciation on the tax component. If you want to avail input tax credit on capital goods, you should not depreciate GST component in the books of accounts. For example, I bought some plant and machinery. 10 lakhs is the value. 1,80,000 rupees is the GST. Total I paid 11,80,000. Sir, can I avail this 1,80,000 rupees of credit? Yes, you can avail. But in your books of accounts, when you capitalize, you have to capitalize it only for the value of 10 lakh rupees. This 1,80,000 rupees of GST, whatever you are availing it as credit, that you should not capitalize it and you should not claim depreciation on that. You are eligible to claim depreciation only on that 10 lakh rupees, not on the tax component. That means I can say here you have two options. You have two options. Which two options I have? The two options which you have is, number one, either you avail input tax credit on the GST component, or else what you can do is capitalize the amount of even GST also in the books of accounts and claim depreciation. But you can't do both. Either you can avail input tax credit on capital goods, or you can avail depreciation on the tax component, but you can't do both. So this is what mentioned in 16 subsection 3. Now let us come to the most important thing, time limit for availing input tax credit. Sir, what is the time limit? For example, assume that in April 23, I bought some goods. I received the goods also. When I filed the return for April 23, I should have claimed the input tax credit, but I did not claim it. Sir, if I don't claim it in the respective month, will I not be able to claim it later? No, no issue. See, if you did not claim it in the month of April, claim it in the month of May. Claim it in the month of May. If you forgot to do it in the May month, do it in the month of June. If you forgot it in June, claim it in the month of July. Sir, like this, at any point of time, can I claim? Is there no time limit to claim the input tax credit? No, there is a time limit. Sir, what is the time limit for claiming input tax credit? So time limit for availing input tax credit, 30th of November following the end of the financial year or the date of furnishing of annual return. This time limit we have already calculated earlier. So there is a maximum time limit within which you can avail input tax credit, 30th of November following the end of the financial year. So if you made a supply, if you bought some goods or services in April 23, but you did not avail input tax credit, if you forgot to do it, you can claim it later. But till what time, sir? 30th of November following the end of financial year. Financial year will end on 31st of March 24. So 30th of November 2024 or actual date of filing of annual return. Actual date of filing of annual return, whichever is earlier. Whichever is earlier, within that date, you can avail the input tax credit. So this time limit we have already seen in the case of credit notes. Same logic will apply here also. So this is the maximum time limit within which you can avail the input tax credit in case if you forget it. So this is what important gist from section number 16 relating to eligibility and conditions for taking or for claiming input tax credit. Everyone able to follow till here? See, actually there is one more small point which I want to add it here. Sir, you are telling you can avail input tax credit only within this time limit, but there is one exception. See, when it comes to the GST which you have reversed, and if you want to re-avail it, for that there is no time limit. For example, assume that you bought some goods in the month of April. Let me put it this way. This time limit does not become, the maximum time limit for availing input tax credit will not become applicable in case if you fail to make the payment and you have reversed ITC, later you are making the payment, and if you want to avail input tax credit later, that you can do it without any time limit. For example, in the month of April 2023, you bought the goods, availed input tax credit. Within 180 days, you did not make the payment, then you reversed it. Now, after 10 years, you made the payment. Can you once again avail input tax credit? Yes. So the time limit will not become applicable. The maximum time limit for availing input tax credit will not become applicable in case if you want to re-avail the input tax credit which you have reversed earlier. So because of non-payment, if you have reversed the GST earlier and if you want to claim it once again, that you can do it without any time limit. Understood, everybody? So this time limit does not become applicable there. So this one point I forgot. So that's why I have specifically mentioned here. However, if the recipient makes a payment later, he will be entitled to take the credit again without any limit, without any time limit. You can avail the input tax credit in case if you have reversed it earlier and if you want to take it once again after making payment. So this is with this section 16 discussion has been complete. Understood, everybody? So now I will try to revise section number 17. See, this section number 17, I will try to revise it from the main material itself. Why? Because it is important thing and contains most of minute details. So I don't want to miss on them. So what I will do is, I will revise section number 17 from the main material itself. So let me start it. Yes. So if you see here, section number 17 talks about apportionment of credit and blocked credit. Say in this section number 17 also, it is going to talk about two aspects. One is regarding apportionment. I will come to that later. The most important thing is blocked credit. Government is telling in some cases we will block the credit. That means we will not give you credit for certain goods, for certain services. We will not give you the credit only. So let us try to focus on this blocked credit, on which kind of goods and services the government is blocking the credit. So that is covered in 17 subsection 5. Let us try to cover that first. Sir, for which goods, for which services the credit will be blocked? Government is telling if you buy certain goods or services, even though you have paid GST, even though you fulfilled all the conditions given in section number 16, still we will not give you credit. So let us see what are those. So blocked credit, section number 17 subsection 5 talks about blocked credit. So even though you fulfill all the conditions, even though you have a tax invoice, you received the goods, and also that has been reflected in your GSTR 2B also, supplier has furnished the the supplier has furnished that details in GSTR 1 also, but still even all the conditions are satisfied, but still on certain services, on certain goods, you will not be able to avail the input tax credit. What are they? So 17 subsection 5 clause A, the first item on which credit will be blocked is motor vehicle which is for transportation of passengers and having a seating capacity of less than or equal to 13 persons. So government is telling if you are a registered person, if you are buying a motor vehicle for transportation of passengers and that motor vehicle is having a seating capacity less than or equal to 13 persons including driver, we will not give you any credit. Sir, what they are trying to say here, assume that there is a Infosys company. Now assume that this Infosys company has bought a car. Having a seating capacity of 4 for transportation for carrying the passengers. Now Infosys company has bought this car. They paid total 10 lakh rupees for this car. 1,80,000 rupees of GST also they have paid. Sir, can this Infosys company avail the credit of this 1,80,000? No. Government is telling, no, we will not let you allow the input tax credit on this motor vehicle which is designed to carry the passengers having a seating capacity of less than or equal to 13. Sir, Infosys company has bought a bus, sir. They have bought one big bus which is having a seating capacity of 25. For that, it has paid 20 lakh rupees and 3,60,000 rupees of GST they have paid. Can Infosys company avail the input tax credit of 3,60,000? Yes. Why? Because the restriction is there only on the motor vehicle for transportation of passengers having a seating capacity of less than or equal to 13. If an entity buys motor vehicle having a seating capacity of more than 13, no issue, that company can enjoy input tax credit. Or assume that some company has bought a truck. Some company has bought a motor vehicle for carrying goods. They have bought a truck for carrying goods. They paid some 20 lakh rupees for this truck. 3 lakh 60,000 rupees of GST they have paid. Can the company avail it? Yes. So the restriction is there only on those motor vehicles designed to carry the passengers having seating capacity of less than or equal to 13. So if any registered person buys a motor vehicle having a seating capacity less than or equal to 13 for carrying passengers, then the government told we will not give you credit. However, in some cases they will give credit. You are a registered person, but you have bought a motor vehicle having a seating capacity of less than or equal to 13 for carrying for the purpose of carrying passengers. Still, in some cases you can enjoy input tax credit. In which cases, sir? They say if I go through the material, except when they are used for making the following taxable supplies, namely further supply of such motor vehicles. For example, you are a registered person, you bought a motor vehicle for carrying passengers having a seating capacity of less than or equal to 13. Why you are buying this motor vehicle is you want to resell it. That means you are into the business of selling motor vehicles. You buy the motor vehicle and you sell the motor vehicle. You are not buying it for using it. You are buying the motor vehicle to make the further supply. Now the government told if you are a registered person, if you are buying a motor vehicle for carrying passengers having seating capacity of less than or equal to 13 and you are using it for and you buy it for making further supply, then there is no restriction. We will give you input tax credit. We will give you input tax credit. One more case, transportation of passengers. Assume that I am a registered person. I bought one car having seating capacity of 4. Now using this car, I am providing transportation of passengers. I am providing cab services. I buy the car and I am providing cab services. By taking this by buying this vehicle, I am making a taxable supply of transportation of passengers. Using this cab, I am providing transportation services, transportation of passengers. Then also government told, okay, you are buying the car for providing taxable service of transportation of passengers. Okay, you enjoy credit, no problem. Next one. One more case, imparting training on driving such motor vehicles. Sir, I am a registered person. I bought a motor vehicle having a seating capacity of less than or equal to 13. And using this motor vehicle, I want to provide driving classes. Then also government told, okay, we will give you input tax credit. Able to understand? So the first case where the credit will be blocked is if you buy a motor vehicle designed to carry passengers having a seating capacity of less than or equal to 13, then the government told we will not give you credit. However, in 3 cases they will give you credit. Number 1, you are buying a motor vehicle in order to make a further supply. Number 2, you are buying a motor vehicle for providing taxable service of transportation of passengers. Number 3, you are buying a motor vehicle for providing driving classes. Then they will give you input tax credit. Able to understand? Now there is one important question which you need to remember. Assume that Infosys company is buying a car, is buying a motor vehicle. Now using this car, they want to provide transportation to their employees. To provide transportation to their employees, Infosys company bought a vehicle. Can they avail input tax credit? No. See, when I told if you are buying a motor vehicle for transportation of passengers, you should be in the supply of transportation of passenger services. See here, Infosys is buying a car not for running cab services. They are buying a motor vehicle for transportation of their employees. So it will not be treated as buying a motor vehicle for transportation of passengers. Infosys company will not be able to avail the input tax credit on that. Everybody clear with the first case where the credit will be blocked? So this is what regarding motor vehicles. Next one. Similarly, vessels and aircrafts. Government told if you are buying an aircraft, if you buy an aeroplane, or if you buy some other kind of aircraft, or you are buying a vessel, ship, government told on that we will not give you credit. But still the government is telling if you are buying vessels or aircrafts, in some cases we will give you credit. In which cases, sir? If you are buying vessel or aircraft for transportation of goods. If you have bought a vessel, if you have bought a aircraft, not for transportation of passengers, for transportation of goods, then the government told, okay, in that case we will give you credit. Similarly, if you buy vessels or aircrafts for making some taxable supplies, if you have bought a vessel or aircraft and you are using it for certain purposes, then the government will give you credit. Which case, for making further supply. Assume that there is a registered person. He is buying an aircraft, selling an aircraft. He is buying a vessel, selling the vessel. Then the government told, okay, we'll give you credit. Transportation of passengers. For example, Indigo Airlines. Indigo Airlines bought an aeroplane, and using that aeroplane, they are providing passenger transportation services. Okay, we will give you credit. Don't worry. Similarly, someone has bought a vessel. Using that vessel, he is providing transportation services, passenger transportation services. Then also government told, okay, we'll give you credit. And also, if you have bought some vessel or aircraft for imparting training on flying an aircraft or navigating an vessel. For example, I bought a vessel, I bought a ship, and using that ship, I am providing training to the people how to navigate the vessel. Or I bought a aircraft. Using that aircraft, I am providing the training to the people to navigate, to fly an aircraft. Nothing but in car we say driving, in aircraft we say flying, and in vessel we say navigating. So if you are buying a vessel or aircraft for the purpose of imparting training, then also the government told we will give you credit. Understood everybody? So first one is motor vehicle, second one is vessels and aircrafts. Now coming to the third point. So what they are trying to say in the third point is, first I will try to explain. See, the government told if you buy motor vehicle having a seating capacity less than or equal to 13, we will not give you credit. If you are buying a vessel or if you are buying an aircraft, on that also we will not give you credit. The government is telling against these motor vehicle or vessel or aircraft, if you have received any repairs and maintenance services, if you received any repairs and maintenance services, general insurance, if you have bought insurance, for example, you are a person, you have bought a motor car, if you have bought a motor vehicle, and you are not in the business of making further supply, you are not imparting driving skills, if you are not using it for transportation of passengers, you bought a vehicle, on that you will not get any credit. Now for this motor vehicle, I incurred some repairs, I have done some repairs, on that repairs also there is a GST. For example, to this motor vehicle I have done some repairs, along with that 1800 rupees of GST. Can I avail input tax credit of 1800? No. I bought a insurance for this motor vehicle, on that also I paid GST. Can I avail input tax credit? No. I did the servicing of this motor vehicle, on that I paid GST. Can I avail input tax credit? No. Same with vessel and aircraft. So always remember one thing, if on the motor vehicle, vessel or aircraft, if you are not allowed to avail input tax credit, even you can't enjoy input tax credit on the repairs, insurance and servicing work of that motor vehicles, vessel and aircraft. However, if you are entitled to avail the credit on input tax credit, for example, assume that I bought a car, I bought a cab, I bought a motor vehicle and I'm providing cab services. I'm providing cab services. In that case, on the motor vehicle, I can avail input tax credit. If you can avail input tax credit on the motor vehicle, you can also avail input tax credit on repairs and maintenance. You can also avail input tax credit on insurance. You can also avail input tax credit on servicing. Able to understand? So one simple rule, guys. If credit is blocked, if credit on vehicle is blocked, obviously credit on repairs and maintenance, insurance and servicing also will be blocked. If credit is allowed, then the credit will be allowed even on repairs and maintenance, insurance and servicing work also. So that is what the third case of blocked credit. Services of general insurance, servicing, repairs and maintenance insofar as they relate to motor vehicles, vessels or aircrafts which are referred in clause A and clause AA. However, in some cases they will give you credit. When if you are buying a motor vehicle, vessel or aircraft and you are using it for specified purposes. Sir, what is specified purpose? You are using it for making further supply. You are using it for making transportation of passengers. You are using it for imparting driving skills. So that's what I tried to summarize. If credit on vehicle is allowed, on all these activities also credit will be allowed. If the credit on vehicle is not allowed, then all these activities also will not be allowed. And they have told few more things also. On these activities, credit will be allowed to a manufacturer of such vehicles, vessels or aircraft. So what they are trying to say here is, assume that there is a Tata Motors. What is the business of Tata Motors? They do the manufacturing of the motor vehicles. If the Tata Motors is receiving any repairs and maintenance for vehicles, yes, they can enjoy input tax credit. If they have taken insurance on the vehicles which they are manufacturing, yes, they can enjoy input tax credit. If they got the servicing done for the vehicles they are manufacturing, yes, they can enjoy input tax credit. So the input tax credit on repairs and maintenance, general insurance and servicing work can be availed by that manufacturer of such motor vehicles, vessel and aircraft. Able to understand? And one more thing also they say there, even ITC can be availed by the company which is providing the services of general insurance in respect of such motor vehicle. Sir, what is this? Let me try to explain it with the help of example. Assume that there is a person, okay? This person has bought motor vehicle. This person has bought motor vehicle. Now he can't enjoy credit. He's not into the business of making further supply. He's not using it for transportation of passengers. He's not even using it for he's also not even using it for providing driving skills, etc. Now what he has done is he has taken insurance. He has taken general insurance from insurance company. He has taken insurance. Assume that he paid 10,000 rupees of premium, 1800 rupees of GST also he has paid. Can he take ITC on this insurance? No. On this insurance also he can't take ITC. Now what he has done is he took that car and did an accident. He took that car and did an accident. Now since he has taken insurance policy, he took that this car was taken to the showroom. This car was taken to the showroom. Now this person need not worry. Even though he did the accident of his car, he need not worry. Why? Because he has taken insurance policy, no? Now the showroom did the repair. The total repair expense is 50,000 rupees. On that, assume some GST is 2,000 rupees. Total amount is 52,000. Now this 52,000 rupees will not be paid by this person. Why? Because he has taken insurance, no? So who has to pay this? So this invoice will be given to the insurance company. So now this insurance company will pay 52,000 for the repairs and maintenance. Can they avail input tax credit? Yes, this company can avail input tax credit. Able to understand, everybody? So the company which is providing general insurance of vehicles, that entity can take input tax credit on repairs and services, insurance or servicing work relating to motor vehicles, vessels or aircraft. Understood, everybody? So this is what the third case in which credit will be allowed. Understood? So till now I have explained three cases of block the credit. Number one, motor vehicles for transportation of passengers having a seating capacity of less than or equal to 13. Number two, vessels and aircrafts. Number three, services of general insurance, servicing, repairs and maintenance insofar as they relate to motor vehicles, vessel or aircraft. But in some cases government will give you credit. That also I have explained. Now let us talk about few more things. Clause B. Now they are telling certain goods or services on which the government told we will not give you any credit. Like for example, food and beverages. For example, if I am having an office, in my office there are some staff. So for example, 10 staff are there. I want to feed them lunch. So one day what I have done is I have ordered some food. I ordered food worth of 5,000 rupees. On that 500 rupees of GST was charged. Total 5,500 rupees I have paid for food. Sir, can I take the credit of this 500 rupees whatever GST I have paid on my food? For my business only, no. My staff only eating or I am eating. I have to eat to run my business. I am eating the food in the course or furtherance of the business. I paid GST on my food and beverages. Can I take input tax credit? Government will get lost. So whatever GST that you have paid on food and beverages. Similarly, outdoor catering. I am receiving any catering services. For example, one day I want to conduct one event. For example, for my office, 1 year anniversary is happening. I am receiving outdoor catering services for my caterer, from a caterer. I am receiving outdoor catering services for my office. Can I avail input tax credit? No. Beauty treatment. If you are availing beauty treatment, for example, SRK or take any other actor. So for example, I don't want to take any names. There is some reputed actor. He or she underwent some beauty treatment for looking good and getting more movies. Can they avail input tax credit? No. Government told if you are getting beauty treatment, on that also will not give you credit. Similarly, health services, cosmetic surgery, plastic surgery, leasing, renting or hiring of motor vehicles, vessels or aircrafts referred to in clause A or clause AA except when used for purposes specified therein. Also they are telling in clause A, clause AA, we have told that if you buy a car, if you buy a motor vehicle, then they will not give you credit. Similarly, if you are renting a motor vehicle, having a seating capacity of less than or equal to 13, the government told on that renting also will not give you credit. Similarly, you have taken a vessel on rent, then also will not give you credit on that. You have taken an aircraft on rent, then also you can't take credit. However, if you are using the motor vehicle, vessel or aircraft for specified purposes, for what specified purposes? If you are using it for the purpose of making further supply, or you are using it for the purpose of providing passenger transportation services, or you have taken a motor vehicle on rent for providing driving classes, then you can enjoy credit. So what I'm trying to say here is, if you buy motor vehicle, vessel or aircraft, they will not give you credit unless you use it for specified purposes. Similarly, when you have taken motor vehicle, vessel or aircraft on rent, then also they will block the credit unless you use it for specified purposes. Which means, for example, I have taken a motor vehicle on rent and I am using for these purposes. You can enjoy the credit. I have taken a vessel or aircraft on rent and I am using it for these purposes. You can enjoy the credit. If you are using it for any other purposes, no credit will be given. Understood? Then what else? Life insurance and health insurance services. So on these services and goods, government told we will not give you any credit. What are the goods and services notified here, guys? Food and beverages, outdoor catering, beauty treatment, health services, cosmetic, plastic surgery, leasing, renting or hiring of motor vehicle, vessel or aircraft, except when used for specified purposes, life insurance and health insurance. Life insurance and health insurance. On these goods and services, the government will not give you credit. However, in some cases, they will give you credit. In some cases, they will give you credit. They have given a provision. So if you have received these goods and services, in some exceptional cases, government will give you credit. When, sir? Provided that input tax credit in respect of such goods or services or both shall be availed where an inward supply of such goods or services is used by a registered person for making an outward taxable supply of same category of goods or services or as an element of taxable composite or mixed supply. Sir, what is this? Simple, guys. If you are in the same line of business, for example, I am buying food and beverages. And my business is also selling food and beverages. Enjoy input tax credit. No worry. If I am receiving catering services, my outward supply is also catering service. Enjoy input tax credit. I am receiving beauty services. My output service is also beauty services. See, what do you mean by beauty services? Let me put it this way. Assume that, how to explain this? Let me put it this way. Assume that there is one wedding happening. Okay. So there are bride and groom. They have appointed one beautician. They told this beautician, you have to do makeup. And along with that, they have also asked for hair dyeing. They have some white hair. They also asked for hair dyeing. Now this beautician agreed to provide all this makeup and hair dyeing services. Can these people enjoy input tax credit? No. Now, this beautician knows how to do the makeup, but she is not so expert in hair dyeing. So what this beautician has done is, she went to another beautician and told, you do one thing, you provide hair dyeing services. She got the entire contract. She agreed to provide beauty services as a package. Hair dyeing, makeup, everything she will provide. But she once again received services from another beautician. She know how to do the makeup, but she don't know how to do the hair dyeing. So what she will do is, this beautician approached this lady and she told, okay, on my behalf, you do the hair dyeing. Okay. So now this beautician has provided beautician services, beauty treatment services to this lady, not on her, to their customers. Now she has given a tax invoice, 1 lakh rupees for hair dyeing. Just I am telling for example, guys, 18,000 rupees of GST. Can this beautician take ITC? Yes, she can take it. Why? Because she is receiving beauty services and she is also providing same services. So like this, for these above goods and services, you can enjoy input tax credit if you are in the same line of business, or if you are using any of that goods and services as a part of composite or mixed supply. Sir, what is this? This also I will try to explain. Assume that some event is happening. For example, for my office, I want to conduct one anniversary function. I appointed one event management company. When I say event management, they have to take care of the entire event. Like they have to take care of decoration, they have to take care of receiving the guest, and even they have to take care of food. Also. Now I am receiving event management services for my office. Now what this event management company has done is, they have received food from another registered person. They have received food and beverages, and whatever food and beverages that they have received, this event management is using it as one of the element for composite supply. See, event management is doing a composite supply, so many composite or mixed supply, whatever it is, depending on whether it is naturally bundled or artificially bundled. So this event management company is providing a bundle of services, and in that process they are receiving either any of the services whatever I have mentioned here, goods or services. So if someone is receiving these goods or services and they are using it as one of the element for making a composite supply or mixed supply, in those cases also, here also event management company can take the GST on that food and beverages. Why? Because they are receiving food and beverage and they are using it as one of the element for composite or mixed supply. Then also they can enjoy input tax credit. Hope you guys are able to understand with the help of this examples. See, it's like becoming a regular class only, but this chapter I have to revise it in this manner only. So let us try to proceed further. Let us have a look at few more things. Membership of a club, health and fitness center. Similarly, for example, if some company has taken a for a fitness center, they have taken a membership. They told their employees to go to gym and they have taken a membership of the gym. Sir, can the company enjoy the input tax credit on the membership of a club, health or fitness center? No. Similarly, if any entity is providing, if any company has received the services of travel benefits which are extended to employees on vacation, such as leave or home travel. Take for example, one company has sent their employees on vacation. They told, okay, you go and enjoy the vacation. We will book the rooms for you. We will arrange the accommodation for you. So they have booked the hotels for their employees on vacation, and company will receive the bill. No, on that GST will be there. Can they avail it? No, they can't avail it. Able to understand? So these are all different specific kinds of goods or services on which the government told we will not give you any credit. So food, beverages, etc., membership of a club, health and fitness center, travel benefits which are extended to the employees on vacation. However, there is one important proviso which says that if you are receiving these goods or services, if any of this 1, 2 and 3, these goods and services, if some entity is receiving and providing that is mandatory requirement as per law, then the company can enjoy input tax credit. So if you read it, provided that input tax credit in respect of such goods or services or both shall be available where it is obligatory for the employer to provide the same to its employees. So if I have to give you an example for this, assume that there is a company. This company is receiving some food and beverages. This company is receiving some food and beverages. And as per Factories Act, for this company, it is mandatory to run a canteen. It is mandatory for the company to run a canteen as per some law. And in order to provide the food in the canteen, they are buying food and beverages. So since they are receiving these goods and services, to provide the same to the employee because of some statutory requirement, in this case, the company can enjoy input tax credit. Or assume that the company is taking some membership to a club or health and fitness center, and providing the same to the employees is a regulatory requirement, is a statutory requirement. It is compulsory for the company to do it for their employees. Then also they can enjoy input tax credit. Or if the company is receiving some services relating to traveling, accommodation, etc., and providing the travel benefits to the employees is mandatory under law, then also they can enjoy input tax credit. Very, very important points, guys. So whatever they have mentioned here, whatever goods and services they have mentioned here in this point and this point, and if these goods and services are getting received, to provide the same to the employees because it is compulsory under some law, then you can enjoy the input tax credit. Then you can enjoy input tax credit. Understood, everybody? So this is what regarding clause B. Clear and comfortable till here? So now we have few more cases where the credit will be blocked. Let us try to understand those remaining cases also. Now let me talk about the next thing in which the credit will be blocked, which is actually relating to works contract. Very important, guys. Will not take much of a time. I will try to explain with the help of one simple example. So they are telling if someone is receiving a works contract services for the construction of an immovable property other than plant and machinery, then the government told we will not give you credit. Sir, what is first of all works contract? See, this we have seen long ago. Works contract means that kind of supply which involves goods as well as services. Goods as well as services in relation to some immovable property. If you are making a supply, if you are making some supply and in that supply goods are also involved, services also are involved, and that supply is actually relating to construction of an immovable property, that we call it as works contract. So assume that there is some person, there is some registered person, or assume there is some company, Reliance Industries Limited. So they want to construct, they have a piece of land. On this land they want to construct a building. On this land they want to construct a building. They approached one contractor. This person told, okay sir, I will construct this building for you. I will construct this building for you. Material also I will supply, labor services also I will supply. Now this person is actually providing works contract services in relation to construction of an immovable property. Now assume that this person has charged total 50 lakh rupees for the construction of this building, and is saying 5 lakh rupees is the GST amount. Reliance company paid this total amount of 55 lakhs to the works contract provider. Now, can the Reliance Industries Limited, can they enjoy 5 lakh rupees of input tax credit? Government told, we will not give you any credit. So if you receive any works contract services in relation to construction of an immovable property, then the government told, we will not give you credit against that works contract. However, assume that if Reliance Industries Limited has received a works contract service, so this person is providing goods as well as services, works contract service is providing in order for the construction of a plant and machinery. See, plant and machinery is also immovable property. Let me show you. Let me show you once. Plant and machinery. Yes. So take this example. See, this is also immovable property only. Whatever image I'm showing you here, this is also immovable property. But this is a plant and machinery. This is a what? Plant and machinery. Now, one contractor came and told to the Reliance, sir, I will construct this plant and machinery for you. First of all, what is immovable property? Something which is attached to the earth. Now, this plant and machinery is also attached to the earth. This is also immovable property only. Now, this works contractor has agreed to provide works contract service for the construction of immovable property. But here the immovable property is a plant and machinery. So this person has collected total 50 lakh rupees for the construction of immovable property, and 5 lakh rupees of GST he has charged. Reliance company paid this money to this works contractor. Can they enjoy credit? Yes. Can they enjoy credit? Yes. So what I want to say here is, if some registered person, if he is receiving any works contract service in relation to construction of immovable property other than plant and machinery, then the government told, we will not give you input tax credit on that. We will not give you input tax credit. However, if you receive the services, works contract services for the construction of immovable property, which is a plant and machinery, then the government told, we will give you credit. Then the government told, we will give you credit. However, here one more important thing we have to remember. Assume that there is already a building. There is already a building. Now, in this building, there is some small repairs work which has to be carried out. There is some small repairs work which has to be carried out. Now, there came a works contractor. He told he will take care of that repairs to an immovable property. This is also immovable property. No, you are doing a work on immovable property. Now, for doing that repairs, he agreed he will provide all the cement, steel, and along with that, he will also provide labor services. Now, this person is providing works contract services in relation to immovable property. But whatever this company recipient, assume once again Reliance Industries Limited, they received the repair services, they received a works contract services in relation to immovable property. But that expenses, they are not capitalizing it. That expenses, they are not capitalizing it. They are taking it to the statement of P&L only. They are treating it as revenue expenditure. They take it to the statement of P&L. Then they can enjoy input tax credit. Then they can enjoy input tax credit. So one thing you have to remember here, if I tell you summary, if someone is receiving works contract services in relation to construction of immovable property other than plant and machinery, generally ITC will be blocked on that. But before that, we need to check whatever works contract services that person is receiving, is it treated as capital expenditure in the recipient's books of accounts? If it is treated as capital expenditure, then no ITC. However, it is some minor work, works contract is happening, but it is some minor work where the recipient is not treating it as capital expenditure, he is taking it to the statement of P&L, then there is no restriction, then you can enjoy the input tax credit. So whether ITC on works contract services in relation to construction of immovable property, whether it will be blocked or not, it depends on what is its accounting treatment in the client's books, in the recipient's books of account. If he is treating it as capital expenditure, no ITC. If the works contract is treated as expense in the statement of P&L, then they can enjoy input tax credit. However, if you receive works contract services, whether it is getting capitalized or revenue in relation to plant and machinery, then they can always enjoy the input tax credit. In case of construction of plant and machinery, no restriction. In case of other than plant and machinery, we need to check whether that works contract related expenditure, is it getting capitalized, is it getting charged to the statement of P&L. Then in that case, if it is charged to statement of P&L, no restriction on input tax credit. If it is getting capitalized, then ITC will be blocked. Understood? And however, this point says one more thing. Assume that if you are receiving works contract service, if someone is receiving works contract services and his outward supply is also works contract service. If someone is receiving works contract service to make a further supply of works contract service, then the government told, in this case, we don't have any problem. We will give you input tax credit. If you are receiving works contract service and you are also using that works contract services to make a further supply of works contract services, then the government told, we will not restrict the ITC in this case. We will give you full ITC. So that is what they try to say here. works contract services when supplied for construction of immovable property other than plant and machinery, except where it is an input service for further supply of works contract. If I am a person, if I am a registered person, I receive works contract service, I provide works contract service, I can enjoy input tax credit. If I am not providing output services of works contract, I received works contract services, but for construction of immovable property, which is a plant and machinery, I can enjoy input tax credit. I'm a registered person. I'm receiving works contract service other than plant and machinery, but I treat this works contract expenditure as a P&L item, not as a capital expenditure. Then also you can enjoy input tax credit. This is what the summary. See, here you need to remember what is the definition of plant and machinery. Sir, what will be included in the plant and machinery? Plant and machinery means apparatus, equipment, machinery fixed to the earth by foundation or structural support that are used for making outward supply of goods or services and includes such a foundation or structural support. See, if I show you the example here, when I say plant and machinery, what and all will come in plant and machinery? This apparatus, this thing. So all this will come under plant and machinery. Even this foundation is there, no? This foundation also will be treated as plant and machinery. But however, for keeping this machinery, I am building wall. For example, I am building some walls. I am creating a building like structure and I am keeping this machinery in this building. Can I call this walls, ceiling also as plant and machinery? No, that will not come under plant and machinery. So what will come in the plant and machinery definition is apparatus, equipment, machinery fixed to earth, and also foundation or structural support, but excludes land, building, other civil structure. Like as I was saying, assume that I build the walls and a ceiling. Can that also be called as plant and machinery? No, that will never come under plant and machinery. And what else they say? It also excludes telecommunication towers. Cell phone towers, telecommunication towers will be there. No, they will never come under plant and machinery definition. So assume that Airtel company has received works contract services for construction of a some telecommunication tower. Can they avail input tax credit? No. Why? Because telecommunication towers will always be excluded from plant and machinery definition. And also pipeline laid outside of the factory. See, pipeline laid inside of the factory is a plant and machinery. For example, Indian Oil Corporation is there. Indian Oil Corporation. They have a plant. They have one oil refining plant. Like this, an oil refining plant is there. So inside the machinery, inside this factory. So what is the terminology they used? Inside the factory. Okay. So inside this factory premises, if pipeline is laid, see, when they are providing pipeline construction of pipeline is also immovable property. It is also works contract. So if you are providing works contract services for construction of pipeline inside the factory, on that will be treated as plant and machinery. On that you can avail input tax credit. However, if someone has received works contract service for pipeline outside of the factory, this is not treated as plant and machinery. On that ITC will not come. So pipeline laid inside of the factory premises will be a plant and machinery. Pipeline laid outside of the factory premises will not be a plant and machinery. Which means if the pipeline is laid inside the company, that is a works contract relating to plant and machinery. On that ITC can be availed. If you are receiving works contract services for laying the pipeline outside of the factory, that is not plant and machinery. On that ITC you can't enjoy. Understood everybody? Clear and comfortable? Now, see, next clause is also more or less related to it. See, what some people thought is, in clause C, government is telling, if I receive works contract services in relation to construction of immovable property, then the government told they will not give me ITC. Let me do one thing. I will not receive works contract services. I will receive the goods separately. I will receive the services separately. And using that, I will construct a immovable property. On that, I will enjoy input tax credit. Clause C told, if you receive works contract service, what is works contract service? In a single supply, goods and services are provided. Now, what some persons have thought is, okay, I want to construct a building. What I will do is, I will not receive works contract service. I will buy all the goods separately. I will buy cements and all that. I will receive labor services separately. On that, I will enjoy input tax credit. Now, this is like a loophole, no? So that's why what the government told, in this case also they told we will not give you input tax credit. In this case also we will not give input tax credit. So if you are buying the goods separately, receiving the services separately for construction of immovable property other than plant and machinery, then also we will not give you ITC. Then also we will not give you ITC. But however, assume that there is a builder. Now he bought the goods. He received the services. And using that goods and services, he is constructing one factory building for one of its client. So if I say it, for example, nothing but if goods and services are received separately, and this builder is using that goods and services for not constructing his own immovable property. Using that goods and services, he is constructing building for his clients. Now this builder can enjoy the input tax credit. Able to understand what I'm trying to say? See, let me give you some examples. With that, the things will get clear. Yeah. See. Okay, this example. See here, listen carefully. Important. MN and constructions, they procure cement, paint, iron rods, and service of architects and interior designers for construction of a commercial complex for one of its clients. So there is MN Constructions. They are buying cement. They are buying goods. They are using it for construction of immobile property, not for themselves, for their clients. Then they can enjoy input tax credit. However, if you look at this example, MN and Constructions procures cement, paint, iron rods, services of architects and interior designers for construction of a complex for its own use, for their own building, for their own office building. They are buying goods and services. They can't enjoy the input tax credit. Able to understand, everybody? So very simple, guys. You have to apply the common sense here. So if I phrase these examples like this, they told some MN construction companies are, they received goods, they received services. They are using it for construction of immobile property, not their own immobile property, for their client's immobile property. That means they are providing outward supply to their client using that goods and services. They can enjoy input tax credit. So once again, MN Constructions, they bought the goods, they bought the services, and using these goods and services, they are constructing their own immobile property, their own office building they are building. Then the government told, we will not give ITC against that. Clear, everybody? So clause C told, if you receive works contract service in relation to construction of immobile property other than plant and machinery, no credit. However, some people have thought, okay, we will not receive works contract services, we will receive the goods separately, we will receive the services separately, then use it for the construction of immobile property other than plant and machinery. Then also government told, bad luck, you will not get credit in that case also. However, if you are buying the goods separately, if you are receiving the services separately, and you are using it for construction of immobile property of your clients, then you can enjoy input tax credit. Clear and comfortable, everybody? So this is what clause C and clause D says. Understood? So these are the most important cases where ITC will be blocked. These are the most important cases where ITC will be blocked. Remaining all the things are there. Remaining all circumstances where the ITC will be blocked. These are all easy. So this point, E point says, if you are buying goods and services from a composition dealer, you are a registered person, but you are buying the goods or you are buying the services from a composition dealer. Can you enjoy input tax credit? No. Why? Because the composition dealer will not give you tax invoice. He will not collect any GST from you. So that's why if you are a registered person, if you are buying the goods or services from composition dealer, you can never enjoy ITC. So that we already know it, that the same thing they have told. Similarly, goods or services received by NRTP except on goods imported by him. See, assume that in India there is an exhibition happening. So one person from US came, NRTP, he want to participate in the exhibition and make some supplies. Now this NRTP, for making supplies in India, whatever goods he has received, whatever services he has received, on that he can't avail input tax credit except on import of goods. See, whatever goods that he has imported into India, on that also he will pay IGST. Import of goods also IGST will be there. That he can avail. But whatever goods he has bought within India, whatever services he has received, on that input tax credit he can't avail. He can avail ITC of only on GST paid on import of goods, only he can enjoy the ITC. Understood? So that is what another case of blockage of the credit. Next one, FA, which is relating to corporate social responsibility. See, for example, if the company is receiving some goods or services, assume that there is a Reliance Industries Limited. They bought some goods, they received some services. Why they have bought these goods and services is to use it for fulfilling their corporate social responsibility. As we know, as per the Companies Act, some companies are required to spend 2% of their average net profits of the last 3 years on social welfare. So Reliance Industries Limited has bought some goods, they have bought some services, but they are using it to fulfill their CSR obligations. Then also government told, on that also we will not give you any credit. The same thing they have mentioned here. So goods or services are both received by a taxable person, which are used or intended to be used for activities relating to his obligation under corporate social responsibility, that also will not be given to you. And similarly, goods or services which are used for personal consumption. For example, Reliance Industries Limited bought some goods for personal consumption of their directors. No ITC. So if you buy any goods or services which are relating to personal consumption, on that ITC will never be given. So that's what even they try to say here. So if you read the example, Mr. X owns a grocery store. He procures rice, wheat and biscuits for being sold in its store. Out of inventory, he gives 10 kgs of rice to his wife for household use. Can he take credit on that? No, that is used for personal consumption. Similarly, one more last case where the credit will be blocked is if the goods are lost. You bought the goods, but the goods are stolen, or the goods are lost, the goods are destroyed, or the goods are written off, or they are given as gift or free samples. In those cases, you will not be able to enjoy the credit with respect of those goods which are lost, which are stolen, which are destroyed, which are written off, which are disposed or given by way of gift or free samples. So these are all the various cases where credit will be blocked, and even this also, any tax paid in accordance with 74, 129, 130. These provisions will read it at the CA final. Nothing but, if you remember, I told in rule 36 sub rule 3, if you are paying any tax because of committing any fraud, because of committing any violation, and you are caught, that's why you have paid the tax, can you enjoy the credit of that? No, that credit also will be blocked. If you paid any tax as a result of any committing any fraud, or you have been caught committing some wrong act, that's why you paid the GST, that credit government will never give it to you. So these are all the various circumstances where the credit will be blocked as per section number 17 subsection 5. Understood everybody? So next, let us try to understand remaining provisions of 17 subsection 1. Sorry, 17, section 17. Few more things also we'll try to understand. Very simple ones only, guys. See, if you are buying some inputs, if you are buying some goods or services, partly you are using it for business, partly you are using it for other than business. I bought some goods. I'm using partly for business. I'm using partly for other than business. The act is telling whatever inputs that you are using for business, on that only proportionately you avail input tax credit. Whatever inputs you are using it for other than businesses, on that there is no input tax credit. Sir, how to calculate the proportionate amount, sir? That will be discussed later at the CA final level. To understand? So that's what they say, where the goods or services or both used by registered person, partly for business, partly for other purposes, you are eligible to avail only proportionate credit in respect of those goods or services which you are using it for your business. Same logic applies for taxable supply as well as exempt supply. So if you are using some goods or services, some goods and services are getting partly used for making taxable supply, you are using some goods and services for exempt supply. You can avail input tax proportionately only in respect of those goods and services which you are making use it for taxable supply. Whatever inputs or services which you are using for making exempt supply, that credit will never be given to you. That credit will never be given to you. So this is what 17 subsection 2 says. Input used partly for taxable supplies and partly for exempt supplies. You can enjoy input tax credit only in respect of taxable supplies, not in respect of other than taxable supplies. Next, 17 subsection 4. This I will explain. See, banking company. Under 17 subsection 4, the government has given an option to the banking company. See, assume that banking company, they receive various goods, they receive various services. And one of the main activity of the banking company is giving loans and collecting interest. But giving loans and collecting interest is an exempted activity. It's an exempted activity. This we all know, no? See, when the interest is, when you are doing a supply of giving money to use, and in return you are getting interest as a consideration, that will be exempted. So one of the major activity which banking company is doing is exempted, but they are receiving various goods and various services for that, and they are using it for making exempt supply. They also use it for making other than exempt supply. Now in the case of banking company, government has given two options. Option number 1, you calculate proportionately how much amount of goods and services you are making it for exempt supply, how much goods or services you are using it for non-exempt supply, take that much amount which you are using it for non-exempt supply. So you can calculate, you can sit and calculate. One option what you can do is, if you are a banking company, you sit and calculate how much amount of goods and services you are using it for exempt supply and other than exempt supply, and proportionate amount of ITC only you avail. One more option also government has given to the banking company. Hey, you don't want to enter into all this headache. You don't want to sit and calculate how much we used for exempt supply, how much we used for non-exempt supply. If you don't want to calculate, we will give you one option. Directly take 50% of ITC, 50% you reverse it. Two options. Either you follow, either you sit and calculate how much is relating to exempt supply, how much is relating to non-exempt supply, and avail it proportionately. One more option, what you can do is, don't do any calculation, take directly 50% of ITC, balance 50%, you reverse it. like this, two options are given for banking company. They can choose any one. And also they have put some conditions here. Once you avail this option, see here, provided that option once exercised shall not be withdrawn during the remaining part of the financial year. For example, you told in the month of April, you told, okay, I will calculate on my own. Later you are telling that no, this is very risky. From next month onwards, I will pay 50%. Not eligible. Once you exercise the option for the entire rest of the financial year, you have to avail the input tax credit under that option only. However, in one case they have told, one particular case they have told, assume that one point I want to specifically highlight here. This point I want to highlight here. The restriction of availing 50% of ITC shall not apply to the tax paid on supplies procured from another registration within the same entity. Sir, what do you mean by this? Let me put it this way. SBI is there, no? So SBI is having one branch. So read the terminology once. The restriction of availing 50% ITC shall not apply tax paid on supplies procured from another registration within the same entity. Sir, what do you mean by this? See, SBI is having one branch in Hyderabad. They are also having one branch in Bangalore. See, since both are in different states, for this separate registration will be there. For this separate registration will be there. Now assume that Hyderabad branch of SBI has provided some services to the Bangalore branch. That means between different registrations of the same entity, a service is getting supplied. Now Hyderabad branch has provided some services to the Bangalore branch. They have given tax invoice. 1 lakh worth of services they have provided, 10,000 rupees of GST they have charged. Now they told that with regard to these supplies, this restriction of 50% credit, 50% reverse not applicable. In case if the services are happening between different registration of the same entity, in case of banks, in these services they can enjoy full ITC. For this kind of services, there is no restriction of 50% ITC and 50% blocking. Able to understand? For all other supplies, from outwards, whatever supplies you are receiving, on all that this rule will be applicable. 50% ITC, 50% you reverse it. But with regard to those services which are received from another registration of the same entity, this 50% restriction will not become applicable. With respect to these services, they can enjoy the full input tax credit. Understood? So this is one important point which they might test you in the examination. So I thought of explaining it. I have done it. Okay, so once again, you read it for the sake of your convenience. Clear, everybody? So this is what regarding section 17 we have understood. Apportionment of ITC as well as blocking of ITC. Guys, able to understand everybody till here? So I told in ITC chapter we are required to revise 2 sections. Section number 16 we are done. Sorry, we are required to revise 3 sections. 2 sections we are done. Section 16 we have revised. Section 17 we have revised. We have one more section also, section number 18. See, section number 18 is also a very huge section, but it will not be worthy to revise each and everything there. So from section number 18, I will try to revise the most important contents from the examination perspective. Shall we try to do it, everybody? Let us do it now. Okay, guys. So let us go ahead now and revise section number 18. So I will tell you just most important things from section number 18, I will say. So balance, you can read it from the material. So what does section number 18 say? See, it talks about various circumstances. So what it says is, for example, you are a person who has started doing business. At one certain point of time, you become liable for registration. For example, your aggregate turnover exceeded the applicable threshold limit, you become liable for registration. Within 30 days, you have applied for registration and you have been granted the registration certificate. As we know, if this is the case, if you have made the application within 30 days, your registration will be effective retrospectively. And what the government has told us, 1 day prior to the date you become liable for registration. For example, you become liable for registration on 1st of January. 1 day prior to that, that is as on 31st of December, 1 day prior to that, whatever inputs, whatever goods which you are having in stock or in the form of semi-finished goods or in the form of finished goods, again is that goods which are in the stock, on that you can claim the input tax credit. On that you can claim input tax credit. However, in this case, you will not get any ITC on services, you will not get any ITC on capital goods. You will get credit on those goods which are held in stock or which are there in the form of semi-finished goods or which are there in the form of finished goods against the goods whatever are there in stock. On what date? 1 day prior to the date which you become liable for registration, whatever goods which are held in stock, finished goods or semi-finished goods, against that stock, you can file one statement and enjoy the input tax credit when you are taking new registration. Able to understand? So this is what mentioned in 18 subsection 1 clause A. So you become liable for registration, you made an application within 30 days, you have been granted registration certificate, then in that case 1 day prior to the date you become liable for registration, you can take the input tax credit on the goods whatever are held in stock. Clear everybody? Sir, what if I made application after 30 days? No, you can't take the input tax credit. So you can take the credit only when you made the application within 30 days. Next, sir, I went ahead and want to take voluntary registration, sir. I did not become liable for registration, but I want to voluntarily take my registration. Take, for example, you are doing business. Here you submitted an application to get voluntary registration. Once you have submitted the application, proper officer granted you registration certificate. 1 day prior to the date of grant of registration certificate, whatever inputs are there, which are in the form of stock, semi-finished goods or finished goods, against that you can claim the input tax credit. This when you opted for voluntary registration. So if you opt for voluntary registration, 1 day before the date of grant of registration certificate, whatever inputs are there, which are in the form of stock, semi-finished goods or finished goods, on that you can avail input tax credit. Similarly, see, you are already a registered person, but at one point of time you are converting from composition dealer to regular dealer. See, when you are under composition levy, you don't have right to collect the taxes, you don't have right to avail input tax credit. But on one particular day, you are converting yourself from composition dealer to regular dealer. In that case also, what they are telling is 1 day prior to the date, you are converted to regular scheme. For example, if I am converting into regular scheme on 30th of January, 1 day prior to that, as on 29th of January, whatever inputs I am having in stock or in semi-finished goods or in finished goods, against that I can take input tax credit, and also I can take input tax credit on capital goods also. You can also take input tax credit on capital goods. So if I am converting from composition dealer to regular dealer, 1 day immediately preceding the date of conversion, whatever inputs that you are holding in the form of stock, semi-finished goods or finished goods, and also you can avail input tax credit against the capital goods also. But on the capital goods, you can't enjoy the full credit. Capital goods credit will be reduced by 5% per quarter or part thereof. Sir, what is this? Assume that you bought some asset on you bought some capital good on 1st of January 2023. Assume that you are converting from regular person, you are converting from composition to regular dealer on 30th of August 2023. This is the date on which you are converting. See, when you bought the capital goods on 1st of January 2023, the total value was 1 lakh rupees and 10,000 rupees of GST you have paid. See, on this date you are converting, no. So can you take full ITC on capital goods now? No. They are telling ITC has to be reduced by 5% per quarter. For example, January, March, April quarter. See, in GST quarter is always fixed. April, May, June, quarter 1. July, August, September, second quarter. October, November, December, third quarter. January, February, March once again. If you look it from the calendar side, different. But whatever it is, in the case of GST, quarter is always fixed. Let me put it this way. January to March is a quarter. Not 3 months duration is quarter. You can't say, sir, from February, March, April. This is also quarter. No. In GST, quarter is always fixed. January to March, April to June, July to September, October to December. So what they are telling is, you have bought the capital goods on 1st of January 2023 and you are converting on 30th of August. So you have to calculate how many quarters have been passed till now. So you have bought it on 1st of January 2023, January to March, 1 quarter is over, April to June, 1 quarter is over. In August, it falls under third quarter. Even part of the quarter also will be considered as full quarter. In this quarter, you have used only for part of the asset. You are under composition scheme only for part of the quarter, but still it will be treated as full quarter. So that means from the date of purchase of capital asset, capital good, 3 quarters are gone by. For every quarter, 5% you have to reduce. So 10,000 rupees minus 5% for 3 quarters. So 10,000 minus 15%. It will be 8,500 rupees. So you can take a credit of 8,500 rupees only.
Able to understand everybody? So if you are converting from composition, see, if you listen the full class, no, if you listen the regular class, then only this will make clear. If you did not listen to the full class, this logic you will not be able to understand. Why? Because if you remember, each of this case I have explained you for close to half an hour with the detailed examples and all. I have explained it for half an hour. This you will be able to understand only when you watch the regular classes. If you are directly watching marathon, sorry guys, you will not be able to get a full clarity. And I can't afford to spend such amount of time to make this concept clear. Understood everybody? So this is what, simply remember this example. If you are converting from composition scheme, you are already a registered person, you are converting from composition to regular. One day before that conversion, you can avail input tax credit on all the inputs and also capital goods but credit on capital goods should be reduced by 5% per quarter or part thereof. Similarly, you are already a registered person. You used to make an exempt supply, but at certain point of time, your exempt supply was converted to taxable supply. Then also, one day prior to that date, when your exempt supply becomes a taxable supply, you can take ITC held in stock, semi-finished goods or finished goods, and also ITC in respect of capital goods also. But here also you have to reduce the credit on capital goods by 5% per quarter or part thereof. So same guys, both the cases, if you are already a registered person, either you are converting from composition to regular, you are already a registered person, exempt supply gets converted to taxable supply. In both the cases, one day prior to that effective date, whatever inputs, whatever ITC is there in respect of inputs held in stock, semi-finished goods and finished goods, and also input in respect of capital goods can be availed as credit. Understood? Now similarly, what the government has told is, see, if you are converting from composition to regular, we are giving you credit, no? What if you are converted from regular to composition? You have to pay us back the credit we have given to you. Similarly, when your exempt supply becomes taxable supply, we are giving you credit. What your taxable supply becomes exempt supply, then you have to pay us back whatever credit we have given to you. So this is what the case. In case you are a registered person, you are under regular scheme, but you are converting it to composition dealer. You are already a registered person, you are making taxable supply, but all of a sudden that taxable supply becomes exempt supply. In that case, one day prior to that effective date, you have to pay an amount on credit on inputs held in stock, semi-finished goods or finished goods, and also on capital goods. You have to give it back. So one day prior to that effective date, whatever inputs you are holding in stock, semi-finished goods or finished goods, and also capital goods reduced by certain things. See, here you have to reduce it in a different manner. I'm not going into the details. This level of questions they will not ask you in the examination. So just remember, in case you are converting from regular scheme to composition dealer, or your taxable supply becomes exempt supply, one day prior to that, whatever inputs you are holding in stock, semi-finished goods or finished goods, and whatever ITs in respect of capital goods is there reduced by certain figure, you have to pay it back to the government. Understood? See, if the reverse happens, they are giving you credit. So if you are doing the reverse, you pay the money now. Understood? Next. And one more thing, guys, in case whatever capital goods and plant and machinery that you have availed, that you have purchased and on which you have taken input tax credit, if you are selling it later. So for example, let me put it this way. With this one small point I will explain. Say I'm not able to go into details of section number 18 as I have told. This section takes a huge amount of background discussion, but all that I can't have. So that's why I'm just telling you just 2 points. But once again, I'm giving you a question. If you did not listen to the regular classes, this will be like a nightmare for you. So I will say, in case if you did not watch the regular classes, skip section 18. You will not be able to understand it. If you have watched my classes, well and good, fine. Then you can then you will be able to recollect it. So assume that I'm a registered person. I bought some plant and machinery. I paid some 1 lakh rupees. For simplicity in calculation, I'm doing 10,000 rupees of GST I have paid. I have taken ITC of this 10,000 rupees. I have taken ITC of this 1,000 rupees. But later what I am doing is, whatever plant and machinery or capital goods on which I have taken input tax credit, I'm disposing it, I'm selling it. Then the government says, see, if you are disposing or if you are supplying any capital goods or plant and machinery on which you have availed input tax credit, when you are making the supply of that capital goods or plant and machinery, if you are selling that capital goods or plant and machinery, then give us back the ITC whatever you have availed. Give us back whatever ITC you have availed. Sir, how much ITC I have to give it back, sir? Same. So what you have to do is, from the date of purchase till the date of supply, you have to determine how many quarters are gone by, or part of the quarters has to be taken as full quarter, and for every quarter reduce the ITC amount by 5 percentage points. For example, total ITC I have 10,000 rupees. Assume that from the date of purchase till the date I am making the supply of that capital good, I used it for 5 quarters. Assume I used it for 5 quarters. So 5 into 5 percentage, 10,000 minus 5 into 5 percentage, 10,000 minus 25 percentage, which will come to 7,500, or this figure, or see, when you are making supply of this plant and machinery or capital goods, you will have transaction value, no? Assume that you are selling that plant and machinery for 80,000 rupees. On that, GST is 10%. 8,000 rupees is the GST on transaction value. So if you see here, you need to calculate these two figures. So registered person, in case of supply of capital goods or plant and machinery, registered person shall pay ITC taken as reduced by 5 percentage per quarter or part thereof. Like in our example, 10,000 is a total ITC. I used it for 5 quarters, 5 percentage into 5 quarters. So that is 10,000 minus 25%, 7,500. Or one more thing they say, what? Where is it? 1 second. Or tax on transaction value. So my transaction value is 80,000 rupees. On that GST is 8,000 rupees. Whichever is higher, that much amount of GST I have to pay now. So 7,500 rupees or 8,000 rupees. Which one is higher? 8,000 rupees. 8,000 rupees of amount of GST I have to pay to the government now. Understood? As simple as this, guys. That's all. So these are the few important provisions from section number 18. Section number 18. However, to this point, there is one more thing here. See, if you are selling the capital goods which are in the nature of refractory bricks, molds and dies, jigs and fixtures, these are also capital goods only. When you bought this capital goods, you have availed ITC. Later, you are selling it as a scrap. I told when you are selling capital goods or plant and machinery, you have to pay the GST whichever is higher of these two figures. But the capital goods which are being sold are refractory bricks, molds and dies, jigs and fixtures. In these cases, you need not calculate this figure. You are required to pay tax only on transaction value. This is one relaxation given in case if the capital goods which are getting sold are refractory bricks, molds and dies, jigs and fixtures. In that case, you directly pay the GST on transaction value. You need not calculate this ITC reduced by 5 percentage points. This calculation you need not do. In these kind of capital goods, if they are getting sold as a scrap, just to pay whatever GST is there on the transaction value. Understood, everybody? So this is what regarding input tax credit. So we have spent a lot of time on this chapter. Why? Because this chapter deserves that much amount of attention. Clear and comfortable, everybody? So this is what regarding input tax credit.